points away from current levels. That's where the next crucial resistance is at, 55,500 or thereabouts. Stocks that I'm looking at for today's trading session, one such stock will be Tilaknagar Industries. Yesterday, the stock bounced off the low of the day. It ended at around 20 DMA. So that's point number one. Point number two is there was massive delivery-based buying in yesterday's trading session in comparison to the averages. And point number three is it's been a relative underperformer in the last 1 month or so. And now it's seeing delivery-based buying ending at crucial technical levels. I'll keep an eye out on this stock even for today's trading session.
Okay, all right. So let's see if the bulls can prevail and continue their good run from yesterday, because yesterday, after taking on those critical resistance levels, they are looking in top form. And we have positive global cues. We have, of course, the tweets and the phone calls. And Asian markets, for what it's worth, they are tracking some gains as well, though it's a mixed picture across Asia. But some of the major markets, like, say, for instance, Hong Kong or Japan, they are tracking more gains. And there is overall optimism around that expected Fed rate cut. There you see the Hang Seng is up about 0.7%. Not that there's been a one-to-one correlation between China and India over the last couple of months, but generally positive sentiment on equities. Let's get you a couple of calls then. The first one's coming in from Morgan Stanley. Rhythm Desai of Morgan Stanley says that while India continues to report return on equity higher than global averages, the gap contracted in 2024, reflecting a growth slowdown in the second half of the year. He believes that ROE is set for higher levels over the next 3 to 4 years. He adds that rising ROE equals rising share prices, more so as it continues to significantly exceed long bond yields. He believes that ROE gains will come from mostly domestic cyclical sectors and rate sensitives, and the key risks would be global growth slowdown and higher global commodity prices. He says Morgan Stanley is currently overweight on financials, industrials, and consumer discretionary to gain exposure to India's improving ROE story. So those have been the big long calls for Morgan Stanley for a while. One more call. This one is from Vikash Jain of CLSA. He says that India remained the least favored emerging market for FIIs in August, with outflows of about $4.3 billion across all fund categories, making it the worst performing large market in US dollar terms. He says that FIIs are tracking another $0.1 billion of outflows, which is roughly $100 million of outflows so far in September. He says FIIs have rotated into consumer discretionary, driven by the GST rate cut optimism, with bulk of the allocation going to autos. He says that CLSA has added Ultratech to its India-focused portfolio for exposure to potential margin gains from continued pricing discipline and favorable GST changes. And they currently favor consumption, real estate, oil and gas, and IT in their portfolio. That last one's pretty interesting. So overweight on IT, that is CLSA for you. And they recently went overweight, saying it's a good tactical play. Anyway, let's now move on to get a global conversation going. Drew Pettit, Director, U.S. Equity Strategy and ETF Analysis and Strategy Research at Citi, is with us. Drew, thanks so much for joining in. So there's, bonhomie in the air because the U.S. President and the Indian Prime Minister exchanging birthday greetings. More on that later. But I first want to start with the event at hand, and that's the Fed meet. So I guess everyone's saying 25 basis points is a given. But will that mean that these all-time highs continue for the U.S. market, even if data has started getting a little patchy of late?
That's funny. I think the last point you make there is the real key one here. Yeah, 25 basis points, as you've all said this morning, is completely expected by markets. Our house view is you are going to get some follow-through. You'll get 25 basis points here. And then 4 following meetings, you'll get 25 basis points of cuts. Market expects that. We should hear a relatively dovish tone, more cuts to come, more normalization. Yes. But how do we work the market higher from here? It's if the data holds in. A little bit of softness and normalization in labor data is okay for markets because there's secular trends driving earnings growth higher, especially in the United States and just growth in general globally. So if the data is okay and the Fed is cutting, that's a positive for equity markets and risk assets.
And Drew, okay, so I mean, a little bit of weakness in data you're saying is fine. The market will take it in its stride, and we have rate cuts. On a side note, I'm just curious, what do you think and what are you hearing around the possibility of U.S. companies now reporting earnings only twice a year instead of quarterly? What's the chatter around that?
Yeah, look, still really early days. SEC is the one and that has to make the call here. At the end of the day, earnings season has not been a bad one for U.S. stocks, as long as they beat and raise, given the growth expectations are high. for us, it'll make conversations more important around what could be driving long-term growth if you're not reporting as frequently. But ultimately, earnings, whether I'm going to get them quarterly or every 6 months, if the projections are up and to the right and productivity is still a major trend in the United States, that's still good for risk assets.
Drew, slightly, it's a question off the first point, which is the Fed cut, etc. 25 basis points is fully discounted. What are the chances with this big AI rally that we've had that if, markets sometimes need reasons to react and we kind of sort of tend to attribute reasons one way or the other, depending on what happens. But could this be the trigger for a bit of a pullback in the US?
If it is a trigger for one, if it becomes a sell the news event, it's probably a healthy one. So markets should not just go up and to the right. We should have pause. We should have investors taking profits. That's a sign of a healthy bull market. If we are taking a breather, if there is a pullback because the news happened that was fully priced in, we think that's healthy. The really unhealthy kind of pullback would come if there's actually a dent in the earnings growth outlook, and we don't see that. So yeah, technically, I'd agree with you. It could be a sell the news type of event because it's fully priced into markets. But if the earnings estimates are unchanged and we get good reports for Q3 and good 2026 outlooks, it's a buying opportunity.
Hi, Drew. Good to see you. What about the Indian markets? The last I think I briefly remember was that you were, you're more neutral on emerging markets. So how you place between, emerging as well as developed markets? And where does India come into, your scheme of things? Because India has underperformed. The FI holding in the Indian markets is as multi-year lows. Your take?
Yeah, so it's interesting. We're underweight emerging markets overall as a global team here. And it's been interesting in the United States. From a dollar perspective, EM's outperformed, but from the flows from American investors, you couldn't tell. Investors have really stayed away from EM. So from a positioning perspective, we still like US mega cap growth on one side of our barbell. On the other side of the barbell, we like cheaper value cyclicals, which we think you get in Europe, especially European financials. For EM specifically, we're neutral India. And here you have a reasonable growth story versus the rest of the EM, but the pricing is for better than average growth. So neutral there. In EM, where we like to lean right now is China and South Korea, because you have the secular story similar to what we talk about in US mega cap. So it's funny, regionally, you're not really getting a lot of alpha trying to trade EM versus DM and country versus country. Yeah, again, getting away from certain specific examples, but the alpha is really coming from sectors and themes. So when we think about regional allocations, we want growth, paired with some cheaper value cyclicals.
All right, Drew, we'll leave it there. Thank you very much for joining us. Good speaking with you, and speak to you soon again. Appreciate it.
Hey, so thank you, everyone.
View coming in as far as Citi is concerned. We'll take a quick commercial break here. Let me just quickly run you through the interactions which are lined up here on the program. So we'll have the management of Yatharth Hospitals coming in, and there's, I think, a recent acquisition, and of course the outlook which we want to get through with Yatharth. 9 o'clock, we'll have Aditya Velekar of Axis Securities for an outlook at the metals space. Lots to talk about there. 9:20, Rana Gupta of Manulife Investment Managers is our market master. 9:35. We'll have T.T. Ram Mohan of IIM Ahmedabad and Sanjeev Sanyal, Member Economic Advisory Council, who join in for a discussion on India's economic growth under Prime Minister Modi, who of course completes 75 years today. Following that, we'll be speaking with the team at Jefferies, Peter Forlenza and Ashish Agarwal from the ongoing Jefferies India Forum. We got you lots of views yesterday as well. Towards the end of the program, Lata in conversation with the Managing Director of NABFID on the state of infrastructure financing.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment, but I'm running you through the list. L&T, Vedanta, BEL, Mahindra Lifespace, TVS Holding, and Coal India. All of them will be reacting to positive news flow. On the flip side, Amber Enterprises, Gujarat Fluorochemicals, you have Lupin and Dreamfolks that will be reacting to negative news flow. We'll keep an eye out on all of those stocks. Well, and as Prime Minister Narendra Modi turned 75 today, wishes poured in from across the country and across the world.
भारत ने दुनिया को युद्ध नहीं बुद्ध दिए। ज्ञान में, अध्यात्म में, गरिमा में, अन्नदान में, संगीत में, शाश्वत कविताओं में हमारा देश भारत पूरे विश्व में सबसे महान है।
Address credit requirements of the millions of credit invisibles, that is, the people with no formal credit history. However, given the availability of other digital footprints, artificial intelligence can be adopted to leverage alternate data sets to assess creditworthiness, especially that of the new to credit customers. This would mean a paradigm shift from asset-based lending to cash flow and alternate data-based lending, promoting a journey from exclusive banking to an inclusive digital finance. Government of India has also recognized the artificial intelligence potential to drive financial inclusion and has started initiatives such as the Grameen Credit Score, which aims to provide underserved communities with formal credit access by analyzing alternate financial data including UPI transactions, government subsidy receipts, and utility payments. Artificial intelligence also influences the turnaround times. It enables banks to process large volumes of customer data quickly, accelerating credit decisions and service delivery. This is especially valuable in time-sensitive sectors like sanctioning of working capital for the MSMEs, where the AI can analyze diverse data sets like bank statements, payment histories, GST filings, e-invoices, trades receivables and patterns, and public records. It also aids lenders in assessing seasonality, supply chains, inventory cycles, customer concentration, thereby help to assess the overall credit worthiness of the MSMEs. Of course, in credit appraisal, the banks can embrace AI algorithms for leveraging behavioral analytics.
Welcome back. Big day. All eyes on, of course, the US Federal Reserve, and all eyes on the exchange of pleasantries, the birthday greetings, the diplomacy that's taking place between India and the US, and direct leader-to-leader exchange that we've seen over the last couple of hours. And, you know, you're seeing those flashes on your screen from the Prime Minister's message on X. Well, let's now get down to stocks. Pull up the implied open as well, by the way, because overall the equity picture is still pretty all right. Yesterday, the US market had a flat close, but the anticipation is that we'll get that 25 basis points rate cut delivered. 65 higher because the bulls here at home have picked up their own momentum. So let's see. They probably want to build on it at the start. Time to talk stocks. So let's straight away get to our list of top stocks to watch this Wednesday morning. Kicking it off with Vivek. Vivek, why are you watching out for L&T? Good morning.
Well, good morning. An important development, and it'll be a lift of overhang, especially if this particular development fructifies. It's in focus on the back of the fact that we understand that the company has sent a letter to the Union Housing as well as Urban Affairs Minister Manohar Lal Khattar. What is L&T asking him? He's asked the centre or the Telangana government to take over the Hyderabad Metro Rail, where L&T currently holds over a 90% equity stake. So they intend to go ahead and sell this particular stake via the SPV route. What is the key reason why L&T wants to exit this particular asset that they hold? Number one, they say that the project has now become financially unviable, and it's been unviable for quite some time. Number one, significant accumulated losses that the company is unable to recover. Number two, there have been funding leverage, especially coming in as far as the state government is concerned. Significant cost overruns during the construction of the metro, and along with that, there has also been an impact as far as ridership is concerned, given the fact that the state scheme to provide free transportation to women on buses is something that has significantly impacted impacted the metro ridership itself. And along with that, all of this has ensured that the interest cost payment that the company currently owes as far as the debt is concerned is much higher than the kind of operating profit that they're able to generate. Just to give some context, in Q1 FY26, the loss of the metro was at a little over 200 crore versus a loss of 214 crore in Q1 FY25. FY25 PAT, remember, of the company was over 15,000 crore, where 650 to 700 crore was the loss that they suffer in the Hyderabad metro.
Okay, all right. Thanks a lot, Vivek, for that. Well, I'm tracking two companies, Vedanta as well as Coal India. Let's take Vedanta first. The NCLT hearing is today, and the market will be optimistic that maybe this could potentially be the final hearing. Even the management, in fact, they have indicated that they're hopeful that by September things get cleared out. The hearing will be with regard to the Ministry of Petroleum and Natural Gas issue, point number one, and with regard to the demerger as well. But just a few days ago, they resolved the long-standing dispute with Sepco, which was relating to Vedanta's power business. Now, the arbitration claims by Sepco were withdrawn, and this has helped in clearing one roadblock in the demerger plan. So going with a little bit of green on Vedanta, but I think at around 11, 12 o'clock out, we should get some clarity with regard to what is the outcome of that hearing. So Vedanta stock in focus because the demerger will unlock value. The next stock, Coal India, they've emerged as a preferred bidder by the Ministry of Mines for, one of the rare earth exploration blocks, and the name comes up for you on the screen, Ontilu Chandragiri. So, going with green on this one as well. Coal India actually has seen a good recovery from the recent lows after they reported some growth in the month of August in terms of dispatches. So green on both those two. But let's go to Nimesh. He gives us a sneak peek on D Street chatter with regard to a couple of stocks. This time around, Amber as well as Gujarat Fluoro. Bang on, Nimesh, tell us more.
Well, so both stocks will be in focus on the back of the fundraising. I'll start with Amber first. The QIP is launched. They're looking to raise 1,200 crores. Will issue close to 15 lakh shares. The price band indication is between 7,791 and 8,000, which indicates a 3 to 6% discount to yesterday's closing price. So again, a 4.5% discount, 4.5% dilution for the QIP. So I'll start with the red because of the discount, and the stock is rallied as well off late. So that's the first name. The second stock is Gujarat Fluoro. The promoter entity is looking to sell close to 13 lakh shares at a floor price of 3,500. So another basically a 5% discount to yesterday's closing price. There is a 60-day lockup for the promoters to sell further, but given the discount, it probably will start in the red for Gujarat Fluoro as well.
Yeah, no, absolutely, Nimesh, and lots of deals which we keep highlighting every single day. Well, Vinny is standing by with a list of other stocks with news flow. Vinny, over to you.
Hi, good morning. So firstly, keeping an eye out on Lupin, the US FDA has conducted an inspection at its Nagpur's injectable facility. This was between 8th September to 16th of September, and that has gotten 6 observations. So some bit of a negative bias is what we could watch out for. Mild red to red is what we could see here. BEL, that's the one we'll keep an eye out on the back of an order win of around 712 crores. Since 1st of September, they've gotten these 700 crores. So in just the first 16-17 days of the month, they've got additional orders of 700 plus crores. These orders have come in for IT infra, cyber security, ESM systems, blockchain solutions, among some of these businesses where they've got the order. Mahindra Life Spaces, that's the next one we'll keep an eye out on, as they have been selected to redevelop 2 housing societies in Chembur, Mumbai. Combined value potential or gross development value for that is going to be around 1,700 crores. Dream folks expect red coming in here as the company has discontinued its services for domestic airport lounges. This is with effect from 16th of September. The impact will be material. The contract, though, the company is saying with clients are still active and discussions with clients are there for alternate customer businesses. Do not forget, 93% of their business comes from lounge services, and domestic business accounts to around 77% of their revenue as of FY25. So keep an eye on that. Lastly, TVS Holdings, we're expecting green here as the board is to consider bonus and preference share issue. They will be meeting on 22nd of September for this, and do not forget, promoters are holding approximately 75% stake in the company as on date.
Okay, all right, Vinny, we'll keep all of those names on our radar. In fact, let's actually recap the list then. The stocks that have positive news flow around them this morning are L&T, Vedanta, BEL, Mahindra Life Spaces, TVS Holdings and Coal India. Stocks with negative news flow around them would be Amber because of the QIP they're doing, Gujarat Fluoro expecting a block deal there, Lupin as well as Dream Folks Services. Okay, so that's our list of stocks to watch. Now let's move on to the world of commodities and figure out how the commodity markets are gearing up for the Fed announcement. Manisha is here with us. Manisha, good morning.
Morning, Sudhi. Thank you for that. And I'll start with gold first because we have a new high on that. $3,700 an ounce has been taken. Now, to be exact, 3,703 is an all-time high till now that gold prices have hit. Well, the U.S. dollar is at a 2-month lows, and the U.S. rate cut of 25 basis points factored in, with more Fed rate cuts anticipated, is what the gold prices really seem to be moving at this point in time. And then you have various voices, banks, brokerages, experts talking about even higher gold prices from here. Though, of course, there is various caution as well, because this is overheated, overbought as a commodity. But with the way the international markets are right now, there perhaps is further momentum coming in for gold and silver both. The other one that we should watch out for is the crude oil prices. That one is trading at a 2-week high. The U.S. crude inventories have declined. That is supportive. The 22-member OPEC Plus group is meeting in Vienna on Thursday and Friday. Any statements from there in sense of global demand, supply, geopolitics will also impact the prices. And then you have Ukraine intensifying drone attacks on Russian refineries, export facilities, expectation of further Western sanction on Russia, and buyers of its crude are some of the other factors which are keeping crude in good favor.
Okay, all right. Thanks a lot for that, Manisha. Well, let's hop across to Sudarshan. He's gone through a lot of brokerage notes, and he's here to give us the call of the day. Hey, sir, good morning.
Morning, Nigel. So positive notes for the cement sector continue to flow in. Today, CLSA has written, it says that it has become more constructive and sees an uptick in profitability and estimates upgrades for companies helped by pricing discipline and elimination of coal cess. Amongst all the companies, preferred pick is Ultratech. It has upgraded Ultratech to high conviction outperform and target is increased to 14,700. Upgraded Shree Cement to outperform, target is raised to 33,500. Upgraded Ramco Cements to hold and target here is 1,045 and maintains outperform on Ambuja with a target price of 670 and maintains outperform on Dalmia Bhaat and here target is 2,650. Next is Prestige States. Nomura has initiated coverage with a buy call and target it has given is of 1,900 per share. It says company is transforming into a pan-India player while building annuity plus hotel portfolio. It expects FY26 pre-sales of rupees 29,000 crore versus company's guidance of rupees 26,000 crore with an upside risk. Also, it says company's annuity and hotel EBITDA rising 4 to 5 times over next 4 to 5 years. Investec has initiated coverage on auto ancillary company that is Bellrise Industries. It has initiated coverage with a buy call and target has given of 185 per share. It says company is well placed for growth as it expands its OEM ties, rolls out new products and improves ASP, that is average selling price. Also, four-wheeler business should see a significant step up on back of strong order book and it expects four-wheeler revenue contribution to rise to 14% by FY28 and expects 30% profit CAGR over 25-28 and on the valuation front also it finds very reasonable.
Okay, all right, got that. Thanks. So we're going to keep a lot of those stocks on our radar as well on the back of positive brokerage commentary this morning. Need to take a very quick break. Come back on the other side and we'll be connecting with the management of Yatharth Hospitals. Talk about their new acquisition and the business outlook.
A vast amount of transactional data for detecting patterns indicative of creditworthiness and stable financial behavior, which can lead to more accurate credit assessments and improve the decision-making processes. Artificial intelligence ability to dynamically assess customer preferences and behavior can empower banks to offer customized credit solutions tailored to an individual's financial capacity rather than relying on outdated credit assessment. This not only improves the loan accessibility but also ensures that the borrower receives fair and structured financial products that align with their needs. AI-based early warning systems can help to lenders to monitor credit portfolios more effectively through dynamic risk scoring and real-time default probability tracking. By flagging early signs of financial stress, these systems protect the lender's balance sheet while giving the borrowers a chance to correct the course. The goal ultimately is not just to lend more, but to lend better. Artificial intelligence would also play a key role in automating document verification by assessing image quality, ensuring compliance, and reducing lead rejections. It can accurately process large volumes of records, classifying, extracting, and validating key data, thereby improving efficiency and minimizing errors in the lending processes. One promising use case of artificial intelligence
Welcome back. Hope you're having a good morning. Well, as promised, let's get straight to our first guest on the show. Yatharth Tyagi, the whole-time director at Yatharth Hospital and Trauma Care Services, joins us on the show. Hi, Yatharth. Thanks a lot for joining in. Well, before we come to you, just stating to our viewers the three broad points that we're looking at. A 260 crore hospital was acquired in Agra. We want the guidance in terms of occupancies, which is currently hovering around the 65%, and also scaling up of new hospitals in Greater Faridabad and New Delhi. Well, thanks a lot for joining us, sir. Let's focus on the first point. You've acquired 100% stake in Shanti Ved, all-cash deal, 260 crores odd. I'm just looking at the revenues of the acquired entity. The revenues are around 50 crores. 35% was the occupancy. I think ARPOB was around 31,000 odd. Give us some guidance. Once you take over this entity, how do you see the occupancy scaling out? What kind of revenue potential are you looking at? And in terms of ARPOB as well.
Hi, good morning. So the Shantived Hospital we have acquired in Agra. Agra as a city, we feel is a very promising market. There's around 2.4 million population Agra. If you look at it, it is even more populated than the cities of Noida, than the cities of Gurgaon. The sheer maths on this acquisition made a lot of sense for us. It's a big city in Uttar Pradesh. We already have a good brand spread across the state. The Delhi highway connectivity to Agra, the Yamuna Expressway connectivity to the city of Noida to Agra. So, when we saw the property, we really like the infrastructure. We feel it is the best infrastructure of the city. In terms of the doctor team who are operating the Shanti Med Hospital, they are quite renowned. The Prakash family, it's a quite renowned doctor family of the area. And we felt that if they are rightly supported with our added brand presence, with the more the capex and the opex we're planning to do in that hospital, we feel that the occupancy, which is currently 35%, can triple in 3 years' time, and so would be the revenue. As far as the ARPOB is concerned, yes, we do expect 10% growth ARPOB in the Agra hospital for at least the next 3 years also. So overall, we are quite happy with the acquisition. We feel Agra is a great potential. It's a good markets to be in. And, as far as it aligns with the strategy of expanding, not just in Uttar Pradesh, but across North India.
Yatharth, just to talk about this, you've spent, I think, about 260 crores, right? It's an all-cash deal. Some argue that at 5 times sales, whether, it is expensive, and you're saying you'll have to put more money to work to ramp up occupancy, to perhaps increase the number of beds. Just give us your roadmap. How much more money are you going to be spending on this asset? And what is the ramp-up plan looking like? You said, you'll triple the occupancy in 3 years. But in year 1, will you be spending more on the asset?
No, so there is no immediate requirement of any more capex that is required in the asset. What I mean by more money, if we feel, so right now the hospital is 250 beds. That is the expanded capacity. There is an adjacent land parcel just available behind the hospital. If we feel if we test the market in a couple of years' time, when we reach optimized utilization, a further 200 beds can even be created on that hospital and made on that additional land parcel, and we made it into a 400 beds.
Oh, got it. But Yatharth, no, I got your point. You're saying that there is potential, there is land, so if you have to expand. But I'm just curious, most, hospitals are operating at 60% occupancy, if not higher. I mean, 35% in, near the capital city. Why is it operating at such low occupancy in the first place? And also just tell us about the funding. How are you funding this 260 crores?
Right. So if you look at the occupancy that, they're doing is calculated on the operating bed. Right now, they are not operating at 250 beds. When we talk about the operational occupancy that they have, it should be close to 45 to 50% occupancy that they're having on an operating bed. Second is, also they've recently just empaneled with certain government schemes like the CGHS, ECHS, something that they were not doing earlier. Only around 6 to 7 months back is then they have empaneled with government schemes. They were largely focusing on private insurance and self-pay business, which still contributes more than 75% to their overall business. So that's where we feel, it's still early days as far as the hospital has the complete empanelments now. There's still certain super specialties that they were not focusing on, which we feel, when we will be there, we would be adding to those. So there's a huge potential in terms of the occupancy ramp up. Also, it would be easier for us because we understand the markets pretty well. Already, there's a strong patient base from Agra who were coming to our NCR hospitals.
Sure.
And as far as the funding of this 260 crore deal is concerned, we feel that right now we have enough internal accruals to fund this deal. If required, that option is always there. So that's how we will be funding this acquisition.
Stock's done phenomenally well this year. It's up 40%. Low was 350. And it's now up to about almost 800 rupees now. So that's Yatharth Hospital's view. Yatharth, good morning, Prashant here. Just a quick word in terms of where this puts you up with regards to growth aspirations. What should we work with? What kind of numbers on a CAGR basis for you?
See, I think we have always maintained that, for last 2 years, the company has grown at a 30% yearly growth in terms of our revenue is concerned. For the coming 3 to 4 years, we feel the company is still on that trajectory. This acquisition just solidifies our numbers much more. We feel that it also aligns with the strategy of expanding and acquiring at least one asset each year. That's what we have done for last few years. Last financial year, we acquired, in fact, 2 assets, one in Delhi, one in Faridabad. Before that, also each year we acquired one asset. And this financial year, that was the plan. I think the Agra deal aligns with that strategy. And going forward, we're committed to further, expand both in terms of greenfield, brownfield. Right now, with this acquisition, we are around 2,500 beds. We would like to grow in terms of our bed capacity in the coming years as well.
2,500 beds so far. And how many sort of visibility for how many more? Maybe hospitals being built in that sense?
Yeah, so there are 2 brownfield expansion that is already going on. 200 beds and 250 beds each are being planned in our Great Nod and Nod extension that would come into picture within 2 years. And by that time also there would be certain more greenfield or acquisition being planned. So as things stand now, we had taken a target of reaching 3,000 beds before the financial year of ending 27. I think we will be well ahead as far as that target is concerned.
Okay, Yatharth, we'll leave it there. Good luck. Thank you very much for joining us and really appreciate it, your time here on CNBC-TV18. Well, you're going to pivot back to the market and just a slightly more top-down, macro-ish kind of view, but important nevertheless. I spoke with Chris Wood of Jefferies. He's the global equity strategist at Jefferies, one of the most closely watched equity strategists. And he says that markets here in India, they've been sideways, at least at a headline level, for about 14 months, but they may continue to drift in 2025. It's not entirely impossible they do that. But he thinks a sudden US-India deal could lead to a tactical rally. So just want to play out a few sound bites. This is the first one.
It's quite conceivable that it wouldn't be a surprise if we traded sideways for the rest of the year. Now, if we get a sudden resolution of this US-India trade thing, that will trigger a short-term rally. But the more important point in India is, do we get a pickup in nominal GDP growth next year? Based on the monetary easing we're seeing under the new RBI governor, and based on the various policies to trigger a boost in consumption demand initiated by the government this year. I am assuming a pickup in nominal GDP growth. If I'm wrong on that, then I'm too bullish. There's got to be a 50% possibility of that, simply because it's quite clear that these 50% tariffs are rather anomalous. It seems pretty clear they were triggered by the US president's personal pique, that he wasn't allowed to intervene in the India-Pakistan dispute. And it seems pretty clear from a US foreign policy standpoint, these 50% tariffs have needlessly antagonized India, and, it doesn't make sense from the US standpoint, from a diplomatic standpoint, to encourage an improvement in India relations with China. So for all these reasons, They're probably looking for some, my guess is the US is looking for some kind of deal. Korea's had a huge move this year, and most foreign investors have missed it, so they've been playing catch-up. And they've also been having to buy back Taiwan in terms of people selling India to fund Korea and Taiwan. If it wasn't for this Trump tariff issue, I think there would have been a chance that money would have started to enter India, in the last 2 months. But because of the Trump tariff issue, the return of foreign money has been delayed. But going into next year, for people who buy my story that nominal growth is picking up, I would expect FAIs to turn net buyers by the end of this calendar year, even if this tariff issue is not resolved.
Welcome back. That was, of course, Chris Wood with a big view coming in from Jefferies. Let's take the conversation forward. We have Deven Choksi for some stock ideas this morning. Deven, great to have you in. We were just discussing, the business with the hospital company with Yatharth. I don't know if you could hear that conversation. But generally, it's been an interesting space. And the sector leader, Apollo, has been a huge wealth creator. Do you have any favorite picks here in the hospital space?
Hi, Sylvie. Good morning. Well, I think the valuations are not allowing to re-enter into this particular space because the valuations are already discounting at least many years ahead, and I think as a result of which the stocks remain expensive. So that's a clear understanding that we have as far as ending the stock in the portfolio is concerned. However, we remain distinctly confident about the prospects going forward. The number of bets that each and every one of them, the larger ones you mentioned, like Apple, are adding into, I think they are suggesting that the higher amount of business and the continuity will continue. However, I think the correction in the price is always a better choice to buy into the stocks. I think we see relative valuation availability somewhere else. I think as a result of which, I think we don't chase the positive valuation. That's the only rationale.
Hi, Deven. Good morning. Good to see you, Ben. Let's focus on a couple of other names. Sudarshan just joined us. He ran us through a couple of brokerage calls on cement. And, CLS is quite positive on a whole host of names. What do you like from that space?
Yeah, Nigel, good morning. We certainly like the players who are pan-India players and having the largest capacities, and that includes the likes of Ultratech and the Adani Cements. We believe that I think the larger the capacity, better would be the ability to generate higher amount of return on the investment as well. Also, there is the fact that I think with the kind of increase in the price that we are seeing, and on the other side, the cost of energy, which is coming down, is adding to the higher amount of profitability. So better capacity utilization, better ability to move the commodity from one end to another, which Adani possesses due to the port connectivities that they have. And at the same time, I think lower cost of energy and the better realization. They are allowing them to get better return also. So larger capacities are our preference also because of the fact that the growth in the cement sector as a whole is possibly, I think, moving to the next level. I think given the kind of next 3 to 5 years of consumption demand that we are seeing both from the infrastructure space as well as from the housing space. So remain bullish on the large capacity companies, Ultratech and Adani Cements.
Got that. So those are some individual names which we're discussing here at this point in time. Just Deven, if you will, we are getting closer and closer. Next week, of course, is the 22nd when the GST cuts, etc., are applicable. Is bulk of this move with regards to GST already all done? Or you think there is some left and it'll play out once people gauge what is actually happening on the ground? The general belief is the one category which is set to benefit the maximum is autos. What's your sense, Deven?
Yes, Prashant, absolutely. I think if you minus the uncertainty period between 15th August to 22nd September, which is where I think most of the players have probably preferred not to lift the stock from the factories because of the GST change coming in. That could be having a possible impact on the workings of the company for the September ended month. And that could possibly affect some part of the quarter two results. But if you minus that part of it, that situation, the next quarter, probably I think you're going to see the surge in the demand. At least I think the pent-up demand will also show the better amount of performance in the next month, along with the festive times. And at the same time, I think given the kind of lower GST, we are likely to see, I think, better amount of profitability for some of these companies, largely because of the fact that even though they pass on the current GST, I think they also have the advantage of, I think, increasing the price with a little larger volume, particularly in FMCG companies. You mentioned the automobile ancillaries. I think I would add to it the real estate companies. We believe that I think both these segments could possibly be beneficiary of the discretionary spending power which is there in the hands of the customer because of the higher demand for automobiles and the real estate. And at the same time, I think the cost structure, when it comes down, it adds to the profitability. It would be interesting to see how second half of the financial year pans out for some of the companies in both these sectors.
Okay, well, Devin, we'll take a quick commercial break here. We'll come back. Technical trades also coming up. Sudarshan and Mitesh are going to be with us as always as we run up to market pre-open, which is about 12 minutes out. Stay tuned.
Development of multilingual chatbots and voice assistants which enable customers to interact with banks in their native language. This is a revolutionary change as by localizing the user experience, the AI can enable more people across different languages, literacy levels, and abilities to confidently use formal banking services. I'm told banks are also experimenting with using artificial intelligence to enable staff to respond to customer queries which can enhance the customer experiences going forward. Timely resolution of customer queries boosts trust in the banking system and encourages deeper engagement, furthering financial inclusion. As digital access has expanded, so too has the customer complaints. This highlights another use case for the artificial intelligence. It can efficiently categorize, prioritize, and route complaints, enabling faster proactive resolution by detecting patterns and addressing root causes before the issues escalate into grievances. Artificial intelligence-powered loan servicing platforms can create personalized repayment solutions and reduce operational errors across servicing and for portfolio management. They can also provide new ways of loan servicing by supporting collections and recovery through prioritized outreach strategies. AI can help to strengthen compliance with auditable trails of measures initiated for recovery. AI also holds potential for safeguarding the financial system itself. As cybercriminals increasingly use AI for sophisticated attacks, the regulated entities can leverage artificial intelligence-driven tools to protect customers and detect threats. AI can monitor large transaction volumes in real time, flagging anomalies that may indicate fraud or money laundering, especially in complex areas like crypto transactions, where parallel financial channels exist. With the fintechs advancing rapidly, the regulated entities are increasingly partnering with them across the credit life cycle. A key model, digital lending under banking as a service, involves embedding processes like KYC, credit assessment, and recovery directly into the fintech platforms.
Okay, welcome back. 9 minutes to go for the pre-open session. We're, of course, focusing on Prime Minister Narendra Modi turning 75 today. and of course at the helm as Prime Minister for the last 10 years. How has the market fared under Prime Minister Modi? Hormuz is here with more details. Hormuz, over to you.
You know, as Prime Minister Modi celebrates his 75th birthday, what has the market not seen in his 11-year tenure as Prime Minister? Multiple geopolitical headwinds, right from Brexit to even healthcare crisis like the COVID pandemic. But the bottom line is that the markets have given handsome returns to investors during this period. And take a look at this. The Nifty Bank, both have more than tripled in value over Prime Minister Modi's tenure as Prime Minister. And we are taking this from the close of the 26th of May 2014 when the Prime Minister Modi was sworn in for the first time. But the actual merry has been made by the broader market names. The mid-cap index is up almost 500%. The small-cap index too up a similar quantum, almost 200-300% there as well. Sector-specific indices as well. The auto index is up 4x. The IT index is up 4x. The FMCG and pharma index both have grown 3x each during this period. And the other indices as well, the realty index, the PSU index, the metals index, all of them gaining anywhere between 150 to 200% over this last decade. And if you take a look at the stock-specific activity as well, take a look at the Nifty entrants. Of course, not all of them were part of the Nifty back then, but from there on, Trent is up 5,000%. Bajaj Finance has been the compounding story of the decade. Adani Enterprises has seen handsome returns. Some of the other names that have done well on the Nifty, Bharat Electronics, a reflection of the government's defense and Make in India push. Bajaj Finserv, Titan, the homegrown story as well, 1,000% returns for the Tata Group stock as well. So all of these Nifty names have done really well. Now take a look at the banking gainers as well. Private financials, of course, they have been the ones that have led the Nifty higher. ICICI, HDFC, Kotak, almost 4x to 5x during this period. Federal Bank, EU Small Finance Bank, India's largest lender, SBI, also has tripled during this period as well. You take a look at the broader market gainers, is talking about the fact that the broader markets have made merry over the last decade. Take a look at these returns. APL Apollo up 7,000%. Dixon Technologies 6x. Solar Industries 5x. Masgaon Dock had an IPO price of around 144 and now trades well over 3,500-4,000 rupees. That is after adjusting for the stock split. SRF as well has been a multi-bagger over the last decade. Escorts, Kubota, BSC, Coforge, Motilal Oswal, Tata Elxsi, all of them seeing handsome returns over the last decade in excess of around 2,000%. You take a look at the small cap gainers as well. 20 constituents on the mid-cap index with 1,000% or more returns during this period. Now moving to the small-cap gainers, and they too are not far behind. Look at JBM Auto, Naveen Fluorine, PCBL, HBL Engineering, all of them gaining anywhere between 4,000 to as high as 7,000%. Aegis Logistics, PG Electroplast, Radico Khaitan, Zen Technologies, another defense name that has done well over the last decade, returns of around 2,500%. And compared to the mid-cap index, at least a third of the Nifty small-cap index, 31 constituents with 1,000% returns or more over the last decade. Moving forward as well, take a look at the PSU outperformers. Look at the defense, railways, the push of the government on defense, BEL, RVNL, IRCTC, all of them seeing very handsome returns over the last few years, over the last decade. HAL, HPCL, IRFC, of course, the recent listing, and despite the correction that the stock has had from the peak, the stock has delivered handsome returns from its IPO price. So all of them, all in all, it's been a decade of returns for market participants, be it in the index or be it the broader markets.
5 baggers or 7-8 times or 10 baggers, 11 baggers. I think people will take that with both hands over the last decade or so. Hormuz, very interesting data. Thank you so much for putting that in perspective for us. For the timing, let's look at the market here and now and talk about today's trading bets. Sudarshan Sakhani and Mitesh Thakkar are both with us. Gentlemen, good morning. Good to have you both in. So, yes, I think the market yesterday, the Nifty has managed to go past a lot of the resistance levels that we've been discussing with you over the last couple of days. The question is, what next? Mitesh, what's your outlook today?
Yeah. Good morning. So, we've been maintaining that the market will be upward bias and could hit the upper end of the range, which is basically 25,260 to about 25,320. That is a very important level. I think today we'll open around those levels. In case we fail to move decisively beyond 25,320, then there could be one leg of a pullback before the up move gathers momentum again. So I think that is the only question. I do believe that eventually 25,500 should be the next logical target. But given the fact that 25,320, 300 zone is an important one, traders should at least take some profits on the Nifty and see if there is strength or there is pullback. But on stock side, clearly the bias is on the long side.
Okay, got that. Sudarshan, what about you? Looking at a long trade today?
Yeah, good morning. I'm very pleased. For the last 2 weeks, we have been saying go and buy the Nifty. And the Nifty went up 30 points, 50 points, 70 points. Sometimes it does that for days altogether. And yesterday it decided, okay, I really want to go up. But since the buying idea, the Nifty has gone up more than 500 points, although it was by stealth almost. The trade still remains to be a buyer. There is nothing to suggest that the market is willing or prepared to go down. It can, but we don't have any evidence. So what we do when the trend like this is in front of us is to raise our stop losses. From 24,400, we are now at 25,000. And today I would suggest 25,100 is your trailing stop. With that stop, you buy dips, buy consolidations. For those who are uncomfortable with the rally, always take profits.
Got that. You know, what we're going to do is take a break here, come back and talk about individual trading ideas with both of you gentlemen. Stay tuned.
While such collaborations enhance financial inclusion and innovation, they can also bring risks such as blurred accountability, data misuse, inadequate grievance redressal, and potential mis-selling. The guiding principle to address this remains the premise that regardless of the model being used, accountability ultimately rests with the regulated entity. Technological advancements come with the challenges that the regulated entities must recognize, as these risks can undermine the benefits of innovation. For example, the recent Supreme Court ruling on the video-based eKYC highlighted that mandatory automated processes may create barriers for people with disabilities, underscoring the need for fairness and accessibility in technology adoption so as to avoid exclusion. Artificial intelligence without proper controls can introduce risks like algorithmic bias, lack of transparency, ethical concerns, and systemic vulnerabilities. It can also amplify the existing risks such as third-party dependencies, concentration, model, cyber, and data privacy risks. Let me highlight a few of this. Even as artificial intelligence adoption grows, financial institutions increasingly rely on complex networks of external service providers, cloud platforms, artificial intelligence vendors, and data aggregators. These interdependencies create hidden vulnerabilities where a disruption or a breach in one link can cascade across multiple institutions, disrupting critical services. The complexity and
Welcome back. Well, as promised, let's get in Sudarshan as well as Mitesh back on the show and in fact get their stock picks. Sudarshan, you go first. What's on your radar?
Well, ICICI Prudential is a buy with a stop under 592. Grasim is a buying opportunity with a stop under 2787. United Spirits is a buy with a stop under 1304. And finally, Lodha Developers, which rarely comes in my list, but it has today, is a buying opportunity with a stop under 1174. It's an all buy list.
Got it. All buy list. Morning, Mitesh. What about you?
Yeah. I have majority buy calls today. 3 buys to a sell. For me, on the buying side is Bharti Airtel. A good breakout here from declining lines. So I would recommend long positions with a stop just below levels of 1920. We'll look at a target of 1980. Buy on IRERA with a stop at about 149. Here I would look for targets in the range of 159 to about 160. And a buy on Cyan. Big price and volume action there. So buy here with a stop at about 1242 for a target of 1350. A slightly positional call. And one sell call, that's MFSL. Keep a stop at about 1585. Look for targets of 1520.
All right, gentlemen, thanks very much, both of you, Mitesh and Sudarshan, for that. Well, the big movers from yesterday, right? We'll just quickly address it with regards to what lies behind the price action that you saw on the screen. Hormuz is here, as always. Hormuz, take it away.
Prashant, some interesting names that emerged on this list. Allied Digital Services was one such name, and yesterday's move was the biggest single-day gain since October of last year. Volumes were the highest since September of last year. Almost a crore, more than a crore shares that changed hands yesterday. You take a look at the 20-day average, that's only 1.5 lakh. And the delivery volumes as well were 14 lakh shares marked for delivery compared to a 20-day average of 80,000. And the stock is still down 21% this year and well over 40% below its 52-week high. The other interesting name is Cross, and that stock is up around 43% in the last 1 month. And over this last 1 month, we've seen increased trading activity in the stock. Now, from September 16th of last year till the 21st of August this year, the average daily traded volume was just around 5.5 lakh shares. From the 22nd of August till yesterday, the average daily traded volume has increased to 75 lakh shares. Now, yesterday's session, we had around 4.5 crore shares change hands compared to a 20-day average of around 60 lakh shares, and 10.5 lakh shares were marked for delivery compared to a 20-day average of around 5.5, almost 6 lakh shares. Now, why 16th of September is important? Because 16th of September last year was the day when the stock made its trading debut, and despite this 43% up move in the last 1 month, the stock is still below its IPO price. Now, Ixigo is the one, we spoke about this on closing yesterday. Third straight day of falls, almost 15% now in the last 3 trading sessions. Has given up all the gains that it had at the start of the month. And look at the volumes here. Over the last 3 sessions, anywhere between 50 lakh to 1.5 crore shares. Even yesterday, we had 1.3 crore shares change hands, 20-day average of 37 lakh, and 40 lakh shares were marked for delivery, which is a 20-day average of just 11 lakh shares. And the last name on the list is Orient Technologies, is the biggest single-day gain and volume since November of last year. We've had more than 10 lakh shares traded in a single session for the first time after March of this year. We had almost close to 30 lakh shares traded compared to a 20-day average of 1.5 lakh, and 6 lakh shares were marked for delivery compared to a 20-day average of just 72,000 shares. It has done well. It listed last year. The stock is up almost 70% from its IPO price.
Okay, all right. Thanks a lot, Hormuz, for joining in and giving us, all of those stocks that you spotted. Well, let's focus on another news piece that came in yesterday. Navin Jindal's, privately owned company, that's the overseas subsidiary, Jindal Steel International, they have submitted a non-binding bid to acquire ThyssenKrupp's European steel business. Now, this is important because, you need to keep in mind first, Jindal Steel is the listed entity, and this acquisition attempt is being made by the non-listed entity. That's separate from Jindal Steel, which is listed. To give you a few details about, the entity, Jindal Steel International, well, the financials in the past year, the revenue was around 12 billion euros, EBITDA margin at around 22%. And as per the release that they put out, they believe it's not too leveraged. To discuss this, what's the impact, we're joined by Aditya Velekar, the Senior Research Analyst at Axis Securities. Hi, Aditya. Good morning. Good to see you. Well, give us first your analysis of, Mr. Navin Jindal's unlisted entity trying to be a little bit ambitious. And do you think that it will have any kind of impact on sentiment on the listed entity, Jindal Steel? The problem is, it's a large entity and the steel will be worrying about funding of this. Your take.
Yeah, good morning, Nigel. So thanks for having me on the show. So you are right. Means these kind of acquisitions, especially in Europe, we have seen that these are quite difficult. Means we have seen in the past how Tata Steel is still struggling with its European assets. So here in this case, ThyssenKrupp Steel Europe is also means they have a blast furnaces and integrated steel operations, and they will have to transition to electric arc furnace green steel. So if Jindal Steel International goes ahead and bids for this asset, they will also have to go through the process of restructuring those blast furnaces, mothballing those blast furnaces, taking the pension liabilities and solving the job cuts, etc. So all these process is slightly stretched and difficult to execute. One positive thing is that ThyssenKrupp Europe Steel has a very good portfolio of steel products, especially its automotive segment. And in Europe, Germany, it is one of the largest players. So on the positive side, it gives them access to European market where automotive segment is have a good exposure. But as I said, means ThyssenKrupp Europe has a 10 million ton of steel capacity, and most of it is blast furnace driven. So that has to be transitioned to electric arc furnace, and that process is slightly costly, and at the same time it involves a lot of restructuring.
Yes,
So,
indeed. And what could the rough cost be, this transition? Because we have a benchmark with regard to Tata Steel Europe, right? I think it was 1.2 billion, if I remember correctly, 1.2 billion euros. But that was for around, I think, a 3 to 4 million ton plant. As you're telling us, this is a 10 million ton plant. So the cost could be very high?
yes, for Tata Steel, the cost was slightly lower. It comes down to almost $0.5 billion per metric ton, because it is an electric arc furnace. Also, we have to recall that they have got grant from UK government also of almost 0.75 million pounds, billion pounds. So for them, that was slightly lucrative in terms of capex. But here, the cost, on a ballpark basis, the valuations run down to $1 billion per metric million ton for any kind of building electric arc furnace. Okay. So that is the ballpark cost we can take into account.
Okay, all right. And will you be worried about the listed entity, that the promoters being very, very ambitious? Or would you think that, they're obviously bought out both the Oman asset as well as the power asset. So at the parent level, actually, Mr. Navin Jindal is in far better shape than, say, around 10 years ago when the street was very, very nervous about what's going to happen next. Do you think any concern for Jindal Steel shareholders, or no concern?
Yeah, Mr. Jindal has taken quite aggressive bets in international markets, and we have seen that in the past. And this ThyssenKrupp Europe is also quite aggressive bet. And on the listed entity, might be in a very short term, we might see some sentimental impact, but then the fundamentals of this listed entity is quite strong. So the Angul capacity will be doubling almost to 12 million tons and aggregate capacity to 15.9 million tons.
In short, Aditya, you're not worried for the listed entity, right?
Yeah, not in the short term, we might see some sentimental impact maybe today or maybe this week. But then, as I said, fundamentally, the company is growing. They are executing. They are increasing their capacities almost double at Angul. So, so may not be that negative as for now.
Okay, let's talk about Vedanta. Vedanta is having that hearing today. It's at around 460 rupees. In the last 1 year, the dividend would be around 52 rupees. So in that sense, it's been a decent performer, taking into account the dividend. Do you think there is still unlocking left in Vedanta? One school of thought is it trades at less than 5 times EV on EBITDA. The other school of thought is they deserve to trade at that particular valuation. Your take?
Yeah, Nigel, so yeah, you pointed out this dividend yield is quite lucrative, and that is one positive point for Vedanta. But only thing is that we have to track the deleveraging progress, and that remains quite critical. And this demerger will unlock value definitely, especially in the aluminium segment. But the deleveraging should progress, and the capital the capital management and deleveraging, whatever they are saying, from currently they're at Vedanta Resources level, the debt is almost at $4.7 billion, and at standalone entity it's 58,000 crores. So that deleveraging progress has to happen, and this demerger will unlock value, especially in power and aluminium segment. So that is on track. The valuations are definitely slightly lower as compared to peers, and that is due to the higher debt sitting at the holding company.
Yeah.
But yeah, so I think the key monitorable here is the deleveraging progress.
Sure, absolutely. That always is a key monitorable when you're talking about the Vedanta parent. Very quickly, Aditya, just to go back to Jindal and ThyssenKrupp. Now, this entity, I think, did sales of over $12 billion last year, annual sales. Then you have liabilities, pension liabilities of some 2.7 billion euros. Then there is this electric arc furnace additional expense if they're setting it up for 2 billion. I'm just trying to understand is, if you have a handle on this, what are valuations looking like, and what could be eventually, the size of this bid or the offer, if you would even have a guesstimate. I think Chorus back then was over 12 billion euros, if I remember. I could be completely off. But in its entirety, what do you think could be at stake here in terms of the total quantum that Mr. Navin Jindal will have to put up?
So on a ballpark, we can assume $1 billion per million ton. So if it's a 10 million ton capacity, then it's a $10 billion bid we can expect. I think that plant, that company, ThyssenKrupp Europe, has already sold 20% of its stake to one of the companies, but that amount is not disclosed. So they are going to sell another 30% to form a joint venture with that earlier buyer to form a 50-50 joint venture. But I think now with Jindal Steel actually going for a bid, that amount on a ballpark basis, we can assume $1 billion per million ton. So I think that is the figure that we can go for.
Yeah, so $10 billion, but we'll need to see, obviously, I mean, in terms of what the eventual structure, contours, and who the other participants are, if at all. Thank you, Aditya, very much for joining in. Quickly moving on, I think get to the 9-10 calls. Yeah, and the pre-open has settled. Nifty's up about 37 points.
Sudarshan, what are your 9-10 call?
It's ICICI Prudential buy with a stop under 592.
Okay. Mitesh, what about you?
I'll go with a buy on IREDA for targets of around 159 to 160.
Okay, IREDA is Mitesh's call on your screen now. Now, the big talking point, same time tomorrow, is going to be what the Fed has done and what Jerome Powell has said. So Chris Wood of Jefferies, the portion that he addressed the Fed on, his point is very simple. He says if it is one and done, market doesn't do anything. If the market gets a hint that there is more coming after the first cut tonight, which is fully priced in, the US markets may see a melt up. Listen in.
But what's clear is the Fed has decided to prioritize the labor market over inflation. And I say that because the inflation is still significantly above the 2% target. So in this environment, clearly there's potential for more of a melt up in the US equity market on the Fed easing. And you can make a perfectly respectable argument that the Fed shouldn't be easing yet. But the reality is the Fed is going to ease. I remain constructively bullish on gold. Actually, I set a target of $3,600 an ounce for gold back in 2002. It's finally reached that target. Frankly, it should have reached that target 10 years ago, given all the crazy things that have been going on with G7 monetary policy. So at least we're now reaching more for sensible levels in gold. The short-term issue for me was gold going to break 3,500. So now we've broken 3,500, so it's beginning to look like gold's entered a new trading range. You know, I remain bullish, structurally bullish on gold, but the really exciting story right now is the gold mining stocks. Because the gold mining stocks have been underperforming bullion in this bull market that began in 2022.
Okay, both Bitcoin and gold are, both found in Chris's portfolio. More later. Just want to recap some of the stocks we put out in the morning with regards to news flow. L&T, Vedanta, BEL stocks will come up in terms of how they closed at the end of the pre-open session. Mahindra Lifespace, TVS Holdings, Coal India. These are a few other names which should come up. There is also Amber Enterprises, Gujarat Fluorochemicals, which are going to be coming up. Lupin, Dreamfolk Services, of course, on the negative side. So there is a bunch of names, not huge in amount of news flow. It's been a bit quieter news flow-wise, but in terms of some of the single stocks, there is one or two. We've got market open coming up in a few seconds from now, so we'll just address that. What do we have? 25,280 on the Nifty. We're about a 0.25% higher, as indicated by the pre-open. The Nifty Bank, 10 days on a trot, that index has been higher. It's a little quieter this morning. The small cap index, no problems, 0.5% higher to begin this Wednesday morning. And the small cap index will come up on your screen, 0.5%. Mid cap index will come up as well. So I think around 0.5% there. A third of a percent higher in the mid cap index is what you have. Nifty heat map gives you a quick sense of how things are opening up on the index. And what do we have? Tata Consumer on one end, and they've got SBI Life on the other end. Which are starting, but it's overwhelmingly up and about. Remember, the Nifty yesterday took out the prior high, the previous high. It's taken out all, daily and hourly averages, etc. So maybe a bit more extension here. 25,500 or so, the first stop. 25,300 for now, with about a 60-odd point higher start as we begin today's session. Surbhi.
Okay, Tata Consumer, top position. Yesterday, the company announced that it will be offering the price benefits on its tea portfolio to customers. Not sure that would be the lone reason why the stock is up 3%, but it's a big mover today. The other one is Coal India. Coal India has emerged as the top bidder for a rare earth block. Market's getting a little excited about that. 1.5% up on Coal India. BEL is continuing its good form from earlier this week, 1.5% higher. Ultratech Cement, along with a bunch of other cement stocks actually, because of positive brokerage commentary. Some of the others like Shree Cement, etc., are also up and about. Then what do we have? We have Tata Motors, Trent, Grasim. There's Infosys. So it's pretty mixed. There's also Reliance, there's Maruti. So really lots of legs to the market up move, 50 points higher, and overall looking good. On the flip side, let's see, Adani Ports is cooling off. Pharma is not in favor today for sure. Cipla, Dr. Reddy's and Sun, all these stocks are down. But that's about it. Some pharma cool off. Otherwise, most of the Nifty constituents are nicely chugging along this morning. Nigel.
Well, that's right. Just keep an eye out on a few stocks, that are moving higher in decent volume. Skytex Garments, the stock is up closer around 4 to 4.5% or thereabouts. Year to date, it's still down closer around 4%. But good pop-up is what we're seeing. Redington was one of the stocks that moved very, very well yesterday. Today as well is building onto the gains. It's up closer around 3%, one of the top volume movers. Aditya Birla Fashion, they have launched value retail brand owned. They plan to open close to around 100 stores. The street likes it. One of the top movers today. Belrise, Investec had come out with an initiating coverage note. And that's why, in fact, you have that stock as well that's reacting to that piece of news. Keep an eye out on a couple of these names like Gokul Das as well as Wellspun Living. When you see some bonhomie between our Prime Minister, Mr. Narendra Modi, as well as the US President, Mr. Trump, then these stocks, after getting hammered when the tariffs went to 25% and then from 25 to around 50%. So there is hope building up out there. That's why Wellspun Living as well as Gokul Das, both of them up and about in today's trading session. On the flip side, Gujarat Fluoro, the stock is down is because that large trade was awaited. That's got cleared out of the way, down close to around 2.5%. You have MobiWik, that saw a big rally. That's cooled off a little bit. But otherwise, a decent opening to kickstart trade. 25,300. The bulls will be thanking their stars.
Absolutely. And there is suddenly some sort of life and vigor which we are seeing in markets, at least at index level. Otherwise, it's been about single stocks and there have been so many 50, 60, 70% kind of movers, but the index, of course, has not gone anywhere for about 14 months now. This is the 14th month in that sense. Rana Gupta is with us. He's Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Do you think what we've seen, this 800-point move, is the so-called tactical rally in anticipation of some kind of a deal with the US? When I say a deal, I don't mean a full FTA, BTA. I mean this 25% getting knocked off. Or do you think if that were to happen, then you will get a tactical rally from here? What's your sense?
I think let's step back a bit. I think the market is in that 24 to 26,000 range for last 1 year now. As the earnings cuts have happened and then the domestic economy has moderated somewhat. But going forward, we see there's a GST cut, income tax cut in February, RBI rate cut, adding up to the stimulus side, which kind of nearly offsets the headwind from US tariffs. From here on, if US tariffs were to go down, then this will turn into a net stimulus, and that could be pretty positive for the economy as well as the markets in our view.
Okay, so from here, what will you watch, Rana? Is it just a game of waiting till growth picks up? Or are there any indications? I'm sure post the 22nd next week when these cuts go into effect, the street will want to see across product categories, consumption-wise, where are things picking up to expectations? Because many of these sectors have reacted already in that sense.
Oh, absolutely. So I think irrespective of the rate, if and when US tariff goes down, it will be net positive to the economy. And even before that, even if let's say that were not to be the case and tariff were to stay at elevated 50 or 25% level, the government has given significant incentive through income tax cut, GST rate cuts. So therefore, we believe the following three sectors or subsectors should see benefits, and that's why we are watching. Number one is auto. Auto is interest rate sensitive. Plus, for the last 2 to 3 years, barring SUVs, the sales have been pretty flat. So we expect definitely momentum to come back in that segment. Second, I think as a result of price of essentials going down, We do not think a person buys more of toothpaste and more of tea and all of it, but the savings on essentials can be spent on things like, let's say the food delivery, quick commerce, buying insurance products, or travel. And here, some of the internet platforms have very dominant presence. And third, in consumer durable. And we prefer playing the consumer durable through the manufacturing route. And also in the past, we have discussed that consumer durable electronics, these are growing areas, and how Indian companies are garnering more share by manufacturing in India. So that's the EMS part, that's also we like.
Okay. By the way, just looking at some more stocks on the move, Reddington has started its run again. Yesterday, it was a 20% move. Today, it's 4%. Not sure if this is just sentiment ahead of iPhone. I think it's 17, right? The latest one is 17. Those sales, I think, kick off here in India today onwards. I'm not sure if just sentiment driven or something additional. But that's one for sure. Credit Access about 3% higher. Watch out for the exporters. Gokuldas Exports is soaring 5% higher on this expected breakthrough, some sort of a breakthrough in those tariffs. And Gokuldas is definitely on the move. Rana, great to have you in. On the exporters, actually, let me take up that piece. How do you look at them? Because the thing is, they're high-risk sectors, given all the tariff talk, whether it is your shrimp exporters. And, we had favorable news coming in from the EU, and the shrimp exporters completely went through the roof for two sessions. And there are the textile exporters, apparel exporters. Do you like this space at all? Are you playing it or totally avoiding?
So for investors like us, we like a bit of predictability, stability, and some right to win. India's textile export, while competitive, agriculture and other exports, they face stiff competition from some of our neighboring countries. So therefore, I think when the tariff goes up, they will react negatively, and the tariff goes down, they will react positively. Underlying business is perhaps stable, but the stock price are not as much. So therefore, what we prefer among AAA exporters are the companies or the sectors where India has a right to win. And you can think of sectors like pharma, CDMO. In the small molecules, I think a lot of CDMO activity happens in China, circa 90%, and that's very high. And logically, even without going to geopolitical reason, I think there is reason when a country or a geography accounts for 90%, you begin to slowly diversify. And outside China, perhaps a bit of South Korea, India is the only place that can have that kind of domain expertise, which can support that kind of shift. So there, I think we like, and because this sector, India has a differentiating edge, and it's pretty difficult to compete with the Indian expertise, cost structures, and the product quality. So that's one sector on the export side we like.
All right. Hi, Rana. Good to see you in. What are the odds, though, give and take everything, after India's recent underperformance? Do you think, that premium as well that we enjoy in comparison to the other emerging markets, well, that's narrowed a little bit, right, post this spate of underperformance. But we're still at around 55% premium in comparison to the peers. Do you think from here on, if you have a 12 to 18-month view, Indian markets will relatively outperform after underperforming?
The tariff where India is ahead of India is worse off as compared to the Asian countries need to reverse. Most of the Asian countries are in 15 to 20. It needs to come back to at least that much for Indian market performance to resume. But let me add a bit more color to the India's underperformance and what's really going on. If you look at China and South Korea and Taiwan, the markets which has done well, or even Singapore for that matter, there are two legs to the story. One is AI, and second is the government or the regulator doing some terms of juice up or doing some value unlocking or giving some stimulus. In India, the AI leg is missing. Of course, the government leg is now kicking in. Now, emerging market investors' portfolio cannot be only AI. They would want to be emerging market consumers. And for that, India is the best place to go. Now, if the tariff remains high and given the stimulus given, I think India consumer and that sector will remain an attractive place. But once the tariff rolls back to in line with other Asian countries, I think then there is a case to buy other sectors, including the financials and the exporter sectors and all of them. So in short, I think even without tariff, Indian consumer sector looks pretty good. And for Indian markets to come back to outperformance, I think the tariff needs to come down to at least to the other Asian markets level.
All right, let's talk about the BFSI space then. In the past, I think we have discussed about that the NBFCs are a space that you like in comparison to banks. How are you positioned right now on the banking and financial space? What do you like out there? And, between NBFCs and banks, and within banks, PSUs versus private, your take.
So in the BFI space, with the RBI rate cut, we were quite positive on the non-banks as well as the private banks. On the non-banking side, we continue to remain positive on the large companies. Albeit, I think in the smaller non-bank NBFCs, which lends to as a commercial vehicle or micro lab or small SME, there is stress, and there is no denying that. So NBFC, our view is pretty nuanced. I think the larger ones are okay. The smaller ones will still face some asset quality challenges. Something like a microfinance seems to be coming out of it, whereas the small lab, small SME and single CV and all that, they seem to be going into it. So again, one has to be very nuanced in which non-bank one has to go. Bank, we have continued to like the private banks. And I think as the consumption picks up, private banks will do well. See, private banks kind of underperformed in the later half of the rally last year also because the government stimulus policies were towards the industrial side. And industrial side benefits the PSU banks much more because they are those corporate capex lenders. Whereas if our thesis is right, and this time around the rally, at least initially led by the consumer sector, we do think the large private banks are at a pole position and they should do well. Their balance sheets are solid, their return ratios are good, and the valuation is not excessive. So we continue to like the top private bank space.
Yeah, no, absolutely. Just a bunch of other names, right? We got about 4:1 in terms of advances to decline ratio, and it's looking looking pretty solid in the broader market space. Even though for the Nifty it's about 50 points so far. Maybe just a few names, right? Reddington had a big day yesterday. And it's up about 1.25% this morning, but it's got the largest volumes in the NSE. Persistent is up about 3%. Persistent coming up with large volumes again. There's a 17% move on what is this? Platt IND but it's got the third largest volumes in the NSE. We'll try and see which one this is. Aventel is up about 2%. Tata Chemicals is up 3%. KRBL. We spoke with the management, I think, day before yesterday, 2.5% higher in KRBL, 414. Premier Explosives, big explosive move, 7% higher on tremendous volumes as well for this point in the day. And you'll see that coming up on your screens. There's Wellspun Living, about 6% gains here. Gokuldas, of course, back above 800. And I can go down the list. There's Castrol, KNR Construction, Mahindra Life Spaces. It's picking up quite nicely in terms of volume-led gains. Credit Access, just looking at Credit Access, the low in, this year was about what? It's basically not doubled, but low was about 750. And stocks, 1350 now on Credit Access. So big one from the lows coming through on that one. Rana, just a last quick word on this entire data center opportunity. We've been having this discussion last couple of days. Any stocks here that you own in your portfolio on the back of it, that is the pointed large theme, the reason why you own a name?
Data center is, of course, a big opportunity, but the data center requires a lot of capex. And we think, based on our understanding in India, what's happening, the larger players are going to win. In terms of if you want to distill it down to the stock, it will be these companies are very large, one of the largest groups that you can think in India. So how much data center will add to the stock price is a matter of debate. Nonetheless, I think the larger telecom companies in India, they are doing very well in data centers. And going forward, as data center revenue picks up, they will become a quasi data center kind of a play going forward. But right now, the contribution of data center in the total valuation is quite low, but it's going to increase over a period of time.
Okay. All right, Rana, we'll leave it on that note for this morning. Thank you very much for joining in and giving us your perspective on the market. Well, before we introduce our next set of guests, a couple of other stocks that are worth noting. Let's pull up IEX. IEX has actually gone ahead and challenged this market coupling order. Remember, that's sort of pretty disappointing for their business because they lose their monopoly on the power exchange business. And now the company has filed an appeal. Let's see where this goes, but that stock's on the move. The CLSA note on cement that Sudarshan was talking about earlier, that has been noted and picked up by the market as well, because most of the stocks on which CLSA has a positive view, either an outperform call or a positive call, they're all up and about, starting with Ultratech. Shree is also higher. Dalmia is up about 1.5% as well. So some of these stocks are in focus. That's on the upside. And on the downside, I just want to point out Dreamfolks. I mean, it is little to say now, but it's just been a very painful journey for investors. Same time last year, 1 year back, Dreamfolks used to be a 500 rupee stock. Today, it's under 150. The entire business model has been completely, is decimated, too strong a word? Maybe not. It really has been, in this case at least. Well, with that, let's move on. Do we have our next set of guests with us? I think we do. And of course, we are talking about Prime Minister Narendra Modi's 75th birthday. As we've been noting, of course, greetings have been pouring in from across the country, around the world. Political leaders, party workers, citizens, all of them expressing their wishes and gratitude. And of course, India is on the global stage, on the global map, navigating some pretty important headwinds, including, of course, those US tariffs as well. Our colleague Shivani Bajaj is here to understand and take us through some of the most important economic reforms and economic policy measures that have been undertaken under Prime Minister Modi's leadership.
Well, yes, Narendra Modi's 3 terms as Prime Minister have been defined by bold, large-scale economic reforms aimed at making India a modern, digital and globally competitive economy. One of the first big reforms was GST in 2017, replacing dozens of state and central taxes with a single one. This created a common national market, reduced evasion and simplified compliance, especially for MSMEs. At the same time, Jan Dhan Yojana brought over 450 million bank accounts into the system, enabling direct transfers, digital payments and true financial inclusion. Combined with ease of doing business reforms, India's global ranking jumped from 142 to 63 in 5 years. Now, in the second term, reforms went deeper. The Insolvency and Bankruptcy Code cleaned up the banks, while Labour Code simplified over 40 laws into 4, balancing worker protection with global business needs. During the pandemic, Atmanirbhar Bharat and PLI program boosted local manufacturing, agriculture and MSMEs, generating jobs and reducing import dependence. And then a 1 lakh crore rupee R&D fund further fueled startups and high-tech innovation. Now, in the third term, the focus is on future technologies and sustainability. The semiconductor mission is building a chip ecosystem, while the India AI mission, with over 10,000 crore rupees of outlay, is powering startups and research. Simplified income tax rules, an ambitious clean energy goal of 500 gigawatt by 2030, and also the EV policies are positioning India as a global green tech hub. So from GST to Jan Dhan to PLI, AI, semiconductor and clean energy, PM Modi's reforms are deep, structural and future-ready. They empower millions of entrepreneurs, innovators and workers, laying the foundation for India's long-term growth story. Back to you.
Okay, well, those are, of course, just some of the many, many reforms and policy measures that we've seen over the last decade or so. Let's take this discussion forward. We have 2 experts joining in. We have Mr. T.T. Ramamohan, former professor of finance and economics at IIM Ahmedabad. And we, of course, have with us Mr. Sanjeev Sanyal, member of the Economic Advisory Council. Gentlemen, good morning. Thank you so much for being with us. Sanjeev, if I could open with you, we're having this discussion at a very, very interesting juncture. It's also a special day for the Prime Minister, right? And what better than getting a greeting from his quote-unquote friend, Mr. Donald Trump. How do you assess how India has navigated the last couple of difficult months where there is, we're at an intersection of foreign policy objectives, defense objectives, economic and trade objectives, and the need to spur the domestic economy against external headwinds? How do you rate the response so far, and what more should citizens and investors expect?
So if you see how we have responded to this entire tariff thing, you will see our policy has been very consistent. First of all, we have never escalated the matter. At the same time, we have stood our ground. So we think we are being reasonable and we are not going to bend. Many other countries have, but we have not. But as I said, we have at no point escalated matter. Whenever we have had a friendly overture, we have seen Honorable Prime Minister respond positively. So the idea here is that, look, as a rising power, we need to signal to the rest of the world that we can stand our ground. I mean, quite apart from standing up for our own interests, as we also need to show that, we are a power of some standing. And in that sense, we have, as I said, signaled clearly where the red lines are, and we will stand by it. So I think this is not just a issue about tariffs or standing up for Indian interests. I think what it signals to the rest of the world is that India is now no longer a pushover. And at a time when major economies like Japan, like the European Union, and many others have been quite happy to bend over, we have not. So I think in that sense, this is a very important geopolitical move as well.
But Sanjeev, the other part to my question, the domestic response, while we've stood our ground internationally, we've chosen to perhaps start a sort of dialogue with China. The GST cuts here, a different approach by the RBI. Is all of this enough, or does the economy need more at this point?
So what I will say is that, look, the economy has good momentum. Growing at 7.8% in the first quarter came out stronger than I expected as well. But the fact is that this is being achieved without any macroeconomic instability. So inflation is, in fact, at the bottom of the MPC's target range. The current account is basically flat, 0.2%. Deficit is nothing much. We've just recently got an upgrade as well. The banks are in rude health. So if we cannot take the pressure from the negotiations now, when are we going to do it? So I think we are in good shape on that front. If the economy needs some more support beyond the GST cuts and other things we have done recently, we have even more ammunition in the pipeline. I mean, we can do things on the monetary front, on the fiscal front, and of course, we are continuously doing ease of doing business and other reforms. So, we do have more ammo in the pipeline, and it will be used.
Gentlemen, morning. Prashant here. Sanjeev, and I think you've spoken about process reforms, right? Lesser talked about, but having an outsized impact as and when they happen. Just a quick word in terms of just are we, Sanjeev, finally seeing, and I think across, when we speak with bankers and people who fund the economy, both banks, NBFCs, etc., they all say that one of the things which needs to perhaps be focused on now from a domestic perspective is, this K-shaped recovery which began in 2020. That is, I mean, we're still seeing a continuation of that, and banks and we can see credit growth numbers, etc. They've kind of sort of dropped off at the mass end. You can see it across sectors, across categories. Is the focus now shifting to that segment in a big way, Sanjeev, in your opinion? I just wanted your thoughts. First, shift from infrastructure to consumption. Of course, it's going to be both, but maybe a little bit more on consumption now. And then at the mass end.
So what we need is a balanced growth. But I disagree with your idea about K-shaped recovery. I think the recovery was fairly well balanced. And I think we do need to push for more productivity and efficiency. So if you're thinking of the GST reforms we have just done as purely a consumption push, then you are mistaken, because essentially at the first instance, the real benefit of that is that we are removing the frictions in the system to basically keep growth going. Now, it also benefits consumption, but the idea is not merely to boost consumption. The idea is to make the system much more efficient. And we have been always consistent is that ultimately what you need is job growth. And job growth comes from higher economic activity. There is no such thing as jobless growth. That in history of economics, that's never happened. So sustained growth over long periods of time is what generates growth. And we have seen that as we have recovered out of COVID, that sustained growth has in fact caused the inflation rate to come down very significantly. And despite the fact that India is adding, because of its demographics, millions of people into the workforce every year, we are able to absorb it. Now, maintaining this growth momentum is absolutely critical. And so while, yes, we will do demand management, obviously, but making the country more efficient and making it more competitive in the global scenario, adding ourselves to the global supply chains. These continue to remain critical things that we are thinking about. The supply side is, in the long run, far more important than demand management.
All right. Good morning, gentlemen. Good to see you all in. Well, Mr. Mohan, coming across to you. Under our Prime Minister's leadership, will India scale digital inclusion, infrastructure, global stature as well? The road ahead is going to be important, though. We need to sustain this high growth, quality jobs, private capex, maybe some more deeper reforms as well. Trade, manufacturing, finance, that's top of mind. How would, what would you say about the last few years for India? And what's top of mind in the next few years?
Well, the record of the last 3 years is clear enough. We have recorded growth of 7.8%, which is way above anything that any analysts and commentators had predicted. So I think one of the things that is notable about the performance of the present government is that it has consistently produced surprises. I think one of the biggest surprises was that we entered COVID with an NPA level of, I think, close to 6%. And the betting was that with a shock of that sort, the NPA level was bound to go up in the system. What else do you expect? But lo and behold, the NPAs actually started declining post-COVID. So I think I think this government has developed the necessary macroeconomic tools to deal with crises of various kinds. And I think it is somewhat premature to talk about sweeping reforms at this point, because what we are facing now is a situation of unprecedented certainty. It's very difficult to for private investors or even for the government to plan very far ahead until the entire tariff regime settles down. And the priority in this system, the priority in this situation for the government must be to reduce uncertainties of any kind. And here we are very well placed because we are looking at a growth forecast of 6.5%. And if the present tariff regime remains in place, which is 25% plus 25%, we are still looking at something like 6%. And given that this is the baseline forecast, and we have plenty of flexibility on the monetary side in terms of monetary easing and fair degree of flexibility on the fiscal side, I think we are very well placed to respond to this situation. But I think one shouldn't be in a hurry to roll out reforms because many of these reforms are sector specific. And it'd be very difficult to have a clear view of what precisely reforms are needed until the situation settles. But the model that we have followed so far, which is that the government takes the initiative in pushing investment, particularly investment in the public sector, particularly in respect of infrastructure. Now, this is an approach that paid off very well during the COVID crisis, and it was backed by liquidity support for private enterprises as distinct from fiscal support. So I think that is a model which we should broadly adhere to in the present situation till the dust settles down.
Sure. Okay. Gentlemen, I just wanted both of your comments on our engagement with China. And while, of course, we work with the US side to see if there can be a de-escalation of sorts on trade, the other, important segue that opened up after the SCO summit was the way we will engage with our neighbor. Sanjeev, your thoughts here, and I'm not getting into the foreign policy and the security aspects of it, but purely in terms of having a trade relationship. We know about the high surplus or the high deficit we're running with China. And then there is the Indian industry, which is used to a high degree of protectionism from everything Chinese. Has the time come to change that? Are we ready? What would you advocate here?
So I think here we have to take a balanced approach. On one hand, we have been very clear that we don't want to join Sept, for example. But on the other hand, the fact is you can't wish away China. China is the source of a lot of inputs into things in which we are planning to be a part of the global supply chain. So if you want to be a part of the supply chain, you cannot wish away the fact that China is such an important supply of all these inputs. So in that context, I think the idea is that we be pragmatic about it, where we need their inputs or even investment, we should find ways of engaging with them. But at the same time, we have to say that there are interests that we need to protect, and those should be protected, which is the reason that it's probably not a good idea to get into something blanket like the Sept. But yes, the fact that we are now seeing a normalization of relations with China, starting with the Honorable Prime Minister's recent visit to China, I think that's a step in the right direction.
So many more questions, and we'll continue this discussion, and we'll invite both of you back on this program. For now, thank you very much, Sanjeev and Mr. Mohan, for joining us here on this program on this special day. Well, I just want to quickly make a mention of Urban Company, which has made its debut. So I think the pre-open is settled in terms of the listing. The price has been found, and those are shots which are coming in straight from the NSE. I think these are pre-ringing the bell shots, which will come in at 10 o'clock when the stock starts trading. But we should put the flash up. I think it settled at about 162 rupees. And they sold stock at 103 odd rupees or so. So that is Urban Company listing. I think, 100 times subscription? There you go. That's what I'm talking about. 161. 56% premium on top of the issue price. We'll take a quick commercial break here. We'll come back more on Urban Company, but also we'll go to the Jefferies conference, which is happening in Gurgaon. Peter Forlenza and Ashish Agarwal will be joining us from the sidelines of the conference with what the investor mood there is. Stay tuned.
Layers makes it difficult to identify risks, allowing them to accumulate unnoticed and spread rapidly during shocks. A critical vulnerability of artificial intelligence is its potential to synchronize behaviors across financial system. When institutions use similar models trained on overlapping data, their decisions on asset pricing, credit assessment, trading may align, creating hidden linkages. This can amplify market stress, spreading shocks rapidly, worsening liquidity shortages, increasing asset price volatility, and trigger sharp, self-reinforcing market swings. The integration of artificial intelligence into the financial system, especially through new interaction methods and increased reliance on specialized providers,
Welcome back. So we've got the market, which is up about 80 points, 25,320 is where we are at. Well, let's go across to the Jefferies conference, which is underway, day 2 in Gurgaon. It's a big one, a 4th investor conference, India conference for Jefferies here. Peter Forlenza is Global Head of Equities at Jefferies. Ashish Agarwal is India Country Head at Jefferies India. Gentlemen, great to have both of you here. Appreciate it very much. Ashish, let me get a quick sense from you. I mean, what's been the feedback so far, and what's the one question you're getting most from investors, and if you're getting some questions from corporates who are there as well?
Thank you, Prashant, for having us. We've got off to a great start. We have almost 270 odd investors at the conference and about 120 companies presenting, a variety of topics ranging from capex to AI to consumption, everything. The one question which is definitely on the top of every single investor is when will the capex cycle from the private side revive, and what will be the impact of consumption from the GST cuts that the government has announced. Indian markets have been sideways for the last 12 months since our previous conference. Relative valuations for India have corrected meaningfully. So every single investor is looking for when India starts to participate or drive the EM rally that we have been seeing in some of the other emerging markets.
That's well put. Peter, just give us the global perspective. I spoke with Chris yesterday, and he was saying that the big $28 billion that foreign investors have sold in India since the peak in September 2024. I mean, his point was it's all relative at the end of the day for global asset allocators. I mean, people have been chasing Taiwan, Korea, China earlier. On the back of valuations here, which have been expensive, Where are we purely valuation-wise? I mean, growth has to pick up. Nominal GDP growth has to pick up. And hopefully with these three things, 2 tax cut and 1 rate cut, it will happen. It will start to, come into view. Maybe second half or maybe next financial year, we'll have to wait for it. But as things are, where are valuations now, Peter? And is the valuation problem, are we close to sort of crossing that hump?
Why don't I speak a little bit about not just the valuation, but investor sentiment that we've seen really since mid-23 globally in the markets. I'm fortunate that I spend a lot of my time traveling the globe and speaking to global investors. And if I think back to kind of mid-23 into early 24, one of the main themes was from global investors, the current concern not only of the performance of the Chinese market, but the volatility of that market. And it was clear that fund flows were going to move out of China into other markets. And those themes were really three. One was the Mag 7, money was moving there in the US, but it was also into Japan, given some of the reforms, and very much into India, which I saw getting more attention than I had previously seen in years. And we had global investors that were doing a lot of work on Indian companies and the Indian market. There was some concern on valuation at that point. It's interesting that, as Ashish said, the market here has been largely range-bound since our conference last year, which happened to have been the peak, I believe, of the market for last year. And we saw money leave India and head back into China. I would call that more of a trade. Where are we now? Well, if we look at valuations, the market right now is not trading at historic highs, and actually the premium versus the MSCI EM baskets is right where it historically has been. So I believe we're set up right now for a time for investors, and I've seen it here at the conference, who have come into India, who have not been here before, who are now trying to learn more about India, and they're seeing the growth. And importantly, what excites us is the amount of companies that are coming public, which is something the world needs.
A very interesting perspective.
What Pete just mentioned.
Sure, go on, Ashish.
So I think, even China markets and Korea markets doing well is probably a great thing to happen to the EM asset class as a whole, because last few years, the only market that was probably driving the EM rally was India. And we have seen a lot of outflows from EM funds. Given what has happened in the last 12 months in other EM markets, we are now starting to see, and a lot of investors have been talking about it, inflow of funds in EM markets. And of course, India also stands to benefit, rising tide lift all boats kind of a thing. So in a way, I think China and Korea doing well is also good for India.
Okay, that's a valid point. Take that point. But, let me ask you a bit of a counter. Peter, I heard your perspective, and that's great. But what I want to ask is that it's very clear that India cannot offer, as of now, in a very big, decisive way to global investors, tech or AI. I mean, you don't come to India to play tech or AI, right? So what are you telling global investors at this point in time? Why should they come to India? To play a bigger part of the consumer story? Do you think that's kicking off or reviving in a big way? Or is it going to be more about manufacturing, the whole China plus one, realignment of global supply chains? What's the narrative? And why are you telling global investors to look at the Indian market at this point? Peter?
Well, I think the narrative begins with India is now the world's 4th largest economy, heading to be number 3 with an emerging middle class, with an entrepreneurial culture where we have many companies that will be high growth companies that are coming into the market. The world is looking for new companies. Again, I would argue that we globally are overweight a lot of the, I would say, not just I'll be more specific than the broad Mag 7. You've got the hyperscalers plus NVIDIA. The world has been overweight that. We did see money go into Europe this year. But when you look at India, again, a growing economy, a populace that has an emerging middle class, that has a fantastic education system, and again, has this entrepreneurial culture. So it is a place that will continue to grow. And again, we're going to have more exciting companies to invest in.
You know, Peter.
I think from our conversations with investors, I think one of the things that is also coming across is last 20 years, India has been a pure consumption story. And the biggest pushback on India has been everything works, but infrastructure needs a massive upgrade. And at this point of time, we are on the cusp of a massive infrastructure upgrade. And it's a sector which has huge growth potential, be it ports, airports, power, hospitals. And all these are sectors which offer tremendous runway for growth with strong earnings. And that's what is exciting investors to look at India beyond consumption alone.
Ashish, are you taking? I know you're doing lots of these feet on the street kind of trips over the last. I mean, yesterday, today, and I think tomorrow as well, right? Showing investors some of the infrastructure projects in and around Delhi.
Well, everything, right from consumption to infrastructure. We've taken them to power plants. We've taken them to some stores. So yes, trying to give them a real look and feel of what's there on the street and not just in the conference rooms.
Yeah. Peter, just one question. Is the lack of AI, pure AI kind of plays in India, and because that is where money is gone in very, very large amounts, maybe some people are now starting to argue that it's too much now. And for example, Chris was yesterday saying that most likely this is not going to end very well. There's going to be huge capital misallocation, etc. I don't know if you share that view, but that's not the question. But in India, the lack of those opportunities, is that a bit of a disadvantage on an overall market perspective?
I would say, look, and I appreciate what Chris is saying about the CapEx investment into AI. I think that that story is yet to be written. We will see. When you look at India and the transition that Ashish has been speaking to, I don't think folks are looking at India at all as an AI play. And again, it will affect the services industry. But again, there are many other investments here in India that are attractive throughout infrastructure, consumer, et cetera. I think you'd agree with that.
Yeah, I would agree with that. In fact, Prashant, beyond the infrastructure theme, we are also trying to deep dive into some of the emerging themes. So our research team has put together an in-depth report on AI, the implications and the opportunity for India, also something on semiconductor. So yes, we are slightly late in the cycle, but I would not go to the extent of saying that India will not play any part on the AI in the longer term. We may not be the leaders, but we'll definitely have some companies. Ultimately, it's data from 1.4 billion people that will also go as an input for some of the AI models. So I'm sure we will have companies coming out of that theme at some point of time in the near future.
All right. Hi, gentlemen. Good to see you in, both Peter as well as Ashish. Ashish, coming across to you, though, on the fiscal as well as on the monetary side, we have seen a lot of support. And now the economy needs to revive. Second half of the year, all probability seems to be good. But what more are you factoring in, either in terms of monetary, support or maybe on the fiscal side as well? Do you think there is more headroom, or do you think most of it is already done?
No, I think the government has been very, very proactive in reforms and giving the corporate sector what it needs to thrive and to start building. I believe the relative cost of borrowing in India has never been as low as it is today, given the interest rates having gone up in the rest of the world and India continuing to stay low with low inflation. So I think the opportunity or the backdrop has never been better. What we probably need is the corporate sentiment on the capex side to come back. So the government has done its bit. Can there be more reforms? There can always be more reforms. And the good part is, I think we do get a feel that the government is continuously working on what can be done better. But I think at this time, the baton is more in the corporate's hand to start reviving the capex in a more meaningful way, taking from where the government has done capex so far.
Sure. Okay. Gentlemen, I think the company that has listed today actually is a reflection of exactly what you gentlemen are saying, that there are enough opportunities in India. We may not have, technical, pure AI. Look at that listing, 62% pop urban company, which runs that platform, which offers everyday services, came into the market to raise about 1,900 crore rupees, and investors have welcomed it with open arms. And we have lots of celebrations there at the stock exchange going on right now. We'll keep getting you more inputs on this in a bit. But yeah, I completely take your point. I mean, Ashish as well as Peter, that you don't necessarily have to be in the most complex business. Even if you're selling, you know, butter, cheese, whatever, if the business works, then investors want a slice of that. And that's what we're seeing. Peter, just a question on whether geopolitics, this whole India-US standoff over the last couple of months, if that at all is clouding the investors' decision making. Now, of course, I mean, there are better overtures. Some bonhomie started. But is that at all even a factor when people are looking at allocating money to India?
Yeah, I do think it is. I think it affects investor sentiment broadly. And I'm hopeful that it will be short-lived. I'm hopeful all of this will be short-lived. But I think it's much more sentiment on when they actually start making the investments. It may cause a bit of a pause, but I believe that will be short-term, much like it has been in other markets that we've seen, kind of a pause, if you will, in investment. I think once we get through the other side of this, the themes that we've been speaking about are very much in place.
So if I were to ask you, Peter, say over the next year or so till the next conference, which would be India's biggest, competitors when it comes to vying for foreign flows? Last year it was, the year before it was Japan, then it was South Korea. It's been China to an extent. Next 12 months, who's our biggest competitor in terms of getting those dollars?
I believe it's the same. I believe it's the same markets. I'm still having a lot of discussions around Japan. There are some, again, that we've highlighted about Korea. Recently, that's been less so. Europe had its moment in the sun, if you will, kind of mid-year on certainly the German fiscal reforms, the investments in defense, and the moving off of zero bound, on the financials. So those were themes, but the India and Japan theme, to me, remain the two major themes, and I believe we will be talking about the same thing this time next year.
Okay, as you put it, last time it was a bit of a turning point, almost was the last conference, right? September was the high for the market here. Ashish, just to distill down top interest sort of sectors as you see it from here out, from an investor point of view in India.
I think financials, of course, continues to be the most talked about sector given the sheer amount of ownership. But the good part is investors are also very open and receptive and engaging on the new themes that are emerging. As I was mentioning, hard assets, hospitals, airports. We've seen a lot of traction on airport stocks conversation. We're seeing a lot of interest on the infrastructure theme, telecom and power as an overall space, right, from generation to transmission to distribution. So I think some of these sectors are getting added. Consumption, of course, continues to remain at the top of the mind given the GST cut. So I think it's very broad-based, but the biggest question is, do we stick with the traditional growth sectors like financial staples and tech services, or we diversify into the new growth sectors, which is infrastructure and hard assets?
And maybe it's a mix of both, but both very much in focus, as you say. Gentlemen, we'll leave you to it. I've got a busy day ahead. Ashish and Peter, appreciate both of you coming on CNBC-TV18 with your perspective, mix of India and, of course, the global view looking into India coming through. We'll take a quick commercial break here. We're going to come back and put the spotlight on commodities as always. Manisha is here to help us with that. Stay tuned.
The cyber threat landscape in unpredictable ways. AI strengths such as reliance on large data sets, open interfaces, and automated decisions also create vulnerabilities. Malicious actors can exploit these through adversarial attacks or compromised training data, potentially corrupting artificial intelligence outputs. Even a single breach can disrupt critical operations and undermine trust in the artificial intelligence across the sector. Then, of course, the one important point is the model risk. Unlike traditional models built on clear rules and well laid out assumptions, Artificial intelligence models operate through dense, opaque algorithms, which we refer to as black boxes, and may evolve with the data which they consume. This introduces the risk of prejudice within the models, where biased data, opaque design, or untested assumptions may lead to biased outcomes of the model. Such distortions can lead to unfair credit assessment, exclude deserving segments, or conversely extending credit where risks are understated. AI is only as strong as the data that shapes it, and this leads to the host of vulnerabilities emanating from data quality. Currently, while much of the financial data is structured, much more of the data is fragmented across systems, often in inconsistent formats, somewhat incomplete or outdated, or skewed by historical biases. When such data flows into AI models, it can produce results that may appear authentic, but suboptimal, and in some cases may produce wrong outputs. Over-reliance on such models can quietly turn data gaps into large-scale misjudgment and wrong business decisions. Generative AI models are often trained on publicly available data like news articles, stories, and explainer videos, and this may lead to intellectual property and copyright infringements. The Reserve Bank's Financial Stability Report has pointed out that high market concentration in critical third-party service providers of cloud and AI services, noting that heavy reliance on a small number of tech players could create single points of failure. Such concentration risks are compounded by vertical integration of certain providers who supply not just models, but also the underlying infrastructure and the data sets. While AI is transforming many of the processes of the financial institutions, the rise of generative AI has also...
Welcome back. Let's talk about the biggest headline of the day and water listing by Urban Company. 67, almost 68% higher. The shares were offered at about 103 rupees, and look what happened. Manglam, we were just discussing this with the gentleman at Jefferies, right? You don't have to be in the most complex business of data centers or AI or whatever. You run your business well, even if it's consumer, and you price it well, and the market will give you such a warm welcome. But tell us more, just remind back, I mean, what's led to this kind of a huge pop today?
Well, it's a couple of things. You know, one, the underlying TAM or the total addressable market is strong enough. And in that, this company enjoys the pole position of being probably the only one. So this is a market which is nearly 100% unorganized, sub 1% organized. And in that sub 1% organized as well, majority of the share lies with Urban Company. There is no real listed player here, forget listed peer or unlisted peer itself. And add to that, there was a big listing which was expected anyway, because it was a 1900 crore IPO. The issue was subscribed 104 times. So there was strong demand for this IPO. Total subscription 103 times. QIBs went ahead and did 140 times. HNIs 74 times. We speak about retail investors 39 times out there as well. And the most interesting thing for me was employees. So the employees of the company, they filled into the IPO, and that portion itself got subscribed by around 37 times. So when the employees of a company go ahead and, you know, make their inroads for the IPO or make their offers or bids for the IPO, it tells you that there is a strong listing which is expected. So now at closer to 171, the market cap of the company is around 25,000 crores. They offered the company at around 15,000 crores and nearly $2 billion as market cap. The only thing we'll have to watch out for are the valuations, because remember, basis what the analysts are expecting, if the revenue compounds at 35% as the management has been guiding, even if the adjusted EBITDA doubles from 1.7% all the way up to 3%, and the net profit that the company posts on a sustainable basis reaches about 250 crores, then it's trading at 101 times price to earnings. But then again, if you're growing much faster than the market, then who's to say that there is no upside to the estimated EPS as well for the company. The two triggers that I'll be tracking for them, their core margins, how they expand from here on, and secondly, the native business, which is growing for them. They are looking at becoming a full stack hardware supporter and supplier as well. If that business breaks even, then that could add further legs to this company. So let's watch out for Urban Company. Currently, on the day of IPO, because of strong demand, there is that fear of missing out. So that's why the stock's moving higher. Let's see how it sustains going forward.
Right now, already at 100 PE, right? Forward PE.
Yeah, currently 100 PE. It was offered at around 60 PE. Now it's at around 101 PE.
Okay, all right, Mangalam, thanks very much for that. So it's Urban Company in focus. Commodities next. Manisha is here with what is top of mind. Manisha, morning.
Morning, and thank you for that, Prashant. Well, I will talk about the lead up to the 25 basis point rate cut that the markets have already factored into the space then. And this is not something new. It's not going to be a surprise. The surprise is if he does anything less or more than that, that is the Fed Chairman Jerome Powell. But ahead of that, we have seen this constant decline in the dollar index, trading now below 97. It is a 2-month lows coming in for that. So as I said, 25 basis point rate factored in. And the street is also looking at more US Fed rate cuts in this year and the first quarter of 2026 as well. So there are some 4 or 5 being talked about. That is what the street is as of now haggling about. If you look at the currency markets to begin with, of course, the Indian rupee continues to hold around that 88 mark. But the global currencies also have surged given the fact that the dollar has continued to see a decline. So when you look at the euro, it's trading at a 4-year highs. You have a 4-week highs coming in for the Japanese yen. It's a 10-year highs that you're looking at in Swiss franc right now. The Danish kroner trading at a 4-year highs as well. So many of these high-yielding major currencies, the G7 currencies, are trading quite on the stronger note there. The Canadian dollar at a 1-month high. Swedish krona is doing 3.5-year highs on the screen right now. And you have a Brazil real, which is trading at a 1-year highs. That's all that I could fit in sense of currencies. But there are more and more currencies in the G7 and the Western world, in the European markets as well, which seem to be doing quite positive to that run-up to the US Fed meeting there. I also want to talk about the gold prices because we're looking at a 41% of gain in this commodity in this year until time. We've seen an all-time high at $3,700 an ounce as well. And much of the gain really has come in the last couple of months itself. If you look at the gold prices on the kind of run-up that we've seen with 40% gains, it has surpassed inflation-adjusted peak that we saw in 1980 there. Markets also are looking at higher prices from here on. So when you look at the latest reports that have come in the last couple of sessions itself, you have Goldman Sachs talking about $5,000 an ounce. There also is a report from Commerce Bank overnight which says $3,600 an ounce of an average is what they're looking at in 25 and $3,800 as an average in 26. So higher highs from here and absolutely a possibility. But it's not just about gold as well, because with the dollar decline, we're looking at silver trading at a 14-year highs. Copper prices at around 15-month highs. Zinc is trading at the highest level since March 2025. And you have crude prices trading at a 2-week highs as well. So when it comes to tangibles, commodities, everything is trading in the positive right now. Of course, it is going to be the Jerome Powell speech announcement today in the evening that the street will watch out for. But you will also watch out for the Fed's quarterly summary of the economic report, the Fed's dot plot as well in the evening today. And the further cues would come in absolutely from this one.
Okay, all right. So the all-important Fed announcement awaited by markets around the world. Thank you for that, Manisha. We do have to take a very quick break. On the other side, our special segment coming up, it's the economy. Lata today speaks with the Managing Director of National Bank for Financing, Infrastructure and Development on the state of infrastructure financing.
For fraud, putting powerful deception tools in the hands of malicious actors. Deepfakes can mimic voices, faces, and documents with unsettling accuracy, while AI-generated phishing lures, faking identities, and forged credentials can slip past traditional checks. In the light of these multifaceted risks, some of which I have touched upon earlier also, it becomes crucial that adoption of AI in banking sector must be done in a responsible and measured manner. The excitement around the AI's benefits should not overshadow prudent risk management. In this context, the following aspects become crucial. First, of course, is governance. A robust governance is indispensable for ensuring the integrity of data, the reliability of the models, and mitigation of the risks associated with the adoption of AI. The financial institutions should have in place a comprehensive strategy for AI adoption. It should be accompanied by clear policies, risk appetites, and ethical standards that cascade throughout the organization. Robust monitoring and reporting mechanisms should be put in place to ensure alignment between the innovation goals and institutional stability. Further, in a regulated industry like banking, it's essential to understand how a model arrives at its decisions, making explainability a critical requirement. Thus, there is a need for financial institutions to invest in explainable AI frameworks that provide clear, auditable reasons for loan decisions and services. Strong governance is central to the managing of the
Welcome to It's the Economy. NABFID, or the National Bank for Infrastructure Development, has increased its infrastructure sanctions tenfold from 40,000 crore in FY22 when it was formed to nearly 4 lakh crore as of June. But that's the sanctions. If you look at the disbursements, they have been lower at 79,460 crores after 4 years of operation. More importantly, NABFID is emerging as perhaps the only game in town for infra financing, with banks moving away and preferring retail lending. How will infrastructure finance evolve from here on? For this question, I'm joined by Mr. Rajkiran Rai, Managing Director of NABFID, formerly Managing Director of Union Bank, and a veteran, a watcher of the Indian banking scene. Mr. Rai, good morning. Thank you very much indeed for joining us. Well, first up, if you can tell us about your other activities. Sanctions at about 80,000 crores. Disbursement at about 80,000 crores, but in principle, sanctions are huge. Why is there such a gap?
Actually, we are a new entity. Actually, first we need to build a project pipeline. Actually, these are basically the sanctions. Actual sanctions are about 2.5 lakh crores. The remaining are in the process, basically. We need to build a robust pipeline and over a period of time, because infrastructure disbursements are spread between 1 to 3 years. So actually, as we go along, actually the balance sheet will grow much faster. Actually, we have to see that we are in the second year of full operations. So the disbursements will take time, but there is happening.
I agree with you. Why would you delay? But there is a large gap between sanction and disbursement. Is it that people take permission but are not able to get other permissions? Why is this lag?
Actually, when a project is allotted to a concessionaire, he has to get the financial tie-up immediately and get the appointed date. And then there are a lot of approvals. So even the quickest is between 6 to 12 months. So from the sanction date to first disbursement.
Well, I wanted to know about the other tasks that, NABFID wants to do. Primary among them is, credit enhancement. Now the Reserve Bank has eased the rules of credit enhancement. Haven't you all given any credit enhancement whatsoever?
No, actually the guidelines came recently. After that, we are launching the product because we have infra conclave tomorrow. We'll be launching the product. After that, we are in touch with the rating agencies. So we should see the first bond issuance and the credit enhancement somewhere in the third quarter now. So we are actually launching the product, and then actually, once the industry accepts it and when the ecosystem accepts it, then it is a huge potential. Actually, about 4 to 5 lakh crores of potential of credit enhancement is available in the system.
Okay, but when do you think you will do so much credit enhancement? What is your target for, say, June 2026, or 1 year down?
Yeah, actually, we will be only the catalyst for this. Actually,
yes.
We will start because all the regulated entities can do that. Actually, we are the leaders in this, and we will do the first few issuances. And we hope by that time other players in the system will understand the product and will get in, because actually we may not have the capacity to do 4-5 lakh crores. We may do maybe 50,000, 60,000 crores in the first 1 to 2 years, and then help other players to ramp up the operations.
Okay. When will your first partial credit enhancement happen?
It is in the process, so maybe next 30 days.
Oh, okay. Mr. Rajkiran Rai, you have been a banker for, I think, 4 decades. You wear a banker's hat and tell us, why are banks not very enthused by infrastructure? Just everyone wants to do more corporate lending. At the most, they go up to MSME lending. Corporates don't want their money. but infrastructure, we don't see banks.
Yeah, this is something actually we need to fix. Actually, if you look at the whole exposure to the infrastructure sector, it's about 33 lakh crores. And out of that, the scheduled commercial banks are around 13 lakh crores. And last 2-3 years, we have not seen much growth. And the NBFCs and NAFED and, these players have added, actually, they are growing at double digits. And 19 lakh crores is their share in this infrastructure book, actually. So the banks have to really ramp up, and this is a very good potential. Actually, we did a study last year where we said that the defaults in the last 3-4 years is only 1%. And this year, we'll be surprised, the default is hardly 0.3%. So this is actually a good area, very stable area. Banks have to get in infra play. So because their credit growth is also suffering. So I think infra offers a better opportunity for the banks to come in and increase their exposure.
Are corporates not interested? I mean, today there was news that L&T has written to the government of India and the Andhra government I think Telangana government, to take away the Hyderabad metro from them because it is making losses. Now, if private sector gets hurt every time it dips its feet in infrastructure, there will be a reluctance, won't there? So is private sector, I mean, other than the Adani group, we don't see too much of people coming forward to dip their feet in infrastructure. Is there a problem there?
And generally, one-off projects like this actually drag the mood down in the sector. So compared to one metro of Hyderabad going down, you have attracted 7 lakh crores in InvITs, actually, where the foreign pension funds, insurance funds are investing and buying assets left and right, both on the road sector and all that. We need to look at the positives, actually. So the sector is doing well. Yes, metro was never commercially viable that way. We need to structure it differently because, you see, that's why the play of infra is very specialized. Every sector is different. Today, look at the renewable sector. We have added almost 30 gigawatts last year, and everything comes from the private sector. So much money has flown in. Like, look at the InvITs which are in the road sector. 7 lakh crores of AUM, expected to be 25 lakh crores by 2030. Just imagine the kind of money flowing into these sectors.
Okay. What about insurance companies? You remember last year when you did this convention, we had a discussion in CNBC-TV18 itself with insurance and pension funds. And you told us that they can put up to 15%, but they're all sitting at 9.5%. Has it improved?
No, it has not improved. Actually, the credit enhancement what we spoke about is a product actually designed for them. Because one of the issues with the insurance and pension funds, because they don't have the capability to assess the credit risk, actually. While the commercial banks are very good in credit risk assessment. So that is where the credit enhancement comes in. Because the credit risk is underwritten by scheduled banks, actually, the regulated entities, and then the insurance and pension come with the investment. That is what we are working on, because we need to connect these two. For India, we have a lot of domestic money getting parked in insurance pension fund growing at about 15%, and they don't have investment avenues. Actually, the G-Secs are not giving the returns what they generally typically get. So this is a sector they have to come in. So if they have to improve their returns, so by underwriting the credit risk, that is like a first loss guarantee by way of credit enhancement. Now it's the time the insurance and pension can come in and invest in like infra bonds.
Okay. Now, you know, if you look at the G-Sec rates, if you look at 10-year, it is 6.5. But if you look at 30-year, and many of the infrastructure projects are 30-year, it is going at 7.3, sir, as of now.
Yes.
Or 7.25. So for infra, they will want a spread. At 8%, is it viable? If they gave picked up infra bonds at 8%, I don't think y'all are interested, are y'all?
No, actually, you know, the credit enhanced bonds, which are AA rated, should give them a return of upwards of 8.5. So this is a very good return, actually.
So you are expecting this to get floated when? A credit enhancement product for infrastructure companies, because they are the guys with the money.
Actually, we have picked up some of the companies and where the credit enhancement process is on, actually, because we need to talk to rating agencies, what is the enhancement needed to move them from A to AA, AA plus kind of thing, which is in the process. So I said that, you know, in next 30 days, we should be doing the first credit enhancement and then launch the bond.
Okay. And finally, global savings. You have in your investor presentation mentioned that, you know, you all are speaking to a lot of global multilateral banks World Bank, Asian Development Bank, New Development Bank, and the AIIB. Any progress should we hear joint financing?
Actually, one of the big multilateral is coming in the credit enhancement as a backstop. Actually, it is in the process of final approvals. That should reduce the cost of credit enhancement for all the players, actually. That is something which is happening. We are also trying to get into GIFT City for the equity and the blended finance part. We have already got the Environment Ministry approval to be in the GCF. So international accreditation process is in progress. We should be able to attract a lot of GCF money because NAFID is well placed, actually. Particularly, you need to have your governance system, credit assessment proposal, complying with the E&S to fulfill the requirement of the GCF funds. So NAFID has put in place all these mechanisms. So we should be able to attract GCF funds, maybe through the GIFT City, which will help in blended finance. And also we are working with another multilateral for getting into the equity side also, because these are all our developmental agendas. In addition to the credit enhancement, sanction of credit, we will also get into the other space, which is very much required. Okay. Because kind of the infra play we are looking at 140 lakh crores in the next 5 years. There is equivalent capital equity requirement also. It is not only the senior debt.
Got it. So I'm completely out of time. Just give me two numbers. How much do you think NABFID will finance by, say, FY27? I'm giving you 2 years for a guess. And how much do you think Indian infrastructure financing will grow to in 2 years? Just give me two numbers.
Yeah, India infrastructure finance will grow between 10 to 12%, actually. NAFID balance sheet, actually, that is the outstanding book, will be 2 lakh crores in 27.
Oh, 2 lakh crore. Now 79,000 crore, right?
No, it will be 2 lakh crores, yes.
Okay, that's a fairly strong growth. All the very best, Mr. Rai, and for the convention on infrastructure financing that you'll have organized for tomorrow. Thank you very much.
So much.
Thank you very much for giving us a curtain raiser. With that, we wrap up on this edition of It's the Economy. After a break, time for Chartbusters.
Risk. While AI can automate and recommend, humans should be responsible for the decisions. Financial institutions, while adopting artificial intelligence for business processes, should implement the principle of keeping a human in the loop to ensure that AI is leveraged as a tool to support and enhance human decisions and not replace them. High-quality data is the backbone for safe and effective AI in finance. While the RBI already collects data through supervisory reports, regulatory returns, and surveys, the introduction of model risk guidelines aligned with global best practices could extend the scope to include data on AI models used by regulated entities. Financial institutions should therefore adopt robust data strategies incorporating diverse, reliable indicators that reflect both the scale of AI adoption and the associated vulnerabilities. When AI is used for credit decisioning or financial inclusion, especially through alternate data sets or use of alternate data sets, customer data becomes central, making privacy and security paramount. The Data Protection Act of 2023 provides the legal framework for responsible data use, and the financial institutions must ensure compliance through a consent-based, privacy-first data handling practices.
Well, sir, thank you so much for the opportunity, as you said, to engage in a dialogue with you. I wish you could have been here with us in person, but for the audience here, let me tell you that he's been very busy organizing a manthan of public sector banks that's been happening in Delhi for the last 2 days, and that's why he isn't here with us in person.
It's a positive start for the Indian market. The Nifty conquers that 25,300 mark to hit a near 2-month high. Auto and ITs lead the gains, while the broader market also trades with a positive bias.
It's a stellar debut on bourses for Urban Company. The shares list at a 60% premium at around 162 rupees a share. That compares with the issue price of around 103 rupees.
Shares of Dreamfolks hit a lower circuit, down 5% as the company exits the domestic airport lounge business with immediate effect, a business which is accounting for more than 90% of its revenue.
Sources tell CNBC-TV18 that the Income Tax Department is conducting surveys at Marico's facilities across the country. The stock slips about 1%.
Shares of Mahindra Lifespaces rise in trade as the company is set to redevelop 2 housing societies in Chembur, Mumbai with a development potential of 1,700 crore rupees.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Manglam. And as we speak, Manglam, it's a good start. It appears the street is celebrating our Prime Minister's birthday. We're up close to around 80 points and a good follow-through session, actually. That's heartening.
A good follow-through session, Nigel. We've been talking about how there would be short covering first slowly and then suddenly. Yesterday, a sudden spurt was something that we saw. Let's see whether that sustains today or not. All eyes on all the global triggers. We'll watch out for the US FOMC meet outcome where a rate cut is imminent. But, commentary around what happens from the Fed standpoint and the, entire Donald Trump versus US Fed chair sort of fight that happens. What's the clarity on that one is something that the street will be seeking. But that's about the US. India, US, could there be a thaw in trade or not is something we'll be watching out for. But there has been risk on over the last few trading sessions. We've seen the railway stocks do well. At the same time, we've seen some traction on the defense stocks as well. And today, we have all the PSU banks which are off lows. As we look at it, as a ticker team alerting us as well. SBI has moved higher. PNB has moved higher. Union Bank too has moved to the high point of trade. So there is a fair amount of risk on in the broader markets. But there's one stock which is lower after having seen a big correction already, and that's Dreamfolks, 5% lower circuit after exiting its domestic lounge business with immediate effect. Winnie joins in with all the details. Winnie.
Yes, absolutely. We're seeing Dreamfolks that's under pressure even today. The company has discontinued its services of domestic airport lounge services with effect from September 16. The major impact will come and material impact will come in on the business and financials of the company. The company is saying the contracts with these clients still remain active and they are in discussions for alternative customer value propositions with these clients. So that is something to watch out for. But do not forget that, the stock is down more than 70% in the last 1 year. And since July 2025, 1st July 2025, when the cancellation of certain programs by Axis and ICICI Bank came in, we've seen the stock fall more than 40% as well. So a sharp fall that has come in since then as well. And FIIs, they have sold since September 2024, the first time some issues were highlighted, to June 2025, a sharp fall in FIIs have come in terms of holdings over there. So that also is a consideration that we should keep in mind. But let's talk about the segment breakup, right? In terms of revenue, 93% of the revenue is coming from these lounge services. 7% is non-lounge services. And in that, 77% business is from domestic, 23% is from international. So obviously, 77% of the business, domestic business, that's going to be seeing an impact. International business is going to be as it is, where they have airport international lounges of 850 plus lounges. Domestic was around 76 lounges that they had. So 76 lounges, that's where the impact is coming in. Railway side of the business, 14 railway lounges that they have, and revenue growth has been 65%. So that will continue as it is, but that's still a very small part of the business, with the companies focusing on growing railway as well as non-lounge service business as well. So keep an eye out on Dreamfolks today under pressure.
Thanks a lot for that, Vinny. Well, let's focus on BEL. That's Bharat Electronics is buzzing in trade after strong order inflows. Ria's with us to tell us what does this mean for the company. Hi, Ria.
Hi Nigel, good morning. So Bharat Electronics has received orders around rupees 712 crores since their last disclosure on the 1st of September. Now these orders include IT infra and cyber security solutions, ESM systems, blockchain solution platforms, as well as communication equipment. And even apart from this, the company has disclosed order inflows worth around rupees 3,398 crores in Q2 so far. And for the full year FY26 up until now, the total order inflow now stands at around rupees 11,458 crores, which is 42% of the guidance for FY26, which is 27,000 crores, X of the 30,000 crore QRSAM order. So big moves for BEL, up around 2.5% at the moment.
All right, thanks a lot, Ria, for that. So BEL up and about in today's trading session. Defense stocks have generally been doing well. Let's get in Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Chandan, from the lows, we've seen a near 800-point rally. Do you think this has just started, or do you think it's going to consolidate after this up move that we've seen? What are your thoughts?
Good morning, Mangalam. Thanks for having me. So really the market rallied well by more than 800 points. It formed the bottom just 12-13 days back at 24,400, 24,442, and now it started to form higher top, higher bottom on the daily scale. In fact, this is going to be third consecutive weeks where supports are gradually shifting higher. I believe the data setup are quite positive. If I look at the 4 data internal, put call ratio improved to 1.29. India VIX is at 10.25. FI's long short ratio, which was at 8 to 9%, has recovered to 12.5%. And important part is the call unwinding start to happen with put writing, and FIs were turning for the buying side. So all the data indicates positive stance in the market. And the good part is that earlier the index took hurdle at 25,150 and corrected to lower levels. But this time, after the consolidation of last 2 days, it managed to reclaim with higher base. So I believe now the previous hurdle of 25,150 could act as an immediate support, while 25,550 could act as a major support to drive this rally. So totally, I believe this momentum should continue, and we are expecting Nifty to extend to us 25,500 to 25,750 levels. Talking about Bank Nifty index, we also seen recovery in the banking index as well. PSU stocks are doing well. Bank Nifty has surpassed its falling supply trend line, holding well above its 50-day exponential moving average. So till it holds above 55,000, it can head to us 55,555 and then fresh rally towards 56,000 marks.
All right, 55,555 on the Nifty Bank, closer to 56,000, and 25,500 to 25,600 on the Nifty as well are your targets right now. As we speak, a lot of these, PSU banks like we're speaking about have been surging. SBI continues to make the high of the day. Is that on your stock list right now? What are the other stocks that you're backing, Chandan?
Yeah, so positive on the entire CPSE index. So in CPSE, we can count PSU banks, defense, selective power and energy, or selective railway counter. And now if I talk about the Nifty PSU or PSE, we have seen a decent recovery, and this index has been making higher top, higher bottom from last 5 days. So obviously the SBI on radar, we are expecting fresh leg of rally in the counter. The stock has recently bottomed out with support of 800, now giving a breakout above 840, 845. We are expecting a fresh leg of rally, and probably this time it can head towards its new lifetime high, which is near 912 kind of level. But on immediate point of view, suggesting to buy with support of 825. And State Bank of India can head towards 870 level. Apart from that, as mentioned, positively on the defense name, BL is one of the strongest counter after the bottom out approach in the last week. In last 2 days also, we witnessed a positive price setup. So momentum is intact. Counter is bottomed out with bullish divergence. In fact, the longs are being built with short covering. Rollovers are likely to be on positive side. So recommending to buy on BL with support of 400, and this defense counter can head towards 430 levels.
Okay, all right, Chandan, always good to see you, and thanks a lot for joining in on the show. Well, let's move on to an exclusive conversation. We spoke to Jefferies Global Head of Strategy, Chris Wood, on the Indian market and the US tariffs on India. Let's listen in to a slice on that conversation.
So in the big picture, this is just a year of healthy consolidation in the Indian stock market, and what remains, in my view, the best structural growth story in global equities. And the big positive for the Indian stock market is the huge continuing mutual fund inflows have absorbed this supply. Now, if those domestic mutual fund flows did not exist, the Indian market may be down about 20–30%, and then that would have triggered big foreign buying. But because the domestic flows have been absorbing the supply, we've had this sideways trading pattern. But in the big picture, it's a healthy consolidation. My view is also very simple, that this Indian government is not going to be ordered around by the US about not buying Russian oil, most particularly when it's pretty clear to everyone that this oil is refined in India and then bought by the Europeans. It's quite conceivable that it wouldn't be a surprise if we traded sideways for the rest of the year. I am assuming a pickup in nominal GDP growth. If I'm wrong on that, then I'm too bullish. Nominal GDP growth is key because corporate earnings are reported in nominal terms, not real terms. Historically, India has been growing in a 10 to 12% nominal GDP range. This year, nominal growth's been, I believe, below 9%, and that reflects the relatively lackluster earnings outlook.
All right, that's the point, right? Nominal growth in India is expected to pick up. You can't have the nominal growth. We're celebrating inflation being low, but you can't have, nominal growth in just high single digits. So that's going to be important. Chris was talking about it picking up in the next year itself. Mangalam, but the big listing, urban company, not just to use, but shareholders also are happy. In the past, we've seen some of these companies, it's best to be a client, not to be a shareholder. But over here, both are happy, at least going by the listing gains.
What's interesting is, Nigel, not only are the clients happy and the shareholders happy, but the employees as well. If you look at just the, listing scenario or the demand for the IPO, they asked for 1,900 crores on the market, of which for the company, it was just around 470 crores. The rest was an offer for sale from existing investors. And the demand was over 100 times, 104 times total subscription, of which QIBs understandably led that with over 140 times subscription. You had the HNIs as well, over 70 times. The retail investors were almost 36, 37 times as well. The employee portion of that, typically what happens is high subscription IPOs, the employee portion is at best 1, 2, 3 times subscribed. This time, the employee portion itself was subscribed by around 37, 38 times. So that spoke about, the excitement among the employees for the company. But having said all of this, what we need to know is that this is the day one of the IPO. And this is the day one of listing. So all those guys who had applied for the IPO who did not get those shares will probably be buying a lot more because of the fear of missing out. And at the same time, we will watch out for how, the share settles going forward. In fact, the best person to talk about the company would be the management who is currently addressing the press.
Began 11 years back with the vision to transform how consumers avail services at home and empower 1 million professionals to lead dignified, respectful lives. And we are more steadfast today in that vision than ever before. I take this opportunity to thank our customers for opening their doors and their homes to us. We will work hard to be worthy of your trust. I want to thank our thousands of service partners who have served our customers with dignity and professionalism. I want to thank all our investors, our other stakeholders, employees. They have all been critical support pillars for Urban Company over the years. We see this as the start of a new journey, the start of an institutional building journey, and we will be hard at work to make sure that we build Urban Company into a truly impactful organization and institution which India can be proud of.
Thank you so much and congratulations. अच्छी खासा हमें listing हमें देखने को मिला. I'm Rachel from CNBC आवाज. I'm directly coming to the company's financial. हमने देखा है कि 1,900 crores का mobilization हुआ है, जिसमें से 472 करोड़ जो है वो कंपनी में इंफ्यूज होने वाला है via fresh issuance. बट यहाँ पे कैपिटल इशुएंस को लेकर थोड़े से कंसर्न्स हैं कि यहाँ पे कैपिटल जो है वो प्रूडेंटली डिप्लॉय नहीं हो रहा है. 2021 में भी हमने देखा था कि 1,300 करोड़ का एक जो ऑटो पे रेज हुआ था, बट स्टिल वो बैंक अकाउंट में लाइन है.
हमारा जो 1900 करोड़ का आईपीओ है उसमें से तकरीबन 472 करोड़ फ्रेश इशू है. ये टेक्नोलॉजी डेवलपमेंट की तरफ जाएगा, जिसमें कि हम आर्टिफिशियल इंटेलिजेंस में काफ़ी इन्वेस्ट कर रहे हैं. हमारे सर्विस के सारे टच पॉइंट्स पे क्वालिटी कंट्रोल बेटर करने के लिए, हमारे सर्विस प्रोफेशनल्स की मदद करने के लिए, ताकि वो कस्टमर्स को ज़्यादा अच्छी तरह सर्विसेज दे सकें. तो टेक्नोलॉजी एक बहुत ही क्रिटिकल पिलर है, तो उस एक बड़ा हिस्सा उसकी तरफ जाएगा. हमारे जो ऑफिस लीजेस हैं, ट्रेनिंग सेंटर्स हैं, ट्रेनिंग हमारी कंपनी का बैकबोन है. हमारे सभी प्रोफेशनल्स ट्रेन होते हैं अर्बन कंपनी ट्रेनिंग सेंटर्स में. ये ट्रेनिंग सेंटर्स हम खुद रन करते हैं, आउटसोर्स नहीं करते. हमारी एक बहुत ही बड़ी इन हाउस ट्रेनिंग टीम है, तो एक हिस्सा उसमें जाएगा. आज भी हम एक यंग कंपनी है और धीरे धीरे हिंदुस्तान भर में फैल रहे हैं. बहुत से कस्टमर्स हम चाहते हैं हमसे आगे आने वाले समय में जुड़े, तो मार्केटिंग एंड ब्रांड बिल्डिंग में भी एक हिस्सा जाएगा, और फिर बाकी का जनरल कॉर्पोरेट पर्पसेस में. और मैं शेयर होल्डर्स को ये आश्वासन देना चाहूँगा कि आप एक स्ट्रॉन्ग बैलेंस शीट कंपनी के साथ जुड़ रहे हैं. इस आईपीओ के बाद हमारे बैलेंस शीट में 2000 करोड़ से अधिक है. डेट फ्री कंपनी है, तो हमारे पास एक स्ट्रॉन्ग बैलेंस शीट है आगे आने वाले सालों की ग्रोथ में इन्वेस्ट करने के लिए. Hi.
Hi. So, congratulations on the listing. Stellar viewing there. I would like to check up again on the financials. There has been gradual growth over the past few years that we got to see in the RHP. But what I wanted to check was, you've also said that there has been growth in the number of people you're onboarding from your end, and clearly you said training and incorporation of AI are big things. But what I wanted to check on was how many clients do you, how many users come to you with who are recurring in nature, and what's the, let's say, monthly active user base that you guys have?
Yes. So you're right. We have seen consistent growth in the last few financial years. FY21, our net revenue from operations was about 248 crores. That rose to 437.6 crores in FY22. Then about 636 odd crores, 828, and eventually 1144.5 in FY25. So from 248 crores about 4 years back, it rose to 1144.5 crores in FY25. We had about close to 6.8 million, 68 lakh annual transacting users in FY25. These are users who did at least one transaction. We also disclosed in our DRHP and RHP that nearly 82% of the business in FY25, 82% of the net transaction value came from repeat users who were acquired prior to FY25. And that number in the first quarter of FY26 rose to above 85%. So it's a repeat business, it's a business of trust. We have to be hard at work to train and upskill our service professionals to give them the right tools, the right technology, the right SOPs, the right processes to really delight our consumers so that those consumers can keep coming back to the Urban Company platform and keep transacting with us.
So when we say recurring user...
All right, that was interesting commentary coming in from the management of Urban Company, thanking all the partners, all the employees, all the stakeholders for showing value, but importantly, being humble enough to say that they owe a lot of responsibility to the newer bunch of shareholders that they have right now for the company as well. 165 and counting for Urban Company. Remember, the company was offered at close to around 103 odd rupees, on which also a lot of these investors made multiple X on this exit. So what we'll do is take a short break, come back, focus on a lot of other stocks which are buzzing around as well. So the news, the big story has been the market doing well, a stellar listing that has taken place for Urban Company, and all the PSUs which are a buzz.
Start with exactly that, because there's been a lot of interest in what transpired in that two-day manthan. How much did you churn the banking sector, sir, so to speak? So give us insights into what transpired in that meeting. What was the big takeaway? What was your message to banks? What was the message from banks to the government?
No, I think this is, we had this is the third manthan we did after 11 years, during the 11 years. And I think all of you know that the results of first Jnana manthan in Pune, and then second manthan in Delhi, and this is the third one. While I have mentioned, I think all of you are aware, the first one and the second one are related to how do we survive because of the NPA burden, credit issues, and how do we, and then of course the PCA. Now, because of the steps that government has taken, most of our banks are actually very healthy now. I think all of us know we have made the highest profits ever with the lowest gross NPAs and net NPAs. And we also, our professional managers, the bank recruitment process is much more professional now, much more learned, and much more dynamic compared to the past. I think all of them are actually showing results on the bottom line and the profits we are declaring. Now, we felt, all the banking leaders, we all felt that now this is the time for India.
Welcome back. Well, Financial Services Secretary M. Nagaraju has said that India needs bigger banks. Speaking at CNBC-TV18 Banking Transformation Summit, Mr. Nagaraju also confirmed that 4 PSU banks will sell stake this year to meet SEBI's 25% public float norms. Let's listen in.
Now this is the time for India banking industry to take a leap of faith on the next phase of both reforms and lending. We want to become bigger. The Indian banks want to be bigger. And I think all of us know, in the top 10, we have only 2 Indian banks in the country, SBI and HDFC. I think we need much more.
All right, with that, we'll take a short break. On the other side, market-specific action right up for you.
To take a leap of faith on the next phase of both reforms and lending. We want to become bigger. The Indian banks want to be bigger. And I think all of us know, in the top 10, we have only 2 Indian banks in the country, SBI and HDFC. I think we need much more. We are now currently 4th largest economy, and in the next year, we will be 3rd largest economy. But we have only 2 banks. And given our size of the economy and the credit requirements and the potential, I think all of you agree with me when we say that we deserve to be there. Our banks deserve to be there in the top 10, not just top 50. We have to be, at least 1 or 2 should be there in the top 10 in the world. I think that we need to work. There are so many, I think all of you are much more well informed. I'm not saying, so you know it can happen in several methods. And one is, of course, the growth, organic growth. We have a great potential. We need to do that. This is one issue. And then second issue is, while growing, we need to be very cautious to ensure the healthiness of the banks have to be protected. That's the first fundamental principle of a banker. We need to be ensure our banks are not over-leveraged and we are healthy and our capital base is protected, so that we'll be able to provide security and assurance to the entire country that the banks are with the growth of the country.
Well, Mr. Nagaraju, you've given us a big headline, sir. So let me build a little bit on that. You said India aspires to have more banks in the top 10. So clearly the government is going to prioritize size, of course, along with healthy balance sheets as well, as you pointed out. What will the route be to be able to get to the top 10, sir? Is consolidation the preferred option? Is consolidation likely to be the route that the government takes, especially as far as putting the PSBs in the top 10 is concerned?
No, see, there are several routes the government can take. The first fundamental route is organic growth, as I mentioned. There is huge credit growth potential in the country, both in the MSME and startups, in the defense, in the infrastructure, power sector, RE. There are huge growth areas, including shipping, post-development, shipping, roads. We have huge the areas of potential. Now, we need to have right projects to come forward, and then I think the bank should be able to lend. We need to have a capital. And now, you know, this year, we are going to raise the capital 4 banks to also meet the...
भारत ने दुनिया को युद्ध नहीं, बुद्ध दिए हैं। ज्ञान में, अध्यात्म में, गरिमा में, अन्नदान में, संगीत में, शाश्वत कविताओं में हमारा देश भारत पूरे विश्व में सबसे महान है।
With our Prime Minister Narendra Modi turning 75 today, wishes poured in from all across the world. US President Donald Trump also dialed the Prime Minister Modi for birthday wishes. Now, in a post on X, Modi thanked Trump and referred to the trade deal talks that resumed just hours earlier. Like you, I am also fully committed to taking the India-US comprehensive and global partnership to new heights. He added, we support your initiatives towards a peaceful resolution of the Ukraine conflict. President Trump later made a similar post on Truth Social. Just had a wonderful phone call with my friend, Prime Minister Narendra Modi. I wished him a very happy birthday. He is doing a tremendous job. Narendra, thank you for your support on ending the war between Russia and Ukraine.
All right, and wishes also poured in from major global voices, top businessmen as well as famed actors. Let's take a look at that.
आज आदरणीय प्रधानमंत्री श्री नरेंद्र मोदी जी के 75वें जन्म दिवस पर मैं उनको अपनी हार्दिक शुभकामनाएं देता हूं। और आपका जो सफर रहा है, जर्नी रही है, जो आपकी कहानी है, एक छोटे से शहर से लेकर ग्लोबल स्टेज तक, वो बहुत ही ज़्यादा इंस्पायरिंग है। इस कहानी में आपका डिसिप्लिन, आपकी मेहनत और अपने देश के प्रति डेडिकेशन दिखाई पड़ता है। तो सच तो ये है सर कि 75 साल की उम्र में जो आपकी पेस है, एनर्जी है, वो हम जैसे जवान लोगों को भी पीछे छोड़ देती है। सो मैं दुआ करता हूं कि आप हमेशा स्वस्थ रहें, तंदुरुस्त रहें, मजबूत रहें और खुशहाल रहें।
Prime Minister Modi, my best wishes to you on your 75th birthday. I wish you good health and continued strength as you lead India's fantastic progress and contribute to global development. The Gates Foundation values our partnership with the Government of India immensely. Together, we are supporting progress towards Viksit Bharat and sharing lessons and innovations for the countries in the global south. Once again, my warmest wishes to you on this milestone occasion.
As CM, I remember we had some issue with some of the authorities in Gujarat who were unnecessarily actually harassing us. We were in our pharmaceutical business, and I remember just calling him on the phone, and he was so responsive to it, and he sorted it out. So when you talk about ease of doing business, this is just one example of the ease of doing business. In this case, he just understood what the issue was, and he realized that what we were saying was, that we were not being treated well. So he says, okay, let me find out, and he actually acted upon it.
Well, on that celebratory note, we'll thank you for tuning in to Chartbusters. Stay tuned. Trading Hour comes up next.
Below 75% of public shareholding. So that is one way of raising, so that when the capital is there, we will be able to lend more. And in this year, till now, our credit growth is also very high. I think because of last year's the profits the banks have earned, our credit growth is also very high. And we are very confident, given the low inflation numbers and then availability of the liquidity availability in the system, we want to lend more, okay? That is the message we want to give to the country.
Sir, you sidestepped my question on consolidation. While I understand that the government wants banks to lend more, and that certainly is something that you're working towards, but what about consolidation, sir? Is that something that is actively being considered at this point in time?
You know, we have consolidated all the rural banks. That I think you should have noted. From the 46 or 47 banks, now we are at 28. Now there is one RRB, one state, that we have successfully implemented. Now some of the RRBs now actually very big, especially RRB like UP, Andhra Pradesh, Gujarat, these are big RRBs. They are also going to play important role. But I think the banks are now free. I think, the SBI is so big. Banks are free and all of them are free. They can look at the ways of becoming bigger. Okay, this is the long-term goal. I'm not really talking in the short term. I'm actually talking about Viksit Bharat 2047. When we have this 100 years of India's independence, at that point of time, we need to have larger banks, bigger banks, banks with influence globally, and so that the India is able to play a bigger role in the global markets. Okay, I'm not talking about short term. I think, Shireen, that you have to give me that.
I think it's good that you've made that very clear, sir, to this audience as well as to the markets, because there's been a lot of speculation on how quickly the government was looking at consolidating. But let me address the issue of reforms, because as you said, it is no longer an issue of survivability or stability. You have insured, and the banking sector has insured both, especially as far as public sector banks are concerned. So what next, sir, then, as far as the reform agenda is concerned for the banking sector in the short term, in the medium term, in the long term?
Let me, since we all see, many of you are economists. In the long term, we're all dead. I will talk about long term. I'm not going to talk about short term. Okay, that is my tenure. Now, long term, I think the banks have to be. I would actually say that one, the goals of Viksit Bharat.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormus Fatakia. Hey guys, good morning. Well, decent gains for the morning. Actually, I would say good gains. We're seeing a 100-point uptick on the Nifty currently. It's comfortably above the 25,300 mark. Whole host of sectors contributing. PSU Banking Index, that's of course the top gainer. So we have 1.6% gain on that one. Nifty IT too doing well today, 0.7% higher there. Metals, FMCG and Pharma. These are some names which are seeing some cuts, but not major ones actually. There are more contributors, so to say, on the Nifty rally today. And of course, we have Bank Nifty, which is in line with the index led by PSU banking names. The advance decline ratio absolutely in favor of the advances, 2:1. That's the ratio as we speak. So the broader markets also doing well. But look at that move on the PSU banking index. That's the reason we have seen that surge on the Nifty as well.
And they've been doing well for the last couple of days. So the PSU banking index is up nearly 7.5% so far this month. The only sector which has done better than the PSU banks in this month itself, in the month of September, in the first 2 weeks, has been the defense sector. The Nifty India defense sector is up 11.5% for the week. And even today, it's the top gainer with names like BEL doing very well. So if you look at the month-to-date tally, the Nifty is up close to about 3.5%, 3.6%. The mid-cap index is up 5.7%. Sectorally, it's the defense index right on top, 11.5%, followed by autos, 9 and, nearly 9.5%. And then you've got the PSUs. Mid-caps are doing okay, relatively underperforming, but in the green. The small cap index has a gain of, the Nifty small cap index is higher in trade with a positive advance decline ratio. But let's talk about stocks. Hormus is now putting the spotlight on the top movers in the market.
Yeah, the mid-cap index may be underperforming, but today's day belongs to volumes. And you see the eye-boggling volumes that you're seeing in the first couple of hours of the trading session itself. And you look at IRM Energy first up, and the stock is up around 15%, now 16% almost. It's the biggest single-day gain since April of last year. And the volumes for today's session are already set to cross the highest level since March of this year. So almost at a 6-month high. We've already had 13 lakh shares change hands in the first couple of hours of the trading session. The 20-day average is less than 11,000 shares. That's first. Now it's also broken above all of its key moving averages. It's 50, 100 and the 200 DMA above because of this move today, but has been an underperformer as the IPO price was around 505, so still down around 37% from those levels. Mirza International, the stock was up 15% yesterday. It's extending those gains today, another 13% in today's session, and today's volumes are already almost crossing yesterday's volumes within the first 2 hours of trade. Now we've already had 29 lakh shares being traded already today. The 20-day average is only 75,000 shares. Now just a couple of days ago, its demerged entity Red Tape had confirmed some searches by the income tax department. Interestingly, Red Tape is also trading with healthy gains in today's session. And Mirza International, courtesy of this 2-day move, has broken above its 50 and 200-day moving average. Not only that, it has also turned positive on a year-to-date basis. The stock of the morning, though, has to be KNR Constructions. The stock was at one point up around 9%. It's cooled off slightly from the highs, up 6% now. It's the biggest single-day gain since June. Volumes are already the highest since November of last year. But take a look at the volumes here. Almost 3 crore shares have already been traded in the first 2 hours of the trading session, compared to a 20-day average of just over 2 lakh shares. And as a result of this move, the stock is now at its 50-day moving average of 207, and the 100-day moving average on the upside is at 213. Another underperformer this year is down around 39% year to date. And the last one on the list is Platinum Industries. The stock listed sometime last year, and it is the biggest single day gain that it has had since listing. And the volumes are already the highest since July of last year. We already had over 50 lakh shares that have traded. And take a look at the 20-day average, only 33,000 shares. And the stock is doubled from its IPO price, but down around 33% from its 52-week high, which is close to around 500 rupees for Platinum Industries.
Okay, all right. Some interesting names there. Thank you so much for joining us with that list, Hormuz. But let's move on. Jefferies' Chris Wood believes that FIIs will make a comeback in India in the last 2 months of this year, even if the tariffs remain at current levels. Let's listen into a slice of this conversation.
It's quite conceivable that it wouldn't be a surprise if we traded sideways for the rest of the year. Now, if we get a sudden resolution of this US-India trade thing, that will trigger a short-term rally. But the more important point in India is, do we get a pickup in nominal GDP growth next year? Based on the monetary easing we're seeing under the new RBI governor, and based on the various policies to trigger a boost in consumption demand initiated by the government this year. First of all was the income tax cuts, and then clearly I think more important is the rationalization and simplification of GST and the rate cuts, plus the monetary easing we're seeing, which has been considerable. All of this hopefully should lead to a pickup in nominal GDP growth next year, which in my view will lead to a stock market rally next year. But I am assuming a pickup in nominal GDP growth. If I'm wrong on that, then I'm too bullish. Nominal GDP growth is key because corporate earnings are reported in nominal terms, not real terms. Historically, India has been growing in a 10 to 12% nominal GDP range. This year, nominal growth has been, I believe, below 9%, and that reflects the relatively lackluster earnings outlook.
You're saying that you're saying it's entirely conceivable the market stays sideways for the rest of the year. But if we get a sudden resolution to the India-US trade issue, you may get a bit of a tactical rally. That's the call?
Definitely. And you know, there's got to be a 50% possibility of that, simply because it's quite clear that these 50% tariffs are rather anomalous. It seems pretty clear they were triggered by the US president's personal pique, that he wasn't allowed to intervene in the India-Pakistan dispute. And it seems pretty clear from a US foreign policy standpoint, these 50% tariffs have needlessly antagonized India, and, you know, it doesn't make sense from the US standpoint, from a diplomatic standpoint, to encourage an improvement in India relations with China.
You said there's a 50% chance of that happening, will result in a tactical rally here in India. Now, just one question more. Foreign investors, Chris.
But one other point that... Yep.
Go on. Please finish that.
No, I was just going to say the good part about this 50% tariffs, it's accelerated what the government was planning to do anyway, but it's definitely made them expedite the policy, and that was to simplify the GST structure and cut the rates. So in that sense, the 50% tariffs will turn out to be good news in the medium term.
Okay, got that. Now, FIIs, Chris, have sold about $28 billion of Indian stocks since the highs in September of 2024. You started by saying it's not so much about India, but it's about other markets doing well. What are you hearing from large global asset allocators about what they want to do. And you know, India, in positioning, FI positioning in India is at, what, 15-year lows, 16-year lows. So when does that start to turn?
So it is interesting that the FI positioning's become so low. I think there's a series of kind of, in some ways, coincidences. Last year, basically, fourth quarter last year, there was big foreign selling of India to buy China. And that made sense because China basically, in my view, put in a long-term bottom fourth quarter last year at about 7-8 times earnings. So that was one definite big driver of India being sold to fund increased investments in China. And we've got to remember, most of the foreign money in India is dedicated emerging market money. And then in more recent months, what's been going on is that people have been selling India to fund increased investments in Korea. Korea's had a huge move this year, and most foreign investors have missed it, so they've been playing catch-up. And they've also been having to buy back Taiwan because the AI trade's been running on Wall Street, and the Taiwan market is the same trade as the S&P 500, because the S&P 500 is dominated by big tech and Taiwan's dominated by TSMC. So that's what's been going on in terms of people selling India to fund Korea and Taiwan. If it wasn't for this Trump tariff issue, I think there would have been a chance that money would have started to enter India, in the last 2 months.
Okay. FIs return net buyers by the end of the year, even if the tariff issue stays unresolved. I got that. That's a fair bit.
Because by the end of the year, we've had, the impact of this monetary easing should be starting to show up.
Chris Wood there in an exclusive conversation with Prashant. Take a short break. On the other side, we put the spotlight on the crypto market. Manisha Gupta joins in.
Prime Minister has repeatedly mentioned to the entire country, and the role of financial sector in meeting the goals. I think we have to keep that in the mind. I think that should be our objective. The financial sector or the banking sector. I truly believe that that should be the primary focus or North Star for the banking sector, the goal set by the Prime Minister for 2047. That's one. For that, our credit to GDP ratio have to increase. Currently, we are one of the countries with the lowest ratio. I think we need to increase that credit to GDP ratio, at least 120, 130%, so that people who require credit is available. Now, the third pillar is the MSMEs. MSMEs, they are going to play a huge role in the country's development. MSMEs, we have to ensure they are productive and provide employment, and also ensure that they play an important role in the global export markets. For that, whatever we are actually supposed to do this. And the fourth important thing, how we converge the advantages of fintech with the banking and the financial sector. We also need to harness the full potential of fintechs, both to ensure financial inclusion goals, as well as to leverage the combined synergies for the more strengthened financial system.
I think you've articulated very clearly the priorities that the government has in the long term for the banking sector. Hopefully, many of those will happen in our lifetimes.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Crypto Corner today, we're going to talk about blockchain as a space in sense of companies, investments, and of course, the bigger companies or the names within that space as well. I will start with the data that we have from Block Data. This is their research, and they say that there are various companies, and 40 big companies, by the way, which are invested in blockchain as a technology, in blockchain companies as well. Alphabet is invested in 100 public companies as per this report. And then you have other companies like BlackRock, Morgan Stanley, which also have done big investments when it comes to this space. Alphabet has invested $1.5 billion in funding rounds in just about 4 companies. And remember, they are invested in 96 companies more there. And then you also have BlackRock and JP Morgan, which have made investment rounds to almost $1 billion and have raised that much for those companies there. This is a segment that seems to be really improving, increasing as much more financial investments, insurance, friendly movements start to come in on blockchain in sense of transparency, security, efficiency. There are more investments and work being done into this one as well. So let me take you through what all companies, apart from the major companies, are have invested in blockchain as a space. You have names like Samsung, Citi, LG, Wells Fargo, Commonwealth, Goldman Sachs, PayPal, Microsoft. These are some of the companies which have made big investments within the technology, which is blockchain, and have adopted a lot in that sense as well, in sense of partnership in their work there. What is blockchain really? Remember, blockchain is the platform, and the native of that in sense of currency is called a token or a crypto. These are distributed databases which are shared among nodes of computer networks. So one thing that gets bought, sold, put on blockchain, launched on blockchain, stays there forever and can be seen by all. So that is the kind of transparency it brings to you. It also maintains a secure and decentralized record of transactions. So it is not in a paper, it is not just with you, it is shared. And when you look at the top blockchain participants or big companies globally, well, most of them really come in from US. That is where the major leadership in blockchain has been. So you have New Holdings, which is on the top of it in sense of volumes, also in sense of revenue. It has a market cap of around $58.6 billion. And more than that is Coinbase Global, of course. They're an exchange as well, and a lot of leadership in their name. $76 billion of a market cap is what Coinbase holds. Core Scientific Inc. holds $4.2 billion. And then you have Strategy. Remember, they have been buying Bitcoin, various cryptos, making huge reserves, and doing a lot of proprietary holdings as well when it comes to crypto. Has a huge and the largest, perhaps, market cap at around $106 billion. Mara Holdings is another one on my list, which is on the top 5 here, which has a market cap of around $5.6 billion. There are at least 35 companies like that which have their market cap in millions and billions of dollars, but these are the top lists there.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Gone, but since you raised the issue of MSMEs, an issue that is top of mind today in light of the tariff imposition by the US, the finance minister has also said that the government is working on putting together a package for exporters specifically. Any update, sir, on when we're likely to see that fructify?
No, I think the finance minister, Honorable Finance Minister mentioned, government is working on that. More or less, we have finalized the elements of the support that is required, at least from the financial sector side. And then I think we hope this is quickly finalized. And as soon as finalized, I think everybody will know that. And the government is fully aware of the difficulties currently being faced by exporters due to the tariffs of America. And then we wanted to support that. On that, the government is very clear.
The government is very clear. The finance minister did say that the exporters will not be left, in her words, high and dry. Secretary, you said that we need bigger banks. Do we also need more banks at this point in time? What is the government's view on that? And if we do, what kinds of banks do you believe we need today to service the needs and the requirements for the India of the future?
I think, see, one thing we all, those who are connected with the financial sector, I think we all believe that we need to have bigger banks, that's one. And a country of size, again I'm talking, we all, I think, this kind of population, this kind of credit growth potential, we also require more banks. On that, there is no doubt at all. The government is very clear that we also require more banks and also bigger banks. They are not contradictory, they all actually go together. Because we need we have about, let's say, 300 to 350 million people. They have to be completely formalized to the financial system. And imagine that kind of number of people formalize, and then the kind of credit, the kind of the business, banking business that will be there. So the scope and area is huge for new banks also.
New banks also. So let me ask you a follow-up question, sir. The RBI's licensing policy, there hasn't been much change in the past decade as far as the licensing policy is concerned. Has there been any new, fresh dialogue with the RBI on that front?
I think we should have asked that question when the DG RBI was.
Welcome back. The Nifty is firmly above that 25,300 mark. News coming in from SEBI. Okay, we missed that. SEBI, I think, will allow FPIs to trade in non-agri commodities. Let's get that flash once again from you on the screen. Okay, other include planning to enable banks, pension funds to trade commodities. All this is pro-MCX, will allow FPI trading in non-agri commodities. And that's the reason why the stock is moving up close to about 3.5%. Prakash Sharma, financial services analyst at Jefferies India, who is joining us from the sidelines of the Jefferies India Forum 2025, is now joining in. Prakash, thanks so much for joining in. Let's get the big picture then on the banks. Now, we've been all waiting for, banking growth to come back in a big way. It's not so far. I think the system-wide loan growth has barely been close to about 10% for the last couple of quarters. Are you seeing a pickup? What would that number look like? And what is the broad call on the India financial space? You like it? Which segments of it do you like?
Yeah, thank you for having me on this show. I think, the bank credit as well as deposits have aligned at about 10%, which is where RBI also wanted to go. I think we should always keep this in mind that, inflation being at a very, very low level probably has a drag of maybe about 150 to 200 basis point vis-a-vis a normal level. So what used to be 4 or 5% inflation, which feeds into credit growth, is probably running at 2%, and therefore the like-to-like number, I think we are running at somewhere close to 12, and as the inflation base normalizes, we'll probably get there. I think the mood here with a lot of corporates who are here, especially we've had a lot of bank CEOs as well, is of optimism. They are seeing potential benefits of the recent cut in GST. The government had come down with decent cut in income tax rate that boosted middle class income by about 5 to 7%, and RBI has given rate cuts, liquidity improvement. So the expectation among most of the people and management we have interacted is of optimism that we should see a decent demand starting next week when we get into a new tax regime, and we keep our fingers crossed for that.
That's the word we have been getting across sectors, right? Waiting for the GST cut to come by, for credit growth to pick up, because demand will pick up too. Prakhar, if we are seeing a pickup happening in the next week and that could continue by the end of this fiscal as well, what is your take? Do you prefer private banks versus public banks, public sector banks? In terms of valuations, where do things stand right now?
We are restricted from making specific comments. I think in Indian banking sector at a very, very broad level, we think that the valuations are actually within very palpable range. Good stocks, high quality stocks which deliver high teens ROEs are trading between 15 to 16 times earnings. In many ways, Indian stocks are not significantly cheap, in some cases even at a discount to large global banks as well. So it's been a period of time that globally we've seen banks, rally. And their valuations have also re-rated, and in that context, Indian banks do not appear to be particularly expensive. Our preference has been always to own quality, and we think that the quality actually drives growth in deposits, which allows growth in credit. So most people, investors, come to India for growth and quality. I think quality still remains. Growth is where they are hoping, the expectation of the benefits of all these changes that have been done by RBI, government, and the banks themselves starts to feed into growth. And I think second half should be a period where we'll see those benefits come through. I'll just avoid making specific comments on banks. I'm sorry for that.
Fair enough. Prakhar, in the previous quarter, there were at least most of the banks that reported results, barring a few large ones, had two issues. There was some asset quality pressure, slippages had increased, and they had also spoken about credit costs remaining at elevated levels. Now, there is some commentary that is coming in on the fact that credit costs will continue to remain at elevated levels, particularly because of the stress seen in specific segments like the SME market. Do you believe that this will continue to outweigh on the earnings growing forward, even though if their bottom line continues to recover, but asset quality stress would be a concern even if valuations are palatable?
So in my view, the stress as we are seeing in the SME segment is not as widespread. In fact, most of the large banks as well as NBFCs, have not seen any significant stress coming through. That's one of the line of thoughts, at least the large banks have reiterated at our conference as well. Even within NBFCs, the slow economic growth and probably something around, tariffs might have led to some bit of asset quality pressures. As we all know, 1Q is a seasonally weak period. There was unseasonal rains, so it might have had an accentuation of the cash flows impact on the SME sector. But I don't think this is a widespread issue. Some companies would be facing it based on the clients that they've gone through. Even in the retail unsecured segment, I think we are at a fag end of the cycle. RBI came in timely to warn most of the banks and NBFCs of the potential stress. This is like a 2-year sort of a loan, and the peak defaults, I think we are very close to the cycle. So from our top-down perspective, the retail unsecured part maybe a quarter issue at best, and many of them have already started to see it fading out. We've seen a couple of banks in the previous 1 or 2 calls actually say that either things have stabilized or have started to improve. So I'm not really very concerned on the quality part. I think wherever stress had come last year is already fading, and SME in my view is not a very widespread issue at all.
Prakhar, do you look at the exchanges space? Because there is the regulatory overhang, which is kept in lid. How do you expect it to play out?
I think, the SEBI and the exchanges, are planning to take a consultative approach towards it. SEBI chairman has been very, very clear. There were some indications that the expiry period will be extended from weekly to either fortnightly or monthly. I think, let's wait for the guidelines to come. It's an issue that is relevant for exchanges. So, we hope it, kind of clears out soon. Thankfully, we have got well-run and profitable exchanges. So whatever approach they take, I think will not disrupt. It will be more like a phased out sort of an implementation. But will be better to comment when we have the consultation paper.
So that's right. The other big update with respect to GST has been the insurance space, Prakhar. And while we are talking about that exempt status coming in for insurance premiums, the input tax credit being unavailable continues to be a worry. How do you look at the insurance players right now? Do you think there'll be an increase in premium to pass on the increase in costs? What's the overall take on the stocks per se?
So, generally speaking, I think the GST issue, as has been put out, there is some bit of a loss of input tax credit, especially as cost items like commissions and, maybe some other expenses where they are paying GST is not permissible to be, taken credit for. I think the industry as well as IRDA are in discussions. I think industry is being very careful. I think they see this as an opportunity to deepen penetration in the sector. At the same time, they are kind of consulting with the government if there can be a middle path that can be actually struck. If it doesn't come through, I think there may be some bit of an impact. Insurance companies will try to do that with a better product mix, distribution commission changes. But I think there's still consultations and discussions are going on. I think it's in a way very important for government to recognize that this is an important product. It takes away the tax to zero. Some bit of issues around input tax credit I think can be resolved, but I think the net outcome of putting it in the exempt category actually puts it on the right side of government policy making as well.
One final question, Prakhar, from my end. When a decade ago, when all of these insurance companies went public, the narrative that was given was the fact that insurance is a very underpenetrated sector in the country. The narrative that is given today is that insurance is a very underpenetrated sector in the country. So, despite all of these changes with reforms and GST and so on and so forth, does the underpenetration factor remain the only reason why somebody should be an investor in these insurance companies? And if you are not asking you for a specific recommendation, but where do your preference lies within this space, be it the life insurance, general, or the health insurance space?
Tricky in a way for me to answer, but I think I would put it this way. In Indian context, the life insurance companies have run the business very, very well. Indian companies, they have not seen risks emanate from the assets that they own for their policyholders. They have managed the interest rate cycles very well, and they have actually managed profitability at a decently high level. And from a very top-down perspective, the sector doesn't really trade at very obscenely expensive valuations. So it's very well-run type of a sector, doesn't trade very expensive. There have been some regulatory changes which have had some near-term issues on the growth in this sector, but I think those have kind of gone to rest. We should hopefully have at least few very good years of consistent growth in the life insurance sector. General insurance, we've got a fewer direct listings as of now. And I think that's also, a fairly good sector from an ROE perspective. There are certain drags on profitability because either of pricing or competitive intensity, but net-net, the sector has actually kept deepening on penetration. So that's where the recommendation, won't get into that specifically, but very well-run sector. And despite 20 odd years and some economic as well as sector-specific issues, they've done fairly well to grow.
Okay, all right, Prakhar, pleasure speaking with you. Thank you so much for joining in today and giving us your sense on financials, insurance, exchanges as well. A whole host of sectors we could cover in this conversation. With that, we'll slip into a break. When we return, we'll discuss market technicals with Siddharth Rai Mangla from Stockbox Technologies and also discuss their top trading bets.
We can ask for the government's point of view, sir.
I think we'll leave that. I think we hope that RBI has, of course, laid out policy of granting new licenses and also transition of the small banks also. And we hope that now that maturity has come, I think RBI will take a call on that.
In light of the next phase of reforms that you spoke of, and one of the expectations which has of course been talked about for many, many years is whether the government will in fact look at bringing down its shareholding below 51%. You talked about meeting the SEBI minimum public float norms, but is there any active consideration at this point in time, sir, within the government to even consider the possibility of bringing the government's holding below 51%?
I think there is no, I don't think so. There is no proposal at all before the government to reduce that. They continue to be majority owned by the government because there is a public interest in government owning majority in the public sector banks. We are just not lending instruments, but we're also looking, the government is also doing a lot of trade to different neglected or under-serviced sectors, like education loans we provide, our KCC, Kisan credit cards we give, PM Swanidhi or PM Jivan Jyoti. These are all done because they are government banks. And we also, these are all not possible if they are private. So the government has an interest, in the interest of the national development, to continue to have majority shareholding. I think government stick to that.
What role do you see?
Welcome back. Well, markets have slightly come off from the highs of the day, so it's a good time to get the trends from the F&O space. Mangalam is joining in with all the updates. Mangala?
Well, after, having seen a big rally, the market seems to have come off slightly from the highs of the day, but still holding about 25,500 for the frontline index, and that's a positive. In fact, if anything, the risk-on sentiment is up for the market. Why do I say that? Because, the banks are doing well, the IT sector is doing well, advance decline firmly in favor of advances, India VIX is lower, and then you have PSU banks, the PSE segment, and the small cap index, all of them outperforming. So this typically happens when, there is risk-on sentiment in the market. Now, the only key technical levels to watch out for would be on the Nifty IT, which reclaimed the 50-day moving average yesterday. The next important level is the 100-day moving average, just under that 36,800 mark, so watch out for that. We have the 50 and the 100-day moving average on the Nifty Bank, which are about 200-300 points away from here. So those are a couple of levels that we'll watch out for that index. And for the Nifty, 25,300 put has seen a fair amount of writing, telling you support has moved higher to 25,200 thereabouts. And on the way up, 25,500 seems to be a psychological resistance for the frontline index after nearly 11 days of rally. So we'll watch out for that one as well. A lot of long positions added on a couple of these Tata group names. So Tata Consumer, Tata Chem fairly well bid in today's session, and Dalmia Bharat too. But just watch out for HFCL. The overall open interest right now is at 80.5%. If it falls below that 80% of the market-wide position limit, then the stock may exit F&O ban. So that's a stock I'll be watching out for today.
Thank you very much for that. Let's address the market technicals. We've got Siddharth Rai Mangala from Stockbox Technology joining in. Siddharth, first a quick word on the index. Continues to move up higher, chugging along quite finely. And what about your stock calls?
Hi, Rima. Good morning, and thanks for having me on the show, first of all. See, if we talk about Nifty, Rima, we have seen the index turning around very smoothly. The momentum has turned around very smoothly over the past 15 days or so. Even today, Rima, Nifty has managed to touch 25,300 after more than 2 months, so which is a very good thing. But two things here. One, from here, we need to be inherently bullish. The inherent bias in the market should be bullish, because we'll see the index moving towards 25,500 and 25,700 eventually, because all the major indexes have started showing bullish momentum. Second thing, and which is very important, that 11 out of the last 13 sessions have been very positive. The momentum has almost been one way for the past 15 days. So we can see, and we will probably see, some profit bookings and dips coming up from here as we go ahead from here. So this is now a buy on dips market. Once we see the index coming back towards its important supports, we should definitely start accumulating. For example, right now, the important supports are around 25,250, 25,200. So once we see the index coming back around these important supports, we can start accumulating in Nifty, because we will eventually see 25,500 and 25,700 being coming up in Nifty in the upcoming days.
Siddharth, thank you for sparing time and joining us today, and look forward to chatting with you more often. Take a short break. On the other side, the management of Lakshmi Organic joins in to take the conversation forward. Stay tuned. We'll be right back.
playing in the banking sector? And do you believe that there is need for further liberalization as far as FDI in the banking sector specifically is concerned, sir?
No, I think, see, we know currently the existing limit we all know. I think we are actually thinking about it, but let's say in the public sector banks, whether it's possible or not, and the private sector, in any case, we have that is available. We have not taken, the government has not taken a view on that.
Not taken a view at this point in time, but could that be up for consideration anytime soon?
The government can always consider. See, there is no, government is the government. The government can always think and come up with new ideas. Okay.
No, fair enough. Let's talk about the GST, sir, because one of the concerns that has been raised specifically is by the insurance sector. One aspect that the insurance companies are raising is that they had priced in the ITC benefits into their policies already. So can you at least not make a consideration for the ITC benefits to stay in the policies that already are in existence as opposed to the policies that will now be given out? So the retrospective aspect of the ITC benefits being done away with, could that perhaps be addressed?
Now, see, look, let me tell you, I had a meeting with all the insurance industry, both public and private, in fact, yesterday itself, and all of them have welcomed the GST input, the zero GST on the individual insurance policies. And all of them have actually promised that they will pass on the benefits that likely to accrue due to GST. And the past policies are one thing, and the future policies are they are very clear. And we have not heard much concern on the input tax credit as far as the GST in the insurance sector is concerned.
Okay. What about the insurance amendment bill, sir? When do we see that being moved forward?
The government is very keen to get it done as quickly as possible. Insurance last bill.
Welcome back. You're still tuned into Trading Hour. Let's talk about a corporate conversation. Last week, Lakshmi Organic Industries entered into a global sourcing agreement with Hitachi Energy. Rajan Venkatesh, who is the Managing Director and CEO at Lakshmi Organic, is joining us now to discuss this, to understand the revenue potential of the global contract with Hitachi. The second point to discuss would be demand outlook for refrigerants as a segment overall for the company, and also is the worst over in terms of industry dynamics as well. Rajan, good morning. Thank you so much for joining in. Before I talk to you about the company overall, let's talk about this particular contract. What is the potential of this contract that you have with Hitachi? What's the asset turn you're expecting? Do you think in future you can expand this to the Indian entity as well? And when you say 40 to 60% of fluorination revenues would come by FY26, is this deal included in that?
Again, thank you for having me and Lakshmi Organic on your show. You've already started with multiple elements of your question. So let me just break it down point by point. First is the entire fluorination platform that we had established at our Lote Parshuram site. This was a relocation of the assets of Miteni that we had acquired in 2019. And what we had laid out for ourselves is to achieve peak revenues of up to 200 crores by FY27. So now in FY26, the focus is to be close to about 40 to 50% of that peak revenues. So that's somewhere between the 80 to 100 crores. And that is what we are chugging. The second lens is that platform provided us obviously in the space of liquids and solids. But that also gave us from our technology capability also the gaseous thing. And that is where we have taken a big step forward, is what you called out, with Hitachi Energy, where we are going to be the global supplier for them for an SF6 replacement. Now, SF6 is used in power transmission as an arc quencher. And the product that we are going to be supporting Hitachi with globally is also going to have the same functionality. And I think we are very, very excited to have Hitachi as the lead partner in this journey of ours. And we will do this in phases. So the first wave of capex is what we called out, 75 crores. Asset turn we anticipate to be close to about 1.2x. What we have also done very prudently is we had a capex layout of about 1,100 crores. The midpoint of expenditure is happening now as we speak. We have been actually very prudent in the way we have laid out this capex. So this 75 crores of capex, which was not part of the 1,100 crores, is now can be accommodated in that capex layout. So that's the way we are looking at it. I think you had also an element, can this be expanded? Yes, we certainly have the ambition to also see, and Hitachi recently signed their SF6 with Power Grid. So that's the first time they have really made that order entry into India. So we remain also very excited. How can we support their growth also domestically? We also have the opportunity to supply other majors similar to Hitachi because the IP and know-how for this technology remains with Lakshmi. So that's the way we are approaching this entire space, and it becomes an important new growth engine for Lakshmi in the fluorination space.
Got that. Very well explained, Mr. Venkatesh. So just one word on the capex. You said this 75 crore capex will be incorporated in the broader 1,100 crore capex that you had outlined earlier. But you also said that capex for this particular order for Hitachi will be increased progressively. So what will be the incremental capex that you will require? And will you be able to accommodate that within 1,100, or will there be a change to the overall capex number?
No, I think so. The lens is when we established our fluorination platform, it was a growth engine. And we've been calling that out also in the past. With the Miteni assets that we relocated to India, the peak revenues was only up to 200 crores. So I think for newer growth opportunities, and Hitachi being one of them, while we have been prudent and been able to accommodate this within that 1,100 crores, but as we also expand our ambition into fluorination, we will need obviously additional capex, and this might be outside of the privy of the 1,100 crores. But what we are really focused on is really on the asset turns. So ideally, we would look at asset turns on our specialty vertical around 1 to 2. So we will try and over-index closer to the 1.2 to 1.5, and also really achieve EBITDAs closer to the 23 to 25% for additional capexes or new capexes that we will lay out in our fluorination business.
Rajan, good morning. Thank you for joining in. Your overseas business, particularly in Europe, your contribution has increased from that geography in the first quarter, while America has seen a decline. Now, does this trend continue because of more demand coming in from Europe? What's the situation you have witnessed on ground in this quarter? Because we are almost coming to the end of this one as well.
Right. So first and foremost, our European business has been an important pillar because we have tank operations in Antwerp and also in Genova. Primarily, the focus in this tank operations has been our essentials business, but we also have direct business with various multinationals in Europe. I think calling out also North America, thankfully, the range of products that we are servicing North America are outside the privy of the current tariffs. So that also is certainly not materially impacting us while it is developing, as we all know, as we speak. So that's been really our strategy. We have double-clicked also on capability building in our European space. So I believe as Europe is also, as you guys are all aware, Europe and other geographies are also going through a large restructuring in the chemical space. And that is where we continue to see opportunities to piggy bank and also tap with our cost positions and already presence on the ground.
We leave the conversation here for now. Thank you very much for joining in. Wish you all the best. We'll get into a break on that note. On the other side, we'll put the spotlight on Media Matrix Worldwide in our special segment, Under the Lens.
Insurance bill actually includes both insurance, IRDA, as well as LIC, all three together. Government is very keen, and we hope to have this in the winter session.
In the winter session itself. On the insurance sector, sir, consolidation, a possibility there, at least as far as the non-life insurers are concerned. Is that something that is up for consideration?
I think when the government decides, I think we to inform, we will inform, okay? Allow the government to do our own homework and then we will come back.
I'm sure the government is doing a lot of homework at this point in time. So there was a poll here that Lata just did with bankers on whether they expect a rate cut, and the unanimous view was that they don't expect a rate cut, at least in the upcoming policy. What's the North Block view?
No, I also think I don't speculate like bankers. They are entitled to speculate. But as Secretary in the Finance Ministry, I don't want to do that. I leave that to media and to Sherin Bond and all the participants.
Thank you for that. Mr. Nagaraju, you talked about profitability of banks, and it was a record year in FY25 for the banking sector specifically. Do you expect to be able to repeat that performance, sir? What's the indication?
As far as whatever the winds I'm reading, the leaves, I think this year also we are going to have record profits. Public sector banking. The first quarter was very good results.
I don't know if you can hear the applause, sir, but there's a loud applause in the room the minute you said that.
Yeah. And, I keep hearing, I keep traveling, I keep hearing different cross-section of people. A large number of people actually are very happy that public sector banks are doing extremely well. And the culture we are actually changing. The one fundamental principle we are doing is our culture. The amount of trust public sector banks enjoy among the Indian public is enormous. And they're happy that now they are actually responsive, very responsive. And the system they have improved, digitization has done wonders for them. In any case, the top management is very, very good, highly caliber, skilled, and they are very, very good decision makers. So this quarter also I'm expecting good profits so that the country will be happy with the performance of the public sector banks.
Most certainly, sir. The country and the shareholders will certainly be happy if it is going to be a record year, as you point out. Let me end by asking you, Mr. Nagaraju, you talked about the message to bankers. You also talked about lending, banks lending more, and the credit to GDP ratio. What is the near-term target that you're perhaps working towards, or the near-term aspiration that you're working towards, sir, when you talk about growth and the bank's ability to be able to fuel that?
See, we feel that the credit has to last year's credit we want to.
Welcome back. Time for Under the Lens. The company in focus is Media Matrix Worldwide. Over to Sonal for the deep down.
Oh, yes. So this stock is under the lens today. A stock that was locked in upper circuit yesterday, but don't forget it's still down 38% in the last 1 year. So what's behind the buzz? Let's break it down. It is a B2B focused technology and services provider specializing in value-added services across the mobile and digital ecosystem. It runs its business through two subsidiaries, NextG Devices Private Limited, which handles procurement and distribution of mobile handsets for brands like Vivo, Xiaomi, Realme, Techno and ITE, and Media Matrix Enterprises Limited, which is the other subsidiary, which primarily invests in new and existing projects. So basically, that is an investment arm of the company. The parent company has also extended a corporate guarantee of around 232 crore rupees for NextG as of FY25. But here's where things get really interesting. The scale of related party transactions. Now remember, as per SEBI rules, any related party transaction crossing 1,000 crore rupees or 10% of consolidated turnover needs shareholder approval. Now for FY25, Media Matrix reported revenue of 1887 crore rupees. That means anything above 188.7 crore needs to be cleared by shareholders. Now listen to this from the annual report. NextG with Infotel Business Solutions, it has a related party transactions. The sale of services 20 crores, goods 175 crores. If we go ahead, purchases of 195 crores as well. There are loans given and taken, each 20 crores. That's a total size of 430 crore rupees. Then there are more related party transactions. There's NextG with NextG Ventures. The structure is similar. The sales, purchase of goods, services worth 230 crore rupees plus loans which are unsecured. Then there's third-party transaction. NextG with Madeline Enterprises and Media Matrix Enterprises as well. More loans, more trading between two similar structures as well. And then we have Media Matrix with Infotel Business Solutions and also Infotel Access Enterprises. It might sound confusing, but the bottom line is there are too many subsidiaries. They are having related party transactions which are way beyond that 189 crore threshold that is to be allowed by the shareholders. In fact, that is not it. In the notes to accounts, sales to one of the subsidiary is at 2,076 crore rupees and purchases to another associate is around 617 crore rupees. And this is what the picture looks like. So within the entities, there's so many transactions are happening. All of this while the company's own reported revenues was 1887 crore rupees. So they were actually selling more to one of its related party itself, which is the subsidiary. Let's talk about the balance sheet. Equity in NextG, which is one of the subsidiary, is at 2,759 crore rupees. Equity in the other subsidiary is at 2,103 crore rupees. And the debentures in that subsidiary is staggering at 10,225 crore rupees. All this while cash flow from operations in FY25 stood at negative 26 crore rupees. So basically, the promoter group, which holds 59.3%, is calculating or seeing transactions within the entity itself. And it's clear that Media Matrix is operating more like a holding and funding company than an independent tech business. Yes, related party transactions are common in conglomerates, but here the scale is massive. So massive that the company's revenues, costs, and loans are almost entirely intra-group. So for investors, the key question is, when almost the entire business runs within the promoter group itself, can minority shareholders really expect independent growth going forward? So it was like a maze when I looked at and researched the annual report as well.
Undoubtedly so. It was a maze for us to hear it as well. Sonal, thank you for that very, very interesting insights on Media Matrix Worldwide. Well, as Prime Minister Narendra Modi turns 75 today, wishes are pouring in from across the country and around the world, with political leaders, party workers and citizens expressing their gratitude and well wishes for him. Here out, Mukesh Ambani, Kumar Mangalam Birla and Uday Kotak praise the Prime Minister's leadership.
Today is a festive day for 1.45 billion Indians. It is the 75th birthday of our most respected and beloved Prime Minister, Shri Narendra Bhai Modi ji. On behalf of the entire business community of India, on behalf of the Reliance family, and on behalf of the Ambani family, I convey my heartiest felicitations to Prime Minister Modi ji. I have never seen a leader who works so tirelessly for a better future for India and Indians.
I would like to pay my respects to him on his 75th birthday. He is one of those people who have made the largest impact in the history of our nation in terms of the growth and development of our nation. And I would wish him a very happy birthday and also seek his blessings.
His attention to detail, his focus on execution, and his ability to think in an inclusive manner were very clear to me even then. And whenever he went overseas, and on the occasion I had to go with him, I would find him curious to learn the good aspects of the country he visited. And from that learning, how can he make Gujarat and India a better place? Therefore, a relentless hunger in a way for wanting India to become developed.
Wishes pouring in for the Prime Minister. While we still wrap our heads around Media Matrix Worldwide, we leave you with the Nifty 90 points higher. Thank you for tuning into this edition of Trading Hour from Rima, Sonal and me. Thank you for watching. Halftime report on the other side.
And especially the MSMEs, we want to do it. And the agriculture sector, we want to do well. Agriculture, last year we did very well. And this year also we wanted to do well. And the other thing, which I think is not, because it's not a corporate, we want to do well in the PM Vidya Lakshmi. We want to provide scholarships to every student that is admitted into colleges. And we are very keen we monitor, and then PM Vishwakarma, everybody, whoever has got skilling, if they want loan, we want to provide the loan to them. Because these are the critical, generally not highlighted or prominently looked at it. We want to provide that. So banks actually are our banks. Let me also use your channel to tell you, we have launched the financial inclusion campaign, saturation campaign from 1st of July. Now we'll be ending the 30th of September. In each village we are organizing. For the inactive accounts, PM Jandan accounts, we want to make active. And also all the PM schemes, PM Suraksha Bima Yojana, PM Jeevan Jyoti Bima Yojana. And also we want to provide the unclaimed deposits of the banks. We want to give the money back. And this campaign we have launched entire country. I want to, the participating by the media should actually participate, promote, ensure that the people take the benefit of this campaign.
We've always done that at CNBC-TV18, sir, and we will continue to do that. Let me end. You've got a captive audience here of bankers who are watching you. One last message that you'd like to send to them?
No. I think one last message to my banker friends is that while we are doing well, I think we should not be complacent. The world is very dynamic nowadays. We should keep our ears to the ground and keep our eyes open and absorb it, and then accordingly we should respond to the situation.
Mr. Nagaraju, what an absolute pleasure, sir. Thank you so much for joining us and giving us a very clear path for India's banking sector and how the government intends to transform India's banking sector, not just in the near term, but with the target of what it aspires to put in place by 2047. Ladies and gentlemen, a big round of applause for the Financial Services Secretary, Mr. Nagaraju. Thank you so much, sir, for your time.
Thank you so much for inviting me. Thank you for so much. Okay?
Thank you, sir.
Nifty and Sensex trade in the green after a positive Trump-Modi call ahead of the FOMC decision tonight, and the Commerce Ministry saying that India and the United States held positive negotiations yesterday. Energy, industrials and IT gain, while metals and utilities drag.
The urban company stock races up after listing at a hefty 58% premium to its offer price of 103, implying a market capitalization of over 23,000 crores. The strong show points to big investor appetite for top B2C platforms.
Larsen and Toubro writes to the Union Housing and Urban Affairs Minister seeking to exit the Hyderabad Metro SPV by selling its 90% stake to the centre or Telangana. The infra major cites mounting losses and lack of support from Telangana government.
In a boost to commodity exchanges, SEBI chairman has said the regulator will permit banks, pension funds and foreign investors to trade in non-agri commodities.
US President Donald Trump calls friend PM Modi to wish him a happy birthday and thank him for his support on ending the Ukraine war. Modi replies, thanking Trump, and commits to take the India-US partnership to new heights, signaling a big thaw in relations.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Manglam Malu this afternoon. Well, it's turning out to be a session where the market is seeing steady gains, and if you look at it, it is obviously the hopes on the US-India thaw which is aiding sentiment, and that seems to be probably one of the key factors which has played out over the past couple of weeks and not only today. So case in point would be month to date, the Nifty is up around 3.68%, the mid-cap index is up around 5.7%, And obviously, we do have the GST rationalization, which is also added to the mix. So we have the Nifty Auto Index, the BSE Capital Goods Index, both of these indices, which have been the top rankers in terms of performance this month, so up around 9% odd. Separately, we do have the Fed meet outcome, which is awaited today. So that will be something that the street will watch out for. And obviously, what happens with regards to the India-US progress when it comes to negotiations on the tariff front. Hi, Manglam.
Hi, Ekta. It's been a good start to trade. It's been actually a good last 10, 12 days to trade. So let's see whether it continues to move higher or not as we move towards 25,500, which will be important psychological resistance for the Nifty, the psychological level for the Nifty from here on. And we'll watch out for whether it's led by Nifty Bank, Nifty IT, or both of them together. Today's trading session tells you that there is a risk on. We are seeing the public sector indices do extremely well. So PSU banks come up for you, and the PSE, the CPSE index also comes up for you. All of them spiking in today's trading session. Your portfolios, even though the mid-cap index at an absolute level is not as high as the frontline indices, the Nifty as well as the Nifty Bank, the small cap index is doing a lot better. And we do have, the advanced decline ratio, which is 1,800 stocks in the green for about 1,000 stocks in the red, telling you all the portfolios are feeling a lot stronger in today's session. But for a lot of the stocks that are buzzing around, let's go across to Vivek, who is standing by the wall. Vivek.
Well, thank you so much for that. Advanced decline ratio, strong like you mentioned, especially in the broader end of the markets. And like you mentioned, over the last 10, 12 trading sessions, we're actually seeing significant momentum and slightly higher volumes compared to what we were seeing earlier. Quite a few stocks on the radar. Well, the first stock on the radar has to be MCX, especially in the last half hour or so, given the fact that comments are coming in saying FPIs may be allowed to trade in non-agri commodities. Now, some clarification is required whether they will be allowed in gold and silver. Now, if that happens, it is seen as an important trigger as far as MCX is concerned, almost 5% higher for the stock, and it's spiked up just in the last half hour. Defense companies, the entire pack today is doing very well in the session. Names like BEL, Garden Reach, Premier Explosives, Idea Forge, all of these stocks amongst the top gainers today. Mahindra Life, some positive news flow coming in. Another MOU has been signed by the company to go ahead and redevelop some properties in Chembur. The company says almost 1,700 crore top-line opportunity from this particular redevelopment that the company is planning to undertake. ABFRL, a new brand launch is what the company has done. Street is cheering that, almost 4.5% higher. And IRM Energy, one stock we don't discuss too often. It's the CGD, smaller name from the Cadilla Group. That particular stock higher by 18% on very good volumes today. On the other hand, quite a few laggards as well. Look at Britannia, amongst the top laggards today. Top NSE 500 laggard. In fact, select hospital stocks, both Max as well as Fortis, today under a bit of pressure. Telecom stocks, both Idea as well as Industar, seeing a bit of profit booking. And Gujarat Fluorochem in focus after the block deal. It has recovered significantly, but despite that, trading with a bit of cuts today.
All right, Vivek, thanks a lot for that. We'll take a short break, come back on the other side, more markets, and we'll also connect with Abhinav Chaturvedi, who's the partner at Accel, as they sold shares worth 390 crores in the urban company offer for sale, the IPO that came by. They're sitting on a fair amount of stake in the company now as well. So what's the way ahead? We'll speak with the investors who made a cool 27x on urban company. That's been the big story of the day. This is our special segment, Fund Race. Stay with us.
I'm sitting here in the heart of India's financial markets, the National Stock Exchange, a fortress of technology and trust, a place where billions of dollars of trading is executed across equities, derivatives, commodities in a microsecond. At its peak, NSE executed 2.2 crore trades in a single day and $23 billion in turnover in a single session. It is the world's largest derivative exchange for 6 years in a row, home to 12 crore unique investors. But beyond the tickers, the symbols, the charts, today we go behind the scenes. We look at surveillance rooms, IT infrastructure, cybersecurity, and of course, the National Operations Command Center. And we do all of this with NSE's current MD and CEO, who was also instrumental in setting up of the exchange, Ashish Kumar Chauhan. Hi, Ashish Bhai.
Hi.
How are you?
Good to see you.
Good to see you. And I think we were meeting here in your cabin for the first time. Yes. We see you at the atrium, at the opening bell. We see you in our studios. But I think this is your den.
Thank you. Thank you for coming.
It's a lovely office, by the way. I want to start by asking you, Ashish Bhai, what does a day look like for you at the NSE?
In a way, our days are 24/7 by 365 because markets run only for a sort of shorter period.
Right.
But we have to prepare and ensure that the markets continue to run, prepare them for the next day. Even the weekends we have to work. So in a way, the life is kind of continually rolling.
Right.
And then, of course, you have a time of the day where you go to sleep. But broadly, you are available on your screen, on your mobile continuously.
Machines have not taken over yet completely, or have they?
No, broadly.
But they need supervision.
Yeah, they need supervision. And of course, there are changes that happen. So we need to plan for that. The regulations have to be...
So hour by hour, not hour by hour, but maybe 2 hour, 3 hour blocks. What is it? When do you get to office and how does it flow?
No, I come, if it's a listing, I come a little early, like 9.
Right.
Otherwise, I come...
Which is pretty much every day nowadays.
Yeah, nowadays. Otherwise, I have a little more flexibility. Sometimes I have to go out to sort of attend events. But broadly, I try to be in office at the exact time so that I'm aware of what's happening. And normally, I try to be available at 9:15, at least on phone, even if I'm traveling. 9:15 a.m. is like the starting time of the market, and you want to be there in case something goes wrong. If it goes right, so there is no issue, but you have to be available. So that's how the life works. And then once you come, lots and lots of meetings happen. You need to read a lot.
You're watching us here on this special segment on CNBC-TV18 Fundraise, and there has been a serious amount of fundraising and thereafter, making a fair amount of money on Urban Company as well. That's been the stock of the day, the listing of the day, where we've seen a big jump. One of the sellers in that offer for sale was Accel. Sold shares worth about 390 crores, still hold about 7.5% stake in the company. So the person who led that round of the initial investment has joined us from Accel. Thanks a lot for joining in. The obvious question, back when you were speaking to Urban Company, what was the pitch that made you feel like, okay, this is something that we can go all out in? And at the same time, how did you watch the company as it grew along? What were the major pivot points according to you? And now that it's listed, what are the next triggers?
Well, firstly, very excited to be here. It's an important milestone for a company which we invested in at a very early stage. In fact, when we invested, there was no registered company also. So
3.7 rupees, and now it's 170 rupees.
so it was very, very early, and it was just 3 founders and a pitch deck. So it was that early. And, like when back in 2015, we were doing our prepared thesis about this space, trying to figure out where the opportunity lies. There were 20 plus companies in the space. Oh. And what we found between these 3 founders was clarity of thought. And they were also in that stage trying to move to a mobile native experience. And all the other competitors at that time were more web focused. And if you remember 10 years ago, there was this transition of Indian economy moving from the web first to the mobile. And that piqued our interest, and that's why we decided, of course, the team stood out, and that has continued for the last 10 years.
Okay. Interestingly, what's happened to those 19 companies?
Well, you know what? If you see it, there is very little competition for urban companies.
Yes, absolutely. But so is that, I just wanted to understand what is the kind of competition you would see going forward for an urban company? Because everyone is now caught up onto this particular model. So what is the growth path? What is the kind of competitive dynamics that you would see for an urban company? And what are they going to bring to the table henceforth? Where's the innovation?
Yeah, I think that's a great question. And for any new investor coming in, the main question is, where is the growth going to come from? Yeah. If I see competition, the competition is largely in the unorganized sector. And these small mom and pop stores trying to provide service what Urban Company does. And therefore, the whole thesis behind Urban Company has been the shift from unorganized to the organized world. And so that's the main thing. And today, we don't see any large organized player competing with Urban Company. There are new incumbents that are sort of trying to come in certain categories, which Urban Company plays in. But by and large, it's a tough business, and that means that this requires a certain acumen from the founding team and the management to execute against it and deliver against it. And so I see the challenge more in terms of unorganized moving to organized rather than any other organized player in the market.
Right. And, obviously, the listed companies are looked at more from a different lens than the private companies. I mean, obviously, you are looking at some of the fundamentals, the unit economics, etc. But when you're in the public universe, your cash flow from operations matter a lot more. Your profitability metrics matter a lot more than just growth at the cost of profitability. Now that you're looking at, the company being listed, you have a good chunk in the company right now as well. What in your conversation has led to their path to profitability? What are your internal estimates here?
Yeah, I mean, I wouldn't be able to share the internal estimates on the public television, but what we have seen over the years is there's a clear operating leverage playing out. And for the last 3 years, the cost base has been largely fixed, and you see as the revenue grows, it just translates into the profitability in the company. I see that coming in going forward as well. I also believe that there is such a growth path ahead of the company that they should not compromise growth because of profitability. And so we'll see a fine balance between growth and profitability over time. There are also important levers of growth. So for instance, the core business can definitely keep growing at a decent clip. There are new pockets of opportunity in terms of the native business, which is the hardware product business, consumer product business. There are new interesting services categories like Insta Health, which they have launched recently. And so there's the core business which continues to grow at an interesting clip, and there are new opportunities that are going at much faster pace than the core business.
Okay. In terms of the 7% that you all do hold, the remaining 7%, what's the outlook on that? Do you have any kind of outlook in terms of when you all would look to monetize the stake buy?
Yeah. So we take these decisions, on a periodic basis. We had to sell at the IPO because the company is profitable and there's only so much primary that the company can take. But we want to keep the 7% for as long as we can.
So as long as you can. So are there any metrics that you are tracking? How long is the fund life before you're compelled to sell it?
Yes, and so there is obviously those constraints when you run a fund, and typically the fund life is 13 years for us. And but we'll see sort of how it goes, and so we are 10 years into the fund, so there's clearly a 3-year window at least for us, and then we can take some exemptions as well.
Have you made any kind of returns as you have in Urban Company in any other investment, or has this been the best performing investment that you all have made?
See, at Accel, we've been investing since 2008 in India, and so we were the first investors in some of the best known consumer companies in the country like Flipkart, Swiggy, Urban Company, in software side, Freshworks. So we've been
comparatively.
So we've been fortunate to partner with many of the great companies that have come out of India, and this is of course right at among the top of the list.
What is the average MOIC been? I'm sorry to use this PE term, multiple of invested capital. What is the average for the fund?
Let me put it like this: that when we invest in early stage businesses, the multiples you make are obviously pretty handsome. But what we also get is a real partnership with these founders and association with these founders that help us build out these companies over a long period of time, and also figure out a way to invest in the next generation of companies that typically come from founders who have worked in some of these companies.
Are you a little unhappy that they priced the IPO at 103 rupees when the street was looking for so much more? You could have obviously gotten a little more bang than what you already got at 27 times.
I think we feel it was rightly priced for the IPO. The management has always been of the view that they want to leave money on the table for the investors who come in, and I know in the short term we are seeing a great run today. I think the more important thing is how this works out in the long term, and I feel very confident about the long term.
Just give us a sense in terms of the kind of investments that Accel is now looking for. When it comes to the entire startup scenario, are you looking for companies which are now looking to innovate and not just do generic, run-of-the-mill business models in India? Is that something that Accel is probably looking at more closely? And are Indian companies actually going down that road? And if you could elaborate a little bit.
No, absolutely. And it's not, I know this theme is pretty important these days, but you see, there is innovation in Urban Company as well. There is no other company in the world which has done what Urban Company has done. And so there is innovation at every step of the way. In fact, some of our Indian companies, made Swiggy, call it Flipkart, call it Urban Company, these, if you look at the transaction volumes in these businesses, this would be among the largest in the world. So there's innovation in terms of actually delivering value in that stipulated time when you say you'll deliver stuff in 30 minutes or something. So there's real innovation there. It has not been done anywhere else in the world. Of course, I get that should we do more deep tech and should we do more robotics and should we do AI and stuff. And so there is obviously a lot in our portfolio which is not visible right now because anything of importance takes 7 to 10 years to come to fruition. Right? And so we have new areas of focus which are deep tech, robotics, AI, and I think over time you will start seeing some of those companies play out. But these things take time and we need to give them time to come to actually.
So in that case, could you give us a sense in the very near future, what are the IPOs from your stable which are likely, from your portfolio?
Yeah.
And at the same time, what are some of those companies that you're talking about 7, 8, 10 years, which you're betting on with a lot more conviction now?
For sure. So we've had 4 IPOs, Swiggy, Blackbuck, Bluestone and Urban Company in the last 10 months. There are 3 more companies that have filed DRHP right now. So there is Cure Foods, there's Amagi, and there's Captain Fresh. So I would say that they are imminent in the short term. And then there are a bunch others which are in the pipeline to file for their DRHP and getting ready to go public. So we feel very confident and proud about our portfolio performing well. In terms of our early stage investments that perhaps the world will know about in 5 to 7 years from now, we recently invested in this quantum computing company called Axel Quant, which is into the field of quantum computing. We are invested in a robotics company called Posha that helps you make your food automated way, and so you don't have to touch it and it just cooks the food. So there are very interesting companies that are coming out of our portfolio, and as and when they scale, the world will get to know about it.
Okay. All right, Abhinav, it's been a pleasure. Thank you very much for joining in and speaking with us, and congratulations.
Thank you.
On the big gains that you'll have made in Urban Company, and obviously they've left enough in terms of...
So when they offered their shares, it was at 27 times. I know he'll not talk about numbers, but he's led the round, and now on day one itself, it's 45 times. So the 3 years window that he has, let's see where he exits.
I'm glad we hold 7.5% still. So
enough left on the
enough left on the table for shareholders and them as well, their partners. All right, Abhinav, thank you so much for joining in. We'll take a short break, come back, get you more on the markets and a lot of individual stocks that we are tracking today. Maybe some trading strategies as well. Pritesh Mehta of Yes Securities joins in. Stay with us.
You need to go out for meetings and committees and all.
Right.
And then at some point in time, you will go out to attend some events in the evenings. Usually evenings, there are a lot of events.
Right.
And then go home at whatever time you're allowed to.
I mean, activity has just exploded, right? Both on the cash front, derivatives front, etc.
If you recall, when Mr. Modi took over in 2014, because that's the time I still remember some numbers, India had 1.67 crore investors.
Wow.
Today, India has 11.8 crore investors, unique.
Right.
Both.
Right.
Because those are the NSE numbers, right?
Right.
11.8 crore investors, 25% women.
Right.
That's 8.5 crore or 9 crore households.
Right.
And that's almost 25% of India's households now.
Right.
Right. And that time India's market capitalization when he took over was I think 67 lakh crore.
Right.
Today is 450 lakh crore, right?
Right.
So both have gone up 7 times.
Correct.
Right. And that tells you how much of India has become middle class.
Right.
Because you come to the markets to invest, and there is a perception that has been created that India, most Indians overtrade.
Right.
That is not true because 11.8 crore investors, once you have invested even in one share,
right,
you don't trade every day. You can trade once in 10 years and still you are an investor.
Right.
But out of that, around 25 lakh, maximum 30 lakh people trade in derivatives.
Right. Right.
And so literally 2% people trade in derivatives.
Right.
And out of them also, most of the people, almost 85-90% people
Also trade in
they trade in equities
as well,
and
cash as well.
Yeah, so it's like they're buying insurance, right? And so for me, lots and lots of misperceptions get created.
Right.
But overall, the amount of wealth
Right.
that this organization has generated when it started in 94,
Right.
on November 3, 94 equities market,
Right.
it was the total market cap of India was 3.7 lakh crore.
Right.
Today, it's 450 lakh crore.
Right.
It is, of course, the transaction processing, reaching
Correct.
out to people across
Correct.
India. Now, 11.8 crore investors are in 99.85% of all PIN codes. India has more than 19,300 PIN codes.
Correct.
Out of which only 28 PIN codes don't have an NSE investor. I have investor in Ladakh, remotest corner, means 6,000 meters in the hills, to Andaman Nicobar, which is near Indonesia.
Right.
I have people in Arunachal Pradesh, I have
Right.
people in Dwarka, I have people in Kanyakumari, every nook and corner of India today.
Except 28
pin codes, and out of that, probably 25 are airports where you can't stay full time, so I can't do KYC, right? You can't say that that's your house.
Right.
So broadly, the middle class
Right.
sization of India
Right.
is what is basically creating a framework where
Right.
India's savings, India saves 30% in that range, 28-30%, out of 4.
Welcome back. Well, let's get talking about the F&O space. Mangalam is at the big wall to tell us what he's tracking this afternoon in the futures and options segment. Mangalam, over to you.
Well, the market's moved higher, so that's a positive. We have the Nifty, which is being led by twin engines, which is that of Nifty IT as well as the Nifty Bank. So all of that explains why we're still holding above that 25,300 mark, closer to the higher end of today's trading range so far. But importantly, in the broader markets as well, there is risk-on sentiment. Why do I say that? Because you have the PSU banks doing well, the public sector index itself is doing well, and even as the mid-cap index is not moving as much as the frontline indices, the small-cap index is up 0.75%, much higher than the other frontline indices as well. And that's reflecting in the advanced decline as well. We have close to around 1,800 stocks which are in the green for about 1,000 stocks which are in the red, and those lines have maintained their distance all through today's trading session so far. Now, where does the market go after an 11-day run? Depends on important technical levels. The Nifty IT reclaimed its 50-day moving average in yesterday's session. The next important level is about 300 points from here, 36,795. So we'll watch out for that, the 100-day moving average. For the Nifty Bank, it's crossed past important levels, closed above 55,000 yesterday as well. So 55,600 to 55,650 is where the next level of technical congestion is. So it has to cross that. The pathway has been cleared until 55,600 to 55,650. On the Nifty, there is support which has moved higher. 25,300 put has a premium of almost 60 rupees, telling you that around 25,250 to 25,200 is important support for the frontline index now, after having seen a rally. But at the same time, on the way up now, because it's seen a rally, we're watching out for some sort of psychological congestion or supply coming around 25,500. Remember, the Nifty is already put behind itself a near 850 point rally. A more 150 points from here would make it a 1,000-point rally. So 25,500 is a mark that I'm watching out for. The put-call ratio has moved to 1.19. It's been at the higher range itself. Whether it sustains here or not is something we'll be watching out for. A lot of stocks seeing long positions being added in just the last hour or so. Tata Chemicals is fairly well bid. IEX is another one where the open interest spike has been fairly high on the long side. And Mazagon Dock. All these defense, rail and public sector names are doing well. So Mazagon Dock is the other one which has been seeing some long positions being added.
Okay, all right, Mangalam. Thanks very much for that. So that's from the F&O desk at CNBC-TV18. But Pritesh Mehta joins in to discuss the technicals of the market. Pritesh, hi, afternoon. Well, for the markets, it's showing steady gains on a month-to-date basis. We've managed to creep up and, the Nifty is now comfortable above these 25,300 odd levels. What's your sense in terms of where we go from here?
See, I think last few weeks, we had a period of market being in sideways mode. Now things have changed. Things have changed now because our customized top 10 Nifty index has reversed from support zone. Top 10 Nifty equivalent index has been moving higher. This is the verge of surpassing the previous peak. And finally, Bank Nifty has participated. This was a big laggard in the last 1 month. Now it's showing some steam, some leadership. So I think things are in motion now. We can say that from here we can see more strength coming in markets. We are betting on 25,700 as far as Nifty is concerned.
All right, and individual stocks, what are you betting on, Pritesh? Because a lot of these stocks are seeing some big moves. We have MCX, which is higher, CDSL is the other one. Kalyan Jewelers is about 5% off lows, currently at the high point of trade. So there are sectors and then there are individual stocks. So a lot of them are buzzing.
So yes. So last couple of weeks when Bank Nifty was not doing anything, Nifty was sideways. Apart from auto, we had strength in broader markets. So I think this space was doing quite well. Even right now, if you look at the ratio of small cap versus Nifty, mid cap versus Nifty, it is moving higher. This is a good thing to observe. So that it tells us that the breadth of the broader markets is improving. It is gaining momentum also. So one stock that we like from this space is by M&M Fin. It is coming off a 8-month long base. Now we can see bullish at a breakout on pointer figure chart. And target we're expecting is around 320. The stop would be around 265. Second stock that we like is Grasim. Now this stock is trading around the peak of June 2024. Sustenance about the same would mean a shift in orbit on the upside. So it is already witnessing follow through to bullish anchor column. So buy for the target of 3,200. The stop would be 2790.
Okay, all right. Any specific call on a couple of these auto stocks as well as cement stocks in today's trade?
So I think autos were the big outperformer for last 1 month or so. So we have seen pockets of strength coming, something like TVS Motors, M&M. But one stock that we like, which has not participated the way others have done, is Ashok Leyland. This stock, is witnessing follow through a bullish anchor column and now trying to provide an ABC breakout. It isn't confirmed yet, but it's showing signs to do that. So I think a move towards 150, 155 is possible in Ashok Leyland.
Okay, all right, Pritesh, we're going to let you go on that note. Thanks very much for joining in and speaking with us. Well, we need to take a short break, but up next we have an interesting conversation with Nitij Mangal of Jefferies India. He's written notes on the IT and the auto space. So we'll be discussing that in depth on the other side. Stay tuned.
$1 economy. Now we are saving above
Correct.
$1.1, $1.2 trillion.
Correct.
Most of it earlier used to go into gold and
fixed
real
deposits
estates
at banks.
And today, some portion has started coming up in what I call risk asset.
Risk
right?
assets.
Equity is a risk capital.
Yeah.
And they have got some brilliant returns. I mean, Nifty is going to celebrate 30 years in terms of the base date. It started with 1,000 in 1995, November 3, 95 base date. Today, it's close to 25,000. If you take the dividends, it would be probably 30,000 in that range, right? So 1,000 rupees invested has given you 30,000 rupees, right? 13% plus
kind of compounded returns.
Compounded 13.6. And even in dollar terms,
it's about 12, I think about 25 years, 12% odd. I mean, so which is...
But if you take total returns, because you take only the absolute returns. But if you
in dividends included, I think it'll be,
it'll that 13.5 or something. And in dollar returns also, it's competing with S&P 500. So effectively, India has done well. And it's not true that all countries where the country has done well, investors have done well. Like China, 30 years back, whatever their index was, today also is very similar.
Correct.
People, I mean, the industrialists have made money, not the investors.
Small
While
investors.
in India, because of the corporate governance framework, which SEBI and NSE have been together able to provide for. And that's why for me, the capital formation, $5 trillion, one-third of India's wealth, is now wealth of trust at NSE. Right?
You know, you said that activity has grown, what you said, over the last, since NSE was founded, how many times?
I mean, in terms of the number of trades, the BSE in those days, the best days, they couldn't do more than 10,000 trades. Today, I get 2,000 crore orders in 6 hours, right?
So has the infrastructure to do all this also expanded at the same pace? Let's find out, let's, I think, go to, what is it called? The National Operations Center, right? It's called the NOC.
Yes.
Let's go there and find out how it all works.
Absolutely.
Well, as promised, we are showing you a rare behind-the-scenes sort of, footage or visuals of the National Stock Exchange, the largest exchange of the country by far. And of course, We have help in the form of the MD and CEO of NSE, Ashish Kumar Chauhan. Ashish bhai, so this is the National Operations Center, right? Yes. NOC. It's got a military-sounding terminology to it, because it requires precision, it requires discipline, and I think this is where it's all sort of controlled from.
Absolutely.
Tell us a little bit about what we're seeing, and I mean,
this is an entire floor, but floor is divided into different rooms. Each team has their own work.
Correct.
And there is a full backup, even in terms of the number of people, number of computers, number of screens in Chennai.
Right.
So anyone doing anything.
Welcome back. Well, steady for the markets. We have the mid-cap index, which is lagging a little bit, so just about higher by around 0.2% as compared to the Nifty, which is showing much better gains today. But let's talk about or deep dive into a certain number of sectors, IT and auto to be specific. We have with us Nitij Mangal, who's the auto and metal analyst of Jefferies India, now joining in to discuss a couple of his reports which he's penned. Nitij, hi, welcome to the show. But one of the topics that I wanted to start with is your interesting report on data centers, where you expect the market to grow by around 5x by 2030. And the key beneficiaries would be the likes of Bharti, Reliance and Adani Enterprises. Just take us through the crux of this report and what is it based on?
Hi, thank you, Ekta. Thanks for having me on the show. So on the AI side, we do think it's a pivotal moment for India. And while, yes, there are some concerns around how does job creation happens, especially on the services side, we do think there is a lot of opportunity on the data center where we think the market on the leasing side can go up 5x in about 5 years. So the telecom companies, we believe, are quite well positioned to realize this opportunity. There will be opportunities in the companies that will be providers to the data centers as well. And we can't discuss specific names, but this is, in our view, a very big opportunity for the Indian corporate space.
The published report has said that there would be names like Bharti, Reliance and Adani, which would form nearly 35 to 40% of India's data center capacity. But apart from the ones who own capacity, would there be any ancillary plays to the data center? Maybe the ones who construct it, some sort of wiring companies, real estate companies who are building these data centers, etc. For everyone, third-party names. Could there be any other ancillary opportunities here as well?
Yeah, of course. So we do think there is an opportunity for companies in electricals, power, cooling system, etc. So the reality is that a lot of the server and the compute opportunity will be captured by companies which are more on the semiconductors and hardware side, where a lot of content comes from outside of India. But a lot of facility-based capex that will get captured by the ancillary companies.
And if you could, maybe not specifically name a few in particular, but randomly give a list for people to reckon with. And these are not recommendations. The disclosure's up and clear for the viewers.
See, Mangalam, as you know, we will not be able to take company-specific names. But one can think of companies which are pretty prominent in the space of, again, like electrical power distribution, cooling systems, etc. We have covered quite a bit of those in the report, but I'll not be able to take any specific names on media, I'm sorry.
Okay, sure. The other aspect that you all are looking at is the impact of AI on large-size IT companies. What do you think is going to probably pan out in the next couple of quarters or maybe 1 to 2 fiscals when it comes to AI? And how are you then placing yourself when it comes to IT? Do you prefer the mid-size, smaller companies then?
So maybe let's talk about next couple of years rather than quarters. We do think AI is going to create revenue deflation. Our broad thought process is that the existing IT revenue streams will see almost like a 20% deflation over the next 3 years. But yes, that also gets offset by new business creation. So overall, there is growth, but it is a slower growth than what we have seen, let's say, over the last 10 years. And then companies that are preferred are maybe more the mid-sized companies or maybe companies which are more nimble in adopting to this opportunity. But the revenue deflation and the implications of that on valuations are going to be a concern for the IT sector from here.
So when you say slower growth, what are you anticipating, or what are your projections in terms of growth as compared to, say, the previous decade?
So what our firm expects is about a 3.5–4% revenue CAGR over the next 3 years for the sector as a whole, compared to about 7–8% CAGR that we have seen over the last 10 years on the revenues.
All right. So half of the growth is what you're expecting. Speak about a couple of these auto names now, because, you know, the big belief is post-GST rationalization, there would be, ahead of the festive season, a big boost coming in, at least at the entry level and mid-level demands. High level obviously is unperturbed in any case. So what are your thoughts out here? And after the run-up that we've seen in a lot of these names, do you think there are ones that still offer value? In what particular segments would they be?
So auto is one space we are extremely positive on. So we're getting this big GST cut. There's already an income tax cut boost that is coming. So there is a meaningful tailwind on affordability, and that is also happening after a relatively subdued period on demand over the last year and a half, both on passenger vehicle and the two-wheeler side. So we do believe that the GST cut is going to provide that big boost. It's happening at a very opportune time with festive around the corner. Between different segments, we believe two-wheelers is going to be a faster growing segment over the next 2 to 3 years. And it's primarily because two-wheelers have not seen the full cyclical recovery post the COVID. So let's say when I think of from the pre-COVID levels, two-wheelers are still lower on volumes. And that provides a very benign base for a very strong growth from here. So on relative basis, we expect two-wheelers to grow the fastest over the next 2 to 3 years, followed by tractors and passenger vehicles, followed by trucks.
Okay, so would that be your pecking order in terms of the auto sector as well? Two-wheelers are your top choice in terms of the stocks. I know you can't talk specific stocks, but in terms of the subsectors in the auto space, how does it stack up?
From a growth perspective, we do like two-wheelers the most. But having said that, when we think of our overall investment thesis framework, we generally want to own companies which are, let's say, at the intersection of demand as well as franchise. And so we do like some two-wheelers, we do like some four-wheelers. So it's a mixed set, but from a growth perspective, we do think two-wheelers are the best placed.
All right. And what about the plays here as well? There is increasing software composition on the autos. So you'd probably play names like Hexaware and KPIT, etc., or maybe play it via the hardware itself and not the software.
So again, no company-specific names, but I mean, generally speaking, when I think of a big demand in the auto industry, so generally the entire ecosystem benefits. Well, the OEM benefiting, the component makers benefiting, but yeah, no specific names.
Okay. All right, Nitij, it's been a pleasure. Thanks very much for joining in and speaking with us and giving us your perspective in terms of two big sectors, that is IT as well as the data center, which we could probably see growth, 5x growth is what they're predicting, and also autos, and they prefer two-wheelers in that space. We'll do one thing, we'll take a short break, but up next, Manisha Gupta will join in to go through the commodity space with us. Stay tuned.
The checker in Chennai, and even doing something in Chennai
has
a sort of checker.
But that is only for
it's for disaster recovery. But if when disaster happens, when you try to recover, it doesn't work. You have to make them on. So whatever things happen here,
it's fully operational.
It's fully operational, and actually we do mock trading from Chennai every month, at least once, and twice a year, at least for 2 days consecutively, we run the live operations from Chennai. So it's a fully functional thing, but how do you continue to make it run in a heightened sense is by involving them on your day-to-day activities as if they are next to the computers, and which is now allowed by the communication systems. So that's where the team here and team there are like working as one. And in case this place by chance goes down for whatever reason, that team should be able to
seamlessly pick up and
run without anyone.
So as an investor, as a trader, I should not feel the difference. I mean, basically.
You probably will get logged out, and then you will your broker will log in, and it'll be business as usual probably in few seconds.
Right. So what happens from here? I mean, what kind of activity?
This place is what we call business knock, where all the companies that get listed or IPOs that happen or daily price bands of companies, the new derivatives contracts getting introduced in equities or currencies or commodities or in bonds, all that thing starts being set up. Even sometimes we have to set up a new broker or sometimes we have to actually stop a broker from functioning because of the SEBI regulations or orders, or sometimes even specific investors are not allowed to trade by some of the court orders or otherwise. So everything happens here. But during the market hours, especially between 9:15 and 3:30, this people who are working here have to do nothing actually. They have to just monitor, and it's like an autopilot. If they are doing something, then there's something has gone wrong, right? So that is where physical manual sort of override is required. Otherwise, their work happens 24/7 by 365 days. During the day, they are not supposed to do anything, but end of the day, they have to create files, download to all brokers, then they have to prepare for the next day all the new contracts coming in, the price bands, other things, 2%, 5%, ASM, GSM.
The much awaited bhav copy comes from here? Or?
Absolutely. So everything which has to do with business comes. Similarly, there is another room for cyber security where we get a lot of.
And we're going to go there in a bit. So.
And then we also have hardware operation center, which is basically where we have several sort of machines which we need to ensure that there are no queues. And this was the first public digital infrastructure of India. This is the first fintech of India. It's still the largest fintech of India. And it allowed India to create capital formation on a scale where no similar sized or similar per capita income having country. I mean, today, after so many years, our per capita income is only $3,000.
Welcome back. Joining us now is Abhineet Buchra. He's co-founder Sangeeta Buchra Jaipur. Abhineet, hi, good to have you. You are a manufacturer, wholesaler, retailer when it comes to silver. With the way the silver prices have moved, how would you look at the various businesses that you hold right now in sense of demand?
Hi, good afternoon. Well, I expect silver prices in India to trend upwards moderately at the moment into and through the festive season as we are approaching, possibly hitting around 1,35,000 to 1,45,000 per kg or even more. But if global trends and rupee weakness supports it, but there's a risk demand might plateau or drop if prices get too steep or if consumers substitute gold or defer purchases. So it all depends on that. So my outlook for silver at the moment is upwards, and it looks good.
Has it impacted demand in any sense? Because various reports that I'm going through, Abhineet, show us that it may have impacted perhaps the articles demand, but when it comes to bars, coins, investment demand, jewelry for that matter continues to be quite strong.
Jewelry is very strong right now. I don't see any drop in demand because the price is increasing, so as the customer's intention to buy is increasing because they feel that it's a safer haven to buy, and their investment will increase with time. So I feel it's going to go up, and there are various factors attached to it, like prices in India keep rising somewhat into festival season. Usually 10 to 20% we have seen in the past that, always it increases. And there are various factors like solar demand is there. Then the rupee to dollar is it's dropping sharply, and imports have been increasing. This year already we are looking at around 5,500 to 6,000 tons, and possibly more if the demand increases. Then industrial demand globally has increased in electronics and various other things. The use of AI and for the infrastructure of that, it requires that. So I feel there is no shift. Bars demand and coins, everything. It's. I think it's the highest right now. The sales are, very, very good. And I don't see a downside at the moment.
All right. Abhineet, as compared to last year, we are up by nearly 48% in sense of prices. While the value obviously automatically goes higher, how are you looking at the volumes for the last quarter of this year, the festival season, that is last Diwali versus this Diwali?
Yeah, I am looking at an increase of approximately, in volumes, at least 20 to 25%.
Even with these
Already we
prices?
have- Yeah. Prices are not an issue at all. People are not looking at the prices right now. They are buying at any price. So we have lately, conducted various trade shows, visited and met a lot of clients. The overall demand is very high, and the only thing which is important right now is the prices to stabilize. This is what the client looks at. If the prices vary between 130 to 140 or 145, but it stabilizes there, and the overall demand increases. It brings back the confidence among the investors and the customers.
Sure.
This is the price, and the price has to stay. So if there is a lot of fluctuation, then it becomes a problem.
Yeah. Abhineet, when we look at festival and the wedding season upcoming, where is it that you see demand coming from? Is it going to be Diwali gifting? Is it going to be festival buying? Is it going to be wedding season demand? What category are you looking at demand coming from?
So demand, particularly in jewelry, when we talk about, it's coming from articles, coins, bars, and leg jewelry. Then gifting is another segment which is very high in terms of when it comes to festival purchases. And weddings post Diwali, the wedding season will kick in. So, the demand then comes in from that. So I would first put like articles and bars first, and then leg jewelry, and then the gifting. So it would go like this.
All right, Abhineet, thank you so much for joining in. So clearly strong demand as it continues in case of silver. We do understand that there are a lot of standalone silver showrooms. More silver shelf in showrooms is what we really seem to be looking at. So while gold demand may have seen a decline, it's not the case for silver for sure. But with that, we go for a short break. We'll get you more on the markets and stocks on the other side.
So we have become $4.2 trillion economy, but we are still per capita. I think no country has with $6,000 also have that kind of market. $12,000 also no market. $24,000 there is one market larger than us called China. But when the prices go down, the government has to go and buy the shares. In India, government is actually hands off, right? So there is no similar market. And if you look at it in a poor country, per capita income country, people investing in other people's businesses is not unheard of. There are books written in economics which says that poor per capita income countries cannot, or societies cannot have well-functioning capital markets because they cannot save. And if they save, they don't trust their brothers also. In India, this has happened where 20% of India is now households.
And we spoke about the long track record of returns, which has been spectacular, matched only by, I think, the US, right? As a market over a long period of time.
That's why I call this trust markets. Because trust has developed.
I want to show our viewers the cyber sort of control center as well. So let's go there, and why don't you tell us about that? Okay, we are in another room now, and this is, of course, also an important place. This is the Hardware National Operations Center, the Hardware NOC. And you can see the screens behind me. This is where they monitor, Ashish bhai, the hardware.
And there are thousands of servers which NSE manages, and each server has different work and different softwares. And so all of them have to work well. And that's where basically each person has.
Welcome back. A couple of these consumption names picking pace. We have Trent, which has moved to the high point of trade right now. Alongside that, we have Varun Beverages as well, which is spiking up around 2.5%. Remember, post the GST announcements that did come by, the management joined us and said that they stand to benefit from the non-carbonated part of their portfolio, the GST coming down from 18% to 5%. So that's positive for them. And we also saw some pickup in names like United Spirits. So that stock is also at the higher end of today's trading range. The management sounding fairly confident out there as well. But speaking about management commentary, we had the CNBC-TV18 Banking Transformation Summit, where we spoke with PNB's CEO and MD Ashok Chandra, who spoke on the new CEO of PNB Housing and the housing segment on the whole for growth. Listen in.
See, first of all, I will make it clear that the person will not be from Punjab National Bank. It is totally the professional driven things are happening now. And that is the reason you have seen that advertisement has happened in the public domain and applications have been sought by the PNB HFL. And it is totally dependent upon the NRC and the search committee and finally the interview panel of the PNB HFL. They are going to decide. And I am expecting that another 2 to 3 weeks, definitely. I will also be expecting some good news.
You did speak about how the disposable income would rise, bringing a fillip as far as the overall demand itself is concerned. Help us understand the impact of this thing on Punjab National Bank with respect to your credit growth in the next 2 quarters. What kind of changes do you see coming through that right before the festive season?
Yeah, the retail segment I am expecting, if I can drill down further, the housing segment I am expecting that around 14 to 15% growth will happen YOY. The vehicle segment, I am very bullish about it because drastic rate cuts have happened in the input cost also and the rate cut also in the vehicle. I think I am expecting in the range of around 22 to 23% YOY growth in the vehicle loan segment. MSME, I am very bullish about it. A lot of initiative bank has taken and the digital piece which has been brought in the credit underwriting. I am very hopeful that MSME piece will grow at a speed of around 18 to 19% YOY.
Oh, that's quite a bullish guidance that you've presented to us. I want to ask you about one particular statement that you made. That was about a large recovery in the month of July. Help us understand about that. What was the quantum of that recovery, that large recovery that you were expecting? And has it already happened or can we expect it to happen soon?
No, that has already been factored. Around 900 crore is the upgradation that has happened in one of the legacy account. And definitely in this quarter, with the help of that, we are going to see good performance as far as the recovery is concerned in the PNB.
All right, so that was the management of PNB speaking about growth in the housing sector, but more importantly, management leadership change coming back in PNB Housing, assuring the street that it won't be an internal and external candidate has been summoned or invites for external candidates have been summoned. With that, we'll take a short break and take your leave on this edition of Halftime Report, but stay tuned to CNBC TV18 Business Lunch takes all the market action forward, and mind you, there is a lot happening. The Nifty is 5 points away from hitting that century.
But there are what we call dashboards which are giving you aggregate numbers. So in case again they are not supposed to do anything real life except they do their normal office work. But if something goes wrong, that is the time they need to intervene. Otherwise, during the day, it's on autopilot, and there are softwares which are self-healing and things like that. So overall, it's basically on a good day as like we get 2,000 crore orders, 30 crore trades in kind of different markets. So all the hardware, literally whatever people do here is sent to a nearby site called NearDR and a Chennai site. Literally gigabits of
information
is transferring.
Okay.
And we have like petabytes of data stored. Some people access from there, some people access from here, and so it's like a very large setup which needs to be monitored on a.
So there's we were in the business knock, there's the hardware knock,
and then we have a security knock, which is
the cyber security and security knock. So let's go there and check it out as well. So that is the hardware knock, and what we're going to do now is show you the cyber knock, Ashish bhai. And I think viewers can see what is inside the room. So tell us a little bit about what happens here.
No, in a way, we use many softwares and tools and hardware to ensure that the working of the exchange continues without
disruption,
any disruption, even from the hacking and other activities. So
Right.
that's where again we have a Chennai site that's
Okay.
connected here, and naturally
Right.
some of the government agencies also are able to look into
Hmm.
what we do. But there are like lots and lots of softwares,
Hmm.
tools, and
Hmm.
we use, and each person working has a specific job. But again, we have dashboards which tell on an aggregate level what has been there today, how much, how many attacks are coming, if we are running in a red zone or a amber zone or a green zone, and so those are the things.
You were telling me earlier during on the day of Operation Sindoor, I mean, there were
Yes.
the attacks kind of peaked at.
Yeah, like in 20 minutes we got 40 crore attacks, right? So
Okay.
these are some of the most attacked
Okay.
entities in the world today.
Okay. So this is a significant area of focus in terms of
It is-
upgradation,
no,
keeping.
the costs are also humongous, but without that, you cannot operate, right? So you
Right.
need to be like any country. If you don't have a defense,
Right.
The Nifty and the Sensex continue their upward momentum after the positive Trump-Modi call and ahead of the FOMC decision later tonight. The Commerce Ministry says that India and the United States held positive negotiations yesterday. Energy, industrials and IT are the top gainers, while metals and utilities continue to drag.
The urban company stock races up after listing at a hefty 58% premium to its offer price of 103, implying a market capitalization of over 23,000 crore rupees. The strong show points to big investor appetite for top B2C platforms.
L&T has written to Union Housing and Urban Affairs Minister seeking to exit the Hyderabad Metro special purpose vehicle by selling its 90% stake to the centre or to Telangana. The infra major cites mounting losses and lack of support from the government.
In a boost to commodity exchanges, SEBI chairman has said the regulator will permit banks, pension funds and foreign investors to trade in non-agri commodities.
And US President Donald Trump calls friend Prime Minister Modi to wish him a happy birthday and thank him for his support on ending the Ukraine war. Modi replies thanking Trump and commits to take the India-US partnership to new heights, signaling a big thaw in relations. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Vamak Vitoria. Vamak, you crossed that. It's been one-way traffic for the index.
Well, absolutely. Good afternoon to you, Hormas. You know, it's good looking at a green-looking screen for today. The Nifty is doing quite well, inching closer towards that 25,350 mark. Apart from that, what's also supporting it is actually the Nifty Bank, which is up almost 0.5% today. The broader end of the market, when we look at the advance decline ratio, the advances are far outnumbering the number of declines that we see. Apart from that, the mid-cap index is not reflecting that because that index is up only 0.2%, unlike what we've seen in the past couple of sessions. The small-cap index, though, that continues to do quite well. Now, in terms of sectoral indices, PSU Bank are flying high today. Bank of Maharashtra is up almost 3.74%. Canara Bank too trading higher by almost 2.28%. And of course, we had a couple of new listings today, and all of those listings have done extremely well. Urban Company listed at a significant premium. Shingar House of Mangalsutra is also doing well, up almost 11%. So is Dev Accelerator, because that counter also listed today, started off on a very slow note, but has picked up pace, Hormas.
The new listings doing well on their trading debut, of course, and since we are on the subject of Urban Company, saw a stellar listing, as Vamakshi just highlighted, a 60% premium to its issue price. Manglam is here with all the details. Manglam.
Well, it was a stellar listing indeed for Urban Company, and this is a company that, moves unorganized daily home services into the organized industry, and the street really liked it. For starters, the issue was very well bid for. a 1900 crore issue saw subscriptions of over 104 times. Interestingly, while the qualified institutional investors led that, we also saw oversubscription come in from HNIs, the retail investors, including the employees of the company that subscribed to the issue by over 37 times. So that was a big positive, or that told you that there is going to be a big up move on the listing itself. The other reason why the stock did extremely well was the overall size of the opportunity. Less than 1% of this market is organized right now, and the street believes that this will likely grow faster. And as we've seen the case with platform companies, as they turn a corner, profitability rises exponentially as well, and that's what the management had said too. They are looking at profitability over the last few years. The 700 crore incremental revenue that they've added, that's translated into 300 crore plus EBITDA. They also have the extended business of hardware native, which is showing good growth, and operating leverage is likely to play out there as well. The street believes this 35% revenue CAGR, if that continues, and the operating EBITDA margins doubles from current levels of around 1.5%, then maybe the stock at around 100 times, given the growth potential, is not particularly very expensive, largely because of the growth potential that we've seen. Mind you, the market cap of Zomato is over 3 lakh crores. That of Swiggy is over 1 lakh crores. Even after a big stellar rally on day one, Urban Company market cap is just around the 25,000-26,000 crores.
Interesting there, Mangalam. Another successful listing on the bourses today of Urban Company. But SEBI Chairman Tuhin Kanta Pandey has batted for deepening India's commodities market by increasing the participation from institutional investors. And this has had a bearing on the stock reaction that you have seen on MCX. The stock is up almost 4.5% after these remarks came in. So before we get onto the stock reaction, listen into what the SEBI Chairman had to say.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodity space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets.
Well, that was the SEBI chairman sharing his comments on the commodity market, and resultantly MCX also seeing a very sharp uptick after those comments came in. For now, the stock is trading over 4% higher. But moving on then, Financial Services Secretary M. Nagaraju has said that India needs bigger banks. Speaking at the CNBC-TV18 Banking Transformation Summit, Nagaraju also said that there is no proposal to reduce government stake in public sector banks. Listen in.
We all felt that now this is the time for India banking industry to take a leap of faith on the next phase of both reforms and lending. We want to become bigger. The Indian banks want to be bigger. And I think all of us know, in the top 10, we have only 2 Indian banks in the country, SBI and HDFC. I think we need much more. We are now currently 4th largest economy, and in the next year, we will be 3rd largest economy. I think all of you agree with me when we say that we deserve to be there, our banks deserve to be there in the top 10, not just top 50. We have to be, at least 1 or 2 should be there in the top 10 in the world. We also require more banks. On that, there is no doubt. The government is very clear that we also require more banks and also bigger banks. They are not contradictory, they all actually go together. There is no proposal at all before the government to reduce that. They continue to be majority owned by the government because there is a public interest in government owning majority in the public sector banks. Government is also doing a lot of trade to different neglected or under-serviced sectors, like educational loans we provide, or KCC, Kisan Credit Cards, we give, PM Swanidhi or PM Jivan Jyoti. These are all done because they are government banks. And we also, these are all not possible if they are private. So the government has an interest, in the interest of the national development, to continue to have majority shareholding.
Some words coming in there from the DFS secretary having a bearing on the PSU banking names as well. The PSU bank index is the top sectoral performer as of this afternoon. Take a short break. More news and updates follow on the other side. And you can see visuals on your screen, the exclusive conversation with the management of Urban Company in a short while from now. The stock had a very stellar listing on the bourses today, listed at a 60% premium to its issue price, and it's continuing to hold on to those gains, still over 60% higher on the stock, with making it one of the most successful listings of the year that the stock has had. Remember, the IPO, which was around 1900 crore rupees, also saw very stellar subscription figures, subscribed over 100 times, and making it also one of the most subscribed IPOs of 2025. So strong subscription and a strong response as well on the street, and there you can see 61% higher still on the stock. Mangalam was mentioning the fact that the market cap of the company now has crossed over 25,000 crores on a listing day, and since then it has held on to those gains. At one point the stock was up even 74 odd percent as well at the highest point of the day. So, but still not a bad debut at all. 61% higher for Urban Company. Take a short break. Back with more on the other side.
Business has no relevance because somebody will come and subjugate you. Similarly, whatever business you do, if you don't have a good information security in today's world.
So strong physical security, as I noticed at the gate, but strong digital security.
It has to be.
I mean, there is digital public infrastructure in that sense, so it has to be on without disruption.
Absolutely. And especially outsiders or insiders, knowingly, unknowingly, doing wrong things cannot be...
Has to be monitored, has to be checked and tracked. Well, from the National Operations Center, and we showed you quite a bit, as much as we could, upstairs. We are here now to take a walk down the memory lane with Ashish Bhai. This is, of course, the wall with lots of pictures, and I guess Ashish Bhai, lots of memories as well, right?
Yes, of course.
Because I spotted that photograph, which is July 1994, when an NSE was inaugurated. And that is, I don't think you can see it, but that is a very young Ashish Kumar Chauhan explaining to then Finance Minister, Dr. Manmohan Singh. What is happening then in that picture?
And next is our chairman, Mr. Nadkarni, who became chairman of SEBI later on.
Right.
He was IDBI chairman beforehand.
Right.
And so, in a way, this project was like very ambitious.
Right.
And everyone was clear this is not going to work.
Right.
Even when it was
right.
thought through, because bankers were trying to implement
right.
a stock exchange which they have never run before. And in an IT, pure IT exchange, which was not the case anywhere in the world before. So
Correct.
it was all sorts of complexities, and we were trying to use satellite telecom and also a lot of things which could have gone wrong.
The idea germinated in 92.
Yes.
And
post Arshad Mehta scam,
Right.
the government wanted to create a framework which is not owned by brokers, operated by brokers.
Right.
And that's why they wanted to create an independent exchange owned by investors,
Right.
but run by professionals.
Right.
And completely automated so that it will have transparency, fairness, efficiency, and all that. Right.
Correct.
And so, in that context, we made presentations to Finance Ministry in '92.
Correct.
Lots of to and fro during '92, '93, '94. So, what happened is we first started with the wholesale debt market because Arshad Mehta scandal actually originated in the RBI Secretary General ledger and all. So they wanted to first do wholesale debt market. And so we started operating without inauguration, like a beta test in those days. And I think Google had not come then. So beta was not so popular, but we started trading.
Welcome back. Let's cut across to my colleague Shireen, who is in conversation with the top team at Urban Company. Shireen, over to you.
One of India's most awaited startup listings has hit the bourses today. Urban Company has listed at a 57% premium on the National Stock Exchange at 162 rupees against the issue price of 103. The company has seen its market cap cross 25,000 crore rupees on listing. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. Founded in 2014 to bring structure and trust to India's unorganized home services sector, Urban Company has today grown into Asia's largest tech-led platform for home and beauty services. It operates across 51 cities, including international markets like Singapore, the UAE and Saudi Arabia, and it's expanded into new verticals under smart home solutions for native and home improvement with Revamp. The company closed FY25 with net transaction value of over 3,270 crores, revenues of 1,144 crores, and a transacting user base of 7 million, 48,000 professionals under the Urban Company umbrella today to try and create sustainable livelihoods while also attempting to deliver consistent service quality. Joining me now are the co-founders of Urban Company, Abhiraj Singh Bhal, Varun Khaitan and Raghav Chandra. Gentlemen, it's wonderful to have you join us here. Congratulations to start with. And, from 100 square foot office space in Bikaji Kama Place in New Delhi to Dalal Street today. Abhiraj, let me start by talking to you. Has it sunk in? It was a little bit of an emotional moment. I could see, at least on account of Varun getting teary-eyed, but what was it like for the three of you?
I think it's still sinking in, Shireen. I think it's it has been an emotional day. It is it's a feeling like no other. It's a feeling of happiness, but also one of responsibility, humility for all the love we've been getting. We had service partners, employees, ex-employees, family, everybody join us today.
So there's what, about 100 odd people here in Mumbai for the listing?
There's more than 100. And I think it was heartening to see everybody so happy. So yeah, I think you never imagine this when you start a company. But we're glad that we're here today.
Urban Company is 11, but the two of you have known each other for 2 decades now, 20 years, and that's a deeper, longer association and partnership. Varun, you got emotional today, but what was the feeling or the memory, the core memory that you had while you were speaking today?
A lot of thoughts running in my mind at the same time. Right from times we spent together in college, when we, after college, decided that we need to get together and do something in the service of India over the next many decades, to the many months the three of us spent the streets of Delhi trying to really identify what business we should build that will create large impact in the lives of millions of Indians. And be a company that they will look forward to, a company that will make a difference to their daily lives. And then, like a fast forward of the last 11 years, while I was trying my best trying to hold emotions back.
Well, Raghav, you've known them for 11 years as well, and you've, of course, been part of the Urban Company story from its inception. As you stand here today, what would you say has been the biggest factor for success at scale so far?
I think as a team, we have been known to showcase very strong ownership. In fact, while we were on the stage talking through, it just reminded me how all facets of Urban Company kind of come together, be it our internal teams showcasing ownership when it comes to just doing their best, going beyond what's needed, or our partners who kind of go to customers' homes, just own up the brand, own up the experience. I think that's probably what our decade of building has been at its core.
Well, talking about the decade of building, but now importantly talking about the decade ahead, the kind of reception that you've got from the Lal Street clearly is an exemplification of the fact that people are believers in this story and believers in the fact that there is potential headroom for growth. I know you said that you've got a very strong balance sheet, but you also said that you want shareholders to be patient. Public market patience and private market patience are entirely different things, Abhiraj. So, what are the levers that you're going to exercise now to get to profitability as you've promised?
I think for us, Shireen, long-term growth and long-term profitability is very important. We see our business in parts. There is the very profitable core in India, which is growing well. It has been profitable for the last year or so. It had 3% adjusted EBITDA margin as a percentage of NTV last year. That went up to about 4% in the first quarter. And I think that core will have to continue to compound well, grow well, and continue to compound profitably. The new segments where we are, which is InstaHelp, Native, I think these are the areas where we will invest. And at the right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy.
But give us a sense of what we are talking about in terms of investments. And let me contextualize this, because what we've seen with other listed entities, now Eternal, Swiggy, and so on and so forth, they're all having to diversify into new distinct businesses. Eternal with Blinkit, and now District, and Swiggy similarly with Instamart and a few other offerings. Is that now a go-to for platforms like yours to really build out these new distinct verticals, these new distinct offerings to keep growth going?
I think for a platform like ours, at our core, we think of ourselves as a home platform. Anything inside your home is definitely relevant for us. The user trusts us to enter their homes, and we don't take that trust lightly. We understand that that trust comes with a lot of responsibility. I think today we are playing in many services, but not the end state of everything we can do. So in the end state, any service in the four walls of your home will very much be part of our ambition and our playing ground. And similarly, we are imagining a connected ecosystem inside your home of devices which have a strong affinity with our service ecosystem and our platform. So more than a services company, we think of ourselves as a home platform, and that's what we're building. It's hard to see it today, but I think over the next 10 years, this will play out. And we want to be the operating system for your home, the backbone for your home.
The operating system for your home, that's a nice tagline that you've given us there, Abhiraj, as far as Urban & Company is concerned. But Varun, let's talk about what shareholders would want more clarity on, the kind of investments that you intend to make in your new businesses, whether it's Revamp or Native, to build out this home operating system that you spoke of. And again, I'll contextualize this with what we've seen happen with Eternal, Swiggy, etc. I mean, Eternal, over 3 lakh crores in market cap. Swiggy, 1 lakh crores in market cap. You've got a 25,000 crore starting point. What is the runway for growth? What is the aspiration that you see for yourself over the next few years?
As Abhiraj was saying, we think of ourselves as a consumer company. We started by building our services full stack one by one. Now a composite of services is what we call our India Home Services business. We're adding InstaHelp to that as a new service category because we see phenomenal opportunity there and a big consumer need. Similarly, in Native, we saw a big gap in terms of the durability of existing devices and the life cycle experience that consumers were having. And we do internally discuss and deliberate a lot before we start these new initiatives. We start them in pilots and then build onto them in stages. And our focus across these verticals is going to be to continue to invest in the core building blocks. So in the services business, it is going to be in training and quality of our service professionals, in technology, and in continuing to build the brand. In Native, it is going to be on really high quality products, great supply chain, and final end consumer experience in terms of installation and how we take care of the entire 10-year plus that we imagine our devices to be used. And same goes for revamp. Each of them we identify core pillars and keep building on.
So what does the product pipeline for Native look like at this point in time? I mean, water purifiers is where it all started, but what could we be talking about? I mean, what could potentially the product pipeline look like as far as Native is concerned, and what kind of investments will you make there?
I think in Native, Shreen, I think we're just getting started. If you think about your home and the potential for an ecosystem of connected devices in your home which have a strong affinity to our brand, our platform, I think water purifiers and smart electronic door locks are potentially only 2 or 4 or 5 such products that we could build. We will be calibrated. We recognize that this is a new turf. Even though it is related diversification, it's a new territory for us. We have to get it to scale. We have to make it profitable. But if I take a 10-year view, I don't think we will be limited to only water purifiers or electronic door locks. Native, as the brand name says, we want it to be natively integrated into your home, into your life. And also reflecting on your original question, right? I do think as a company, we're only getting started. Like, we're still a small company, Shri. In the scheme of things, that's not lost on us. And, our scale is tiny. It's certainly not enough to satisfy Varun, Raghav, and my ambition. We want this to be one of the most important companies for the Indian home, for the Indian consumer, 10, 15, 20 years out. So while I can't give you very short-term guidance, I can tell you that
you're going to have to get used to giving short-term guidance now, though.
I can tell you that, look, we're going to be hard at work, and we're not going to be satisfied until we're at least 30, 40, 50 times larger than we are today.
So when will we see the next product launch, and what could that potentially be?
I think for the next couple of years, we will have our heads down on these 2 only. At some point in time, we may look at the segment of either cleaning or air conditioning. These are 2 categories where our repair and services portfolio is very strong. Cleaning today is one of our largest service verticals. Aircon repair, aircon servicing is also one of our largest, service verticals. So it would be
getting
natural.
into manufacturing, air conditioners, vacuum cleaners, all of that, that's potentially the landscape that we're talking about?
I would say if anything that we do cannot be run-of-the-mill. So just a run-of-the-mill vacuum cleaner or a run-of-the-mill aircon, that, just to increase revenues, that's not our DNA. When we want to do something, we want to do something that is distinctly different from what's out there. Otherwise, we'll choose not to do it. The reason we entered water purifiers was we were very clear that we can launch a product that is smart, that is new age, and that needs no servicing for 2 years, unlike how the industry operates. If we don't see that play, we will not just get into a service because we can, sell it through our app and increase. That's not our DNA. Our first promise is to the consumer of great services and great solutions at home, or none at all.
And all of that is backed by technology, Raghav. And, you're going to have to deliver on that promise as you expand and grow into different verticals. What's the big challenge that you see there, particularly today?
So all our business lines require a fair amount of investment. And the backbone of how things work inside is through tech, where we are codifying, helping us scale. So be it Native, InstaHelp, India businesses, international businesses. As we are pushing, innovating, constantly they'll require investments in upgrading how training works, improving how quality has to be assessed, how do you help partners on the job. There's a whole wave of Gen AI solutions which we can use across all facets of a business. And these are things which we plan to be working on through the year.
So
The exclusive conversation there with the management of Urban Company. The long-term growth and profitability, very, very important. Putting their heads down on the two current businesses, at least for the next 2 years, what the management is saying. Still holding on to gains of around 61%. But as Prime Minister Narendra Modi turns 75 today, wishes are pouring in from across the country and around the world, with political leaders, party workers and citizens expressing their gratitude and well wishes for him. Hear out Sunil Bharti Mittal and Ashish Kumar Chauhan praising the Prime Minister's leadership.
अपने साथ वो सन इंडस्ट्री के कुछ प्लेयर्स को लेके जाते थे जो चुनिंदा होते थे, ख़ास सेक्टर्स के जो उस कंट्री और इंडिया के साथ जिनका रिलेशनशिप स्ट्रॉन्ग था, उनको बहुत बढ़ावा देते थे और उनकी कोई बात पकड़ लेते थे। उस वक्त उनको समझ आ जाती थी कि ये देश के लिए अच्छी चीज़ है, तो उसको एम्पलीफाई करते थे अपने काउंटर पार्ट प्राइम मिनिस्टर के साथ। इवन गुजरात के चीफ मिनिस्टर के टाइम पे वो पहले चीफ मिनिस्टर थे जिन्होंने डिजिटल माध्यम को उसकी पावर को समझा। टेक्नोलॉजी की जो पावर है वो ये समझते हैं।
On occasion of the 75th birthday of Honorable Prime Minister Shri Narendra Modi ji, I would like to wish him all the very best and wish him many, many happy returns of the day. And at the same time, pray that he lives longer, above 100, and continues to work with the same alacrity and speed as he has demonstrated over last 11 years for next 20 years, so that India becomes a developed nation under his leadership.
Well, wishes pouring in for Prime Minister Narendra Modi on his 75th birthday. But that's all the action we have on this edition of Business Lunch. Don't go anywhere. Midcap Radar takes all of the action forward.
And then Dr. Manmohan Singh gave time to come and inaugurate in July. And on that day, he woke up early. He used to be a very diligent man, right? So he decided to visit NSE. The inauguration was in Nehru Center at Worli. And our office was at Mahindra Towers. Again, Worli, but probably 1.5 kilometers away. And so I used to sleep in the office most days. And that was an important day, right? So when the dogs started coming to check around the dog squad, then I realized something is happening. I had to tell my bosses that he is coming to visit NSE, and then everyone sort of came hurriedly. And so that time I was explaining to him how the IT system works.
And that is you were how old in that picture?
I was 26 years old then.
26-year-old. I mean, that is just I mean 2 years into your work life, right?
Yeah,
2 or 3 years,
yes.
into your work life. Must have been a high.
No, it is. I mean, this, as I say, this has been, and setting up NSA has been the greatest privilege of my life. And the amount of service it has given to India, it is way beyond what one had imagined or what one can even fathom.
And we're going to go now to the most used facility, the NSE, by the general public, by companies, by new corporates who want to list and ring the bell. So we're going to go to the bell there now and check it out as well. Well, I hope we've given you a 360 degree, if not a 360 degree, a 180 degree kind of view of how NSE as an organization runs. I mean, some of the stuff that we showed you, of course, behind the scenes, as I said, the National Operations Center. And of course, we jogged our sort of memories back to when the exchange was founded as well. This is also an iconic place. This is the, Ashish Bhai, the atrium, right?
Yes.
And I think corporates who may be watching this, for a lot of them who are recently listed or even listed for a while, I think they would remember this place. With the ringing of this bell, the listed journey starts.
Yes.
And it's been such a vibrant place, right?
Yes.
Ashish Bhai, last couple of years especially.
Yeah, every day there are many listings. The largest company usually does bell ringing here. We have other places where there are bells, including in other cities also. But this is the most coveted sort of listing place today in the country.
You're here, as you told me, for the big ones at least, 9:15.
If I'm in Mumbai, I try to be there.
You try to be there.
For listing, because again, it's an important occasion for the company's life. And as what I call a head priest of this temple, it's my duty
you have to be
there.
present.
Yes.
When do we see NSE's bell going off in terms of listing?
Once the SEBI gives no objection certificate, that's the minimum we require as a regulated entity by SEBI.
Right.
After that, we'll prepare the DRHP and then submit to another department of SEBI, which will go through it. And broadly, it would take probably at least 4 months to prepare the DRHP.
Right.
4 months for them to do queries and ask us any issues,
questions, etc.
Clarification.
Right.
And then so.
But from the day that the NOC is received, whenever it is, we don't know when that
probably
is.
8-9 months is what looks like after that.
To the listing
going
date,
live, yes.
basically. So I mean the work in terms of having the background, etc. is work in progress.
In 2016, NSE had filed. That
Right.
time I was not there in NSE. But
Right.
2016, NSE had filed the first DRHP. So since then, NSE has been in a way in a status of some readiness, not always, because it's almost now 9 years.
Right.
But in a way, we are sort of prepared.
And in terms of the size of listings, you said big companies. I think this is going to be the biggest of all.
No, in a way,
in terms of,
and we are also 100% public. See, unlike
right.
other companies, we are already 100% public. I have
Correct.
like 172,000 shareholders already.
Correct.
Right, and so 0% is with any promoter. I have no identifiable
And
promoter.
in terms of the shareholding, last 5 years is when the numbers have really exploded,
In
right?
fact, since March only, it has gone up from probably 30,000 to 172,000, right?
Last March.
That is 25 March.
Wow.
Right. So because it earlier we used to approve each transaction with fit and proper, and then
Correct. It used to take time. There used to be
it
4,
take
5, 6 months.
and things like that. Now it's all automatic in the depository, so that's why many more people.
So transactions are taking place a lot more. And all those, what you said, 172,000 shareholders now. So, and they're all waiting and watching
Absolutely.
when this is going to happen. I mean,
Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Vivek, good afternoon. A decent day of moves so far. Gains coming in, and we have a 100-point gain on the Nifty right now. But a lot of outperformance coming in from the Bank Nifty, and that is led by what PSU Banking Index is doing. The PSU banks, that index is up 2%. We have the Bank Nifty, which is up 0.5%. The advance decline ratio continues to be in the favor of advances, but the mid-cap index has come off from the highs of the day. So it's up around 0.1%, and we do have the small cap index, which is doing well as well. A lot of individual names which are on our radar today.
Good afternoon. Absolutely right. The advance decline ratio is something that is quite strong, especially towards the broader end of the markets. You spoke about the PSU banks doing very well. In fact, in the last half hour, all of the PSU banks have all surged to the day's highest point. What's also doing well are some of the private banks. So look at a name like Kotak Mahindra Bank. That particular stock has also surged to the day's highest points. But on the other hand, within the BFSI space, the insurance stocks have taken a bit of a knock. So names like MFSL, ICICI Lombard, even HDFC Life and SBI Life, all of these stocks have seen some profit booking come about. In fact, ICICI Lombard is now down almost 2% today. But Sonal has walked across to the wall. This is our special segment, Midcap Movers. Sonal, take us through all of the midcaps that are moving around in the session today.
Yes, midcaps are doing well. So some notable gainers from that list. Let's start with KNR Constructions, because that stock has surged. It is at the day's high, seeing gains of around 8 to 9% as we speak. Garden Reach Shipbuilders is also up 7% right now. Dhani Services, that stock has been in focus, up 7% right now. We do have Kitex Garments. The textile space generally has been in focus because of tariffs and GST cut. Today, that stock is logged in upper circuit. We have Bellrise Industries, couple of brokerage notes coming by there for that particular name. So that stock is higher by 6.5%. Kalyan Jewelers is the other one, up 3.5%. Red Tape Limited, we don't talk about this stock very often, but on huge volumes, we are seeing that surge come by, 7.5% on that one. We have MCX as well, up 4%. We'll talk about that in greater detail on the back of comments coming in from SEBI. So we'll discuss that with our reviewers as well. In terms of losers, we have Moschip. Now remember, that stock surged in last couple of trading sessions, so some profit booking is what is seen right now. One MobiKwik, down 3.5%. We have MIC Electronics and Vishnu Prakash R. Punglia. All these stocks were big movers in last 1 week, so some profit booking which is on the cards as we speak.
Thank you so much, Sonal. All of the movers as far as the broader end of the markets are concerned. But moving on to a very important development that's transpired over the course of the session today, the rupee has risen to a near 3-week high, even as dollar index has plunged to a 4-month low. Rupee bulls are also feeling reassured by the apparent thawing of the India-US relations, and with FPIs are also turning into buyers. The Indian currency is up 0.3% today, and it's the best performing EM currency. Lata has more.
Well, that's the gist, actually. The rupee, after a long lean patch, the worst performing currency, down 2.5%, despite the dollar being down 10%, dollar index being down 10% this year, has kind of erased some of the losses. This morning, it was up at about 87.72, which makes it the highest in 18 days. Not quite a 3-week high, but the highest reading in September itself. And more importantly, today it is the best performing Asian currencies. To be fair, most EM and Asian currencies are up against the dollar because the dollar is at a 4-month low at 96.75 as the dollar market awaits Fed rate cuts from the Fed, as well as probably some cool talk, probably some dovish talk indicating more cuts. And that's why you're seeing the dollar decline. But there is more positivity, particularly for the rupee. We are rising more than other currencies because of the birthday tweet that came from Trump and the immediate reply from Narendra Modi. More importantly, the heavy FII outflows have petered out, and there have been minor inflows as well. So at least the negativity of foreigners buying dollars and taking it out of the country appears to have ebbed. The bond yields have also started falling a bit, and that means bond losses are less. There is a little bit of an expectation that some bond purchases may also happen, although the JPM index has reduced the weightage, or is likely to reduce the weightage of India and China. Nevertheless, it's turning positive for the buyers as well, and that's why you're seeing this recovery. Actually, dealers were always expecting that this 87.75 will be a very good support for the dollar. From there, the dollar may start rising. Now people are started talking about 87.50 and 87.20 as supports for the dollar, or whatever, resistances for the rupee, in case the trade negotiations turn out to be fruitful, to be successful.
All right. Thank you so much, Lata, for explaining the moves. So big moves in rupee and dollar index as well. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Lakh crores in market capitalization, at least in terms of, because
that's
transactions
how
are taking
you see
place.
those transactions.
Right?
But again, when you go to do the IPO, that is the time you need to see.
Depends on
the situation, your profitability and other things.
Right. So, well, I hope that day is not very far. The NOC comes soon, and as you said, within the next 7 or 8 months after that, it is listing. So let's do some practice, Ashish bhai, in terms of the listing.
Yes, of course, it will not be done here. It will be another
Of course.
Distinguished guests, participants, ladies and gentlemen, I'm delighted to address this august gathering of distinguished persons and key stakeholders across the financial spectrum on the theme of banking that builds Bharat, AI-powered, credit-driven, which is extremely contextual and relevant and encapsulates the spirit of Viksit Bharat. The Indian banking system has time and again exhibited its capability to embrace and adapt to newer technologies. Beginning from the early days of computerization in the 1980s, to the spread of ATMs in the 1990s, the expansion of internet and mobile banking in the 2000s, the interoperable infrastructure for payments, data repositories and data sharing since 2010. The banking sector has adapted successfully to the requirements of the changing times and has over the period made banking more efficient and inclusive. Banking has now entered into a new phase of evolution driven by digital democratization. A prime example is the homegrown unified payment interface, which has made India a global leader in digital payments, which reinforces our belief that responsible innovation can be a powerful driver of progress. The Government of India has articulated an ambitious vision of Viksit Bharat, that is transforming India into a developed country by 2047. This sets the tone for the next step in our technological journey for the financial sector, and more specifically in the banking sector. Under Viksit Bharat, the goal is for every adult to not only have a bank account, a target largely achieved under the Jan Dhan Yojana, but also
Welcome back to Mid-Cap Radar. Aditya Birla Fashion and Retail shares are higher in trade today after the company launched a new brand. Our colleague Shilpa caught up with Sangeeta Tanwani of Aditya Birla Fashion and Retail on the sidelines of the MAPIC Retail Summit, where they launched a new value retail brand, Owned. This will replace its existing value retail brand, Style Up, and this takes on Trends Studio.
This is a new brand that we have just launched, and we've announced the launch at the MAPIC event today. This brand is very sharply targeted to the Gen Z. It is actually built based on very deep understanding of this customer segment, which today plays a very significant part in consumers' spending, and they're a very different generation. This particular brand is all built around the youth culture, and therefore the inspiration that we have in terms of the clothes, in terms of the experience that we want to deliver in the stores, and equally in terms of communication, is all inspired by youth culture.
Right. And how is this different from Style Up, which is your existing value brand?
So Style Up is something that we were testing over the last couple of years. This brand is going to expand across the footprint. The geographical footprint is going to be wider, and the few Style Up stores that we have will in fact migrate to Owned.
Right. So you will still have two brands, Owned and Style Up, existing simultaneously?
No, we will have only one brand. As I said, Style Up will migrate to Owned.
To this.
Yes.
So currently, what is this plan in terms of store expansions?
Yes.
How many are you planning to open? So I think you already have a portfolio of 49 Style Up stores. So you will start off with 49 Owned stores in that sense?
We opened already in the last 1 week. We have opened 5 Owned stores, which are new stores. Over a period of time, Style Up stores, as I said, will migrate, and we will continue to open new Owned stores. And by the end of this year, we'll have about 100 Owned stores.
Right. Sorry. Just in closing, what was the idea though of migrating from Style Up to this? You know, is there something that didn't work with respect to Style Up that you decided to migrate?
In fact, our success at Style Up gives us the confidence to really create a proposition like Owned. It's just that, like you rightly said, this is a sharper brand, and therefore we made a choice to keep one brand. We believe this brand is the one which resonates more with Gen Z. So was the case with Style Up, and eventually as a portfolio it makes sense to keep one brand, and Owned is our new brand, which we believe will drive quite a or will open up a new chapter in the value fashion.
All the stores migrate?
In the next few weeks.
All right, 4% higher on that stock. That's the word coming in from the management. But with that, we'll slip into a short break. When we come back, we'll get you more on the markets and a lot of stock-specific action as well. So stay tuned for that.
to affordable credit, insurance, and investment options. The endeavor of banking sector should be to ensure that the benefits of banking, more so of credit accessibility, is made available to the customers across all segments on a fair, transparent, and affordable basis. Over the years, the banking credit has been robust, averaging around 10.5% over the last 5 years. The share of retail credit has gone to about 32%, while the share of credit to MSME sector has been growing steadily, forming almost 18% of the total bank credit as of March 2025. Before delving into the role of new technologies, let me briefly touch upon the steps taken by the RBI over the years to increase the flow of credit. RBI has undertaken several measures to expand both the reach and depth of credit by reducing friction, increasing access points, and lowering the cost of financial service delivery. Key initiatives include the Aadhaar-based KYC, the Central KYC Registry, the revised priority sector lending norms, partial credit enhancement guidelines, and the account aggregator framework. In response to the growing digitalization of credit, the digital lending guidelines were introduced to ensure transparency, fairness, and protecting data privacy while enabling direct fund flows through digital lending. The RBI has also enabled formal credit access through frameworks like the TREDS for the MSMEs, co-lending models between banks and NBFCs, as well as launched targeted refinancing schemes. More recently, the Reserve Bank has, in collaboration with its subsidiary, the RBI Innovation Hub, tested a prototype of a public tech platform for frictionless credit to enable seamless digital data flow to lenders. Building on this, the unified lending interface is being developed to transform credit delivery by integrating access to both financial and non-financial data, such as digitized land records, the GSTN data, property records, and satellite data, along with services like eKYC, the account aggregator framework, and the credit guarantee schemes. This ecosystem aims to make lending faster, cheaper, and more accessible to the underserved segments. Together, this digital public infrastructure and an enabling regulatory framework would help to drive inclusive credit growth. Having said that, a lot of distance still needs to be traversed.
Welcome back. You're still tuned in to Mid-Cap Radar. SEBI Chairman Tuhin Kanta Pandey has batted for deepening India's commodities market by increasing the participation from institutional investors. Listen in to what he had to say.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodities space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets.
Well, very important comments coming in there from the SEBI chief. More participation may be allowed as far as FPIs are allowed within the non-agri commodity space. Well, Vamakshi has dug up more details on this particular development and what it can mean for MCX. Vamakshi, over to you.
Well, absolutely, Vivek. You know, now in his comments, he said that they would be that there is a proposal to allow FPIs to trade in non-cash settled non-agri commodities. Derivative contracts is currently under examination. Now, keep in mind that this is important because as of now, FPIs are allowed to only trade in cash settled non-agri commodity derivatives as well as their indices. Now, in the annual report that came in from SEBI on August 12th, they said that they would be considering reviewing reviewing the existing framework, and they would also explore alternatives to allow FPIs and non-cash settled non-agricultural commodity derivatives, which is what the SEBI chairman had indicated in his comments today. Now, why is this important? That is because currently FPIs are only allowed to trade in the cash settled contracts. Therefore, they largely trade in crude oil as well as natural gas. Now, analysts say that FPI share would be around 5% in total volumes and 8% in the energy basket. Now, with the regulatory approval, if that does come into trade in the non-cash settled non-agri commodities, they will also be able to participate in bullion as well as base metals. Now, the other comment that came in from the SEBI chairman was that they will continue to engage with the government to resolve GST-related challenges for participants who wish to receive or deliver commodities. Now, analysts have largely suggested that GST-related issues have always prevented offtake in volumes which are delivery-based, like in gold and silver. So overall, his comments are extremely positive for MCX, and that is because it will give a boost to liquidity. It will help in deepening India's commodity markets, and therefore, volume uptick for MCX could be expected in the long run. So, that is the development around MCX, and resultantly, the stock is flying high in trade today.
Explains the move on MCX. Thank you so much, Vamakshi, for joining us with what this could mean for the stock and the company overall. By the way, markets have come up from the highs as we speak. 80 points higher on the Nifty, but yes, it's a fall from the highs. The mid caps too are under some pressure. So yes, they are up 35 points, but just at the flat line with some positive bias. So very close to getting into the red. In fact, the advanced decline ratio, those lines should come up for you on the screen. Those are also getting narrower. So for 1,600 stocks on the advancing side, there are around 1,100 stocks declining as well. So we'll track the mid-cap index very closely. The small-cap index, that is the one that should be up for you next, because, we are seeing that move on the mid-cap index. Is that seeing an impact on the small caps as well? Because, yes, the even small-cap index has come off from the highs of the day. We'll keep tracking all that action for you. But for now, we'll take your leave on this edition of Mid-Cap Radar. Stay tuned. Your stocks when we return.
भारत ने दुनिया को युद्ध नहीं बुद्ध दिए। ज्ञान में, अध्यात्म में, गरिमा में, अन्नदान में, संगीत में, शाश्वत कविताओं में हमारा देश भारत पूरे विश्व में सबसे महान है।
Credit penetration persists. Even today, only about 25% of India's adult population have formal access to institutional credit, while in the MSME sector, which contributes almost 30% to the GDP, only about 40% of the credit needs are met by the formal institutions. While the Financial Inclusion Index developed by the Reserve Bank has shown steady improvement, rising from 53.9 in March 2021 to 67 in March 2025, which reflects the growth in account ownership and credit access, scope remains in affecting improvement in the usage and quality of the services delivered. The gap between inclusion and credit access is a challenge and an opportunity to the banking fraternity. The credit needs to not only grow in terms of volumes and numbers, but also needs to be directed towards productive sectors that deliver higher multipliers, such as the MSMEs, infrastructure, informal sectors, and the rural population, to achieve not just the goal of a Viksit Bharat, but a Samaveshi Viksit Bharat. Driving the next credit revolution would require harnessing new technologies. Over time, the role of technology in finance has shifted from improving operational efficiency to fully automating and centralizing previously manual fragmented processes. Among the emerging technologies, artificial intelligence stands out for its vast potential for strengthening the internal operations and risk management to deliver faster and more seamless customer experiences. Reports indicate that nearly 68% of the banking and financial service industry organizations in India adopt some form of artificial intelligence in 2024. An RBI study of the bank's annual reports also shows a sharp rise in the reference to artificial intelligence, underscoring its strategic importance. While both demand-side factors, that is the profitability, competition, and compliance efficiency, and supply-side drivers, that is technology advances, data growth, newer business models, influence artificial intelligence being adopted, supply-side forces remain the primary catalyst. Artificial intelligence as a discipline has evolved over the decades and has seen rise of machine learning systems which can learn from historical data to make decisions, often with high accuracy. Indian banks and non-banks embarked on the artificial intelligence journey nearly a decade ago, mainly handling at that time large volumes of information and supplementary analysis which added value without displacing established systems. The adoption has since moved from deployment of artificial intelligence for back office functions
Hello and welcome to Your Stocks live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Doria and you're looking at a green looking screen for now. The Nifty has cooled off marginally from the day's highest point. For now, it's a 80-point uptick, so around 40 points, around 30 points or so lower as compared to the day's highest point is what has played out for the Nifty. Now, there is support coming in from the Bank Nifty today because that is up 0.5%. But the broader markets, the advanced decline ratio largely in favor of the advances. Now, there's a flash coming in at the bottom of your screen. The government has flagged insufficient disclosure of liabilities, violation of SEBI's disclosure norms for the Vedanta demerger case. The government is doubling down on objection to the Vedanta demerger. So that's a big negative coming in for Vedanta. For now, the stock is taking the government is flagging financial risk post the demerger. The stock is taking a sharp knock in the trading session today. For now, the stock has cooled off from the levels of around 471 that we've seen to around 460. Sharp fall coming in for Vedanta. That stock has now slipped into the negative, down almost 1%. The government claims the demerged entity of Malco Energy is likely to go in liquidation, and they will be claiming that the liquidation will make recovery of the government dues virtually impossible. So, negative news flow coming in for Vedanta. Now, the stock has extended its decline down almost 1.5%. Now apart from that, let's focus in on some of the let's actually get in our technical guest Astha Jain, who's the research analyst at Hem Securities, and Somil Mehta, head of alternative research capital market strategy at Mirae Asset Sher Khan, to answer all of your stock queries. Somil, let me first come to you. I was just talking about the Vedanta demerger case, big fall in the stock. There is objection coming in from the government. So, what is your view on this particular counter?
I'm positive on this counter. I'm not too negative at this point of time. We've seen a very sharp move, sharp sell-off right now, but I'm still positive. Vedanta has just broken out of a huge, consolidation, trading about 200 daily moving average. Great setup for a long trade, but at this point of time, if we can just avoid for some time, buy on decline should be the strategy. Around 430, 435 would be the right time to buy the stock. But at this point of time, avoid till the time it does not settle down around the averages.
All right. Thank you so much for that, Somil. And, on the charts, Asa, I'd like to get your view. How is this stock looking?
Hi, good afternoon to everyone. So, if you want to, regarding Vedanta, if I give my personal chart tactical view. I'm sorry. So I think Vedanta is right now showing a strong trend. Although after the arrival of this news, definitely the stock is falling, but I think it has a major support at around 446 odd levels. 450 it is quoting right now. So 446 to 440 is an important zone for this counter. It should not fall below these levels. In case if it fall below this level, then definitely it can again move in the southwards direction. Right now, I don't advise anyone to buy into this counter because the news is also negative for this counter, and what we were hoping about the demerger plan is all well said. But now with the coming of this news, definitely the stock is going in the downward direction. 440 is the important support zone. If it breaks those levels, then we can see further downside till the level of 430 to 420. So right now, no buying is allowed at the present moment of a time. Just wait and watch is the strategy which we are recommending for this counter.
All right, thank you so much. But let's start with the first query of the day. Gitika Tanuja writes to us from Madhya Pradesh, and she holds 60 shares of ITC at 250 rupees. Now, she's asking whether she should hold or sell at current levels. She's already sitting at a profit of around 10,000 rupees. So, Somil, what would be your take on ITC?
ITC looks good. In the medium term outlook, I don't see this stock going below 390, 380 levels. So a little bit of a sharp sell-off we've seen, but I don't see this stock going below 390, 380 levels. So buy on decline should be the strategy. Medium term and long term, trend still remains positive, and I'll be expecting a good rally after maybe this consolidation is over. I'll be expecting a target of 450 or 460 levels in the medium term outlook.
All right, so that's the view on ITC. But Asta, what do you think? How does this particular stock look on the charts then?
So regarding, first of all, I would like to say something about the fundamentals also, because I'm tracking fundamentals a lot. So ITC is looking good to us because what we have seen is a strong rise in their margin, profitability, FMCG and other segments, especially their paperboard and paper packaging segment. And we are thinking that this counter is a strong candidate for the EPS revision for the upside of also around 4 to 5%. So this is what we are recommending on the fundamental part, that ITC is looking good to us, and we are seeing the EPS to be accretive by 4 to 5% in the coming year. Now talking about the charts also, if I look at the charts, ITC is looking good on the chart. As we all know that FMCG stocks are right now, they are getting good traction. But in the intraday perspective, ITC is a candidate which can move further downside from here. So this is a counter which is only good in the long term, not in the intraday basis. So intraday basis, ITC can move more downside from here. But definitely from the fundamental perspective, this counter is looking good. And I agree with the Somit that 440, 450 are the good levels, which he track on the chart very well. And these are the targets which we are giving to our clients as well.
All right, so for 440 to 450 levels for ITC. But moving on to the next query then, Tina Khurana is writing to us from Mumbai. She holds 70 shares of Ashok Leyland at 30 rupees and wants to know whether she should remain invested. Somil, will you take up that query?
Yep, absolutely. Ashok Leyland, one of my top picks, because the only reason is that in auto sector, Ashok Leyland has a very good risk reward ratio now from here on. M&M, Maruti, TVS Motors, Eicher, all of them have done really well. But I think Ashok Leyland has been a little laggard. I'm expecting this stock to perform really well from these levels. Support would be around 132 and 125 levels. And I'm not expecting the stock to go below 125 levels. So on the upside, I think the targets would be way above 150, 160 levels.
All right. So I think you're quite bullish on this particular counter. Asta, would you would you be also bullish on this counter as well, or would you sell out of it at this point of time?
No, we will not give a sell rating to this counter because we are very positive on this counter. My price target for Ashok Leyland is 160 to 170 in the long term. If I look after the fundamentals also, which I track closely. Now talking about the fundamentals of this counter, now they are coming with various, LCV and MHCV products in H2 of FY26. So with these product launches, definitely this counter will gain the traction. And even what we believe that the kind of industry, tailwind which this company is enjoying right now on the basis of the GST announcements, etc. Ashok Leyland is well poised to move till those levels. So 160 to 170 is our ultimate price target for this counter. Recommending a hold as well as buy on dip strategy can also be applied to this counter.
All right, so a thumbs up coming in from Asta and Somil on Ashok Leyland. But let's move on to the next query then. Gagan Sharma writes to us from Patna. He holds 50 shares of Indus Towers at 250 rupees. Now he wants to know what is the long-term outlook on this particular counter. He's sitting on a profit of around 5,700 or so. Let me first start off with Asta now. Asta, what's your view on Indus Towers then?
So Indus Towers is looking good to us. 395 is the price target which we would like to attribute to this counter. Reason being, first of all, the results which they have posted for Q1 FY26, the results were quite on the decent side. 10% rise in their revenue. In fact, EBITDA shown 4% rise, and profit after tax is also around 10%. So the results were really decent. And what we believe that now the company is looking for more co-addition, substantial deployment of the existing towers. So with the increase in the towers, with the addition of the towers, I think this company is definitely going to be a very, very strong candidate in the longer term. And we recommend a hold on this counter.
All right, so hold on Indus Towers. But, as we were pointing out earlier, the fall on Vedanta has only intensified. Right now, Vedanta has slipped below the 450 mark, trading with a cut of almost 2.5%. And, this is because the government is doubling down on objection to the Vedanta demerger. That is something that has further, deepened the fall on this particular counter. But on that note, let's slip into a very short break. Remember to tune into all new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset at 1 p.m, the Big C and the Global Lens at 8:30 p.m.
Efficiency enhancements to more varied use cases, such as areas of fraud risk management, optimizing IT operations, facial recognition for KYC, credit scoring, claim processing, and customer-focused services. As observed in the surveys conducted by the Reserve Bank in 23 and 24, more than 3/4 of the banks have deployed artificial intelligence-powered chatbots for customer service. This marks a fundamental shift where AI is no longer just an enabler but a participant in the decision-making, product design, and customer engagement. Though the banks have been using artificial intelligence in some areas of lending, this is a potential use case. There is a potential use case for its usage across other areas of the credit life cycle. Let me highlight a few. One is credit inclusion. An important use case would be in the way credit is assessed and distributed. This would require supplementing existing assessment methods with broader data-based and more refined analysis, whereby financial institutions could gain additional perspectives on risk and capability of the potential borrowers. This would be a significant game changer to address credit requirements of the millions of credit invisibles, that is, the people with no formal credit history. However, given the availability of other digital footprints, artificial intelligence can be adopted to leverage alternate data sets to assess creditworthiness, especially that of the new-to-credit customers. This would mean a paradigm shift from asset-based lending to cash flow and alternate data-based lending, promoting a journey from exclusive banking to an inclusive digital finance. Government of India has also recognized the artificial intelligence potential to drive financial inclusion and has started initiatives such as the Grameen Credit Score, which aims to provide underserved communities with formal credit access by analyzing alternate financial data including UPI transactions, government subsidy receipts, and utility payments. Artificial intelligence also influences the turnaround times. It enables banks to process large volumes of customer data quickly.
Welcome back to your stocks on CNBC TV18. Now, let's go across to Ashmit, who is here with details that are emerging because the government is doubling down on objection to the Vedanta demerger. Ashmit, what are you picking up?
Well, broadly, the government has outlined that there are 4 key concerns that it's in fact flagging before the NCLT. One is financial risk post-demerger. The second is misrepresentation of hydrocarbon assets as Vedanta's assets. The third is insufficient disclosures. And the fourth is a possible violation of SEBI's disclosure norms. The government took the NCLT through all of these 4 concerns one by one. On account of financial risk post-demerger, what it's referring to are total dues of over 16,000 crore rupees that it's claiming. The government is arguing that this falls squarely on the shoulders of one of the demerged entities, which is Malco. And towards that end, the government says that so far, Vedanta, the parent company, has assets worth of over 2 lakh crore rupees. And therefore, the government dues are secure, whereas Malco, where the government is pointing out, is in fact running into a negative net worth as of March of 2024, doesn't have enough sufficient assets to secure the government dues. And that is the financial risk that the government is citing, saying that this company is likely to head into liquidation, Malco, and that is likely to be, and the NCLT needs to consider if this demerger is entirely a ruse to defeat the government's claims. That's as far as financial risk is concerned. On the account of misrepresentation, this is where the government flags that there were certain hydrocarbon assets that had been assigned, that had been sanctioned to Vedanta for exploration. This here, the government argues that some of these hydrocarbon assets have been misconstrued, misrepresented by Vedanta as their assets, as assets on their books. And on the back of citing them as assets, massive loans have been secured by Vedanta without seeking government approval. This is the second key aspect that the government had cited, misrepresentation. The third is insufficient disclosure of liabilities. The government points out that they are in the midst of an arbitral dispute with Vedanta, that the government's claims are that they have claims of over 5,900 crore rupees against Vedanta. Some of these claims have not been put on record. Those liabilities have not been disclosed as a part of these demerger scheme. And finally, also pointing out that there are also possible violations of SEBI's disclosure norms, and that is something where the regulators will come into play. Vedanta, on its part, however, is playing safe. With what Vedanta is arguing that, look, we have all the shareholders' approval, we have the creditors' approval. As far as government dues are concerned, the Vedanta is also offered to give a corporate guarantee to secure these dues. Also going on to say that as far as disclosures are concerned, they are in full compliance with SEBI's norms. They are full compliance with the statutory regulations, and that they need not conform to any demand that is coming from the government as long as they are in keeping with the total regulations. Also going on to say that as far as the treatment of assets is concerned, that's where they defend their position, saying that they have strong legal opinion that suggests to them that the right to use those hydrocarbon assets are in fact assets which can be monetized. So Vedanta batting in defense of this demerger scheme, the government doubling down on its opposition. The next hearing, we understand, is on October 8th.
Well, thank you so much for bringing us all of those very important details, Ashmit. The stock had seen a very sharp fall. We're seeing some mild recovery coming in on Vedanta. Nevertheless, it is still down almost 2% in trade. But let's move on to our next query then. Michelle writes to us from New Delhi. Now she holds around 4,000 shares of Shivalik Bimetal Controls at an average cost of 555 rupees since the last 6 months. Now she is a long-term investor and wants to know the future prospects of the company. She is currently sitting at a loss of almost 72,000 rupees. Somil, what would you advise Michelle?
I think this counter does not look that great to me. It's in a downtrend, and I'm not expecting this stock to do really well. there might be short-term, spikes on the upside around 580, 590 would be a very, very strong resistance for the stock. So avoid would be my strategy for the stock.
All right, and the next query is from Joy, who's writing to us from Bengaluru with an investment query. Now, he wants to invest in L&T for a period of 2 years. He wants to know if this is the right time to invest in the stock. Asta, what would you advise this gentleman?
Definitely, we are liking L&T at this point of a time with the price target of 4,050 at the initial level, I would like to say. But these targets are subject to revision upwards going ahead also. Now, talking about the fundamentals of this counter, definitely what we have seen that there was a good revenue growth across the segments of this counter with a very strong order book, which we know about this company is that they have got a very strong order book. So order pipeline is very, very strong for this company. And I think going ahead in the FY26, we are expecting this counter to move ahead in the financial performance with a revenue growth of more than 10%. And in the bottom line growth also, we are expecting it to be more than 10%. So overall, L&T is looking good to us on the back of a strong order book. 4,050 is the price target, which we would like to attribute to this counter at the immediate levels or the initial levels.
All right, thanks for that, Asta. But, Somil, today there was a news flow wherein, the Hyderabad, the metro rail project has run into trouble and L&T was looking for an exit. At the same time, they also won an order. So, Somil, fundamentally, what would your recommendation be on L&T?
See, I look at charts. I look at definitely. I look at charts, and Asta looks at the fundamentals. So I'll be able to give you the chart view overall, and the chart looks definitely very good on L&T, and L&T is definitely my targets would be around 3,800, 3,900 levels for L&T. It has just been consolidating in a very strong, very, very broad range, and this range is broken on the upside. From last couple of days, we've seen very good momentum. So L&T is definitely a buy from my end. A stop loss would be a little deeper. 3,525 would be my stop loss, but on the upside, my target would be way above 3,900.
All right, absolutely. Let's take the next query then. Nagarjuna writes to us from Andhra Pradesh. He holds 2,000 shares of Apollo Microsystems at 8 rupees. He wants to know if he should continue to hold or sell at current levels. Now, this is a stock that has done extremely well over the last couple of sessions. Of course, this stock is down almost 1.4% now. But Asta, what's your view on Apollo Microsystems?
Apollo Microsystems is looking good to us. We are expecting this counter to move till the levels of 380. That is what we are setting our price target also. And now if I talk about the fundamentals, what we are expecting from this counter, that it should continue to grow with a CAGR of 45 to 50% over the next couple of years. And this is what we believe that they will continue to get a strong order inflow and the kind of industry tailwind this company is enjoying. Definitely, it makes a good bet to move till the levels of 380 or so. So we are recommending a hold on this counter. Initial price target can be set at around 380 odd levels.
All right, and Somil, what about you? What's your view on Apollo Microsystems given the recent run-up that we've seen?
Absolutely positive. I agree with Asta. The targets would be way above, but would not advise on short-term trading on this. I would definitely advise on a long-term investment or a medium-term positional view. Supports would be around 260, around 260 levels, or below that. A little deep stop loss, but that will be 165. But that will be a very, very crucial to watch out for the stock. But my targets would be way above 500, 600 levels because the wave counts on this stock is extending, and I'll be expecting a way above targets.
All right. Now, let's move on to the next query then. Sudesh is writing to us from Noida. He holds 100 shares of Birlasoft at 550 rupees since the last 9 months. Now, he wants to know if he can hold it for more than 3 years. So, he's looking for a medium-term outlook. For now, he's sitting at a loss of around 17,000 rupees. Asta, what would your recommendation be on Birlasoft?
recommendation is hold with the price target of 420 at the initial level. Now, the reason being, which we all know that in their results of Q1 FY26, there was a slight decline in the revenue, and that was mainly due to macroeconomic conditions. And we all know that client insourcing was tough in those conditions, which are going on right now around the world. And in fact, some of the ramp down in the manufacturing sector, BFSI sector, has also contributed in the decline in the revenue growth. But now what we are, basically attracted by the guidance which this company has given. During such times also, they are aiming for the strong Q2 of FY26 guidance. And in fact, their margin guidance is looking very good to us, which is at around, 13% to 15% EBITDA range for FY26. So, and in fact, management has given a strong commentary regarding the building up of the order book as well. So looking after all these parameters, I think this is a good counter to stay invested in. Initial price target can be set at around 420 odd levels.
All right, and Saumil, this counter has not done well at all when we look at it on a year-to-date basis. It's down almost 32%, and so have all of the IT stocks. But what would your view be on particularly Birlasoft going forward?
In the short term, definitely positive, but in the medium term outlook, it is in the downtrend. It's been falling for a very long time, struggling to go about 20-40 daily moving average, struggling to go about 200 daily moving average. Very weak stock. I'll be expecting this stock to go down below 330 or maybe 320 levels in the medium term outlook. On the upside, in the short term, maybe there could be a spike around 410 levels, and that will be the time to exit the stock.
All right. Thank you so much, Saumil, as well as Astha, for joining in with us and helping our viewers with their queries. But that's all we have on this edition of the show. But do remember to email us your queries and we will address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
Credit decisions and service delivery. This is especially valuable in time-sensitive sectors like sanctioning of working capital for the MSMEs, where the AI can analyze diverse data sets like bank statements, payment histories, GST filings, e-invoices, trades receivables and patterns, and public records. It also aids lenders in assessing seasonality, supply chains, inventory cycles, customer concentration, thereby help to assess the overall credit worthiness of the MSMEs. Of course, in credit appraisal, the banks can embrace AI algorithms for leveraging behavioral analytics by analyzing a vast amount of transactional data for detecting patterns indicative of creditworthiness and stable financial behavior, which can lead to more accurate credit assessments and improve the decision-making processes. Artificial intelligence ability to dynamically assess customer preferences and behavior can empower banks to offer customized credit solutions tailored to an individual's financial capacity rather than relying on outdated credit assessment. This not only improves the loan accessibility but also ensures that the borrower receives fair and structured financial products that align with their needs. AI-based early warning systems can help to lenders to monitor credit portfolios more effectively through dynamic risk scoring and real-time default probability tracking. By flagging early signs of financial stress, these systems protect the lender's balance sheet while giving the borrowers a chance to correct the course. The goal ultimately is not just to lend more, but to lend better. Artificial intelligence would also play a key role in automating document verification by assessing image quality, ensuring compliance, and reducing lead rejections. It can accurately process large volumes of records, classifying, extracting, and validating key data thereby improving efficiency and minimizing errors in the lending processes. One promising use case of artificial intelligence.
To understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Nikkei also is managing to inch towards the 45,000 mark.
Roughly 25,000 is the big level, which should not break on the downside. What do we have? 25,280 on the Nifty. We're about a 0.25% higher.
Most of the Asian countries are 15 to 20. It needs to come back to at least that much for Indian market performance to resume.
We cannot take the pressure from the negotiations. Now, when are we going to do it?
Came into the market to raise about 1,900 crore rupees, and investors have welcomed it.
We're seeing a 100-point uptick on the Nifty currently.
InstaHelp, Native. I think these are the areas where we will invest.
Gains are coming in, and we have a 100-point gain on the Nifty right now. Well, that was the day so far, and we're shedding some gains as we speak. We're positive, but clearly off the highs. The Nifty is below 25,300, up about 50 points. The mid-cap index has dipped. It's down nearly 100 odd points on the mid-cap index. The advanced decline ratio is holding up in favor of the gaining side. But as you can see, positive, but off the day's high. Hi, guys.
Hi, guys. You remember that story from childhood? The hare and the tortoise, and who won the race? We've lately, instead of being the hare and trying the bravado, we've decided to be slow and steady like the tortoise. Taking steady steps, some profit taking in between, pausing for breath. Not a bad market.
Well, that's right, not bad. And the good point is that the largest constituent on the index, that's the banking and financial names, they have found their form. Because if you take a look at the last 45 days, they'll still be relative performers. But the relative performance is because in the last 15 days, they've actually been outperformers. So the Nifty Bank finding its form, that's always good times. I think it got a couple of 100 points at 55,600 mark. That's where you get a couple of these technical levels that come in there. So it's crossed the 20-day MA. You'll want it to get past that and then lead the way from here on. But portfolios may not be feeling that good today because the breadth of the market, is not strongly in favor of the advances, and the mid-cap index actually has moved into the red. So that's why portfolios may not be looking that good, though in fact we do have, the headline index that's still in the green, 50 points up.
But mid-caps have had a good run this month.
Yeah.
Month to date, the mid-cap index is up 5.5%, while the small-cap index is up 6.7%. So yes, some profit booking is visible right now, but this is on the back of a couple of good days. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema, with me are Surbhi and Nigel. And here's what's up for you in the next 1 hour. Final hour of trade. The Nifty consistently was holding above 25,300, just dipped below that. But on the whole, it's a good day for autos, banks, metals, though, on the back foot. Urban Companies, stock of the day, stellar debut, lists at a 60% premium, holds on to its gains. We'll get you excerpts from our chat with the management. Vedanta under pressure as the centre doubles down on the demerger plans, flagging financial risks and violation of SEBI disclosure norms. Stock has taken a beating, down 1.5%. MCX is higher in trade following comments from the SEBI chairperson Tuhin Kanta Pandey, who said the regulator may permit banks, pension funds, foreign investors to trade in non-agri commodities.
Okay, all right. So those are some of the headlines that we're going to track and some of the stocks and sectors that we will track. By the way, talking about today's market, so yes, the broader market is not having as good a day as what we've seen in the recent past, but you still have themes and trends. Look at some of the defense stocks once again. They're again back in favor today. So Garden Reach, Shipbuilder, some of the smaller private sector names, something like a Zentech, up about 7%, 5% on Zentech. Garden Reach is up about 6.5%. So some of these names are standing out. Look out for the tier 2 jewelers. There's a fair amount of sparkle, and we'll discuss that with Manglam as we go along. Smaller names like a Kalyan Jewelers or something even smaller, something like a PC Jeweler, etc. Bunch of other, jewelry stocks. They are up and about. And then you have the likes of a Gokuldas Exports with the hope building on some sort of a thaw between India and US on the trade front. there is still a lot of buying on Gokuldas today, so 5% on that stock as well. So just some examples where there is action, though the overall index is a bit subdued. Now, what about bets for the last hour? Well, let's ask Mitesh. As always, Mitesh, good afternoon. Good to have you in. What do you make of today's move? What would the index trades be, if any at all? And then stocks.
Good afternoon, Surbi. So I think on the index, 25,320 levels kind of have held on. We got a high slightly above that. But we have started, getting a negative candle on the hourly and the global chart. I think that level will come into play. My sense is that on the index, at least book 50% of your positions. And if you get a dip back to about levels of 25, 200, 220, 180 zones, I think that's where you should fish for new entry. On the stock side, I think the PSU banks are doing very well. So I have a buy on State Bank of India. Keep a stop at 830. Look for targets of 900 over here. And the second stock which I like, that's also a buy call on Tech Mahindra. So Tech Mahindra, is slightly slowly started drifting on the upside. So that's a buy. Keep a stop just below levels of around 1525. Look for targets of 1580.
Okay, so those are some of the names on Mitesh's list. Mitesh, by the way, I don't know if you've noticed anything peculiar or particular on Tata Consumer. It's a big mover today, Nifty winner, almost pushing a 4% gain now. Any interesting trades around this one?
On Tata Consumer?
Tata Consumer.
So the stock, and this has actually been a late stock to join the party on the FMCG side, but today is some kind of a breakout which has happened over here. The weekly charts look very good. The last weekly high was around 1160. So that should be the minimum target. We should, reach that, possibly cross that. But broadly, the way the charts are set up on the medium term and the longer term basis, I think we are looking at an all-time high of 1200, 1220 range being revisited. Above that can also go, but for the time, we'll keep that as the target.
Okay, got that. In fact, Manglam is now joining in. And before we get chatting about Urban Company and its very strong debut in Dalal Street, Manglam, Tata Consumer, what's the news?
So the interesting thing about Tata Consumer, like Mitesh pointed out, it's not been a big participant in the FMCG rally that we saw post the GST cut announcements or before that as well. But the important part is that what really drives the stock are some of the commodity prices, and the key commodity for them is tea. Over the last year or so, there has been, very high inflation in tea prices, and as a result of which, their margins were compressed. The management had told us that time, post the first quarter numbers and the fourth quarter numbers as well, that they will await, the new crop cycle to come by to give a forecast on how tea prices are likely to trend going forward. And for them, a decline in tea prices would mean margin expansion, and that's what the street is now betting on, because what we understand is that, the new crop for tea has been fairly good. That's the inclination that we got from, the industry as well as the management. And they said that 8 to 10% decline is what we're seeing in tea prices from the highs. So that's positive for their raw material and, their overall margins going forward. And importantly, tea volumes as well, as during inflationary periods in tea, people downtrade. And now if tea prices are coming down, people will uptrade and buy some of these branded products as well. So all these factors doing well for Tata Consumer, along with the fact that the stock hasn't moved much.
Yeah, but yesterday I think Tata Consumer, the management did speak with a couple of journalists. I think this was somewhere in near Kolkata, if I'm not mistaken, and they alluded to the fact that tea prices are coming down, and they are looking to pass on at least some of that benefit to customers as well in terms of lower prices for their packaged tea products. So yeah, that remains in focus. But yeah, let's get to the real meat of it today. When we're talking about a consumer stocks, I mean, it has to be Urban Company, right, Manglam? What a listing. I mean, dream listing really coming through. And we were discussing this in the morning. You were telling us, anyway, the stock has already reached 100 PE. So day one, first day, first show, 100 PE. What happens now? I know you heard the management commentary as well. So what stood out for you? Tell us more.
There are a couple of things that stood out for me. You said it's a dream listing. Let's call it a dream demand also for that company. You know, the 1900 crore issue was actually subscribed by over 104 times. And typically, when there are such oversubscriptions that we see obvious oversubscription by the QIBs, by the HNIs and the retail, etc. What caught my eye this time in particular was the employees. That portion also got subscribed by 37 times. Now, this is a number that is not as high for all the other stellar IPOs that we see as well. At best, employee subscription is 5 times, 6 times, 7 times. If employees are gunning so much for their IPO, you know that the company's priced it fairly well. And we spoke with the management of Axel as well. The earlier investors in Urban Company, they said that they wanted to leave some value on the table. So they exited at a 27 times multiple. And now on day one itself, the existing stake that they have is sitting at a 45x multiple for Urban Company. The big trigger for them, valuations, typically what we see in platform companies is that analysts expect, the numbers to be a certain way. But if the companies turn the corner a lot faster than that, those numbers actually tend to outperform earlier estimates. We've seen that in the case of Eternal. We've seen that in the case of Swiggy as well, where analysts had to revise their estimates on EPS and growth parameters upwards, and that led to multiple re-rating. So to that extent, just looking at that 100 P right now may not be the better metric. In fact, if you look at the total addressable market, the growth that the company is likely to put forth, and look at the other listed platforms. So Zomato is currently 3 lakh crore market cap. Swiggy is currently 1 lakh crore plus market cap. So if you compare to that on an absolute basis, Urban Company with a similar total addressable market is at around 25,000 crore market cap, despite the big jump that we've seen on the counter as well. So those are a couple of things I'll be watching out for. From what the management told us here on CNBC-TV18, 3 things stood out. The first one, they said they have a clear path to profitability, and very soon they will communicate with the investors when they come out with their quarterly numbers and the investor call that they will have. The second thing that they said is for Native, they won't rest until it grows 30, 40, 50 times more than what it is. And thirdly, most importantly, they want to become a home operating system rather than just a home services or a home product company. So that non-duality of product and service, but going on into product as a service, is something which is extremely interesting and unheard of, largely because there is no other player in the market as well. For Zomato, there was Swiggy. For Urban Company, there's no one.
There's no comparison. But yeah, I'm really glad you brought up the comparison with Eternal and Swiggy, because that's the best we can do right now in terms of trying and benchmark these businesses. So you mentioned market cap. Just purely on forward earnings right now, how are the 3 placed, and who's the fairest of them all and who's the most expensive of them all?
There is no fairest of them all when you're paying upwards of 60, 70 times for each of these companies, Surabhi. But it's funny because Zomato at 3 lakh crore market cap is still around 60, 70 times. We have something like a Swiggy, which is trading at a 40% discount to Zomato. So you back calculate that, comes to close to around 40 times or 45 times on that counter as well. This one trading at 100 times. But remember, Zomato and Swiggy have a stable business in food delivery, which is not likely to grow as fast as quick commerce. But for Urban Company, you have their own business, which is likely to compound upwards of 35%. The unorganized market here is, more than 99%. So there is growth out there as well. And apart from all of this, they are seeding newer vectors too. So very interesting to see how this space turns out from here on, and, whether there is any competition that comes in or not. So from a valuation standpoint, yes, this is pricier, but in an absolute value, it is still 1/4 of Swiggy.
Big difference in size also. Eternal's quarterly revenue is 7,000 crore. For Urban Company, last quarter Q1 FY26, the top line was about 360 crore. Thank you very much for that comprehensive explanation of what's happening with the Urban Company. But let's hear out now what the management had to tell us.
The right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy. I think today we are playing in many services, but not the end state of everything we can do. So in the end state, any service in the 4 walls of your home will very much be part of our ambition and our playing ground. And similarly, we are imagining a connected ecosystem inside your home of devices which have a strong affinity with our service ecosystem and our platform. So more than a services company, we think of ourselves as a home platform, and that's what we're building. It's hard to see it today, but I think over the next 10 years, this will play out. And we want to be the operating system for your home, the backbone for your home. I think water purifiers and smart electronic door locks are potentially only 2 or 4 or 5 such products that we could build. We will be calibrated. We recognize that this is a new turf. Even though it is related diversification, it's a new territory for us. We have to get it to scale. We have to make it profitable. But if I take a 10-year view, I don't think we will be limited to only water purifiers or, electronic door locks. Native, as the brand name says, we want it to be natively integrated into your home, into your life. I can tell you that, look, we're going to be hard at work, and we're not going to be satisfied until we're at least 30, 40, 50 times larger.
All right, let's focus on the other stock that's been moving around in the last 1 hour or so after the government has doubled down on the objection to Vedanta's demerger. Ashmit has been listening in to the courtroom action. I tuned in for a little bit of time. Ashmit, it went on for a long time. Tell us, what are the key takeaways? The government's argument, what was accepted, and what was Vedanta's response?
Well, the government placing before the NCLT a whole host of objections that it has in terms of the conduct of Vedanta and certain issues with their respect to compliance. There are 4 key issues which they highlighted. The first is with respect to financial risk post-demerger. Government clarified that their concern primarily has to do with one of the demerged entities, which is Malco. The government clarified that this is a company that is likely to go into liquidation after demerger, that it has a worrisome cash balance position, going on to say that the total government claims is north of 16,000 crore rupees, and while that's secure in the hands of the parent company Vedanta, which itself has assets of over 2,000 crore rupees, Malco only has assets of 29,000 crore rupees. It in fact had a negative net worth as of 30th of March 2024, and all of these are cited as concerns by the government for the NCLT to see whether or not this demerger is a ruse to defeat the government's claims. That's concern number 1. The second concern is with respect to misrepresentation of assets. Here, what the government says is that there were certain hydrocarbon blocks that had been assigned to Vedanta for exploration. Here, what the government's concern essentially is that Vedanta has cited these hydrocarbon assets, these hydrocarbon blocks, which are owned by the government. Vedanta has cited as their own assets, and on the back of that have raised massive loans against them. This is something that the government has raised concerns about, saying that this is not permissible, that that Vedanta needed a government nod, that the government nod was never secured, and that this is a case of misrepresentation of their assets, giving a rosy picture. The third is insufficient disclosure. The government pointed out that they are in the midst of an arbitral dispute with Vedanta, that the government has claims of over 5,900 crore rupees, but nowhere in the scheme has that figure been disclosed, and that is something that has also been flagged. And finally, the government also saying that there's a strong case to be made for violation of SEBI's disclosure norms. That is something that the government said the market regulator may want to come in on. So clearly, 4 big concerns being cited, the government doubling down on its objection. Vedanta on its part, however, clarifying its position that as far as disclosures are concerned, they are in compliance with all statutory requirements. As far as approvals are concerned, going on to say that they have a NOC from SEBI, from the exchanges, the creditors, as well as the shareholders are on board, and also saying that as far as government dues are concerned, Vedanta is willing to go a step further, even to the extent of issuing a corporate guarantee to the extent of the dues that are being claimed by the government. So Vedanta putting its own defense forward, the government objecting to this. The next hearing in this case, we understand, will be on October 8th.
Well, that's right, Ashmit. Thanks a lot for that. So for the time being, the stock did react negatively, but there is hope, and that's why the stock has recovered from the low point of the day. Clearly, the commentary of the government is very, very, it's quite harsh actually to call it, because I personally went into that call and I did listen in as well, and they point out all these parameters where they have some objection, but also at some part of the hearing, there was that comment that did come in from one of the regulators that they're not against the demerger. And Vedanta has put forth various parameters out there, and they're willing to offer a corporate guarantee as well, a bank guarantee. Yeah. So that's why the stock has not completely collapsed, because if the demerger is off, then the stock will see a lot of selling. But from the lows, it's seen a bit of a recovery, because all eyes now will be on October 8th. And as we saw a few days ago, on the power asset at least, that case has got cleared, which clears one of the many hurdles. But otherwise, the government's comments, they definitely do mean business on this. So we'll have to see where the breakthrough does come about.
Oh, absolutely. I mean, hopefully with Vedanta offering that corporate guarantee, offering to...
And they hinted the last time as well, both these two comments, whether it's with regard to the government's commentary or whether it's with regard to Vedanta's offer as well, both of them, even in the last hearing, both of them were... So this is a step moving forward for both of them. Okay. So we'll have to see whether or not there is some kind of, bridge that can be come to, and then the demerger can find its way. But that's going to be extremely important.
8th of October, that's a big date for Vedanta ahead. Got that. Okay, Ashmit, thank you very much for those details as well. Well, now let's move on and get to the big market and economy conversation of the day. And we have Nilesh Shah, MD of Kotak Mahindra Asset Management, joining in. A slightly special day. Nilesh, thanks so much for taking out the time this afternoon. We wanted to bring you in because it is a special day. The country is celebrating Prime Minister Modi's 75th birthday. And it's been a lot of stock taking, right? We're all looking at what the last 10 years have meant for the economy, for the market, and more importantly, what the next few years are going to bring. So let me actually start right there. a lot has been thrown at us, right? From COVID to, of course, the tariff issue to wars. Yet the market and the economy largely has been resilient. So, how would you sum up the government's response so far? And if you were to make one wish, to the Prime Minister on his birthday today for any future reforms or future steps, what would that wish be?
So, Surbi, undoubtedly, India has improved its ranking in global GDP order. We were 10th largest economy in 2014. Today, we are 4th largest economy and well on our way to become 3rd largest economy. Never before in a decade, India has progressed so much. So all credit goes to Government of India as well as citizens of India. One biggest driver for this, and there are multiple things, but one biggest thing from an economy point of view is path of fiscal prudence. India is the only major economy in the entire world whose debt to GDP ratio has come down between subprime crisis in 2008 and today, post-COVID crisis. No other country has resulted into deleveraging. India is the only country which is deleveraged. Households of India and corporate India has contributed in deleveraging. Government of India to fund COVID borrowing has leveraged itself. But collectively, we have deleveraged, which no other country in the world has done. This path of fiscal prudence, which is courtesy the Prime Minister, is probably one of the reasons why, despite so many things being thrown at us, our economy and markets have been resilient. And one request to the Prime Minister to ensure that the Viksit Bharat is achieved earlier rather than later will be improving ease of doing business. Surbi, today our entrepreneur is like Kalyuga Abhimanyu. They are born into Chakravyu. And not only they fight with Kauravs, which is markets and ups and downs and volatilities, many a times they fight with Pandav because there are so much of compliance burden. So many things we can ease. We can free our Abhimanyu to fight Kaurav. And what has not happened in Mahabharata, where Abhimanyu couldn't break the Chakravyu, under Honorable Prime Minister's leadership with ease of doing business and investment, I'm sure our entrepreneurs will break the Chakravyu to make Bharat Viksit Bharat.
Oh, very well put, Nilesh. And may as you're saying, the Kalyuga Abhimanyu, may he go on to conquer the world, right? Because that's where the focus has been. I mean, the government's focus, Prime Minister's focus on schemes like, Atmanirbhar Bharat, the PLI schemes, Make in India, manufacturing, China +1. So a lot has been happening for India Inc.
Indeed, Swami Kanti Ghosh, Group Chief Economic Advisor, State Bank of India, is also joining in. Swami, Modi has done a lot, right, as Surbi was pointing out. But the question is, what's the roadmap for the next few years, from 2024 to 2029? In terms of reforms, what is it that we can realistically expect? We're already seeing a tilt towards consumption over capex. It's going to be balanced, but there is that bias towards consumption now, a recovery at the mass end. What would your, the roadmap be now, as we celebrate Modi at 75?
Thank you. I think while we must celebrate the journey which India had in the last decade, I think in terms of the future, India, we have done a lot of big ticket reforms in the last decade. The GST is one of the examples, the insolvency and bankruptcy code, the corporate tax cuts. So all of this has been great reforms. But one thing which we need to take it forward, I think in the next 5 to 10 years, I think the continued focus by the government under the leadership of Honorable Prime Minister Modi in terms of improving the ease of living for the common individuals and the business. In terms of the ease of living, I think the time has possibly come also to expand into areas of improving the lives of common Indian by the improvement in urban infrastructure. Because in the Indian context, you know that we have a government at the local level. So we need to ensure that the urban infrastructure also improves significantly along with the overall infrastructure which the government is building. And the second reform if we can do in the agricultural sector. We have been trying to reform the agricultural sector. We have tried to move away from the agriculture to the allied activities in terms of the value chain. Maybe we can do some more in terms of the price discovery. There are other reforms also, but at this point of time, I think improving the lives of the common Indian through the improvement in urban infrastructure and possibly some reforms in the agricultural sector could be the next 5 to 10 years of the reform mantra.
Okay, all right. So reforms in agriculture, maybe better quality of life for citizens and infrastructure. We couldn't agree more, Soumya, especially being here in Mumbai. Really looking for better infrastructure in the coming years. Soumya, just on the point of the economy from here on and how a lot of global investors are looking at India as well. Do you think the bulk of the sting of it in terms of US tariffs, etc., you think the bulk of it has been mitigated with what we've seen on the GST front, the fact that there is still easing, and you tell us, I mean, maybe you expect more from the RBI as well. So, I mean, have we nicely offset the tariff impact so far?
Yes, I think that is also one important part. And another reform which I just forgot, I think that is also a part of the reform, is basically also to get rid of the government is doing in terms of the various regulations which the government is actually doing, I mean, to make it a more simplified and a rule-based regulation. But now, having said that, in terms of the overall uncertainty, I think on a lighter note, the certainty and uncertainty has possibly become the norm of rulemaking today. But I see positivity in all the uncertainty, which is looming amount. Hopefully, if the trade deal comes through and the GST reform which the government has done, I think no country in the world has seen a tax structure where all 28 states and the center goes together. And that's an element of the best example of cooperative federalism. So my sense is that once a trade deal comes through, and given the consumption boost and also the income tax exemptions, I think these the private investment, which somehow has not lived to the momentum, will pick up the momentum and hopefully will be able to achieve the growth rate of 6.5 to 7% plus on a consistent basis. Because I think the objective right now is to grow at 7% on a consistent basis. So we all are on one together in our journey towards a developed economy by 2047.
Soumya, thank you very much for joining in with your views, weighing in. And we request Nilesh to just stay on. We'll come back and talk to you about the markets. For now, slip into a break with the news that the Nifty's managed to climb back above 25,300 and its banks all the way. The Nifty banking index continues to climb higher and higher. Get into a break. We'll come back.
Development of multilingual chatbots and voice assistants which enable customers to interact with banks in their native language. This is a revolutionary change, as by localizing the user experience, the AI can enable more people across different languages, literacy levels, and abilities to confidently use formal banking services. I'm told banks are also experimenting with using artificial intelligence to enable staff to respond to customer queries, which can enhance the customer experiences going forward. Timely resolution of customer queries boosts trust in the banking system and encourages deeper engagement, furthering financial inclusion. As digital access has expanded, so too has the customer complaints. This highlights another use case for the artificial intelligence. It can efficiently categorize, prioritize, and route complaints, enabling faster proactive resolution by detecting patterns and addressing root causes before the issues escalate into grievances. Artificial intelligence-powered loan servicing platforms can create personalized repayment solutions and reduce operational errors across servicing and for portfolio management. They can also provide new ways of loan servicing by supporting collections and recovery through prioritized outreach strategies. AI can help to strengthen compliance with auditable trails of measures initiated for recovery. AI also holds potential for safeguarding the financial system itself. As cybercriminals increasingly use AI for sophisticated attacks, the regulated entities can leverage artificial intelligence-driven tools to protect customers and detect threats. AI can monitor large transaction volumes in real time, flagging anomalies that may indicate fraud or money laundering, especially in complex areas like crypto transactions, where parallel financial channels exist. With the fintechs advancing rapidly, the regulated entities are increasingly partnering with them across the credit life cycle. A key model, digital lending under banking as a service, involves embedding processes like KYC, credit assessment, and recovery directly into the fintech platforms. While such collaborations enhance financial inclusion and innovation, they can also bring risks such as blurred accountability, data misuse, inadequate grievance redressal, and potential mis-selling. The guiding principle to address this remains
Welcome back. Up about 85 points on the Nifty. So building on to the gains from yesterday, there was a minor dip about 30 minutes back, but the markets are moving on. That dip has been bought into. Let's see what happens in the last 30 minutes. The big event to watch will be the two-day FOMC meet, which concludes. It's pretty much a given, perhaps, that a 25 basis points rate cut is coming. Markets have priced it in, but the question is pace of easing thereafter for the next 12 months. So investor focus will squarely be on that. We're in conversation with Nilesh Shah. Nilesh, we were just discussing the markets, and you said that once perhaps this trade deal, we get any positive sound bites, and and the trade deal is out of the way, markets could see a bit of a leg up from here on. What should we expect, considering markets haven't done anything for the last 12, 13 months now? It's been very sideways. What is your own view for the next 12 months for our markets?
So our markets have done exceptionally well over the last 5 years post-COVID, and there is a need for consolidation. Markets are driven by three things: fundamentals, flows, and sentiment. If tariff deal works out, sentiments will become positive. Fundamentally, we are trading at reasonable premium to our emerging market peers. So re-rating of our market looks difficult. Whatever will be the earnings growth will probably result into return to the investors. And earnings growth right now looks like for the coming years in the trajectory of high single digit to low double digit. What can move the market is the flow. And this is where there is a tug of war going on. FPIs by and large have been sellers over the last couple of years. They are underweight India, and they are likely to tell domestic investors that, you are sitting in a wrong train. You should be booking profit. Indian markets looks expensive. On the other hand, domestic investors have continued to buy not only what FPIs have sold, but also what has come by way of primary supply through promoter selling, private equity exit, and sometimes even global companies coming in, booking profit here. By and large, they are overweight India. And at this point of time, they look like that their buying will continue. This tug of war is going to determine what happens in the market. If FPIs convince domestic investors that our markets are expensive, then there will be slightly longer period of consolidation. If domestic investors can convince FPIs that you have missed the train, and India is a market where exit is easy, but entry will be difficult, then who knows, we could see a rally. So from a fundamental point of view, you need to moderate your return expectations to earnings growth, but flows can surprise on either side.
Well, Nilesh, good to see you win on this big day, our Prime Minister's birthday. And, over the last 11 years or so, the equity cult that's been developed in India is something that really stands out, right? The kind of flows that we're getting on a monthly basis, the evolution that we're seeing. I recall, when you told Surbhi a month or so ago that keep in mind, this month the flows are going to be rock solid when we were quizzing you about it. And bang on. So good on you on that. Do you see that the flows are as strong as of now? And also, if you could give us a sense about the liquidity that the industry is sitting on. I think they were sitting on ample liquidity, 5.5% or thereabouts. Break it down for us.
So, Nigel, this month also flows looks reasonably strong. We have to break these flows in three compartments. One is the SIP flow. By and large, that is continuing well. Now, of course, there are people who will try to talk about net SIP without understanding that as the SIP AUM grows, some people will book profit and hence the SIP flows will fluctuate. The addition on SIP looks fairly strong. The second thing is the lump sum flows. By and large, retail investors, thanks to their mutual fund distributors and advisors, have developed habit of buying on correction and selling on rise or booking profit whenever they believe market has risen. So this SIP plus lump sum flows continuously plays a part in regular flows to the market. The third flows which we have started witnessing is overseas investors now investing via various structure, including Gift City. It's a small beginning, but who knows where this can lead. So overall flow-wise, we still believe there is reasonable amount of flow. At Kotak Mutual Fund, we don't take any cash call. We believe our clients are doing their asset allocation, and they have given us mandate to invest into equity market and trying our best to outperform benchmark indices. Of course, there are other fund houses who take a different view. Now, collectively, mutual funds will be sitting somewhere around 4 to 5% of their AUM in cash. But Nigel, we have also created a product category called Balance Advantage Fund, Asset Allocation Fund. As valuations become cheap, we can increase equity allocation in this fund. As valuation becomes expensive, we can sell and book profit. The combined cash availability in asset allocation and balance advantage fund will be somewhere around 1 lakh crore. So not only mutual fund industry is sitting on a 4 to 5% cash in their pure equity fund, they also are sitting on about a 1 lakh crore space in case FPIs becomes desperate sellers and start selling at a cheaper and cheaper valuation.
Okay, so it is that domestic flow story. It's been like the lighthouse shining on troubled waters or dark waters. Every time there's market volatility or the foreigners are selling, it's that lighthouse, glowing bright with retail investors coming to the market. And I mean, now there's a new category, Nilesh, SIF, the new 10 lakh rupee category. And maybe next time you're with us, we'll talk about that as well. And see, how that can add more meaningful money to the market, perhaps. Thank you so much for joining in. Great conversation as always, and you have a great rest of the day. That's Nilesh Shah with the market. Market which has been range bound today, but as always, it's time for action. So when it's time for action, that means it's Hormaz in the house. As usual, he has his list of buzzers ready. Hormaz, what's on it today?
Start off with some alliteration today in the list. The company is called Consolidated Construction Consortium, and the stock is up for the 4th day running. And in these last 4 sessions, the stock has risen almost 55%. And over the last few trading sessions, take a look at the volumes at which the stock is traded in. Almost range from around 3 crore shares. Today, we have had around about 75 lakh shares that have been traded on the company, and the 20-day average is around 45 lakh. Of course, that is because of the volume acceleration that we have seen over the last 4 trading sessions. Interestingly, ICICI Bank has stake in the company, holds close to 9% stake, which it had managed to convert a part of its debt into equity in 2015 as part of its restructuring plan, and as a result of which it still manages to hold this stake in the company. Footwear stocks have been on a bit of a move the last few sessions. We highlighted Mirza International earlier in the morning. Khadim is not far behind either, and these are 11.5% today, was up yesterday as well, so now 25% in the last 2 sessions. It's already, today's volumes have already crossed yesterday's volumes. We've had close to 6.5 lakh shares being traded today. The 20-day average is only 40,000 shares. The stock has now broken above its 50 and 200-day moving average, and as a result of this move, the stock has all but turned positive for 2025. DCM Shriram has sprung up on the list of gainers today and snapped a 5-day losing streak yesterday, and it's building onto those gains now, 13.5% higher on the stock, and it has gained on very strong volumes as well. Now, the volumes today are the highest in the last 2 months. We have had over 30, almost close to 9 lakh shares that have been traded already, compared to a 20-day average, again, of only 40,000 shares. And over the last few sessions, the stock has consistently been taking support at its 100-day moving average, and it has now also crossed its 50-day moving average, courtesy the sharp spike we have seen in the last few minutes. And lastly, On-Mobile Global is on the list. It's declined. The move that you have seen today, 9% higher, but it's been an outperformer through the month, has declined only thrice in the last 14 sessions. The biggest single day gain since May. Volumes are the highest since July of last year. We have had close to 1.5 crore shares being traded on the stock. The 20-day average is only around 4 lakh shares, and as a result of this move, it has trimmed its 2025 losses down to 5%, but has been an underperformer, was down close to 40% last year as well.
Thank you very much for that. I was just looking at On-Mobile's revenues. In FY14, the revenues were 865 crore. And for the last 5 or 6 years, revenues have ranged between 500 to 600 crores. So basically, it's done nothing. And compared to what it was 10, 12 years back, the revenues have actually fallen quite a bit. 865 crore down to 573 crore. Thanks, Hormus, for that. Let's get to our D Street Chatter segment. Nimesh will get us his insights into what's happening in the dealing rooms. Nimesh.
Hi, Rimana. So as expected, the short covering rally about 25,200 continues in today's market. And as I said yesterday as well, if this short covering rally has to happen, watch out for the PSU names, and that's exactly what has happened today. The entire PSU basket is buzzing, but within that, I guess it's more of a short covering rally in many of those PSU names today. PSU bank stock stands out today. The index is up 2.5%, and there I understand there is a bit of buying interest as well from institutional investors. So that's one space which stands out, both on back of short covering as well as some buying as well. Overall, the flows are mixed. Unlike yesterday when the feedback was that there is buying, today seems to be a mixed day as far as institutional flows are concerned. But what we're seeing today is a clear short covering rally that is largely led by the PSU names.
Okay, all right, got that, Nimesh. What about individual stocks? What's in your radar?
Compared to the PSU name stocks, it's a different story in the private banks. So the first stock is AU Small Finance Bank. That stock is under pressure today, and the volumes have picked up in the last couple of days, essentially because I understand one large long-only fund has been an active seller in AU Small Finance Bank. So that's the first stock. Second, BEL and IDFC First Bank, both stands out in terms of very high delivery-based buying today. So expect high volumes and high delivery as well in both those names, BEL as well as IDFC First Bank. And the last is SPML Infra. Again, the stock has been consolidating in a narrow range. The company has been reporting a lot of order wins, and similarly, the buzz is that maybe a couple of more order wins are likely for SPML Infra in the next coming few weeks.
Thank you very much for that. SPML Infra down 1.5% today. Not done anything in the last 1 year. Pretty much flat. Let's get into a break on that note. Come back with more BTST calls from our experts.
That regardless of the model being used, accountability ultimately rests with the regulated entity. Technological advancements come with the challenges that the regulated entities must recognize, as these risks can undermine the benefits of innovation. For example, the recent Supreme Court ruling on the video-based eKYC highlighted that mandatory automated processes may create barriers for people with disabilities, underscoring the need for fairness and accessibility in technology adoption so as to avoid exclusion. Artificial intelligence without proper controls can introduce risks like algorithmic bias, lack of transparency, ethical concerns, and systemic vulnerabilities. It can also amplify the existing risks such as third-party dependencies, concentration, model, cyber, and data privacy risks. Let me highlight a few of this. Even as artificial intelligence adoption grows, Financial institutions increasingly rely on complex networks of external service providers, cloud platforms, artificial intelligence vendors, and data aggregators. These interdependencies create hidden vulnerabilities where a disruption or a breach in one link can cascade across multiple institutions, disrupting critical services. The complexity and opacity of these layers makes it difficult to identify risks, allowing them to accumulate unnoticed and spread rapidly during shocks. A critical vulnerability of artificial intelligence is its potential to synchronize behaviors across financial systems. When institutions use similar models trained on overlapping data, their decisions on asset pricing, credit assessment, trading may align, creating hidden linkages. This can amplify market stress, spreading shocks rapidly, worsening liquidity shortages, increasing asset price volatility, and trigger sharp, self-reinforcing market swings. The integration of artificial intelligence into the financial system, especially through new interaction methods and increased reliance on specialized providers, expands the cyber threat landscape in unpredictable ways. AI strengths such as reliance on large datasets, open interfaces, and automated decisions also create vulnerabilities. Malicious actors can exploit these through adversarial attacks or compromised training data, potentially corrupting artificial intelligence outputs. Even a single breach can disrupt critical operations and
Welcome back. So the Nifty is managing a 90-point up move. Let's find out what's happening in the F&O market. Nigel, what's the latest there?
Well, you know, in the last 2 months or so, if the bears believe the story was playing out for them, now it's playing out for the bulls. Because you just take a look at the Nifty, that's holding with a gain of close to 90 points. But the bigger story actually is playing out on the Nifty Bank, because that's not performing in line now. That's actually outperforming what the Nifty is doing. And today it's very, very clear. You look at the index, you're seeing there is a short covering bounce that's playing out on the Nifty Bank. And that was the largest constituent which wasn't participating till now. So that, you know, finding its way is very, very good news. But the other big component is the Reliance Industries. That lost its way a little bit, but just take a look at the stock. You know, if you pull up a couple of those moving averages, the 50 as well as the 100-day MA, it's got into that zone. You know, 1,425 could spell a bigger short covering bounce that could play out on Reliance Industries. So I'll keep an eye out on this particular stock. Moving to the PCR, that was running away. It went to around 1.35, 1.4 earlier today. But from there, it's cooled off, which is a good sign. Normally, when the PCR moves to around 1.6 is when the markets cool off. So in the bullish perspective, cooling to sub 1.2, that's pretty good news. How's that happen? The 25,300 put, well, that's seeing a lot of open interest build up. But just take a look at the premium. The premium is down close to around 40% today, telling you the kind of aggressive writing that we're seeing at that strike. If you look on the upside, you know, the 25,400 call, that's seeing a good amount of open interest build up, and the premium as well has moved up. There is mixed activity that we're seeing at these levels, because at the start of today's trading session, the premium out there was around 70, 75 rupees or thereabouts. So if you look at the range, well, on the downside, the 25,150 mark, which is the mark that I pointed out earlier today as well, that becomes the near-term support, 25,050, 25,150. However, the next leg of the up move comes once we get past the 25,500 odd mark. The Nifty Bank, I said, is finding its form. It's seeing a bit of a short covering bounce. Now the 50 and the 100 DMA is in this vicinity. By the end of today, you'll want it to go up around 100 points or thereabouts, because it's bat in line over there. Just take a look at that. 50 and the 100 DMA, that's within kissing distance. Moving to stocks then, you can see, you know, HFCL. That's a stock I'm keeping a close eye on, because big amount of open interest, unwinding or covering is what we're seeing out there. And just the last time I checked, the open interest as a percentage of MWPL has come down below 80%. So the probability that stock comes out of the F&O band. So that's the important stock to track by the end of today. You're seeing short covering taking place on two stocks, KPIT as well as RVNL, both those stocks higher, open interest lower. And finally, some long addition is what we're seeing on Tata Chemicals as well. So that's a stock you should be keeping on your radar. But HFCL, that's the one that could exit the F&O band. So that's the one on the radar. Back to you.
Okay, all right. So those are some of the stocks to keep on our radar. Let's quickly move on. We've got, I think, Mitesh with us. So good time. Yeah, last 15 minutes to go. Good time to take in some final advice and calls. Mitesh, on the index and any final stock ideas?
Yeah. So we on the index, I think, we've kind of again come back after coming down slightly from 25,350. That's such as positive. I was hoping for a bit more decline to buy into it, but for the time being, as long as we don't get closing about 25,350, I would wait it out maybe tomorrow morning. But on the stock side, Ambuja, I think, has come on the radar for a BTST kind of punch near the day's high. So take a stop at about 578, 577.5 and 590 could be a good target. And AB Capital, after a big rally, I think first signs of profit booking over here. So STVT is what I suggest on the charts of AB Capital. Keep a stop just above levels of 286, look for target for about 279.
Okay. All right, Mitesh, got that. Thanks very much. Have a good, restful evening, and we'll see you in the market again tomorrow morning. Let's actually put the spotlight on some commentary that we got from the SEBI chief today, particularly when it comes to the commodities market. SEBI chairman Tuhin Kanta Pandey has batted for deepening India's commodities market by increasing the participation from institutional investors. Listen in.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodity space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets.
Okay, so that was the SEBI chairman talking about the next steps for the commodity markets. Well, the big global story, of course, is going to be the Fed meeting tonight, and all bets expecting at least a 25 basis points rate cut, if not more. We have CNBC's Steve Leisman joining in with the details of the Fed expectations.
Considerable disagreement among respondents to the CNBC Fed survey, not over what the Fed's going to do, but what they should do, and growing concern over President Trump's intentions for Federal Reserve independence. Here's the Fed expectations chart. 97% think the Fed's going to cut by 25, but only 41% think the Fed should cut by that amount. 62% say Federal Reserve Governor Cook will remain on the Fed. In other words, the president will not be successful, is the expectation, in firing her. 55% say CEA Chair Stephen Myron's unpaid leave from the CEA chair is inappropriate. And 82% say President Trump is trying to limit or eliminate Federal Reserve independence. When it comes to what respondents believe the president's intentions are for Fed independence, 41% say limit it, 41% say eliminate it, just 10% think the Fed is supporting it. For the record, Treasury Secretary Scott Bessent and Stephen Myron have supported Fed independence in public comments. But the effects of these presidential actions, 68% believe it will lead to higher inflation, 57% believe it will lead to higher unemployment, 54% believe it will lead to lower economic growth, and a division there over whether it means higher or lower interest rates, but 74% say it will mean a lower value to the U.S. dollar. Okay, what about when it comes to the meeting today? 41% think a 25 basis point cut is appropriate, but 28% think the Fed should cut 50. 28% say the Fed shouldn't cut at all. This mirrors disagreements we know about on the Fed over the right policy in the face of somewhat higher inflation, but flagging job growth. Our 29 respondents put the current 2025 year-end funds rate at 3.6%. That's down about 30 basis points from our July survey, you can see there. And then a pretty good drop for 2026, down to 3.13. What's important about that number is the long run rate is 3.2%. So the belief that the Fed gets relatively quickly by the end of next year to the terminal or long run rate. Last night, as you said, an appeals court cleared the way for Fed Governor Lisa Cook to remain on the Fed board, rejecting the administration's attempt to overturn an injunction on President Trump's firing. And CEA Chair Stephen Myron approved by the Senate. So a full slate of 12 voters will take up the issues, not only of what the Fed does today, but what it signals for future policy. Worth pointing out, there's little sign of these concerns about Fed independence in either the bond or the stock market, and I suppose that's another conversation to have.
Welcome back. The mid-cap index may be flat, but so many individual stocks are shining. Shrinkar House, the other stock that debuted on Dalal Street, the House of Mangalsutra, 12% up on that. Mirza International, 13%. Premier Explosives has had an explosive move since morning. Stock has been higher and it continues to maintain those gains. On Mobile Global, a stock that Hormus was earlier highlighting, it was down last year, but today it's up nearly about 10%. PC Jewelers, India Pesticides, Banco Products, Red Tape, Bellrise Industries. And Bellrise Industries, there was an investing note. 5 minutes left. Mahiresh Joshi is now joining in on the show. Mahiresh, the stock of the day undoubtedly is Urban Company. Those who got in the IPO got lucky, but for those now, who are still waiting to buy this company, what would the advice be?
Afternoon, Rima. So I think for those who are wanting to buy, obviously you have to wait for declines to come through on the stock. For those who are having it, I think it really depends on your risk reward. If you're probably looking at a very short-term window, partial booking makes sense. However, I think the comments that the management has probably put forth in terms of creating a full value ecosystem as homes are concerned, and probably homes being the driver going forward in the next few years, I think that's very positive. But I think it's going to take a long periodicity of time to probably ensure all the services that they probably got in mind get implemented amidst all the competition that might come through in the next few years. Obviously, their first element from a balance sheet perspective will be to probably ensure that EBITDA margins start propping up and profitability as far as bottom line is concerned. So in my own sense, I think anybody having the stock with a medium-term view can probably still ride the momentum. A short-term view will probably have partial profit looking done. fresh investments, wait for declines.
What's a good good entry point for Urban Company? I mean, what kind of a decline?
No, so I think it's too premature, Rima, at this point of time. But again, I think our own sense is that let's wait for the first con call to probably happen. Let's see what their strategy is, what their vision is, and the numbers that they're putting through. And based on that, maybe even a 10% decline might be a feasible entry point, or maybe even larger. So it all depends in terms of what they probably give out in terms of their guidance.
All right. What about Belrise, Mayuresh? What's the view on that one? Belrise, the stock, I think, came with the IPO at around 100 rupees ballpark. In a few months, the stock is at around 155 rupees. I recall Jefferies, I think, was quite bullish on it. Investec has come out with a note as well. They as well are quite bullish. At around 160 rupees, what do you think? Bulk of the good news in the price?
Absolutely, Nigel. First of all, I think a belated birthday to you. I think I missed you.
Thanks a lot, Mayuresh. Thank you.
But yes, I think the valuations are a tad bit clearer as we speak. And therefore, I think it really depends on the numbers delivery that Belrise can probably give in this quarter, the guidance that they've probably give us or the street as well. And on that belief, I think the stock might probably sustain its premium valuation. So in that regard, I think wait for declines to come.
Okay, that's Belrise in focus. Mayuresh, hi, good afternoon. Good to have you in. What about the listing of the day? Now, those who got into Urban Company, I'm not saying calling their services, I mean, the ones who've not gotten it, what else? When beyond this, should you go back and look at other platform companies? You still have the Swiggies and Zomatos of the world. But it's very clear that this is a very, very active space. How are you looking to play it?
Afternoon, Survi. No, absolutely. I think the tech companies, fintech companies is something that are going to do phenomenally well going forward. And I think a clutch of them will probably do well. So I think out of all the companies that you probably got, I think valuations probably are sky high as we speak, based on the assumptions of blue sky horizons of projections that one is probably looking at. But as I said, for Urban or Swiggy or Zomato in my previous interactions as well, I think valuations are a tad bit too much in terms of how the stocks are priced at this juncture. And they're priced to perfection in terms of numbers delivery. I think 1 or 2 quarters in terms of a numbers miss and the de-rating can be pretty harsh in terms of where they are standing at this juncture. So optimistic in terms of the space, but I think valuation discomfort is something that is bothering us at this juncture.
Okay, all right. Mayuresh, thanks a lot for that. Request you to stay with us. For the time being, we're almost done with market. So let's do a quick recap of what went on in today's trading session. The Nifty goes on with good gains, close to around 100 points return is what we are seeing on Prime Minister Narendra Modi's birthday. The Nifty up 100 points. The Nifty Bank doing a little bit better. That was up 350 points in today's trading session. What led the way? From the banking names, you had SBI that was up and about in today's trading session. Kotak Mahindra Bank as well went on with a gain of close to around 1.5%. Besides the banking and financial names, you had Tata Consumer that was up 4%. Big move is what we saw out there. BEL, they're winning a large amount of orders. The street likes it. That stock was up. CLSC upgrades. Ultratech Cement. Stock goes on with a gain of around 1%. What didn't participate? You had Bajaj Finserv that was down close to around 1%. Titan was down close to around 1%. Hindalco as well was down close to around 1%. And since the metals came in for mild profit taking, you had Vedanta that had an added spoke to it because you had the demerger, the NCLT hearing of the demerger. We didn't get any favorable outcome, and now all eyes are on October 8th. So the stock actually ended down with a cut of around 1%, but actually recovered close to around 2% from the low of the day. From the broader markets, the stock that really grabbed everyone's attention was Urban Company. Big bombastic returns is what we saw today.
Indeed, closing up 63% higher on that. The other notable movers include Shrinkar House, the other new listing on Mobile Global, PC Jewelers, Belrise Industries, KNR Construction. Many PSU banks were higher in trade. In fact, Bank of Maharashtra, PNB, State Bank of India in the frontline pack, Canara Bank. PSU banks continue to see a lot of interest. On the way down, you had softness in Vodafone Idea, retracing some of yesterday's up move. NHPC, Ola Electric ending in the red. All in all, the Nifty closes well, higher again, up about a third of a percentage point at 25,350. The Sensex at 82,700. It's a wrap and closing bell. Don't go anywhere. Markets Forward is up next. Dalal Street extends Tuesday's gains. The Nifty ends at an over 3-month high. Banks see buying. The Nifty bank gains over 0.5%. Mid-caps underperformed the blue chips.
The urban company stock races up after listing at a 58% premium to its offer price of 103 rupees, implying a market cap of over 23,000 crores. The strong show points to big investor appetite for top B2C platforms.
Dreamfolks hits lower circuit as it exits the domestic airport lounge business. AB Fashion and Retail gains after a new brand launch, while Shringar House also lists at a 14% premium to its IPO price.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Reema Tendulkar. Reema, what a day. We're building on gains over 3-month high for the Nifty. No complaints.
Indeed, and there was this minor wobble, a drop that the Nifty saw at around 230, but that was bought into towards the end of trade. And the Nifty finally ending comfortably above 25,300. It's just been a strong showing for the last 2 weeks. We had 8 good days on the trot. We consolidated on Monday, saw a bit of profit booking. Yesterday, we were higher, and today, once again, markets closing up with a gain of about 0.3%. And the good part is banks led the action today. You know, we've been complaining that banks were struggling. Yesterday, it crossed 55,000 in terms of a headline number, and today, nearly at 55,500.
Yes, absolutely. So no complaints really coming in for the markets. It is the Bank Nifty which really outperformed with a gain of around 0.6%. And what stood out is that there are slow and steady gains. For example, on a month-to-date basis, the Nifty is already up around 3.7%. So that's the kind of gain that we've seen on a slow and steady basis for the markets. And separately, just want to point out that the broader markets weren't left behind with a gain of around 5.6% on a month-to-date basis. So that's how the markets panned out. As of now, we have the Nifty, which is cruising at around 25,330. Let's see what tomorrow holds. But let's tell you what we have lined up and in store for you. We start with the top movers and shakers of the day with Hormuz. The cement space was buzzing in trade over a positive brokerage note and commentary, while MCX also jumped up. The SEBI chairman said they would allow banks, pension funds and foreign investors to trade in non-agri commodities. Last but not the least, we delve into the key market events to watch out for in tomorrow's trading session. But on to our first segment of the day. Hormuz now joins in to tell us all of the top movers and shakers of the day.
Hormuz. We've been mentioning right through this week that the banks will be the sector to watch out for, and it is delivering on that. The Nifty Bank today doing well. PSU banks were the ones that were shining. Some remarks coming in from the DFS secretary as well. And look at these gains. Gains anywhere between 3 to 4%, including those in SBI, and the low float PSU names like Central Bank, UCO Bank, IOB also did fairly well in today's session. Defense stocks continue to power up as well. Garden Reach, another day of gains for the stock. Zen Technologies was locked in a 5% upper circuit. Gains also seen in Data Patterns, Idea Forge and MTAR Tech continues to move higher ever since the management spoke to us last week, setting out some strong revenue growth targets for the next few years. Among the newsmakers, of course, Vedanta grabbed the spotlight in the second half of the trading session. It fell as much as 3%, but then recovered from the lows. Aditya Birla Fashion is the one that we wanted to speak about, ended 4% higher today. MCX and Dreamfolks are 5% lower circuit, and Hyundai Motors after that wage settlement announcement ending 2% higher as well. And lastly, stocks that ended at a 52-week high in today's session. Banco Products continues to move higher, another 8% added today. Affle had a good day. Shaley Engineering, Lumax Industries also a 5% advance here, ending at a 52-week high. Back to you, ladies.
Thank you very much for that. In fact, those were the top stock movers. Let's go across to our guest, Mayuresh Joshi. We were in conversation with him even on closing bell. And let me invite Shrikant Chauhan, EVP at Kotak Securities, on the show. Shrikant, let me start with you. We thought there would be some sort of resistance around 25,260, 25,300, but markets have comfortably eased past it. What next, technically, and what were the stocks that look interestingly poised for the next two trading sessions?
Yeah, good afternoon, everyone. So for Nifty, it is very clear that it is heading higher. It has crossed its previous swing high level, which was around 25,150. And now, yes, it is facing resistance because after hitting the levels of 25,350, 400, we can see almost 80% retracement of the entire fall that we witnessed from the levels of 25,675 to 24,300. And most of the time, whenever the market retraces 80-85% of the entire fall, we see some profit taking in the market. But the way the market recovered and there is a broader participation in the market, I'm to say banks, PSU banks, as well as Nifty IT index, it's supporting in this up move. That means the broader strength of the market is much, much better. And in case if there is any correction, then it will be an opportunity for creating furthermore long positions. Now, the market should not break the level of 25,000. That's the condition to watch out for. And in case if it sustains about 25,000, then there could be very high chances of crossing 25,675 and eventually maybe 26,000. So broadly, I'm of the view that tomorrow, because of any reason, market corrects backs to the levels of 25,150, 100. There we should look for taking some contra bet of going long in the market.
Okay, all right. Well, let's talk about the big stock of the day and the big debut. The new age tech firm Urban Companies saw a stellar debut on the exchanges, listing at a premium of 60%. Manglam is here with all of the details on this excellent debut. Manglam, over to you.
Well, it was a stellar listing indeed for Urban Company, and this is a company that, moves unorganized daily home services into the organized industry, and the street really liked it. For starters, the issue was very well bid for. A 1,900 crore issue saw subscriptions of over 104 times. Interestingly, while the qualified institutional investors led that, we also saw oversubscription coming from HNIs, the retail investors, including the employees of the company that subscribed to the issue by over 37 times. So that was a big positive, or that told you that there is going to be a big up move on the listing itself. The other reason why the stock did extremely well was the overall size of the opportunity. Less than 1% of this market is organized right now, and the street believes that this will likely grow faster. And as we've seen the case with platform companies, as they turn a corner, profitability rises exponentially as well, and that's what the management had said too. They are looking at profitability over the last few years. The 700 crore incremental revenue that they've added, that's translated into 300 crore plus EBITDA. They also have the extended business of hardware native, which is showing good growth, and operating leverage is likely to play out there as well. The street believes this 35% revenue CAGR, if that continues, and the operating EBITDA margins doubles from current levels of around 1.5%, then maybe the stock at around 100 times, given the growth potential, is not particularly very expensive, largely because of the growth potential that we've seen. Mind you, the market cap of Zomato is over 3 lakh crores. That of Swiggy is over 1 lakh crores. Even after a big stellar rally on day one, Urban Company market cap is just around the 25,000-26,000 crores.
We see our business in parts. There is the very profitable core in India, which is growing well. It has been profitable for the last year or so. It had a 3% adjusted EBITDA margin as a percentage of NTV last year. That went up to about 4% in the first quarter. And I think that core will have to continue to compound well, grow well, and continue to compound profitably. The new segments where we are, which is InstaHelp, Native, I think these are the areas where we will invest. And at the right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy.
A lot of thoughts running in my mind at the same time. Right from times we spent together in college, when we, after college, decided that we need to get together and do something in the service of India over the next many decades, to the many months the three of us spent the streets of Delhi trying to really identify what business we should build that will create large impact in the lives of millions of Indians and be a company that they will look forward to, a company that will make a difference to their daily lives. And then like a fast forward of the last 11 years, while I was trying my best trying to hold emotions back.
All right, so that's the big debut. But let's move on to the cement sector now. Stocks such as Ultratech Cement and Shree Cement gain, buoyed by ratings upgrade from global brokerage firm CLSA. Nigel is here with the details on why CLSA is betting big on the sector. Nigel.
Well, that's right. CLSA came out with a note on cement, and they are turning more constructive on the space as they see an uptick in terms of profitability. The few points that they mentioned, they are estimating upgrades for companies which will be helped by pricing discipline and also will be helped by coal cess elimination. So that's what's broadly going to help them in terms of profitability from here on. They go on to say that Ultratech is best placed to benefit from cost savings initiatives as well as the organic expansion that they have already announced. In terms of preference of stocks, they upgrade Ultratech to the high conviction. They have an outperform rating out there. The target price they placed at around 14,700 rupees per share. Shree Cement out there as well, they've upgraded to an outperform. The target price at around 33,500. And Ramco, they've upgraded to hold. The target at around 1,040 rupees per share. They maintain their outperform rating both on Ambuja Cements as well as on Dalmia Bharat. So CLSA turning more constructive on the cement space for a whole host of factors. Back to you.
Thank you, Nigel, for that. Mahirish, there is a lot of optimism going, for the cement companies. In Q1, also we saw a recovery in EBITDA per ton, and the expectation is pricing will hold the EBITDA per ton. The realizations will remain fairly healthy for the full year. Do you like cement as a sector and your preferred pick?
Yes, we do, Rima. And again, I think the rationale that has been put out in terms of reasonable volume growth expected Q3 onwards, I think that should sustain quite reasonably. Second, I think the consolidation that you've probably seen in the industry and are witnessing in the industry as well, that will lead to better pricing. Third, I think the input costs have largely stabilized, which now means that along with the internal power dynamics that is taking place, whether it's waste heat recovery or otherwise, the overall cost should start coming down. And a combination of these factors will mean that volume growth should sustain going forward, pricing should be in their favor, margins should show improvement, which means the reported EBITDA on an absolute basis and EBITDA per ton should see sequential improvement as we head into the next few quarters. Obviously, I think the capex from the government when it comes to rural, urban, affordable housing, infrastructure should sustain, obviously aiding and abetting the entire growth that one probably looks at. So yes, I think positive on the sector as a whole. Out of the large stocks, large cap stocks, Ultratech, JK Cement, is something that the ratings and rankings look extremely fine as far as markets with that is concerned. Within the mid-cap universe, what we've kept on our radar is JK Lakshmi Cement, with capacity expansions expected and all these factors acting as tailwinds.
Okay, Shrikant, would you have any view on the technicals of a couple of these counters? On a week-to-date basis, the likes of Ultratech, JK have rallied around 2.5–3%. Any upside from here on?
Yeah, I think Ultratech Cement or even if we consider Shree Cement, both are very close to their resistance levels on long-term charts. But if we consider the technical pattern of Dalmia Bharat, then there we can see furthermore continuation in the near term. Currently, it is around 2,500 sort of levels. It is forming ascending continuation triangle formation. And on the dismissal of the level of 2,500, we can see the levels of maybe 2,750 or 2,800. So there is more juice left for Dalmia Bharat as compared to Ultratech or Shree Cement. But yes, in that space, specifically, I'm going to say out of these two stocks, Shree Cement should do well. It is very close to its resistance, but overall formation is suggesting us that the stock can perform from here.
Got that. Let's move on then to the other big story. In a boost to commodity exchanges, SEBI chairman has said the regulator would permit banks, pension funds and foreign investors to trade in non-agri commodities. He said this at the sidelines of an MCX event. He added that boosting the commodity market is a key priority of the regulator. Listen in.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodity space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets.
Okay, and MCX in fact rallied after the SEBI chairman said that the market regulator would allow banks, pension funds and foreign investors to trade in non-agri commodities. In fact, she's here, joins in with more details. Vamakshi, it's a big boost for commodity exchanges.
Well, absolutely, Ekta. Now one of his comments, that is, they were currently examining a proposal to allow FPIs to trade in non-cash settled, non-agri commodity derivative contracts. That is an important one. Now, keep in mind that FPIs are already allowed to participate in the cash settled non-agri commodity derivatives. And in fact, in their annual report, which they released on August 12th, they had indicated that they would review this existing framework and explore alternatives to allow FPIs to invest or rather trade in non-cash settled non-agricultural commodity derivatives. Now, why is this important? Because currently, since they are only allowed to trade in the cash settled contracts, crude oil and natural gas mainly is what they're restricted to. But, and if you look at their share as well, analysts say FPI share would be around 5% in total volumes, 8% overall in the energy basket. Now, with the regulatory approval, if that does come through for the non-cash settled contracts, they will also be able to participate in bullion as well as base metals. Now, the other comment that came in from the SEBI chairman was on GST-related challenges. They believe that they will be engaging with the government in order to solve these challenges. And analysts say that in the past, this was one of the key issues in order to, that was sort of challenging the pickup in volumes. Now, it's positive for MCX, likely to boost liquidity, deepen India's commodity markets and likely to boost volumes as well over the long term.
Thank you. Let's move on to the other stocks in news. Dreamfolks hits a lower circuit as it exits the domestic airport lounge business. The other one is AB Birla Fashion, Aditya Birla Fashion, which gains after a new brand launch. And not to forget, we had a second listing today, not just Urban Company, though that stole the limelight. The Shringar house of Mangalsutra also had a good debut, surging 14% at open, closing 12% higher. Gaurav is here with the details on all these three.
Well, let's talk about Aditya Birla Fashion. Now, this company has said that they have opened a new value retail brand owned. Now, this brand will actually replace their existing brand Style Up, and company has also said that by the end of FY26, they will have around 100 stores with this brand. Now, company also says that owned is inspired by youth culture, and this also resonates the value-driven Gen Z. So, definitely, this is something that the market has taken in a positive way, and as a result, we saw some uptick in this counter. On the other hand, when we look at Dreamfolks, company has said that they have discontinued the services at domestic airport lounges. Now, if we look at the revenue proposition, around 93% of their revenue comes from the lounge services. And if we look at domestic lounges, they had around 76 domestic lounges by the end of Q1 FY26. So definitely, that is something which is going to be materially impacting the company's numbers. And as a result, we saw some reaction in the stock price as well. And let's also talk about Shringar House of Mangalsutra now. This company recently made its debut on the stock market. Today, at the IPO price was set at 165, but it made its debut at a price of somewhere around 188. And they also closed with a gains of around 12%. So definitely a decent set of number in terms of debut is what we can call for this company in a day today.
Okay, all right, Gaurav, thanks very much for that. So yes, interesting set of stocks there. Mayuresh, wanted your quick opinion on all three of them. Aditya Birla Fashion and Retail with a new brand. We have a new listing as well. And separately, your thoughts on a couple of these broader market stocks.
So I think as far as Aditya Birla Fashion is concerned, I think Pantaloons was flattish last quarter in terms of revenue growth on a year-on-year basis. The ethnic business probably did very, very well. The TMRW vertical did excellent as well with the maximum amount of growth. And therefore, I think the organic growth momentum might very well continue. margins actually inched up from 7.3 on a year-on-year basis to 9.3. And the shift that you're probably expected to see with discretionary spending expected to go higher as the festive season begins, I think that can probably provide more momentum and boost, both in terms of top line and margin. So the momentum can continue, but we'll still wait out for Q2 numbers. For the new listing, I think not really covered that, so very difficult.
Thank you, gentlemen, for joining in today. Need to get into a break. On the other side, we'll get you the top corporate voices along with that, the key market events to watch tomorrow. Stay tuned.
Welcome back. Well, now let's go across to our corporate corner. First up is Yatharth Hospital. It recently acquired Agra-based Shanti Ved for 260 crores. The management stated Agra is a very promising market for the hospital chain. Further, it expects 10% annual growth in average revenue per occupied bed for the next 3 years at Shanti Ved. Further, it anticipates occupancy in Shanti Ved to triple in 3 years. The hospital chain is committed to expanding through brownfield and greenfield projects. It plans to fund such deals with internal accruals going forward.
Okay, moving on. The management of Lakshmi Organic Industries is optimistic on the growth opportunities coming in the fluorination segment. They expect to achieve peak revenues of 200 crore rupees in fluorination in FY27. They also expect to hit about 100 crores of fluorination revenues in FY26. The company has overall outlined 1100 crore of capex. And this includes the expansion of 75 crores immediately in the fluorination segment on account of the Hitachi deal. As I said, the phase 1 is about 75 crore rupees.
Okay, and before we wrap, we'll bring you some key market events to watch out for. Gaurav's here to tell us more.
Well, first let's talk about US market. We will get jobless claims data, so that is something that we will be watching out for. But other than that, there are a few things and much more action happening across the central banks of the world, because FOMC meeting now it is scheduled, and we will see some rate cut decision if they will go ahead with rate cut or not. And it will also be followed by Mr. Powell's press conference. So definitely that is something, a key event to watch out for. Other than that, from UK, Bank of England's meeting is also scheduled. There also we will see interest rate decisions. Let's also watch out for that event. And from the Japanese market, now Bank of Japan is also scheduled to meet between 18th and 19th of September. So definitely we will be watching out on what is happening on the interest rate front across all these central banks. Other than that, from the Indian market, we do not have anything specifically to the companies, but Piyush Goyal is going to visit UAE from 17th to 19th of September. Now Minister is going to meet counterparts, and he will also expedite the work on Bharat Mart in UAE. At the same time, they will be also exploring some pathways to access the African market. So definitely in an environment where many macroeconomic activities are happening, let's also watch out if something unwinds from this meeting from Indian market perspective.
Thank you. But as you said, top of the agenda will be the rate cut decision. 25 basis points seems to be priced in by the market, widely expected. The question is pace of easing thereafter. That brings us to a close in this edition of Markets Forward. Thank you for watching.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end at the highest level in over 3 months. Rupee gained some lost ground against the US dollar and is the best performing currency in Asia today. All eyes on the US Federal Reserve as it announces its rate decision late today. The street expects the central bank to lower interest rates by 25 basis points, but will keep an eye on its policy outlook. Europe opens higher. Gold prices open slightly lower, but still near record highs. US President Trump dials Prime Minister Modi on his 75th birthday. Trump thanks Modi for his support on ending the war in Ukraine in what is the first phone conversation between both leaders since the US imposed 50% tariffs on India. The union government doubles down on its opposition to the Vedanta demerger, claims demerger could defeat government claims of over 16,000 crores. Government argues that Vedanta has shown a rosy picture by misrepresenting assets. Also flags lack of disclosure about pending liabilities. Vedanta says it is willing to give corporate guarantees. SBI shares gain as it completes the sale of 13% stake in Yes Bank to Japanese conglomerate Sumitomo. SBI gains nearly 9,000 crore rupees from the stake sale, now holds a little over 10% stake in Yes Bank. Urban Company makes a stellar debut on the Dalal Street list at a 58% premium, reflecting a market cap of over 25,000 crores, highlights a strong investor appetite for B2C platforms. The management tells CNBC-TV18 that it wants to be the operating system for people's homes. A boost to commodity exchanges. Market regulator SEBI will permit banks, pension funds and foreign investors to trade in non-agri commodities. A leadership churn at Nestle. Company's chairman steps down 2 weeks after the CEO resigned after an undisclosed affair. Joins a long list of companies to see a top-level churn in the last couple of years, including Unilever, Diageo, Starbucks, among others. Dozens of Palestinians killed in Gaza City as Israel continues its ground assault. Despite international condemnation, Israeli forces say the offensive in the densely populated city will take several months. US President Trump begins his state visit to the United Kingdom at the Windsor Castle amidst protests. Police arrest 4 people after images of Trump and late sex offender Jeffrey Epstein were projected onto Windsor Castle. All right, let's start with the day's market action. Sensex gained over 300 points and the Nifty gained over 90 points to move above the 25,300 mark. Financial stocks led the rally with the Nifty Bank Index gaining nearly 350 points. Mid-caps marginally underperformed the blue chips, but the index managed to hold its head above water. All right, let's talk about the currency market. The rupee regained some lost ground against the US dollar. The Indian currency gained over 23 paisa to move below the 88 mark against the greenback. The dollar index has seen some weakness in the last few days. The rupee was the best performing currency in Asia today. All eyes will be on the US Federal Reserve as it announces its rate decision late tonight. Wall Street expects the central bank to lower interest rates by 25 basis points, according to a CNBC survey. Almost all respondents believe the Fed will cut rates by 25 basis points. Just 41% think that's the right move. Remember, the Fed has kept rates unchanged for 5 straight meetings over 9 months. And you can catch CNBC coverage of the Fed decision tonight from 11 p.m. onwards. All right, let's talk about the top story that we are tracking this evening. US President Donald Trump dialed Prime Minister Modi on his 75th birthday. Trump thanked Prime Minister Modi for his support on ending the war in Ukraine. This is the first phone conversation between both leaders since the US imposed 50% tariffs on India. Parikshit Luthra has more. Parikshit.
Well, this phone call really puts the relationship back on track. There has been a lot of strain in the India-US partnership, especially because of the additional penalty tariffs imposed by Donald Trump and also the sharp rhetoric coming in from the Trump administration against India. Having said that, it was the US side which initiated this call. Donald Trump dialed Prime Minister Narendra Modi and wished him on his 75th birthday. He went on to say that the Prime Minister is doing a tremendous job, and he even thanked him, and this was the important part, he thanked him for support in ending the Russia-Ukraine war. So we will have to wait and see what kind of understanding and conversation took place when it comes to the Russia-Ukraine war. But the Prime Minister too, in his tweet, said that he supports US initiatives in ending the Ukraine war. The Prime Minister also said that he is completely hand in hand with Donald Trump when it comes to elevating and taking forward the US-India comprehensive and strategic partnership to newer heights. This also happened on a day when there were trade negotiations between USTR Chief Negotiator Brendan Lynch and India's Chief Negotiator Rajesh Agarwal in the Commerce Ministry in Delhi. Those talks took place for about 6 hours. Both sides described the talks as positive. They also said that they will now be discussing the next steps in the trade negotiations. The Indian side also said that efforts will now be made to intensify trade negotiations and reach an early trade agreement. So this indeed is good news. Virtual negotiations will now follow in the next few days. But all in all, very positive messaging and signaling between the two sides, and shows that all of those people who had been doubting the strength of the India-US partnership have been proved wrong. This relationship remains on track and is on a very positive trajectory.
Right. Thank you, Parikshit, for that update. Moving on, the State Bank of India has completed the divestment of a 13.18% stake in Yes Bank to Japan's Sumitomo Mitsui Banking Corporation for about 9,000 crore rupees. The transaction involved the sale of 413 crore equity shares of Yes Bank at 22 rupees a share. SBI's shares rose following the news. Sumitomo Mitsui Banking Corporation will emerge as the single largest shareholder in Yes Bank after this deal. Shares of Marico closed with cuts after the Income Tax Department carried out surveys at the company's facilities. Sources tell CNBC-TV18 the Tax Department's Mumbai unit is leading the exercise. Over 200 officers are conducting searches across several Marico offices pan-India. Further details on the investigations are still awaited. Shares of Vedanta fell sharply after the government doubled down on its opposition to the Vedanta demerger in the NCLT. The government told the tribunal that the demerger could defeat its claims of over 16,000 crore rupees. The government also argued that Vedanta has shown a rosy picture by misrepresenting assets. Ashmit Kumar is here with more details on the hearing. Ashmit.
Well, the government doubling down on its objections against the Vedanta demerger scheme. The government has 4 concerns. The first is with respect to financial security. The government claims that they have overall claims of 16,000 crore rupees specifically against Vedanta and specifically against one of the proposed demerged entities, which is Malco. Here, what the government claims is that while its overall outstanding claim of 16,000 crore rupees is safe in the hands of Vedanta, which has assets of over 2 lakh crore rupees, it's not so much safe when compared to the assets of Malco, which is only 29,000 crore rupees. The government flagging that the company, in fact, had negative net worth as of the 31st of March 2024, and that all of this may well be a ruse to defeat the government's claims. That's one. The second is misrepresentation of assets. The government claims that it had sanctioned a few hydrocarbon blocks to Vedanta for exploration, while these are owned by the government. The government's claims is that Vedanta cited it as their own assets and then raised huge loans, massive loans on the top of those claimed assets, and this is something that has been done without the government's nod. The third is with respect to not enough disclosures. The government pointing out that they are in the midst of an arbitral dispute against Vedanta. Their claim is 5,900 crore rupees, but it has simply not been disclosed. And finally, number 4 is with respect to SEBI's disclosure norms. Government saying that there is a case to be made for violating SEBI's disclosure norms, the LODR regulations. On the back of all of this, Vedanta saying that, look, we're all kosher. We've secured nods from SEBI, from the exchanges, from creditors, from shareholders. Also going on to say that they're willing to go a step further and even issue a corporate guarantee to secure the government dues. Now, the NCLT has heard all of these sides, all of these arguments. The next hearing in this case, we understand, is on October 8th.
Right, thank you, Ashmit, for that. Shifting focus now, Urban Company made a stellar debut on Dalal Street listing at a 58% premium, reflecting a market cap of over 25,000 crore rupees. The listing highlights a strong investor appetite for B2C platform. Speaking to CNBC-TV18 Urban Company's CEO Abhiraj Bhal said that the company wants to be the operating system for homes in the next 10 years. Further, he also said that Urban Company's native brand will further expand beyond water purifiers and electronic door locks.
The right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy. I think today we are playing in many services, but not the end state of everything we can do. So in the end state, any service in the four walls of your home will very much be part of our ambition and our playing ground. And similarly, we are imagining a connected ecosystem inside your home of devices which have a strong affinity with our service ecosystem and our platform. So more than a services company, we think of ourselves as a home platform, and that's what we're building. It's hard to see it today, but I think over the next 10 years, this will play out. And we want to be the operating system for your home, the backbone for your home.
Prime Minister Narendra Modi marked his 75th birthday launching a slew of development initiatives in Madhya Pradesh's Dhar district. Speaking at a rally in the state, Modi said, hailing Operation Sindoor, that the new India doesn't fear nuclear threats. President Draupadi Murmu, along with world leaders like Italy's Prime Minister Giorgia Meloni, Russian President Vladimir Putin and Israeli Prime Minister Benjamin Netanyahu, have sent their wishes. The Prime Minister also received wishes from the top leaders of India Inc. on his birthday.
हमारे वीर जवानों ने पलक झपकते ही पाकिस्तान को घुटनों पर ला दिया। ये नया भारत है। ये किसी की परमाणु धमकियों से डरता नहीं है। ये नया भारत है, घर में घुसकर मारता है।
Today is a festive day for 1.45 billion Indians. It is the 75th birthday of our most respected and beloved Prime Minister, Shri Narendra Bhai Modi ji. God Almighty himself has sent Modi ji as an avatar Purush to lead our motherland to become the greatest nation on earth. It is my deepest wish that Modi ji should continue to serve India when independent India turns 100.
Prime Minister Modi, my best wishes to you on your 75th birthday. I wish you good health and continued strength as you lead India's fantastic progress and contribute to global development.
He is one of those people who have made the largest impact in the history of our nation in terms of the growth and development of our nation.
His attention to detail, his focus on execution, and his ability to think in an inclusive manner were very clear to me even then.
He is the man who has made India get respect internationally.
The one big quality that I know about Prime Minister is that he's very curious to know what is happening in the environment.
He strongly believes that business has to be left for the business world to handle it. And him and his government must become facilitators. And for that, we have seen enough work being done over the last 10, 11 years.
And I was even telling that we have the highest number of the 90 years old people who were taken our Covaxin. He said, why 90? 96, my mom took Covaxin.
Its toll in Uttarakhand has risen to 15 after a cloudburst triggered landslides and flash floods on the intervening night of September 15th and 16th. The national and state disaster relief forces are conducting rescue and relief operations as several people are still feared missing. The disaster caused extensive damage in Dehradun with around 13 bridges impacted. The Met Department has indicated a low to moderate risk of flash floods in select areas in the state. The Information and Broadcasting Ministry has issued takedown notices to several journalists, media houses and content creators. This includes News Laundry, The Wire, Ravish Kumar and Dhruv Rathi. In total, 138 YouTube links and 83 Instagram posts that mention the Adani Group have been flagged for removal. The directive follows a Delhi court's gag order in a defamation case filed by Adani Enterprises. Journalists Paranjoy Guhathakurta, Ravi Nair, Abir Dasgupta and others have filed their pleas challenging the ex parte takedown order before the Rohini court. The court will take up the matter tomorrow. All right, on to a CNBC-TV18 exclusive. Sources say that online travel agencies have reached out to the CBIC over the new GST rate on hotel bookings below 7,500 rupees per night. The agencies warn that the removal of input tax credit benefits will increase their costs and hurt their business. Timsy Jaipuria is here with more.
Well, even as the government gets ready to roll out the revised GST rates from the 22nd of September, concerns are mounting from different sectors. Sources say that the latest to raise a red flag are online travel agencies or OTAs. They've approached the Central Board of Indirect Taxes and Customs or the CBIC, seeking urgent clarity on how hotel bookings will be taxed under the new regime. Let's explain it to you as to what is bothering them. Hotel rooms priced up to 7,500 rupees per night will now attract 5% GST without input tax credit. OTAs say that this change could hit their businesses hard because until now hotels prepaid GST on bulk bookings and that input credit could be passed on by portals to the consumers. But with ITC now withdrawn, costs for OTAs are poised to go up and that may eventually push up the room tariffs for customers too, booking through these platforms. Industry players warn that this undermines the very principle of seamless credit under GST and could especially hurt budget and mid-scale hotels, which is the backbone of the online bookings. Further concerning is, with the festival travel season approaching, OTAs are pressing the government for an urgent intervention. And now, the big question is, will the New Delhi or the CBIC roll back or tweak this move? Something that we'll have to wait and watch for.
Thank you, Timsy, for that update. On that note, we'll take a short break. Coming up next, chairman of the Nestle company steps down 2 weeks after the CEO resigned over an undisclosed affair and joins a long list of companies to see a top-level churn in the last couple of years. Welcome back. Israel has killed at least 33 Palestinians throughout the Gaza Strip since dawn. This includes 5 who were killed on an attack in the humanitarian zone. This comes as Israel led an intense ground offensive after massive bombardment of Gaza City. Israel has said it announced a temporary new route for residents to flee. From one war-torn country to another, Russia launched 100 drones across Ukrainian cities last night. The Russian army said that its drones hit a gas distribution station serving the Ukrainian military. Ukraine's President Zelensky has said that Russian forces launched over 3,500 drones and nearly 190 missiles across its cities in September. This comes as President Trump's administration approved its first military aid package for Ukraine. President Donald Trump and First Lady Melania have arrived in the UK for the second state visit. The US and Britain have announced a tech pact to deepen cooperation in AI and civil nuclear energy, hailed by them as a cornerstone of future innovation. Trump's visit was met with protests in several cities, with more planned in central London. Activists criticized his stance on immigration, climate change and social justice, calling his policies divisive. Tensions rose after 4 people were arrested for projecting images of Trump with convicted sex offender Jeffrey Epstein on to Windsor Castle. Police shut down the protests quickly. Trump and the First Lady will also meet Kings Charles and Queen Camilla before a state banquet with the royal family. He will head to Chequers tomorrow for talks with Prime Minister Keir Starmer. All right, a leadership churn at Nestle. Company's chairman steps down 2 weeks after the CEO resigned over an undisclosed affair. With this, Nestle has joined a long list of companies to see a top-level churn in the last couple of years. Shilpa Ranipeta is here with more. Shilpa, please take us through the churn at Nestle and the largest shake-up at FMCG companies.
Well, you're right. It's another top tech shakeup at Nestle in just 2 weeks. Now, longtime chairman Paul Bulcke is stepping down earlier than planned, with Pablo Ayala set to take over from the 1st of October. Now, this comes after CEO Laurent Fresh was ousted over a misconduct scandal on the 1st of September, the second CEO exit in barely a year. And this is after Mark Schneider was removed in 2024 for poor performance. Now, Fresh's exit comes it also added governance lapses to investor concerns, causing Bulcke to step down even earlier than earlier planned. Now, the back-to-back exits highlight deep cracks at Nestle that was once seen as a safe haven stock. Now, post the pandemic, the company has been grappling with rising inflation that has caused consumers to cut back. And rising input costs haven't helped either, because Nestle hiked prices to offset this, which worsened sales. Now, sales were down 1.8% in the first half of 2025, and 2024 saw organic sales grow 2.2%, the weakest growth in over 2 decades. Volume growth too has been anemic, just 0.1% in 2022, a decline in 2023, and barely 0.8% in 2024. And the stock has also lost about 40% of its value since the start of 2022. Now, Nestle isn't alone. Across the global consumer goods industry, there has been a wave of churn at the very top since last year. Unilever CEO Heinz Schumacher and Diageo's Deborah Crew were both replaced earlier this year, and both hardly 2 years into the job, and this was due to poor performance. Starbucks, P&G and Hershey's have all seen changes at the top, and PepsiCo is also under investor activist fire now for a turnaround. The message though here is loud and clear. Boards and investors want faster growth, they want leaner portfolios and stronger execution. As for Nestle, as Pablo Ayala takes over as the chairman for the 1st of October, he is tasked with rebuilding trust, stabilizing leadership and convincing investors that the company can grow again. Back to you.
Right. Thank you, Shilpa, for that comprehensive update. And before we wrap this edition of Business 360, we leave you with this report on the life and times of Prime Minister Narendra Modi. Goodbye and thank you for watching.
India's longest-serving Prime Minister Narendra Damodar Das Modi did not come from a political or influential family. He is a simple man with simple roots. Born on 17 September 1950 in Vadnagar, Gujarat, Narendra Modi is the son of Damodar Das Mulchand Modi and Hiraben Modi. He is the third of 6 children. In his early years, Modi helped his father at a small tea stall at Vadnagar railway station, an experience he says not only shaped his connect with the average Indian, but gave him insight into what they really need. Teachers remember him as a keen student and a gifted orator. The seeds of his political life were sown at the age of 8 when he was introduced to the Rashtriya Swayamsevak Sangh (RSS). He attended shakhas regularly, and by the age of 21, he had become a full-time pracharak, an ambassador for the mission. He also enrolled in the National Cadet Corps (NCC) and later in 1969 worked at his uncle's canteen at the Gujarat State Transport Corporation. Modi formally joined the Bharatiya Janata Party in 1985. His organizational skills helped him rise quickly through the ranks, becoming the party's general secretary just 13 years later in 1998. By 2001, when the then Gujarat Chief Minister Keshubhai Patel's government was under fire for corruption, mismanagement and the mishandling of the devastating Bhuj earthquake, Modi was offered the position of Deputy Chief Minister. He refused. He was adamant he would either take full responsibility for Gujarat or not at all. On the 7th of October 2001, he was sworn in as Chief Minister of Gujarat, a post he held till 2014. He is credited with some of the biggest development initiatives in the state, from privatization of state government companies to attracting global investors through exercises like Vibrant Gujarat. On 12 September 2013, as India geared up for its 16th general elections, Modi was declared the BJP's prime ministerial candidate. The 2014 general elections soon turned into a battle between Modi and the Congress party. His charisma and his oratory won the day. His popularity was boosted through campaigns like Chai Pe Charcha and technologically innovative hologram rallies which captured the nation's attention. Phrases like Modi Wave and Modi Leher dominated public discourse. He became the talking point of the entire election.
मैं नरेंद्र दामोदर दास मोदी
In May 2014, Narendra Modi was sworn in as Prime Minister of India, marking the beginning of a new political chapter. He repeated the feat in 2019 and again in 2024, making history. With his third consecutive term currently underway, he is now India's longest-serving non-Congress Prime Minister. In his 11 years as Prime Minister, he has rewritten Indian foreign policy to present India as a player no country can ignore. Driven social and economic reforms that have transformed villages and cities and towns and sown the seeds that allow the aspirational middle class to believe dreams can come true. Bureau Report, CNBC-TV18.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, the cost of higher education is rising rapidly. It's rising in double digits in many parts of the world. And also, the inflation is quite real here in India. the annual cost of actually studying overseas can range from anywhere between 20 lakh rupees to as much as 50 to 60 lakh rupees a year in some of the markets like the US. Therefore, on the show, you guessed it right, we're putting the spotlight on how we definitely need a plan to fund the higher education dream, either if it's for yourself or, of course, for your child. And joining us to decode this rather complex world of higher education loans for India or for overseas, we have with us Radhika Binani of Paisa Bazaar and Ankit Mehra of Gyan Dhan. Ladies and gentlemen, thank you so much for joining in. Radhika, welcome back on the show. And Ankit, it's a great first appearance, so we're looking forward to this call. Now, Ankit is someone who, as a founder of Gyan Dhan, is really in the thick of this because I believe, Ankit, that your platform provides advisory services to students as well. You're into funding as well. So let's start with the big elephant in the room. Given what's happened with tariffs and President Trump taking office, what is the mood like out there? Because every day there is a new headline on visas, the availability, interviews not happening. So, how have students and the whole community responded so far this year?
You're right. I think there is an element of fear out there. I think, and it gets perpetuated by yet another tweet or yet another article that comes out. I think, and going back to your point around the cost of education is fairly high. So if anyone is gonna invest 60 lakhs a year for 2 years, they would want a return out of it. So I think the concern right now is people are genuinely fearful in terms of what will happen once they graduate. And in some cases, will they even be allowed to graduate or not, right? I think some of these concerns are not really grounded in reality. It is just a fear factor being perpetuated. I think our belief is, and that's what we counsel students as well, is I think this is just an initial Trump rhetoric that might pass on. There are certain elements that students need to be cautious about. So I think our basic tenet or request to the student is try to understand what course are you going for and try to understand the return of that course. Try to assess whether you will be employable once you get that degree or not. I think that's the most important thing. But yes, to your point, I think in the first quarter of this year, when we talk about the US visa numbers, they were down some 30-odd%. So the volumes are definitely down. In the US specifically, the issue also had to do with the fact that the visa offices were closed. So there were multiple factors at play. I think by the end of the year, we do expect that there will be some kind of normalcy that will return. And we expect that the fall 26, which will be the August 26 intake, will essentially be a resumption of normalcy.
Okay, well, fingers crossed. And hopefully, even we don't have too many additional negative headlines and the visa issue doesn't spiral out of control. But I'm just curious, before we start talking about the financing part of it and the planning part of it, what are the trends saying that in the last 12-odd months, because so much is happening with the US, are there other geographies or newer geographies which are now attracting Indian students?
Yeah, so that definitely what's happened is there is a substitution effect. So if I was a student who is planning to go abroad for higher education, there are two sets of students. One set of students who are intent on studying in the US for some reasons. For them, it's really a case of either they have to make that decision right now or they might choose to defer it by a year.
Sure.
But a large chunk of students are then saying, hey, what are the other alternatives? And what we're seeing right now is mainland Europe, specifically Germany, and then the other countries like Italy, Spain, France, they are emerging as new hotbeds of higher education. So we are seeing students who would have otherwise gone to US looking at Germany as an option, looking at Spain. Even stuff like UAE and Japan are emerging as kind of destinations of higher education. So we are seeing some non-traditional geographies getting benefited outside of the top four. So traditionally, when you look at higher education, you had the top four, which was essentially your US, Canada, Australia, and UK.
Yeah.
Now it's becoming more like a top 10 or a top 12 with these other countries coming into the picture.
Okay, all right. So those are the initial trends with which we're setting context to this conversation. Radhika, now let me come to you because it's time to start talking money because all of these aspirations and dreams, they need to be funded, right? And as the numbers were just telling us, the data that we put up on the screen, the numbers are fairly significant. Now, as a parent, I think what comes to mind is that all parents have their own savings kitty and they have their investments basket. So the first question is, what is the balance? Should I be using a part of my investments to, fund my child's higher education? Should I be taking a loan? What's the right mix? Do I do both? So what's the starting point?
The first starting point is how much
early are you thinking about this question? I think that's when the real, the good answer will emerge. Otherwise, if the child has to go next year and you're thinking about it this year, the options are very far and few between. Assuming that you have given yourself a certain runway to be able to plan that, it would be a mix, really. There is no real answer. It will be a mix of your long-term savings, of potential scholarships, and some amount of funding through, say, part-time jobs that the child can suffice with, and of course, the education loan. I think I sent my child last year to the US, and we did a mix of all of these to ensure that we are able to manage within a certain larger financial plan that we had for ourselves. As an adult and as a parent, one of the things which we need to keep for ourselves is ensuring our retirement fund is separate and is not being touched at all. So keeping that aside, apart from that, we need to use a mix of all of these three: long-term savings, education loan, and scholarships, and any other part-time jobs which can ensure that the amount can be brought into play. And other thing which comes to my mind is that we have to ensure that it is like a marathon. So the earlier we prepare, the better we are poised for it.
Absolutely. The earlier the better when it comes to all kinds of investments and financial planning. I take that point completely. Ankit, so let's start by deciding, or taking it step by step in terms of just narrowing down on all the cost heads. The tuition fees is one part of it. Then, travel, living, etc. So how do we start thinking as the student or the parent? How do we start thinking about all of these heads? And typically in totality, then what will be that cost per year, say in a mid-rung US university versus, say, somewhere in Europe like Germany or France? Just some ballpark estimates will help.
Yes, so if we come to the ballpark estimates, as you said at the start of the show, when you talk about the US, the ballpark estimate you should plan for is a 60 lakh outlay per year. And when it comes to Germany, that number...
And this is, you're talking Ivy League or even sort of mid-level institutions?
This would be a mid-rung institution, because when it comes to the US, I think two factors are at play, specifically in the US. One is the location, because a university in New York versus a university in North Carolina will have very different cost of living expenses. Right. And then the other factor will be the low-rung university versus the highly ranked universities, and so on and so forth. So the key thing really is, in the US, if I had to say, on the lower end, you could probably get by with a 35 to 40 lakh budget, but practically you should aim for a 60 lakh budget. If you're talking about the Harvards of the world and MBA, the annual cost will probably be closer to 1.2 crores a year. Right. So that's why kind of a safe estimate would be a 60 lakh on an average. That cost reduces drastically when it comes to Germany, where the cost would probably be in the range of a 20 lakh is what you need to plan for, 20 to 25 lakhs. So I think that is the first thing that you need to think about in terms of costs. Like you mentioned, one of the things is, don't think of tuition as the only living, as the only cost of education. So what many universities have is they have a cost of education page. So they basically list out, hey, this is the tuition fees, and then these are the typical other expenses you would need to have. So general rule of thumb would be, your tuition expenses will probably be anywhere between half to 2/3 of your overall cost of education. So working backwards, if you have the cost of tuition, either double it or probably increase it by 33% or so to get a total cost of education expense.
So what are the other heads that we must kind of tick off in the head? Obviously living expenses, but what beyond that? So tuition and living are the two main components.
Right.
What else will probably come up?
Right. So insurance will be one factor at play. There could be, depending on the program, there could be exchange programs that you might want to enroll into. There might be immersion programs that you might enroll into. There would be the fact that you'll have to get stationery, laptops, blah, 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 all the natural living expenses additional to kind of help you with your education. So I think those are the typical cost items that you would need to budget for.
Okay, all right. So it's really money, and we need to plan for lots of it. So Radhika, coming back to you on that point about using some of your investments or savings and then starting to look at loans. Now, typically, how do lenders look at this? I mean, what is the criteria that they follow in giving out a loan? And I mean, the size of a loan, the interest rates obviously perhaps are market linked, but from a lender's point of view, what makes a suitable candidate?
Yeah, the lenders look at the profile of the admission. So when you go for an education loan, the first question is it a STEM course? So I think there is a higher bias towards STEM courses because they naturally are a income generation kind of courses post the completion. Then they also look at which country, because the political stability, all of that comes into the picture in that sense. So for example, if you're applying for a Poland versus say Germany, I think that kind of a difference kind of thing. And the third is, of course, where is the ranking of the institution? So I think each of the bankers have a implicit ranking of the top 200, 300 colleges. So where does your institute stand and what kind of a student have you been? And if it is a big plus, if you've been offered some kind of scholarship, even if it is 5 to 10% of your tuition fees, that goes as a positive towards you. So these are all the softer part of it, which is looked into for education loan. Apart from, of course, any lending kind of a loan process, that would be what is the income, if the parent is a co-guarantor, what's the income of the parent, and if the loan sizes are above a certain amount, then you need collateral. What's the kind of collateral that you have, and what will be the repayment tenor? What are you looking at? Whether you want to start paying the interest immediately, or you're going to start paying at the end of the 4th year or the 5th year, 1 year post your completion. So all of this goes towards your loan evaluation.
Okay, Sab, you raised some important points there, whether you have a guarantor or if the parent is a guarantor, which brings me to the next question. The types of loans which would be on offer. And Radhika, come in on this, because do all education loans require collateral or a guarantor? Or can I also get a loan even if I don't offer any collateral? What is the difference, the variance, and what is more suitable?
Typically, two things. One is the size of the loan, and if it's an overseas education, then if the size of the loan is higher and it's overseas education, then typically a collateral is required. So if it's above, I think each bank has its different limits. So I think it's typically above 7 lakhs. And if it's overseas, collateral is required. And if it's above 7 lakhs and Indian, collateral is required. Below 7 lakhs, there is no collateral required. So I may be off by 1 or 2 lakhs. It depends on bank's policy, but this is the directional kind of indicator.
Yeah, Ankit, you want to come on this? I mean, basically, we've just heard from Radhika how banks look at screening possible candidates and students. From the student's point of view, what all do I need to check when I'm applying for the loan, and what kind of a loan perhaps would be more suitable?
Sure. I think I'll just correct one thing is, gone are the days when banks would not lend beyond 7.5 lakhs basis without the collateral.
Okay.
So at this point in time, the landscape has changed drastically over the last 10 years. At this point in time, there are banks who have loans without collateral options. So as Radhika was mentioning, depending on the profile of the candidate, what kind of course are you going to? Okay. Is this a STEM course or not? Is it to a top-ranked university or not? You have lenders who are giving out loans in excess of 40 lakhs, 70 lakhs, unsecured.
Unsecured loans?
Yes. So these are unsecured loans.
Okay.
You will have to have a parent as a co-applicant, as a guarantor, but you don't really require a hard collateral.
So just having a guarantor, parent as a guarantor could be sufficient.
So what the lender is trying to do, and that is what we do at Gyan is try to figure out which is the best lender. But what the lenders is trying to ascertain is what does your future employability look like? And if your future employability odds are high, then we are at a place where you can get loans without collateral with a guarantor. And there are international lenders who even give out loans without guarantor as well. So technically, if you get into a top-ranked university, if you get a loan from an international lender, you will get a loan without collateral and without a guarantor.
Oh, okay.
Now, coming back to your point around what students should look for, I think the first thing the students, when they're looking to apply for an education loan, is they should check their CIBIL scores.
Of course.
The credit scores for themselves and the co-applicants.
Parent also, yeah.
Because what ends up happening is sometimes students might have taken these short ticket loans and they might not have repaid, and that might adversely affect their credit scores. So they should be on top of their credit scores when they're applying for a loan.
Sure.
In addition to that, outside of that, really, there is a standard list of documentation around your KYC and around your bank statements that you need to be having in place. Depending on the loan you're applying for. So if you're applying for a collateral-based loan, that's where the technicalities come into the picture. Depending on the region you are in India, you might have different requirements on the collateral documents that are required. So that you can get in touch with an advisor who can help you figure out which kind of documents are the relevant documents needed to apply for a loan.
Okay, all right. That's one part of it answered. We do have to take a quick break. On the other side, there's more to this conversation because remember, if you're going to study overseas, foreign exchange is going to play a part. Now, how do you manage that risk? We'll discuss it after the break.
Let's talk money. Let's talk money.
Welcome back. This week, we are discussing financing and planning for your higher education expenses, whether in India or overseas. And if it's overseas, then definitely the way foreign exchange behaves is going to play a part in that entire planning process. We're in conversation with Ankit Mehra of Gyandhan and Radhika Binani of Paisa Bazaar. Radhika, let me take up this particular point with you, the forex point, right? Because if I've borrowed, say, 60 lakh rupees, just because of currency depreciation versus, currencies like the dollar, I could be off. I mean, my estimates could start going off themselves. So how do I account for this? And how do I try and manage this risk?
Yeah, that's an important question because forex can itself increase your outlay by 10 to 15%, and that's the trend we've seen across many of the current, at least the top currencies against INR. One of the ways that you can do, assuming that some part is financed by your own funds, and for example, one important point: even if you're taking an education loan, there will be some amount of margin money which needs to be paid. So if there's a 100 rupee fee, 85% is typically paid by the bank, and then there's 15% which you have to fund through your expense for your own money every time there is a disbursal happening. So when you're paying money, whether along with the loan or through completely funded by you, there will be a foreign exchange risk that is subject to, because also it's typically around 3 to 4 years down the line. So one way of managing it is to create a corpus in the foreign currency in which the final outgo needs to be made. You could create a deposit account or a ETF, very low risk kind of investments in the foreign currency, and that would help you to be able to take the money out when it is required, when the payment needs to be made. And the other part is that you could ask the student to be able to move the corpus into the account and then take it out at any different points of time. The reason why is every time you transfer money, there is a cost of transferring money also. Apart from the exchange risk, there is a cost. Yeah. So whether it is $1,000 going or $100 going, there's a $15 fee for remittance. So avoid both the scenarios, to also a foreign currency risk as well as the transaction cost. It is always better to have a corpus of 6 months or 1 year, which is in the foreign currency of use.
Okay, got that. Ankit, you want to add anything to this? And you were also mentioning taking the loan itself in foreign currency. Yeah. Tell us how that works.
So there are international lenders who will give out loans in the domestic currency. So you will have international banks who, like Discover in the US, who might be giving loans for certain categories. Okay. There are international lenders like Empower, Prodigy Finance. These are agencies similar to NBFCs in India, okay, in a sort of way, who will give out loans to students, international students who are going for studies in the US or in the European markets. So I think those would be areas you can target. Coming back to the Forex part, I think in addition to what Radhika was mentioning, when you're planning, you can invest through the LRS scheme when you're trying to build that corpus.
Absolutely, and you can keep sort of remitting money, investing in overseas assets, and then use those assets to fund your overseas expenses. Got that point? Running short on time, but not questions. It's an exhaustive topic. But Ankit, just quickly, if you could do a checklist for us, or basically a step-by-step guide, along with the timelines. I mean, let's say if I'm aiming for the next year fall season, 26, when does all this start? The whole process, the planning, the applying for the loan, etc.
Right. So if you're applying for a fall 26, the ideal time would be 6 months before you kind of need the loan. Right. The ideal time would be you check for a pre-eligibility at this point in time. So that at least if there are documents that are not in place, you can arrange for those documents. But ideally, the process will start 4 to 6 months when you're trying to figure out which is the best lender for you. Okay. And the list of documents would, like I said, would really be your KYC documents, bank statements, more importantly, the collateral documents. Because that is the place, that is the reason why I say you need to do a pre-eligibility, because that will help you determine if you need an alternate document created or not.
Okay, all right, fine. We'll keep that in mind. Radhika, any final advice, any tips, any mistakes that we need to watch out for and avoid?
The documentation can really take a long time. Me, as being in financial services, took 2 months to process my loan. One other thing which got missed out is the insurance. The person who's taking the loan, the student has to have insurance. Typically, the loan company asks for them to be insured. So that's another document which was the last-minute surprise that we were slapped with. So that would be something which would be good for people to know.
Okay, start early, start planning, start investing, and definitely be very meticulous with the entire documentation purpose. I think that's the gist of it. And it's a good starting point for our viewers as well who are thinking of overseas education for their children. Thank you very much, Ankit, as well as Radhika, for joining in. Very helpful and insightful conversation. Well, viewers, that's it on this week's edition of Let's Talk Money. We'll see you again next week with another theme. Till then, keep your questions and comments coming in.
Let's Talk Money.
Hello and welcome to News Centre. I'm Parikshit Luthra. Today marks the 75th birthday of Narendra Modi, India's longest-serving non-Congress Prime Minister. From a sleepy town in Vadnagar in Gujarat to India's top political office, the rise of Narendra Modi has also mirrored the rise of the Bharatiya Janata Party. Modi was named as the BJP's prime ministerial candidate in 2013, months ahead of the 2014 Lok Sabha elections. He led the BJP to a thumping election victory, marking a majority for any party for the first time since 1984. He has since led the NDA to 2 more election victories and several state poll wins as well. From world leaders to industrialists to celebrities, tributes poured in from across the globe. Over the next few minutes, we will be decoding the key reforms under the Modi government. We're now joined by R. Bala Subramaniam, member of the Central Government's Capacity Building Commission. He has also authored a book, Power Within, the Leadership Legacy of Narendra Modi. Mr. Balasubramanian, thank you very much for joining us. Let me begin by asking you, what according to you makes Prime Minister Modi's leadership different from that of other world leaders?
Thank you, first of all, for having me here to share some of my thoughts. I think it's a great question to begin with. There are substantial differences if you look at world leaders today. Very few leaders who might have had a 50-year public life, out of which nearly half or 25 years has been as head of government. 13 years of chief minister and now last 12 years as prime minister. This kind of a long innings is not really seen in many world leaders today. Apart from his approval ratings of more than 75%, he's got this unique ability to not only think about something very large and ambitious, his visions are always very ambitious and large for the nation, but the ability to convert them into concrete reality. A lot of people announce a lot of programs, but the ability to take it to fruition is not there in everybody. Apart from this, in the world of policy, we talk about policies being short-term or long-term. Very few political leaders, and possibly none today except Prime Minister Modi, who can balance short-termism with long-termism. That's something extraordinary. He can think of the next month, he can think of the next elections, but he can think of Vikasit Bharat or 25 years later, how should the country look and what would it be in that space of time. More importantly, I think he can relate to people at all levels. He can relate to heads of government, he can relate to a common man, the last mile citizen, he can relate to industrialists, he can relate to children. We have seen him relate to sports persons. So this unique ability to have a huge spectrum is something which is very noteworthy.
All right. I'd also like to ask you about how do you think the country has benefited from 10 years of Prime Minister Modi's leadership?
I think in several different ways. The first way, everybody recognizes today, every Indian feels proud to say, I'm an Indian. So we have a global identity. The inferiority that we suffered from for generations because of the colonial legacy is getting dismantled today. Today, we have the courage to dream big. Our young people today can talk of from startups to everything else. When the space economy opened up, today we have close to 150 young startups in the last 2 years itself. That's a huge thing. The infrastructure push that this country has seen in the last 10 years. It's in the world of defense, if you look at it, it's not just defense procurement, which has been streamlined, hastened, and made sure that we get the latest weaponry, but we also learn to produce it within India. So whether it's Startup India, Stand Up India, whether it's Make in India, Made for India, stuff like this, which is not just slogan, but actually concrete realities. The 25-year plan of Vikasit Bharat itself, and transformative programs like Mission Karmayogi, which I am a part of, the focus on economic diversification, very few people have thought about it. But you look at it from the blue economy to the green economy, to defense itself, a defense economy that's being conceived today, to space economy. And this wide way in which the last 10 years has seen a huge change. This from civilizational pride to modernity, from quantum computing to green hydrogen, we can talk of the whole spectrum of things that the nation is now.
Right. I would also like to ask you, you spoke about Mission Karmayogi. One of the focus areas for the Prime Minister was to have a whole of government approach and avoid situations where different departments and states work in silos. How much has he succeeded with both his focus on Jan Bhagidari and Mission Karmayogi?
I think it's work in progress is what I would say, because certain things, the impact is not felt immediately. This is a transformational shift. It's also a generational shift. The nation, if you look at it, we had a legacy of the colonial administrative systems that we inherited. And in a period of time when we got our freedom, we were a state which could be called a providing state. This nation, the citizens had to be provided for by the state. And 90s, when we had this liberalization, etc., we became something like a provisioning state, where the state used to facilitate. But today, the Honorable Prime Minister has given a call for Jan Bhagidari, like you mentioned, which is far more advanced and nuanced than a citizen-centric state. Not only does he say Nagarik Devo Bhava, and he says my mantra is citizen-centric governance, but his call for Jan Bhagidari actually is shifting the entire paradigm of governance itself, where he now talks of citizens being equal partners in matters of the state. He talks about reducing asymmetries of information and therefore asymmetries of power, which I think requires a lot of refashioning of the bureaucracy. And that's why this Mission Karma Yogi, a program like this. Now, the other part of the question you asked is about this de-siloizing government. That takes a lot of effort. Government is trained to think in silos. National government thinks separately, the state governments think separately. Trying to bring that unifying force, even simple things like one district, one program, two, talking about cooperative federalism. There's a lot of effort. And on the other side, talking about not just government, but talking about Samaj Sarkar Bazaar, where he gave a call to say that the nation cannot be built by the government alone. It needs the private sector. It needs civil society. It needs the citizens and market forces. So he said all of us together. And this itself is a great de-siloization attempt.
Right. I'd also like to ask you about the Viksit Bharat program that was launched in 2024, aiming at a developed nation by 2047. What is the larger idea behind this blueprint, which would go well beyond the political career of Narendra Modi?
No, like in every politician's life, possibly they plan for the next elections. So announcements they make might look like just winning in elections. But for Prime Minister Modi, it was about building India, which we could all be proud of, building a developed nation. And he said the time frame is just 100 years from independence. And it was so well thought through. It's driven by 6 pillars, from the economic growth and development. It's not just the $30 trillion economy he talks about. Social needs of all citizens being met, the human and social capital investment on our people, the institutional structural reforms like we spoke about Mission Karma Yogi, the innovations and pioneering things that we need to do, whether it's space or whether it's green hydrogen, the civilizational pride we need to take in ourselves and take the philosophy of Vasudhaiva Kutumbakam. Everything has been conceived. What is not known to many people is across India, and my numbers might not be accurate, close to at least 500,000 people contributed. Young people actually participated in programs where they could say, what is the India that they want to see in 25 years? Because the Prime Minister's statement was clear. He said, it's not the India of today that we can conceive. It's the India that needs to be conceived by people who will experience India 25 years later. So getting so many people to participate, the Niti Aayog and the Prime Minister's office working together, every ministry working on it. So sort of a democratized process to bring in the dreams of the citizens of the country and articulating it by the state and putting it into action. That is something which is phenomenal. It is never attempted before. And along with that, making sure that we can bring in other kind of reforms. The taxation reforms is another wonderful institutional structural reform that has been put in place now. And it keeps evolving. These are not cast in stone. So I think not just thinking about what needs to be done, but talking about how it needs to be done, who are the people that need to be doing it, and getting it done also.
All right. My final question to you would be, reforming the GST was a major economic agenda of the government, which you are told that they had been working on for the last 1 year. How much of this was personally driven by Prime Minister Narendra Modi? Because there had been a lot of feedback from the industry over the years how GST needs to be simplified.
No, I think it's not just the last 1 year that the Prime Minister has been driving this. The entire thinking of the GST and pushing it to actually happen from 2014 itself, providing it the kind of conceptual clarity that needed, creating the narrative that it's a nation-building tool and not just a taxation reform, getting citizens to prepare mentally for it, communicating directly with citizens, using this political capital to talk to allies and non-allies also, the chief ministers of the country, calling on them to also say that we are all in this together. A lot of things. And then institutional oversight. Constantly talking to the finance minister and the officials in the finance ministry, whether it was Mr. Arun Jaitley earlier or Mrs. Nirmala Sitharaman today, a constant dialogue that kept happening and oversight of the Prime Minister on what's happening, what's not happening. I think the personal investment he made is possibly itself is leadership in action that we can see, and convincing so many states, real exercise of cooperative federalism. So I think, to me, he understood that some of the bottlenecks that we might face in the economic transition and growth could be a taxation processes, and that journey of reforming it. Direct tax also it's happening. Indirect taxes is what is visible as GST today.
All right, Mr. Subramaniam, thank you so much for joining us on the program, giving us your view on Prime Minister Modi's style of leadership and how it's different from other world leaders, and also what the 2047 Viksit Bharat vision is all about and its significance. Let's move on now. We're also joined by Baba Kalyani, Chairman and Managing Director of Bharat Forge. Thank you very much for joining us. You're someone who's had a ringside view when it comes to observing Prime Minister Modi's style of leadership. You were a key member of the delegation when Prime Minister Modi had travelled to Japan in his first term as well. Give us a sense of how you've seen him grow as Prime Minister. He's now in his third term. But what did you observe in those initial meetings with foreign leaders and foreign businesses?
Well, thank you, Parikshit. First of all, on this very special day, on the Honorable Prime Minister's 75th birthday, I'd like to wish and convey my warmest greetings to him and good health to him to continue to lead our country for a long time to come. I think it's important to understand that in the backdrop of this very volatile world order that is evolving, we need to salute his resolve to place Bharat's interests paramount, aligned with an Indian first agenda. The people of India have reposed great trust and faith in him and greatly appreciate the dedicated and selfless service to drive inclusive growth and development. Talking about, my visits with him to Japan, I have done it now 10 times with him. I was there just a few weeks ago for the last India-Japan Business Leaders Forum, where I was co-chairing the Indian side. Despite being a Prime Minister in his third term, he's humble, he's reciprocative, values personal relationships. And, when I met him in Tokyo, he asked me about my health. But more than that, I think he creates an amazing impression on the other side, on the Japanese business delegations, on the Japanese political system. He had built a very special relationship with Abe-san. Unfortunately, he's no more. But India and Japan and that relationship has played a great role in the last 10 years in terms of the industrial growth that we have seen in India.
Right. I'd like to ask you about defense manufacturing specifically. Now, this has been a major capex focus of the government, and this is going to be a priority still, looking at the geopolitical challenges. How do you see the contribution of the Prime Minister in terms of growing this defense manufacturing base in India? And what more do you expect from him in the next 3 to 4 years?
Well, first of all, I think he was the one who got defense manufacturing in the form of Make in India and Atmanirbhar Bharat. The entire changes in policy from December 2014 till 2017, 2018, and all the tweaking that we have seen in the policy right now. So that's been a great step. I think the private sector got a lot of impetus with this policy and have, in a very short span of 5-6 years, been able to create huge capability in defense manufacturing. I mean, if I look at defense manufacturing today, there are only 3 or 4 things that we don't make. And I think everybody knows that we are not able to make a jet engine for fighters, but I think that's not a very long distance away. I think there needs to be more involvement of the private sector in making this happen. And in the last 5 years, we have pretty much cracked all the land system problems. We have been able to build artillery guns. We've been able to build unmanned systems. We've been able to build all kinds of ammunition. So Except for a couple of things, I think we are pretty much good in terms of the capability that has been developed in the defense sector. The one ask that I would have in the defense sector is, I think we need the speed of decision making to be much faster. It just takes too much time for things to happen. And in today's world where technology changes almost every 3 months with the AI and digitalization that's going on, I think and especially in defense, we need very fast decision making to make this defense sector far more vibrant than what it is.
Right. Also, India is in a difficult yet advantageous position because every crisis should be taken advantage of. We're in a difficult geopolitical situation. You're looking at the tariff uncertainty as well. Now, Prime Minister Modi and President Trump have had a positive conversation, which really puts the relationship back on track. How do you see the Prime Minister's handling of tensions with the United States, tariffs, global uncertainties over the last 4 to 5 months?
I believe that he has the capability to handle this. And that's the kind of sense we get when we even talk to our customers in the US, that this problem will get resolved sooner than later. And hopefully, India will gain from this situation. I think the meeting that happened in the last 24 hours or so, at least from what I read in the press, has indicated a lot of positive indications. And I think both sides are ready to solve this problem. And it's a win-win for both sides. I don't think the US can neglect India in terms of its size of market and the growth in size of the market. Can we afford to neglect the US in terms of the market that it presents to us? So I think it's a win for both sides, and I'm quite sure in the next month or so this problem will get resolved.
Right. If you had to name one key reform that Prime Minister Modi would be remembered for, which would that be, sir? And if you had one more ask in terms of a major reform push that you expect from the Prime Minister, what would that be? What would be your message that you would like to leave us with?
Well, I would say 2 reforms. One is too short. The first reform we all know is the Make in India reform. Okay, I think every Indian is familiar with that, and everybody knows what it has been able to do. So I won't dwell on that. The second reform, which is, I think, very important to achieve the Viksit Bharat targets of 2047, is the reforms that have been done in the area of science, technology, and innovation. I serve on the Prime Minister's Science, Technology and Innovation Council, and I see this in our meetings. You look at the electronics policy, you look at the semiconductor policy. We missed the electronic bus in the early 80s, when the whole world moved in that direction. But I think we are catching up pretty fast on that. And once we get the semiconductor manufacturing in India to a pretty good level, it will create so many more industries in the market. So I think his whole focus on science, technology, and innovation is a very major reform. This 20,000 crores that he has made available to the private sector for research.
All right, we've run out of time, but Baba Kalyani, thank you so much for joining us here on CNBC-TV18 on Prime Minister Modi's 75th birth anniversary, and also telling us about your observations about the Prime Minister's leadership style and certain asks for the future as well. We'll take a short break at this point, but coming up, US President Trump dials Prime Minister Modi on his 75th birthday. Trump thanks Modi for his support in ending the war in Ukraine. More details on that when we return. We will be joined by Mukesh Aghi, the president of US-India Strategic Partnership Forum. US President Trump dialed Prime Minister Modi on the eve of his 75th birthday. In a post on Truth Social, Trump said he wished the Prime Minister a happy birthday. The US leader also referred to PM Modi as his friend and said that he's doing a tremendous job. Trump also thanked the Prime Minister for his support in ending the war in Ukraine. In turn, PM Modi expressed gratitude for the gesture and reaffirmed India's commitment to deepening the India-US partnership. He said on X that India supported President Trump's initiatives towards a peaceful resolution of the Ukraine conflict. This is the first conversation between both leaders since the US imposed 50% tariffs on India. Joining me now is Mukesh Aghi, President of the US-India Strategic Partnership Forum. Thank you very much, Mr. Aghi, for being with us. How do you think this finally came about? The call that everyone was wanting, the call between President Trump and Prime Minister Modi?
Well, you have to understand that the temperature was too high for them to resolve the issue of tariff, especially the 50% tariff. And this was an occasion where the president reached out to the prime minister, and there was a lot of effort behind the scene as to should it be a tweet, should it be a call. And since the president was traveling to UK, he put a call to the prime minister and wished him a very happy 75th birthday. But more important is basically brought the temperature down by insisting that at least congratulating him and talking about why it is important the relationship between the two countries, India and the United States, but more importantly, restarting the trade negotiation. So the effort has been put in by the president, and the prime minister has been very, very kind, in a sense, reciprocating in a very warm manner to the president, but at the same time opening the dialogue between the two countries as the trade negotiators start talking about how do you bring the tariff down to a reasonable level itself.
Right. What do you think happens next? The Indian Commerce Ministry has put out a statement. And in fact, the good thing is that both sides, both the US Embassy and the Ministry of Commerce, have called it a positive negotiations. Now, the Indian side has said that efforts will now be made to intensify negotiations and reach an early, mutually acceptable trade deal. How soon do you expect the deal to be announced now?
Well, we are not out of the woods. You have to understand, it is not just about a trade deal. You have within the White House a group of people who are not very supportive of this partnership. And you can see the announcements and statements coming out from them. You also have vested interest, countries who are neighbors who are not keen to have this relationship to move forward. So it is important to understand that it is just a starting point to be able to take this relationship back to the right direction. So while we manage all the statements and the negative opinion being cited by vested interest, it is critical that we are able to bring the tariff down below 25% because it is impacting India's exports, it's impacting jobs itself. And from that perspective, I think it'll take some time. I know there have been statements made that it'll happen by October or November. I think we should not put any timelines to it because it's important we set the right expectations and conclude it as soon as possible because it does impact a lot of low-end exports from India, which creates jobs substantially. So I would say that let's tone down the expectations and focus on getting the job done.
Right. We also saw both leaders speaking about the Ukraine war, which I found was very significant. The Prime Minister said that India supports US initiatives for a peaceful resolution of the Ukraine conflict. The President said that Prime Minister Modi is doing a tremendous job, and he thanked PM Modi for his support in ending the Russia-Ukraine war. While the details of the talks and the negotiations so far are not in public domain, we can't speculate on it either. But do you think now there is an understanding in the White House that India is also doing its bit diplomatically behind the scenes to help end the war?
Well, if you recall, almost 2 years ago, the Prime Minister did make a statement to President Putin by saying that this is not an era of war. So the position of India was always a peaceful resolution. And somehow what we are seeing is that India got roped in by saying that it's fueling the war in Ukraine by buying Russian oil. Statements being made by Peter Navarro calling a blood money or Modi's war itself. India has always said that we need to find a peaceful resolution to the war between Ukraine and Russia itself. Now, as far as the Russian oil goes, this was in conversation, partnership with Biden administration to procure Russian oil. And I think that has gone on for the last few years itself. It has brought the oil prices to much more stable. It has given space to the European to basically procure from Middle East oil for their own consumption itself. So I think the Russian oil was an excuse to go after India by vested interest. And I believe now, as far as we're concerned, that the partnership, at least the discussions, are back on track. And we're hopeful that they can conclude it at the earliest time, because as I said, and I keep on emphasizing, every day that goes by, there are a lot of people who are getting impacted on their jobs and orders from the United States. And we have to keep that in mind, that job creation and job saving is critical once we conclude this trade deal between the two countries.
All right, Mr. Mukesh Aghi, thank you so much for joining us. It's always a pleasure having you here on CNBC-TV18, speaking about complex negotiations between India and the US. With that, it's a wrap on this edition of News Center. Thank you for watching. Goodbye.
APAC Med, the voice of MedTech. MedTech Forum India 2025 in association with CNBC-TV18.
At MedTech Forum 2025 India, held for the first time outside Singapore, global MedTech leaders gathered in New Delhi to chart the future of healthcare. In this landmark edition, CNBC-TV18's Shireen Bhan led the India MedTech Opportunity, a conversation where global CEOs unpacked why India is a top priority market and what it will take to transform India into a global hub for medtech innovation and manufacturing.
An absolute pleasure it is to be here with you to talk about the future of India's medtech industry, what it holds, and of course the possibilities that beckon us. Before we talk about the future, let's talk about the present. How do you view the Indian market today, Gary? Let's start with you.
We can start really looking at our own data within the company and then match it up to what we see in the global assessment. So what are the things that are going on? First, is the need clear? The second part has been, is there a policy environment that encourages participation, partnership, and growth? The next one is, are the hospitals or our customers ready? Are they calling? There's no question about it. And then the last thing is the human capital and the business infrastructure ready. And we see that as well. It's actually quite clear. So in the moment, we see what amounts in our world in robotic-assisted surgery as hypergrowth. We can see it in the data, and we can come and feel it, and it's quite tangible.
You talked about hyper-growth as far as robotics is concerned. For the benefit of this audience who's here in this room, as well as people who are watching, can you contextualize that for us in terms of numbers? What are we really talking about when you say hyper-growth in robotics in India?
For us, we think of that as anything above about 40% annual growth. In the soft tissue space, you see numbers that are 18, 19, 20% growth annually globally. And India is doing twice that.
Wow. Kevin, let me pick up on the conversation with you as well. To start with the presence in India for Stryker currently, and then let's talk about the opportunity for growth to pick up where Gary left off.
This is probably the most tech-savvy country in the world. The physicians are taking up robotic-assisted surgery at a dramatic pace. So even though it did sort of lag some of the other countries, the rate of adoption is just exploding. India, the productivity, the amount of procedures done per robot per month is the highest in the world already. Even though this country has adopted it a little bit later than some of the other countries, they're already adopting it at a much faster pace. We're a very, very broad company. So robotic-assisted surgery is just one part, maybe 10% of our company. We're into fluorescence imaging for general surgery. We have all these vascular procedures for stroke, as well as for pulmonary embolisms. And so I would say, let's say part of our products will be growing 40%. Some will be growing maybe 20%, but you could say well north of 20% overall, which is much faster than the overall growth rate of our company.
Katrina, let me address the same issue with you to get started. India, the opportunity as it exists today, before we talk about India, the opportunity for the future.
We are just facing the phase of acceleration of growth in every aspect, and combination of demographics, epidemiology, policy, access to care, growing economy, all those forces are just pushing this market upwards. And for medtech, clearly that's the place to be.
It's clearly the place to be. Gary, let me start by talking to you. To ensure that India actually realizes its true potential as a manufacturing base, as a manufacturing hub, what more do you believe needs to be done? Where are we today?
Typical robot in our space has between 5,000 and 10,000 components, of which 300 to 400 are unique. So it's an extremely detailed thing. It requires a sustained commitment. This is not something that you start and then walk out. You can't be half in, half out. So sustained stability and determination from companies like ours and from policy environments. We need a sustained space, a real emphasis on performance, and sustainability.
But Kevin, let's address that issue with you as well. You've got a market that's opened up significantly, of course, for domestic use, but there's also the export opportunity that we would like to capitalize on, that we would like to leverage on. In your assessment, where are we today? Where do we need to be?
It's not just building your plant, it's having the base of suppliers that are local, because you can't be shipping in things from all parts of the world, and that is growing in India. So I'm more optimistic than ever that this is going to be an exciting place for the future, but you also want a vibrant local use of your products as well. And this regulatory framework in the past has been somewhat challenging. Is it on an improving trajectory? So that is very exciting, because to have a stable regulatory framework is very important so that you can, when you manufacture, you can have access to the local economy and then also continue to export abroad.
In terms of what more you would like to see from a policy perspective to ensure that this is an industry and a sector that continues to grow with the kind of potential that it has?
We need stability, we need predictability, we need friendly climate, which I believe we all three agree we have in the country. I completely concur that that medtech regulation is rather specific, and it should be more acknowledged in the legislation in India. Whether it's R&D center, whether it's shared services center, whether it's manufacturing footprint, you definitely have an enormous base of talents in the country with this incredible number of engineers and specialists graduating every year.
Kevin, access and affordability. Where are we today? Where can we be? And what needs to be done to get to the next stage?
So there's a huge patient awareness issue that I feel the industry has a responsibility to educate the population, the broader population, on what their options are. Second responsibility is we have to be able to train physicians and then make sure our products are adapted to the market.
What is the breadth and the depth of the ecosystem, the supplier ecosystem as it exists in India today? And what more needs to be done to ensure that it does get a lot more robust?
The elements of machine learning, AI, software skills already present. There are other places that are still to be developed, and it can be very high volume patient contact parts. Those things are coming, they're there, but maybe not in all the elements and sub-elements that we need. I also think innovation is required. It's not just copying what else is around. We're going to have to create new sets of sensors at different price points to get where we want to go. I think the opportunity is going to be, let's develop it together. Let's co-create.
APAC Med, the voice of MedTech. MedTech Forum India 2025 in association with CNBC-TV18. APAC Med, the voice of MedTech. MedTech Forum India 2025 in association with CNBC-TV18.
Katrina, I'll start by asking you. The buzzword is AI, the disruptive, magical, transformative powers of AI. But how do you see what AI could potentially do in terms of transformation, disruption, call it what you'd like, as far as this industry is concerned?
There is no way around AI for medtech and medtech innovation and future medtech technology. It represents in itself huge opportunity for India, which is undoubtedly a worldwide hub for IT specialists, for IT talents, for IT ideas, for technology development. And I think this is something that we'll hear about it in details in the years to come. I heard from Kevin that you have already a development center for your technologies.
We've launched a product that quantifies hemoglobin in sponges and in the canister. Using your phone, so you can then determine whether the mother who's delivered the baby needs a transfusion or doesn't. Today, completely arbitrary. They just look at the sponges, they have no idea. Using AI, we can actually quantify the hemoglobin, and we're doing it. It's a commercialized product, it's on the market, and we need to expand that around the world because too many mothers are not getting transfusion they should be getting, and some are getting a transfusion when they shouldn't be getting one.
Gary?
So what's exciting? We have a pilot program going on with real surgeons that show if we use a computational observer to assess their skill against known good surgeons, we can accelerate their time to better outcomes by a factor of 2. We can cut in half their learning curves. We'll deploy that coming up in the next year or so. So I think it's crazy exciting. Here in India, we have AI scientists who are looking into our databases and essentially saying, where should we be looking for quality issues in manufacturing? Where should we be looking for quality issues in our supply chain? How do we do predictive maintenance? It's already here.
Katrina.
So if you think about the role of AI in establishing decision support and supporting this standardized medical procedure. So my company pioneered it relatively early because dialysis is a procedure when the patient is coming 3 times a week for a lifetime. So we have access to absolute goldmine of data throughout this process. So we early started to develop algorithms supporting decision on dosage of specific medicaments, for instance, or specific modules of the therapy that are powered by self-learning models. I see an enormous application of this type of translating of millions of data point to practical indications on in decision support and medical process in a hospital.
On the road to customized or personalized medicine, and that of course is the hope, and that's one of the possibilities in an AI world. But I want to address one of the things that the government is prioritizing at this point in time, and get your thoughts on that, is to really position India as a hub for people to come and get treated. It's called Heal in India. That's the Prime Minister's latest marquee project as far as India's healthcare sector is concerned. We've talked about the reasons why it makes sense for India to position itself as a market for people to come and get medical procedures, etc. done. Gary, your thoughts on that, and whether this increases then opportunities for companies who are looking at the Indian market?
Yeah, for sure. I think it's already happening. If you look out in the global world, the impact of Indian healthcare professionals extends far beyond the borders of India already. What do people decide? The quintuple aim we talked about earlier is true for anybody who's for healthcare. They're going to look at what are the outcomes, how are you treating me, what's the total cost, what's the total economics. To the extent those things are aligned, it will attract people to come. Making it easy, bring the boundaries for that, making it a friction-free environment. To the extent that that's working well, companies like us are happy to partner. It accelerates the growth of the ecosystem and makes complete sense to us.
Kevin?
Technology adoption in India is incredible. And the quality of surgeons are fantastic. So I think for the high-end hospitals with the most advanced technology, I think medical tourism is a big opportunity. We've seen Singapore do some of it. We've seen a little bit in Thailand, but it's kind of not at scale. the scale of India, really, it is a tremendous opportunity. And frankly, the cost, if you look at the all-in costs of procedures in India, it is favorable to a lot of other places for procedures. So I think it's a very clear opportunity. I mean, the domestic market in itself is a great market. This would be sort of icing on the cake from someone in my perspective, but I think it's an absolutely very attractive place.
Katrina?
Well, for our type of business, dialysis is very local.
Yeah.
It has to be performed, ideally in the radius of 20 kilometers from the clinic. In India, by the way, this is more like 70 in rural areas, which kind of, that's another number for you that represents.
Not a good one, though. Not a good one.
It's a good one if you look at it as opportunity and not as a down shortcoming.
No, I agree with you, and that is where we could perhaps see measures being taken by each one of you as well as the government to bridge the gap. Speaking of bridging the gap, I notice, as is the case in most of these settings, in most of these rooms, there's a lot of men in suits, very few women. And how do we change that? How do we get more women in medtech? Katrina, I'm going to come to you.
I'm often asked for advice for female managers, and quite frankly, to many people's disappointment, I tend to answer, I give you the same advice I would give to male managers. As you want it, go for it. What I would, however, say is, I would give an advice, recommendation, ask, petition to managers in this room. Just care for diversity in your team. It's just, does your team well? Promote talent from different walks of life. It does your team well. And I will be happy to pass it to my colleagues, because I know they are very successful in promoting female.
I would love to comment on this, because if I think about our own companies, I've been the CEO for 12 years. We had one woman on the board 12 years ago. Right now, 5 of our 10 board members are female. Two of our 5 big division presidents are female. They both were appointed in the last year, so it took us 12 years. But and I think our vice presidents were 18% of our vice presidents and above were female 12 years ago, and we're now at 1/3. So not 50%, but this is the top of the house of the company. Total females has gone from 30% to 40%.
But how did you get that done?
So it starts with leadership at the top, setting a tone that we want the best talent, and we don't care if they're tall, or if they're short, or if they're men, or if they're women. It is a meritocracy. And I think what I found, especially at the top, leaders at the top, the female leaders, frankly, would always hold themselves to a higher standard.
Yes.
That's my own personal experience. I'm not saying that's my own personal experience in my company. Was we had to create an environment that said, just be yourself. You don't have to be more manly. You don't have to be more aggressive. Just some women are very aggressive. Some women aren't. Just be yourself. Let your talent shine. And then we had to sort of get our leaders to sort of start doing it, start looking and hiring for more females, especially in our sales force and marketing, which is the funnel for leadership in our organization. But our performance has improved as we've gotten more women in our company and more women in leadership. So I have a chart that shows percentage of women, and then I have our financial results. And the lines kind of are right on top of each other. So I say, very jokingly, I'm not sure if our good performance is attracting more women, or if more women is making our performance better, but I don't care, because they're both going in the same direction.
Gary.
Yeah, maybe I agree with the prior points from both my colleagues. I'd also say let's look out at what's happening at our customers, what's happening at hospitals. Around the globe, we're seeing more women graduate medical school, more women being surgeons, strong growth. We're seeing that actually the technologies of all the things we do are leveling. In the old days, those things were designed for, most of these medical devices were designed for large male hands. And we don't have to do that. We have an opportunity to change that. The other thing is that the culture of our customers, if you have a receptive company, changes the culture of the company. So as we design for a more diverse customer base, as they take leadership positions, they also take leadership positions in our company. Our board has gone through the exact transformation you have just described, as has our leadership team, our engineers, our analysts, Our human factors are all strong and diverse in background and gender, and I think our role is to not impede them. They are there. What is the precious resource in any company? Great leaderships. So it's looking broadly and not impeding their growth.
Absolutely, and hopefully bringing the diversity on board will also ensure that you're thinking about women as customers as well, because for a long time that hasn't necessarily been the case, and we've started to see some breakthroughs on that front, but hopefully we will see a lot more. We've got the last minute, so I want to get wrap-up comments from each one of you. And Gary, let me start by asking you, are there any global examples in markets that you operate in where things are being done in a certain way that you believe India could perhaps learn from at this stage as we look at this big inflection point?
It's actually, I think, quite clear that our partners in government are already doing that. We see it in place after place. We have a footprint of about 27 or so different factories in different places. We've had good success, and it is the issue of understand and articulate the need clearly that supports that need, and then stay with it. Be consistent and encourage. I'm seeing that. I'm quite enthusiastic. I think it is backed by tangible momentum. And so I believe that those lessons are already being learned.
Excellent. Kevin?
The government, everything they're doing is on the right track. I'm excited about it, as I said before. I think the other thing is having a better ecosystem. So if I think about where innovation occurs in medtech, you need an ecosystem. And India now has you have to have the financial support, the incentives for innovation, as you talked about, university partnerships. That happens in other countries. It doesn't happen as much in India, at least not for Stryker. And we're going to start to do that. But if the incentives are there so that the people who do create the innovations can then monetize those investments, that will be fantastic.
So do we have to wait to the end of this calendar year or this financial year to hear more from you about that 41st plant?
Stay tuned.
Katrina, the last word to you.
India has a scale, India has a spirit, and also speed, to stay in this policy. Also speed of changes is really very encouraging. From my point of view, the most important part for medtech is really a demand side, so increasing access to care, and this just is in parallel with economic development and right social policy. So that's what I think wish this country to achieve as faster. Nice to have last word, though.
You do have the last word, and you're the doctor on the panel, so you get the last word. But Katrina, Kevin, and Gary, what an absolute pleasure. Thank you so much for some very interesting, real, practical insights into what makes India the market that it is, but what will ensure that it becomes the market that each one of you will continue to bet on and commit not just your time, effort, and energy into, but significant dollars as well. Ladies and gentlemen, thank you very much. A big round of applause for our panel here this morning.
APAC Med, the voice of MedTech. MedTech Forum India 2025 in association with CNBC-TV18.
Hello and welcome to the CNBC-TV18 special. We are coming to you from the sidelines of the Jefferies 4th India Forum in Gurgaon, a marquee gathering where global investors, policymakers and India Inc. converge to debate opportunities and risks shaping the world's fastest growing major economy, that is India. Now, over the next 3 days, September 16th, that is today to the 18th, the Jefferies Forum will host leading voices from across sectors, offering a pulse check on global markets and India's place in them. Joining me now is one of the most closely followed strategists on Wall Street. Christopher Wood is Global Head of Equity Strategy at Jefferies. Chris, it's always a pleasure speaking with you. Thank you very much and good to see you here in India once again.
Good to talk, Prashant.
Chris, I want to I start with the global usually, but I want to start with India first, since you're here in India. Now, the market at the headline level, Chris, has been sideways for about 14 months now, the Nifty, that is. We've seen a large amount of underperformance. So, for example, the MSCI Asia ex-Japan Index year-to-date is up 21%. India is up 1%, a 20 percentage point underperformance so far. What is your sense, Chris? Is that underperformance about to reverse, or is there more time correction on cards?
Well, first of all, yeah, that's a relative story. So that's more a question of it's less India doing badly than other markets doing well. And India's always had this premium valuation. So in the big picture, this is just a year of healthy consolidation in the Indian stock market and what remains, in my view, the best structural growth story in global equities. So personally, I'm not surprised that we've had this year of consolidation because we had high valuations, and the big negative for the market, at least one major negative, has been the huge supply. Companies raising capital, but that makes sense from the corporate perspective because the valuations are high. And the big positive for the Indian stock market is the huge continuing mutual fund inflows have absorbed this supply. Now, if those domestic mutual fund flows did not exist, the Indian market may be down about 20–30%, and then that would have triggered big foreign buying. But because the domestic flows have been absorbing the supply, we've had this sideways trading pattern. But in the big picture, it's a healthy consolidation.
Is that likely to continue, though, Chris, for the rest of the year?
It's quite conceivable that it wouldn't be a surprise if we traded sideways for the rest of the year. Now, if we get a sudden resolution of this US-India trade thing, that will trigger a short-term rally. But the more important point in India is, do we get a pickup in nominal GDP growth next year? Based on the monetary easing we're seeing under the new RBI governor, and based on the various policies to trigger a boost in consumption demand initiated by the government this year. First of all was the income tax cuts, and then clearly I think more important is the rationalization and simplification of GST and the rate cuts, plus the monetary easing we're seeing, which has been considerable. All of this hopefully should lead to a pickup in nominal GDP growth next year, which in my view will lead to a stock market rally next year. But I am assuming a pickup in nominal GDP growth. If I'm wrong on that, then I'm too bullish. Nominal GDP growth is key because corporate earnings are reported in nominal terms, not real terms. Historically, India has been growing in a 10 to 12% nominal GDP range. This year, nominal growth has been, I believe, below 9%, and that reflects the relatively lackluster earnings outlook. But I am expecting a pickup in nominal GDP growth next year. That's the key driver.
Yeah. Sorry, so a nominal growth is 8.8%, quite low by what we've seen here in India.
Year on year.
Yes.
But actually, that was higher than what we and the market was expecting. So actually, the most recently reported GDP data came out stronger than I or the market was expecting.
Right. So just to, you're saying that if we get, you're saying it's entirely conceivable the market stays sideways for the rest of the year. But if we get a sudden resolution to the India-US trade issue, you may get a bit of a tactical rally. That's the call?
Definitely. And you know, there's got to be a 50% possibility of that, simply because it's quite clear that these 50% tariffs are rather anomalous. It seems pretty clear they were triggered by the US president's personal pique, that he wasn't allowed to intervene in the India-Pakistan dispute. And it seems pretty clear from a US foreign policy standpoint, these 50% tariffs have needlessly antagonized India, and, you know, it doesn't make sense from the US standpoint, from a diplomatic standpoint, to encourage an improvement in India relations with China. So for all these reasons, they're probably looking for some, my guess is the US is looking for some kind of deal. But if the US continues to insist that India opens up agriculture, or that India stops buying all Russian oil, then there will be no deal.
A deal, you said there's a 50% chance of that happening, will result in a tactical rally here in India. Now, just one question more. Foreign investors, Chris.
But one other point that, yep.
Go on, please finish that.
No, I was just going to say the good part about this 50% tariffs, it's accelerated what the government was planning to do anyway, but it's definitely made them expedite the policy, and that was to simplify the GST structure and cut the rates. So in that sense, the 50% tariffs will turn out to be good news in the medium term.
Okay, got that. Now, FIIs, Chris, have sold about $28 billion of Indian stocks since the highs in September of 2024. You started by saying it's not so much about India, but it's about other markets doing well. What are you hearing from large global asset allocators about what they want to do? And you know, India, in positioning, FI positioning in India is at, what, 15-year lows, 16-year lows. So when does that start to turn?
Well, that is actually the very interesting statistic, because the reality is in the last several years, the best two stock markets to own in the world have been the US market and India. So it is interesting that the FII positionings become so low. I think there's a series of kind of, in some ways, coincidences. Last year, basically fourth quarter last year, there was big foreign selling of India to buy China. And that made sense because China basically, in my view, put in a long-term bottom fourth quarter last year at about 7-8 times earnings. So that was one definite big driver of India being sold to fund increased investments in China. And we've got to remember most of the foreign money in India is dedicated to emerging market money. And then in more recent months, what's been going on is that people have been selling India to fund increased investments in Korea. Korea's had a huge move this year, and most foreign investors have missed it, so they've been playing catch-up. And they've also been having to buy back Taiwan because the AI trade's been running on Wall Street, and the Taiwan market is the same trade as the S&P 500, because the S&P 500 is dominated by big tech, and Taiwan's dominated by TSMC. So that's what's been going on in terms of people selling India to fund Korea and Taiwan. If it wasn't for this Trump tariff issue, I think there would have been a chance that money would have started to enter India in the last 2 months. But because of the Trump tariff issue, the return of foreign money has been delayed. But going into next year, for people who buy my story that nominal growth picking up, I would expect FAIs to turn net buyers by the end of this calendar year, even if this tariff issue is not resolved.
Okay. FIs to turn net buyers by the end of the year, even if the tariff issue stays unresolved. I got that. That's a fair bit.
Because by the end of the year, we've had, the impact of this monetary easing should be starting to show up in the real economy. the rate cuts, etc., the more greater ability of financial institutions to lend. Plus, we have the impact of the GST.
Got that. Let's just sort of tie in the India bit, and then I'll get to the global stuff, Chris. In your greed and fear portfolio, where does India stand? Are you overweight, underweight? And very briefly, if you can give us a flavor of what you've done lately.
No, I still have decent Indian weightings in all my various portfolios, but these are structural, longer-term portfolios, so I'm not running them too tactically. In my more tactical relative return portfolio, though, this year, I've only been very marginally overweight India, which for me is very underweight, because the only time I've really been big underweight in India in that relative portfolio in the last 20 years was back in about 2011-12 when we had some sovereign debt issues in India. And tactically right now, I would be looking to reduce China and add to India, given China's big outperformance of late.
Let's now get to some of the global stuff, Chris, right? And let's run through, start with the Fed. A 25 basis point cut this week. The bigger question, though, is this likely to be the start of a rate cutting cycle, Chris? Because earnings growth in the US remains strong, and at the same time, you're getting rate cuts. So it's like Goldilocks, in a way, once again. What is your sense, Chris?
Yeah, well, the rate cuts are clearly a signal that the Fed is prioritizing the labor market over inflation. Because the labor market, clearly the data has weakened in recent months. So it's getting harder to find a job, but it's not like there's massive evidence of people being laid off in America. So there's no great evidence we're about to have a US recession. But what's clear is the Fed has decided to prioritize the labor market over inflation. And I say that because the inflation is still significantly above the 2% target. So in this environment, clearly there's potential for more of a melt-up in the US equity market on the Fed easing. And you can make a perfectly respectable argument that the Fed shouldn't be easing yet, but the reality is the Fed is going to ease. Then you've got the political reality of the growing pressure from the Trump administration on the Fed to cut rates. That, in my view, is not about U.S. economy or worries about the labor market. The Trump administration on the Fed to cut rates, in my view, is primarily driven by the desire to reduce the debt servicing cost of funding the federal government debt. Most of federal government debt is financed by short-term treasury bills. And so if federal funds rate is cut by 200 basis points, that will significantly reduce the debt servicing cost. That's what's driving this pressure on the Fed.
Yeah. So your call is, in this environment, right, wrong, we're not debating that. If the Fed were to embark on a rate-cutting cycle, U.S. equities can see a melt-up from here. Any targets in the S&P in this environment, Chris?
No, but if no, I haven't got a target on the S&P, but in theory, they should just cut rates once and wait for the data. That's probably going to be the official Fed line. But if the market senses that it's the beginning of an easing cycle, then you do have that melt-up risk. My fundamental view, though, on the U.S. stock market is that it's extremely overvalued. And my other fundamental view is that the AI capex boom, which is driving the market, will lead to a lot of misallocated capital. And I retain my base case, which I've had all year, that the U.S. has peaked as a percentage of world market capitalization. But that's partly driven by the view that the dollar's entered a long-term downtrend. So far, I updated the numbers this week. The U.S. is way below the 67th peak of world market cap, which it reached on December 24th last year.
Yeah, no, got that.
And the U.S. stock market is much more high beta than most markets because the U.S. stock market rally in recent months has not been driven by institutions. I think the institutions were surprised by the extent of the rally, given all the negative noise around tariffs, and it's definitely had a big retail component, this U.S. market rally. The AI capex theme has been driving it, and in many ways, the AI capex theme creates an echo chamber because people will have been buying U.S. stocks because AI large language models will have been telling them to buy AI capex stocks.
Yeah, got that. The dollar index, Chris, is down 10% on a year-to-date basis. You think it's got a lot more downside?
Short term, who knows? But in the medium term, my base case is the dollar's entered a long-term downtrend.
Okay.
That's a key part of my call that the U.S. has peaked, made an all-time peak as a percentage of world market cap. And it also should be a following win for the emerging market equity asset class. But for now, it's a big positive for what the U.S., the Americans call the international asset class. And the international asset class is the world ex-US. And I showed a chart in my presentation at this conference this week, which shows that the world ex-US has broken out of a trading range in place since 2009. So that chart for now is confirming my base case that the US has peaked as a percentage of world market cap, even though the US stock market is trading at a record high.
Okay, world markets, ex-US, have broken out of a downward kind of trending phase.
Of a trading range they've been in since 2009.
Got it.
Part of that is outperforming. So it's not just emerging markets outperforming. A big part of that is Europe outperforming and also Japan.
Yeah, got that. Now, let's a few more things, Chris, here. Lots of interest with regards to what's happening in gold, Chris. Gold was at $1,000 in 2008. It took 12 years for gold to double to $2,000 in 2020. It's taken just 5 years for it to double again. I mean, not yet, but $3,700. So very close now. What's the view here, Chris?
Well, no, I remain constructively bullish on gold. Actually, I set a target of $3,600 an ounce for gold back in 2002. It's finally reached that target. Frankly, it should have reached that target 10 years ago, given all the crazy things that have been going on with G7 monetary policy. So at least we're now reaching more for sensible levels in gold. The short-term issue for me was gold going to break 3,500. So now we've broken 3,500. So it's beginning to look like gold's entered a new trading range.
Okay.
But, I remain bullish, structurally bullish on gold. But the really exciting story right now is the gold mining stocks. Because the gold mining stocks have been underperforming bullion in this bull market that began in 22. I mean, the real gold rally accelerated following the freezing of the Russian foreign exchange reserves in early 22, driven by central bank buying. Since then, gold mining stocks have been underperforming gold. Historically, gold mining stocks outperform gold in a bull market. And what's happened in the last couple of months, gold mining stocks have started to rally strongly because they are making a lot of money right now because they're in the perfect situation. Gold price is going up and the oil price is low, and their major input cost is energy, and the gold mining companies are not hedging their gold production anymore. So unless there's some operational issue in a mine, gold mining companies are printing money.
Yeah.
So that actually is the best sector to be investing in globally.
Any targets on Bitcoin, Chris?
Yeah, so on this, so basically gold and Bitcoin are the two key plays on long-term dollar debasement. And in my global equity portfolio, I have 10% in gold mining stocks and 6% in Bitcoin. So Bitcoin of late has been consolidating, but to me, this is a healthy consolidation, and the next big move in Bitcoin is up. So I want to own both gold and Bitcoin because there's a demographic issue here. The millennials may not buy gold, but they'll be buying Bitcoin. But if you said to me you can only own gold or Bitcoin, I'll own gold simply because history's on its side.
Okay, that's an interesting point. So bullish on both Bitcoin and gold, but you're saying near-term gold may have entered a bit of a trading range, although you're structurally bullish and you continue to own both.
And I'm saying then I'm saying gold was in this trading range, consolidating between 3,000 and 3,500.
Yes.
In the last 2 weeks, we've broken above 3,500. So the key question now is that gold into the new is gold trend, going to break out significantly higher. That's the key issue right now.
Chris, last question. You did say that this AI capex theme in the US will lead to some misallocation in capital. A sharper question from my side, if it is are we starting to see a bubble building in AI stocks, large AI stocks in the US?
Oh, no, without a doubt, because no, I think that's definitely the case because the retail's driving this in the US. So back in January, we had the AI stocks sell off on the DeepSeek moment on China because the Chinese came out with this open source large language model DeepSeek. It was very inexpensive. And the AI stocks corrected because the message of DeepSeek was that these large language models could become commodities. But since then, and I think that was a very valid message, but since then, we've had the mindset of the mentality in the stock market has changed. The US stock market is greeting AI capex announcements as positive in terms of endorsing the growth story. The 4 hyperscalers have guided for $350 billion of capex this year. These are enormous numbers. You've got a large capex on AI also being announced by many other companies. You've got a data center boom. And if it's indeed true that these large language models are commodities, and if it's indeed true, which is what I've been told by people who know a lot more about AI than I do, that you'll never reach so-called AGI by large language models, then a lot of money is going to be wasted. So my own personal opinion is the Chinese approach to AI makes more sense than the US approach. The Chinese approach is to use this open source DeepSeek as a resource to come up with cheap, viable use cases for the AI technology. This is, to me, a very practical approach, whereas the US approach is for each company in its own vertical to be spending all this money to come up with a definitive AI model. Meanwhile, the large hyperscalers are in the process of going from asset-light businesses to asset-heavy businesses, so they're going to generate significantly less free cash flow, and they're moving out of their individual moats to converge on the AI area. So they're doing that for both positive and negative reasons. The positive reason is AI is the next big growth story. The negative reason is the AI is the source of disruptive threat to their business models, so the move's partly defensive. So my view is you want to continue to own the AI picks and shovels, the companies like NVIDIA and TSMC, who are benefiting from the CapEx spending. I don't want to own the companies investing all this money because I've got no idea who, if any of them, are going to successfully monetize this investment. However, if I'm wrong on this and they successfully monetize their AI CapEx, then there's a risk that I'm wrong on the view that the US has peaked as a percentage of world market cap.
And we should know soon enough, right? Or maybe not. Who knows? Who knows if we're at the moment of...
Maybe not, but if you wanted a symptom of a bubble, you could see the market reaction to the Oracle announcement last week of a pickup of orders.
Yeah.
A lot of pickup of that orders was driven by OpenAI. And right now, according to its own announcements, OpenAI is still burning a lot of cash.
Yeah. Chris, a pretty exhaustive conversation. Thank you very much for joining us. I had a bunch more, but we're out of time. Good luck with the conference. Good luck, of course. And I think your investors there, etc., would love to hear from you. But thank you very much for joining us here on CNBC TV18. Thanks indeed.
Thank you, Prashant.
Thank you. Well, I hope that was an interesting and insightful conversation. It always is with Chris. It's a wrap here on this edition of the CNBC TV18 special. More comes up after a quick break.
looks like the class of 2025, the graduating class of 2025. All of you in your blazers.
Just a bit older.
But back at IIT or IIM, I mean, did you think that you'd be here one day?
No. I think when you start, you're really not thinking about these things. You're thinking about survival.
In the near term, is the bulk of the investment going to go into native, etc., or into the core business?
I think it will be a mixture of investments in core, investments in the newer lines we are trying, investments in native.
India is the bulk of our business and continues to be the bulk of our focus.
The employee portion was subscribed 37 times almost, or perhaps around that number. I mean, that tells a story about the belief that your people have in what you're doing.
We don't have enough employees to have it oversubscribed 37 times. So we were also curious. So I asked one of my team members to dig in and find out what's really happening. And turns out a lot of service partners had bid.
One of India's most awaited startup listings has hit the bourses today. Urban Company has listed at a 57% premium on the National Stock Exchange at 162 rupees against the issue price of 103. The company has seen its market cap cross 25,000 crore rupees on listing. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. Founded in 2014 to bring structure and trust to India's unorganized home services sector, Urban Company has today grown into Asia's largest tech-led platform for home and beauty services. It operates across 51 cities, including international markets like Singapore, the UAE and Saudi Arabia, and it's expanded into new verticals under smart home solutions for native and home improvement with Revamp. The company closed FY25 with net transaction value of over 3,270 crores, revenues of 1,144 crores, and a transacting user base of 7 million, 48,000 professionals under the Urban Company umbrella today to try and create sustainable livelihoods while also attempting to deliver consistent service quality. Joining me now are the co-founders of Urban Company, Abhiraj Singh Bhal, Varun Khaitan and Raghav Chandra. Gentlemen, it's wonderful to have you join us here. Congratulations to start with. And, from 100 square foot office space in Bikaji Kama Place in New Delhi to Dalal Street today. Abhiraj, let me start by talking to you. Has it sunk in? It was a little bit of an emotional moment. I could see, at least on account of Varun getting teary-eyed, but what was it like for the three of you?
I think it's still sinking in, Shireen. I think it's it has been an emotional day. It is it's a feeling like no other. It's a feeling of happiness, but also one of responsibility, humility for all the love we've been getting. We had service partners, employees, ex-employees, family, everybody join us today.
So there's about 100 odd people here in Mumbai for the listing?
There's more than 100. And I think it was heartening to see everybody so happy. So yeah, I think you never imagine this when you start a company. But we're glad that we're here today.
Urban Company is 11, but the two of you have known each other for 2 decades now, 20 years, and that's a deeper, longer association and partnership. Varun, you got emotional today, but what was the feeling or the memory, the core memory that you had while you were speaking today?
A lot of thoughts running in my mind at the same time. Right from times we spent together in college, when we after college decided that we need to get together and do something in the service of India over the next many decades, to the many months the three of us spent the streets of Delhi trying to really identify what business we should build that will create large impact in the lives of millions of Indians. And be a company that they will look forward to, a company that will make a difference to their daily lives. And then, like a fast forward of the last 11 years, while I was trying my best, trying to hold emotions back.
Well, Raghav, you've known them for 11 years as well, and you've, of course, been part of the Urban Company story from its inception. As you stand here today, what would you say has been the biggest factor for success at scale so far?
I think as a team, we have been known to showcase very strong ownership. In fact, while we were on the stage talking through, it just reminded me how all facets of Urban Company kind of come together, be it our internal teams showcasing ownership when it comes to just doing their best, going beyond what's needed, or our partners who kind of go to customers' homes, just own up the brand, own up the experience. I think that's probably what our decade of building has been at its core.
Well, talking about the decade of building, but now importantly talking about the decade ahead, the kind of reception that you've got from the Lal Street clearly is an exemplification of the fact that people are believers in this story and believers in the fact that there is potential headroom for growth. I know you said that you've got a very strong balance sheet, but you also said that you want shareholders to be patient. Public market patience and private market patience are entirely different things, Abhiraj. So, what are the levers that you're going to exercise now to get to profitability as you've promised?
I think for us, Shireen, long-term growth and long-term profitability is very important. We see our business in parts. There is the very profitable core in India, which is growing well. It has been profitable for the last year or so. It had 3% adjusted EBITDA margin as a percentage of NTV last year. That went up to about 4% in the first quarter. And I think that core will have to continue to compound well, grow well, and continue to compound profitably. The new segments where we are, which is InstaHelp, Native, I think these are the areas where we will invest. And at the right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy.
But give us a sense of what we are talking about in terms of investments. And let me contextualize this, because what we've seen with other listed entities, now Eternal, Swiggy, and so on and so forth, they're all having to diversify into new distinct businesses. Eternal with Blinkit, and now District, and Swiggy similarly with Instamart and a few other offerings. Is that now a go-to for platforms like yours to really build out these new distinct verticals, these new distinct offerings to keep growth going?
I think for a platform like ours, at our core, we think of ourselves as a home platform. Anything inside your home is definitely relevant for us. The user trusts us to enter their homes, and we don't take that trust lightly. We understand that that trust comes with a lot of responsibility. I think today we are playing in many services, but not the end state of everything we can do. So in the end state, any service in the four walls of your home will very much be part of our ambition and our playing ground. And similarly, we are imagining a connected ecosystem inside your home of devices which have a strong affinity with our service ecosystem and our platform. So more than a services company, we think of ourselves as a home platform, and that's what we're building. It's hard to see it today, but I think over the next 10 years, this will play out. And we want to be the operating system for your home, the backbone for your home.
The operating system for your home, that's a nice tagline that you've given us there, Abhiraj, as far as Urban & Company is concerned. But Varun, let's talk about what shareholders would want more clarity on, the kind of investments that you intend to make in your new businesses, whether it's Revamp or Native, to build out this home operating system that you spoke of. And again, I'll contextualize this with what we've seen happen with Eternal, Swiggy, etc. I mean, Eternal over 3 lakh crores in market cap. Swiggy, 1 lakh crores in market cap. You've got a 25,000 crore starting point. What is the runway for growth? What is the aspiration that you see for yourself over the next few years?
As Abhiraj was saying, we think of ourselves as a consumer company. We started by building our services full stack one by one. Now a composite of services is what we call our India Home Services business. We're adding InstaHelp to that as a new service category because we see phenomenal opportunity there and a big consumer need. Similarly, in Native, we saw a big gap in terms of the durability of existing devices and the life cycle experience that consumers were having. And we do internally discuss and deliberate a lot before we start these new initiatives. We start them in pilots and then build onto them in stages. And our focus across these verticals is going to be to continue to invest in the core building blocks. So in the services business, it is going to be in training and quality of our service professionals, in technology, and in continuing to build the brand. In native, it is going to be on really high quality products, great supply chain, and final end consumer experience in terms of installation and how we take care of the entire 10-year plus that we imagine our devices to be used. And same goes for revamp. Each of them we identify core pillars and keep building on.
So what does the product pipeline for native look like at this point in time? I mean, water purifiers is where it all started, but what could we be talking about? I mean, what could potentially the product pipeline look like as far as native is concerned, and what kind of investments will you make there?
I think in native, Shreen, I think we're just getting started. If you think about your home and the potential for an ecosystem of connected devices in your home which have a strong affinity to our brand, our platform, I think water purifiers and smart electronic door locks are potentially only 2 or 4 or 5 such products that we could build. We will be calibrated. We recognize that this is a new turf. Even though it is related diversification, it's a new territory for us. We have to get it to scale. We have to make it profitable. But if I take a 10-year view, I don't think we will be limited to only water purifiers or electronic door locks. Native, as the brand name says, we want it to be natively integrated into your home, into your life. And also reflecting on your original question, right? I do think as a company, we're only getting started. Like, we're still a small company, Shri. In the scheme of things, that's not lost on us. And, our scale is tiny. It's certainly not enough to satisfy Varun, Raghav, and my ambition. We want this to be one of the most important companies for the Indian home, for the Indian consumer, 10, 15, 20 years out. So while I can't give you very short-term guidance, I can tell you that
you're going to have to get used to giving short-term guidance now, though.
I can tell you that, look, we're going to be hard at work, and we're not going to be satisfied until we're at least 30, 40, 50 times larger than we are today.
So when will we see the next product launch, and what could that potentially be?
I think for the next couple of years, we will have our heads down on these 2 only. At some point in time, we may look at the segment of either cleaning or air conditioning. These are 2 categories where our repair and services portfolio is very strong. Cleaning today is one of our largest service verticals. Aircon repair, aircon servicing is also one of our largest service verticals. So it would be natural.
Getting into manufacturing, air conditioners, vacuum cleaners, all of that, that's potentially the landscape that we're talking about?
I would say if anything that we do cannot be run-of-the-mill. So just a run-of-the-mill vacuum cleaner or a run-of-the-mill aircon, that, just to increase revenues, that's not our DNA. When we want to do something, we want to do something that is distinctly different from what's out there. Otherwise, we'll choose not to do it. The reason we entered water purifiers was we were very clear that we can launch a product that is smart, that is new age, and that needs no servicing for 2 years, unlike how the industry operates. If we don't see that play, we will not just get into a service because we can, sell it through our app and increase. That's not our DNA. Our first promise is to the consumer of great services and great solutions at home, or none at all.
And all of that is backed by technology, Raghav. And you're going to have to deliver on that promise as you expand and grow into different verticals. What's the big challenge that you see there, particularly today?
So all our business lines require a fair amount of investment, and the backbone of how things work inside is through tech, where we are codifying, helping us scale. So be it native, InstaHelp, India businesses, international businesses. As we are pushing, innovating, constantly they'll require investments in upgrading how training works, improving how quality has to be assessed, how do you help partners on the job. There's a whole wave of Gen AI solutions which we can use across all facets of a business. And these are things which we plan to be working on through They are.
So in the near term, is the bulk of the investment going to go into native, etc., or into the core business?
It'll be a mixture. So once we codify something, it's there to stay. So as we push the boundaries of a core business line or try to experiment things in the new stuff, all of that kind of goes into our tech teams where they'll be working on. So I think it'll be a mixture of investments in core, investments in the newer lines we're trying, investments in native.
Abhiraj, you want to run us through what the prospects are like as far as investing behind each of these businesses are concerned, because that is something that shareholders would like clarity on.
So I would say on the core India services business, which is already profitable, we will continue to invest. There's no question behind that. In training, in marketing, in user acquisition, and in technology. But those investments will not be in line with revenue growth. And as a result, we should be able to see contribution margins, which are very healthy in our core business in India, almost 20% of NTV. We should see a meaningful percentage of that contribution continue to flow into the bottom line. So margin expansion is something that we will be committed to in the core business in India. It may not happen every quarter, but on an annual basis, when we take a step back, I think it's fair to assume that every year the company should show some improvement in margins, even while it continues to grow. I think that's something that we're committed for. I think as far as Native is concerned or InstaHelp is concerned, these are very young businesses. InstaHelp is 6 months old.
Yeah.
When I was writing the DRHP, it was not launched. So I had to actually make edits last minute to the DRHP to include InstaHelp. Yeah. Native in itself is about 1.5 years old. So I think these will need investments. This is where I've requested shareholders to show some patience. At our end, we recognize that we have to be clear as well. We have to be clear in terms of how long they will take to break even and what is the capital that will get deployed. That's only fair. And if I was a UC shareholder, I would expect that clarity. That's clarity that we should come out with very soon, hopefully in our first earnings call. And in general, we are committed to very, very transparent disclosure, Shireen. We believe in telling the story as is, exactly how we're seeing it. Shareholders should make judicious decisions. We love the company we are building, and we don't want to oversell the picture or undersell it. We want to tell the truth and let people decide if they want to partner with us.
So let's talk about the story as is in your words. And one of the risk factors in the DRHP, of course, is the competitive landscape, where we do now have new players getting into the business, as well as incumbents who are now looking at getting a piece of your pie, so to speak. So how do you look at the competitive landscape, and what could that potentially mean for you?
I think the competitive, I think we're only getting started in the home services industry. It might seem like, it's been around for about 10 years, Urban Company has been around for 10 years, but I think in terms of the competitive landscape, we're only getting started. So I totally expect this to heat up further. That being said, all of us put together, Urban Company and the tens of other competitors we have, vertical and lookalike, do not add up to even 1% of the industry. 99% is offline. 99% is unorganized and fragmented. So I think, if you ask me, rather than how do we split the pie between each other,
how do you grow the organized pie?
How do we become 5, 10, 15, 20%, right? And in that, I would say sometimes when two eat, they eat faster than one.
Hopefully no indigestion on the back of eating as fast as you would like to eat at this point in time. But, the international markets and many consumer tech companies from India did foray into international markets, but then decided to pull back and have now decided to focus squarely on the domestic market and the domestic business. Yours is, in that way, an unusual story, because you went out fairly early on in the company's history and you continue to bet on international markets. But is it for now as far as further international expansion is concerned, Varun?
Yes. We are in 3 geographies outside of India, and for the near future, we intend to continue to be in these 3. India is the bulk of our business and continues to be the bulk of our focus. At the same time, we are quite happy with the progress in these 3 markets. We are seeing healthy growth in each of these 3 markets, north of 50% growth, and we are seeing improving profitability in these markets as well. UAE, which is our oldest market, we started in the year 2018, is already profitable, and the other 2 markets are relatively newer, and they seem to be on the right path as well, similar to the path that our India services business took. So we are happy with how things are shaping out in these 3.
So global clearly is an aspiration that you've had, and you work towards that with these 3 markets that you forayed into. What has been the big lesson? What's been the big learning from those markets for you specifically? And how different are those businesses from the India business?
I think a big lesson has been that it's not, I would go back to what you're saying, it's not actually easy to go global. We've also tried markets like Australia and the US, and we haven't succeeded there. So we had to pull back from those markets. I think first world markets where the culture is very do it for me, that sort of, for whatever reason, we could not see success there. I think when we come to markets that are closer to home, like Singapore, like UAE, where there is an affinity to getting home services. It's people are used to getting these services. The labor ecosystem is large enough. We've seen more success. I think at this point in time, we recognize that we have our hands full in India with the core, with InstaHelp, with Native, and even some of our international markets like, the JV in Saudi, for example, only went live this January. So it would make sense for us to stay focused, get these markets to profitability, get them to scale, continue to double click on India. In India, we're only in 47 cities today. If you look at food platforms, some of them are in 1,000 cities. So the opportunity is large here, and I think...
So what's the priority? What could 47 be over the next, say, 12 to 18 months in the near term?
I think the 47 number today, let's start with just these 47 cities. We would not have complete micro-market coverage even in these 47 cities. And if I talk about a city like Delhi or Bangalore, where we have a very wide assortment of services, a city number 45 or 46 or 47 would have a very small fraction. So first goal will be micro-market coverage and assortment coverage. If you ask me, I think eventually this 47 number should get to about 100 and then 200. I definitely see a market in India in the top 200 cities for an urban company like service.
By when?
Tough to put a timeline to it, But I think it will be a calibrated expansion. Every year, I think we'll keep adding.
How many cities do you believe you can potentially add every year? On the back of what you've been able to do so far?
Yeah. Look, I think sometimes these things may not be very linear. They could happen in spurts. So if you ask me how many could we add, we could even add 50 cities. But would we? That's a question of how many things are we juggling right now? What is the priority? We've gone through phases in the past. So if I talk about the 2022-2023 phase, we added about 30-35 cities in a span of 12 to 18 months.
Okay, so you've done it previously. It's a call that you need to take whether you want to expand at that pace or not. You know, one of the other risk factors, and I think that is a risk factor not just for you but for all platform companies, is the supply-demand situation as far as people are concerned and the workforce, so to speak. I've been looking at, you know, your score as far as the Fair Work report is concerned, and you're right up there along with Big Basket in terms of fair conditions and so on and so forth. But how much do you see that as a potential risk that could test not just your business model, but business model for others like you as we perhaps see the equilibrium on supply and demand change?
I think for us, it's very, very important. It's the backbone of our business. We have seen, Shireen, consistent earnings improvement every year. And as you know, we've been very transparent in publishing this consistently for the last few years. In FY25, we had the average professional make about 26,500 rupees net per month. And most professionals made well above 35,000. So I think we today offer a platform which has good middle-class earnings opportunity, social security through a free life, accidental and health insurance cover, access to credit at attractive rates, access to formal training. We have to continue to do better here. The onus is on us.
Will the market force you to do better is the question. Is it already starting to look like you will need to do better on that parameter?
Absolutely. I think for us, it's a win-win equation that we're trying to solve. You know, because the service professional is not a cost center, is a revenue center for us, unlike, say, a delivery platform. The quality of service they deliver is directly proportional to the happiness of the customer and their retention. So happy professionals lead to happy customers. So unless it's in our incentive to actually make sure that professionals do well, earn well, and are well retained. Otherwise, the business model doesn't stand the test of water.
What is a day in the office like with the three of you?
We are fairly passionate and vocal individuals when we are problem solving.
That's an understatement.
Who's the most vocal?
I think all of us have our characteristics. But we will go down, get to the most basics of details. Meetings can go there's no time limit to it as long as we get to help and problem solve and find the right answers. So we will get vocal and I think over the years we've learned how to work really well together.
What is the trick? Because it's not easy. And you know, we've seen many founders stay together, but we've also seen many founders move apart on account of differences in the way that they would like to run the company and the vision for the company. What has kept the three of you together?
I think it's a combination of love, trust, and mutual respect.
It's been wonderful chatting with the three of you. Congratulations once again from all of us here at CNBC-TV18. We wish you the very best of luck, and we look forward to seeing you quarter after quarter to talk more numbers with you. But thanks very much for your time.
Thank you so much, Shireen.
Well, with that, it is time for us to wrap up this edition of the Young Turks Reloaded podcast from all of us here on the team. For now, thanks very much for watching. Do send us your feedback. We always like to hear from you. Goodbye and good night.
Distinguished guests, participants, ladies and gentlemen, I'm delighted to address this August gathering of distinguished persons and key stakeholders across the financial spectrum on the theme of banking that builds Bharat, AI-powered, credit-driven, which is extremely contextual and relevant and encapsulates the spirit of Viksit Bharat. The Indian banking system has time and again exhibited its capability to embrace and adapt to newer technologies. Beginning from the early days of computerization in the 1980s, to the spread of ATMs in the 1990s, the expansion of internet and mobile banking in the 2000s, the interoperable infrastructure for payments, data repositories, and data sharing since 2010, the banking sector has adapted successfully to the requirements of the changing times and has over the period made banking more efficient and inclusive. Banking has now entered into a new phase of evolution driven by digital democratization. A prime example is the homegrown unified payment interface, which has made India a global leader in digital payments, which reinforces our belief that responsible innovation can be a powerful driver of progress. The Government of India has articulated an ambitious vision of Viksit Bharat that is transforming India into a developed country by 2047. This sets the tone for the next step in our technological journey for the financial sector, and more specifically in the banking sector. Under Viksit Bharat, the goal is for every adult to not only have a bank account, a target largely achieved under the Jan Dhan Yojana, but also have access to affordable credit, insurance, and investment options. The endeavor of banking sector should be to ensure that the benefits of banking, more so of credit accessibility, is made available to the customers across all segments on a fair, transparent, and affordable basis. Over the years, the banking credit has been robust, averaging around 10.5% over the last 5 years. The share of retail credit has gone to about 32%, while the share of credit to MSME sector has been growing steadily, forming almost 18% of the total bank credit as of March 2025. Before delving into the role of new technologies, let me briefly touch upon the steps taken by the RBI over the years to increase the flow of credit. RBI has undertaken several measures to expand both the reach and depth of credit by reducing friction, increasing access points, and lowering the cost of financial service delivery. Key initiatives include the Aadhaar-based KYC, the Central KYC Registry, the revised priority sector lending norms, partial credit enhancement guidelines, and the account aggregator framework. In response to the growing digitalization of credit, the digital lending guidelines were introduced to ensure transparency, fairness, and data privacy, protecting data privacy while enabling direct fund flows through digital lending. The RBI has also enabled formal credit access through frameworks like the TREDS for the MSMEs, co-lending models between banks and NBFCs, as well as launched targeted refinancing schemes. More recently, the Reserve Bank has, in collaboration with its subsidiary, the RBI Innovation Hub, tested a prototype of a public platform for frictionless credit to enable seamless digital data flow to lenders. Building on this, the unified lending interface is being developed to transform credit delivery by integrating access to both financial and non-financial data, such as digitized land records, the GSTN data, property records, and satellite data, along with services like eKYC, the account aggregator framework, and the credit guarantee schemes. This ecosystem aims to make lending faster, cheaper, and more accessible to the underserved segments. Together, this digital public infrastructure and an enabling regulatory framework would help to drive inclusive credit growth. Having said that, a lot of distance still needs to be traversed as the gap in credit penetration persists. Even today, only about 25% of India's adult population have formal access to institutional credit, while in the MSME sector, which contributes almost 30% to the GDP, only about 40% of the credit needs are met by the formal institutions. While the Financial Inclusion Index developed by the Reserve Bank has shown steady improvement, rising from 53.9 in March 2021 to 67 in March 2025, which reflects the growth in account ownership and credit access, scope remains in affecting improvement in the usage and quality of the services delivered. The gap between inclusion and credit access is a challenge and an opportunity to the banking fraternity. The credit needs to not only grow in terms of volumes and numbers, but also needs to be directed towards productive sectors that deliver higher multipliers, such as the MSMEs, infrastructure, informal sectors, and the rural population, to achieve not just the goal of a Viksit Bharat, but a Samaveshi Viksit Bharat. Driving the next credit revolution would require harnessing new technologies. Over time, the role of technology in finance has shifted from improving operational efficiency to fully automating and centralizing previously manual fragmented processes. Among the emerging technologies, artificial intelligence stands out for its vast potential for strengthening the internal operations and risk management to deliver faster and more seamless customer experiences. Reports indicate that nearly 68% of the banking and financial service industry organizations in India adopt some form of artificial intelligence in 2024. An RBI study of the bank's annual reports also shows a sharp rise in the reference to artificial intelligence, underscoring its strategic importance. While both demand-side factors, that is the profitability, competition, and compliance efficiency, and supply-side drivers, that is technology advances, data growth, newer business models, influence artificial intelligence being adopted, supply-side forces remain the primary catalyst. Artificial intelligence as a discipline has evolved over the decades and has seen rise of machine learning systems which can learn from historical data to make decisions, often with high accuracy. Indian banks and non-banks embarked on the artificial intelligence journey nearly a decade ago, mainly handling at that time large volumes of information and supplementary analysis which added value without displacing established systems. The adoption has since moved from deployment of artificial intelligence for back-office functions, for efficiency enhancements to more varied use cases, such as areas of fraud risk management, optimizing IT operations, facial recognition for KYC, credit scoring, claim processing, and customer-focused services. As observed in the surveys conducted by the Reserve Bank in 23 and 24, more than 3/4 of the banks have deployed artificial intelligence-powered chatbots for customer service. This marks a fundamental shift where AI is no longer just an enabler but a participant in the decision-making, product design, and customer engagement. Though the banks have been using artificial intelligence in some areas of lending, this is a potential use case. There is a potential use case for its usage across other areas of the credit life cycle. Let me highlight a few. One is credit inclusion. An important use case would be in the way credit is assessed and distributed. This would require supplementing existing assessment methods with broader data-based and more refined analysis, whereby financial institutions could gain additional perspectives on risk and capability of the potential borrowers. This would be a significant game changer to address credit requirements of the millions of credit invisibles, that is, the people with no formal credit history. However, given the availability of other digital footprints, artificial intelligence can be adopted to leverage alternate data sets to assess creditworthiness, especially that of the new-to-credit customers. This would mean a paradigm shift from asset-based lending to cash flow and alternate data-based lending, promoting a journey from exclusive banking to an inclusive digital finance. Government of India has also recognized the artificial intelligence potential to drive financial inclusion and has started initiatives such as the Grameen Credit Score, which aims to provide underserved communities with formal credit access by analyzing alternate financial data, including UPI transactions, government subsidy receipts, and utility payments. Artificial intelligence also influences the turnaround times. It enables banks to process large volumes of customer data quickly, accelerating credit decisions and service delivery. This is especially valuable in time-sensitive sectors like sanctioning of working capital for the MSMEs, where the AI can analyze diverse data sets like bank statements, payment histories, GST filings, e-invoices, trades receivables and patterns, and public records. It also aids lenders in assessing seasonality, supply chains, inventory cycles, customer concentration, thereby help to assess the overall credit worthiness of the MSMEs. Of course, in credit appraisal, the banks can embrace AI algorithms for leveraging behavioral analytics by analyzing a vast amount of transactional data for detecting patterns indicative of creditworthiness and stable financial behavior, which can lead to more accurate credit assessments and improve the decision-making processes. Artificial intelligence ability to dynamically assess customer preferences and behavior can empower banks to offer customized credit solutions tailored to an individual's financial capacity rather than relying on outdated credit assessment. This not only improves the loan accessibility but also ensures that the borrower receives fair and structured financial products that align with their needs. AI-based early warning systems can help to lenders to monitor credit portfolios more effectively through dynamic risk scoring and real-time default probability tracking. By flagging early signs of financial stress, these systems protect the lender's balance sheet while giving the borrowers a chance to correct the course. The goal ultimately is not just to lend more, but to lend better. Artificial intelligence would also play a key role in automating document verification by assessing image quality, ensuring compliance, and reducing lead rejections. It can accurately process large volumes of records, classifying, extracting, and validating key data, thereby improving efficiency and minimizing errors in the lending processes. One promising use case of artificial intelligence is the development of multilingual chatbots and voice assistants, which enable customers to interact with banks in their native language. This is a revolutionary change, as by localizing the user experience, the AI can enable more people across different languages, literacy levels, and abilities to confidently use formal banking services. I'm told banks are also experimenting with using artificial intelligence to enable staff to respond to customer queries, which can enhance the customer experiences going forward. Timely resolution of customer queries boosts trust in the banking system and encourages deeper engagement, furthering financial inclusion. As digital access has expanded, so too has the customer complaints. This highlights another use case for the artificial intelligence. It can efficiently categorize, prioritize, and route complaints, enabling faster proactive resolution by detecting patterns and addressing root causes before the issues escalate into grievances. Artificial intelligence-powered loan servicing platforms can create personalized repayment solutions and reduce operational errors across servicing and for portfolio management. They can also provide new ways of loan servicing by supporting collections and recovery through prioritized outreach strategies. AI can help to strengthen compliance with auditable trails of measures initiated for recovery. AI also holds potential for safeguarding the financial system itself. As cybercriminals increasingly use AI for sophisticated attacks, The regulated entities can leverage artificial intelligence-driven tools to protect customers and detect threats. AI can monitor large transaction volumes in real time, flagging anomalies that may indicate fraud or money laundering, especially in complex areas like crypto transactions, where parallel financial channels exist. With the fintechs advancing rapidly, the regulated entities are increasingly partnering with them across the credit life cycle. A key model, digital lending under banking as a service, involves embedding processes like KYC, credit assessment, and recovery directly into the fintech platforms. While such collaborations enhance financial inclusion and innovation, they can also bring risks such as blurred accountability, data misuse, inadequate grievance redressal, and potential mis-selling. The guiding principle to address this remains the premise that regardless of the model being used, accountability ultimately rests with the regulated entity. Technological advancements come with the challenges that the regulated entities must recognize, as these risks can undermine the benefits of innovation. For example, the recent Supreme Court ruling on the video-based eKYC highlighted that mandatory automated processes may create barriers for people with disabilities, underscoring the need for fairness and accessibility in technology adoption so as to avoid exclusion. Artificial intelligence without proper controls can introduce risks like algorithmic bias, lack of transparency, ethical concerns, and systemic vulnerabilities. It can also amplify the existing risks such as third-party dependencies, concentration, model, cyber, and data privacy risks. Let me highlight a few of this. Even as artificial intelligence adoption grows, financial institutions increasingly rely on complex networks of external service providers, cloud platforms, artificial intelligence vendors, and data aggregators. These interdependencies create hidden vulnerabilities where a disruption or a breach in one link can cascade across multiple institutions, disrupting critical services. The complexity and opacity of these layers makes it difficult to identify risks, allowing them to accumulate unnoticed and spread rapidly during shocks. A critical vulnerability of artificial intelligence is its potential to synchronize behaviors across financial systems. When institutions use similar models trained on overlapping data, their decisions on asset pricing, credit assessment, trading may align, creating hidden linkages. This can amplify market stress, spreading shocks rapidly, worsening liquidity shortages, increasing asset price volatility, and trigger sharp, self-reinforcing market swings. The integration of artificial intelligence into the financial system, especially through new interaction methods and increased reliance on specialized providers, expands the cyber threat landscape in unpredictable ways. AI strengths such as reliance on large datasets, open interfaces, and automated decisions also create vulnerabilities. Malicious actors can exploit these through adversarial attacks or compromised training data, potentially corrupting artificial intelligence outputs. Even a single breach can disrupt critical operations and undermine trust in the artificial intelligence across the sector. Then, of course, the one important point is the model risk. Unlike traditional models built on clear rules and well laid out assumptions, artificial intelligence models operate through dense, opaque algorithms, which we refer to as black boxes, and may evolve with the data which they consume. This introduces the risk of prejudice within the models, where biased data, opaque design, or untested assumptions may lead to biased outcomes of the model. Such distortions can lead to unfair credit assessment, exclude deserving segments, or conversely extending credit where risks are understated. AI is only as strong as the data that shapes it, and this leads to the host of vulnerabilities emanating from data quality. Currently, while much of the financial data is structured, Much more of the data is fragmented across systems, often in inconsistent formats, somewhat incomplete or outdated, or skewed by historical biases. When such data flows into AI models, it can produce results that may appear authentic, but suboptimal, and in some cases may produce wrong outputs. Over-reliance on such models can quietly turn data gaps into large-scale misjudgment and wrong business decisions. Generative AI models are often trained on publicly available data like news articles, stories, and explainer videos, and this may lead to intellectual property and copyright infringements. The Reserve Bank's Financial Stability Report has pointed out that high market concentration in critical third-party service providers of cloud and AI services, noting that heavy reliance on a small number of tech players could create single points of failure. Such concentration risks are compounded by vertical integration of certain providers who supply not just models, but also the underlying infrastructure and the data sets. While AI is transforming many of the processes of the financial institutions, the rise of generative AI has also lowered the barriers for fraud, putting powerful deception tools in the hands of malicious actors. Deepfakes can mimic voices, faces, and documents with unsettling accuracy, while AI-generated phishing lures, faking identities, and forged credentials can slip past traditional checks. In the light of these multifaceted risks, some of which I have touched upon earlier also, it becomes crucial that adoption of AI in banking sector must be done in a responsible and measured manner. The excitement around the AI's benefits should not overshadow prudent risk management. In this context, the following aspects become crucial. First, of course, is governance. A robust governance is indispensable for ensuring the integrity of data, the reliability of the models, and mitigation of the risks associated with the adoption of AI. The financial institutions should have in place a comprehensive strategy for AI adoption. It should be accompanied by clear policies, risk appetites, and ethical standards that cascade throughout the organization. Robust monitoring and reporting mechanisms should be put in place to ensure alignment between the innovation goals and institutional stability. Further, in a regulated industry like banking, it's essential to understand how a model arrives at its decisions, making explainability a critical requirement. Thus, there is a need for financial institutions to invest in explainable AI frameworks that provide clear, auditable reasons for loan decisions and services. Strong governance is central to the managing of the AI-driven model risk. While AI can automate and recommend, humans should be responsible for the decisions. Financial institutions, while adopting artificial intelligence for business processes, should implement the principle of keeping a human in the loop to ensure that AI is leveraged as a tool to support and enhance human decisions and not replace them. High-quality data is the backbone for safe and effective AI in finance. While the RBI already collects data through supervisory reports, regulatory returns, and surveys, the introduction of model risk guidelines aligned with global best practices could extend the scope to include data on AI models used by regulated entities. Financial institutions should therefore adopt robust data strategies incorporating diverse, reliable indicators that reflect both the scale of AI adoption and the associated vulnerabilities. When AI is used for credit decisioning or financial inclusion, especially through alternate data sets or use of alternate data sets, customer data becomes central, making privacy and security paramount. The Data Protection Act of 2023 provides the legal framework for responsible data use, and the financial institutions must ensure compliance through a consent-based, privacy-first data handling practices.
Well, sir, thank you so much for the opportunity, as you said, to engage in a dialogue with you. I wish you could have been here with us in person, but for the audience here, let me tell you that he's been very busy organizing a manthan of public sector banks that's been happening in Delhi for the last 2 days, and that's why he isn't here with us in person. So, Mr. Nagaraju, let me start with exactly that, because there's been a lot of interest in what transpired in that 2-day manthan. How much did you churn the banking sector, sir, so to speak? So give us insights into what transpired in that meeting. What was the big takeaway? What was your message to banks? What was the message from banks to the government?
No, I think this is, we had this is the third manthan we did after 11 years, during the 11 years. And I think all of you know that the results of first Jnanas manthan in Pune, then second manthan in Delhi, and this is the third one. While I have mentioned, I think all of you are aware, the first one and the second one are related to how do we survive because of the NPA burden, credit issues, and how do we, and then of course the PCA. Now, because of the steps that government has taken, most of our banks are actually very healthy now. I think all of us know we have made the highest profits ever with the lowest gross NPAs and net NPAs. And we also, our professional managers, the bank recruitment process is much more professional now, much more learned, and much more dynamic compared to the past. I think all of them are actually showing results on the bottom line and the profits we are declaring. Now we felt, all the banking leaders, we all felt that now this is the time for India banking industry to take a leap of faith on the next phase of both reforms and lending. We want to become bigger. The Indian banks want to be bigger. And I think all of us know, in the top 10, we have only 2 Indian banks in the country, SBI and HDFC. I think we need much more. We are now currently 4th largest economy, and in the next year, we will be 3rd largest economy. But we have only 2 banks. And given our size of the economy and the credit requirements and the potential, I think all of you agree with me when we say that we deserve to be there, our banks deserve to be there in the top 10, not just top 50. We have to be, at least 1 or 2 should be there in the top 10 in the world. I think that we need to work. There are so many, I think all of you are much more well informed, I'm not saying. So it can happen in several methods. And one is, of course, the growth, organic growth. We have a great potential. We need to do that. This is one issue. And then second issue is, while growing, we need to be very cautious to ensure the healthiness of the banks have to be protected. That's the first fundamental principle of a banker. We need to be ensure our banks are not over-leveraged, and we are healthy, and our capital base is protected, so that we'll be able to provide security and assurance to the entire country that the banks are with the growth of the country.
Well, Mr. Nagaraju, you've given us a big headline, sir, so let me build a little bit on that. You said India aspires to have more banks in the top 10, so clearly the government is going to prioritize size, of course, along with healthy balance sheets as well, as you pointed out. What will the route be to be able to get to the top 10, sir? Is consolidation the preferred option? Is consolidation likely to be the route that the government takes, especially as far as putting the PSBs in the top 10 is concerned?
No, there are several routes the government can take. The first
Welcome to this very special Indianomics. Reserve Bank's flexible inflation targeting rule requires that every 5 years, the government shall, in consultation with the Reserve Bank, set the inflation target for the Monetary Policy Committee. The target of 4% CPI plus or minus 2% was set back in 2016 for 5 years till 2021. In March 2021, the government reviewed and retained the same target, the same range from 2021 to 26. Now, ahead of the review in 2026, the second review, the Reserve Bank has released a discussion paper asking members of the public to discuss and give feedback on the following 4 questions. 1, whether the MPC should target headline or core inflation, that is inflation minus food and fuel. 2, whether the 4% CPI target continues to remain the right target or whether it should be changed. 3, should the range of plus or minus 2% be narrowed, widened or done away with? 4, should the inflation target be removed and only the range be retained? Those are the 4 questions, and joining me to review the performance of India's inflation targeting regime and to answer these 4 questions are Sajid Chinoy, Head of Asia Economic Research at JP Morgan, also one of the original members of the Urjit Patel Committee which recommended flexible inflation targeting. So, more questions to him. And Niranjan Rajadhyaksha, the Executive Director of Artha Global, a think tank and research organization, and formerly Executive Editor of Mint newspaper. He's everyone's best consultant for economics. Niranjan, Sajid, thank you very much for joining me. Well, first up, let's assess. Is it a success? Last 10 years, after all, we did have 4-5 years during COVID. I think 4-5 quarters in COVID when we were above even 6%.
Right. So, Lata, we have 3 criteria, I think, that I use to judge how this is done. The first is, there are always going to be exogenous shocks. So, looking at absolute levels of inflation can be misleading. Look at how India has performed compared to the rest of the world. And that inflation differential with the rest of the world has narrowed meaningfully over the last decade. So, A, we have relatively outperformed, number one. For me, perhaps the biggest test here is the whole idea of a nominal anchor, an inflation target, is to serve as a coordinating mechanism for the economy to anchor inflation expectations around the target. An easy way to test that is to say, does headline inflation converge to core or does core converge to headline? And what you see is before inflation targeting came into practice in India, the data reveals us clearly, core used to converge to headline. That's a fancy way of saying inflation expectations were not anchored. For the last decade, what do we see? After the FIT regime, headline inflation consistently converges to core once shocks dissipate. So that's another way of showing that the purpose of this, to anchor inflation expectations, has been achieved. You have less spillover of shocks to food and fuel spilling over into core inflation. And the last is just look at RBI's inflation expectations data. There are shocks that we've all been through this poly-crisis period, but expectations are more anchored. So by each of the 3 criteria, how we've done compared to the rest of the world, whether headline converges to core, and that's changed after inflation target came in, and how measured inflation expectations are, I think by all accounts, it's worked very well.
Okay, well, just for the data that RBI put in the discussion paper, average CPI since the 2016 adoption up till 21, up till the COVID actually, was 4.9%. And average CPI from 2013 to 16, that is the new CPI series, was 6.8. So, their data is that statistically at least it has worked. But the CEA had opposed it, saying that in the first 5 years, anyway food inflation everywhere was benign. In the next 3-4 years, food inflation was high and we didn't control. So that there is a counter argument. But Niranjan, you want to add success or failure?
No, I usually end up agreeing with most of what Sajid says. So I completely agree with him, that...
the deviation from global...
I think that India is no longer an outlier. Say 10 years ago, if you looked at the world, it was battling deflation. Our inflation was pushing near double digits. Then, if you forget, you may say that the advantage